Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola.
How come I'm the only person in the office and I'm not part of the greatest generation?
I will tell you why.
Test. It was a test.
I would tell you why.
Yeah, what happened, girl?
I have been waiting for a year and a half for for Tony's guy, this is the truth, to come fix my HVAC system. And he's stood me up every time. If he stands me up today, I'm firing the guy.
That'll show him.
And they're also putting in a new alarm system in my house. So I'm doing both today. So I'm got to be here.
The best part about this, Vanetta, is nobody else can fix his heat and air conditioning. He's had other people there.
It's too complex a system.
It's too outdated. That's why we don't have the technology.
It's over-engineered. Here's what the engineers say. It's over-engineered. No, I've had like HVAC experts in. They're like, it's over-engineered, Tom. You know, you're like set up for a nuclear holocaust or something. And I'm like, you know, whatever. Anyway.
My boy Carlos, he can fix it.
Yeah, he hasn't been here for 2 years, though. So he better show up today.
What time is he supposed to be there?
Hold on. It's him texting. Oh. No, it's not. It's Jules. He said, if I listened to you, I'd be dead in a few days.
Jules is back in urgent care, spending the company money on insurance.
Gout. I tell you, it's gout.
Beautiful.
Yeah, but I don't know. I mean, I've had enough gout in my life that I know exactly what it feels like. And the first time I ever had gout, I told my wife, you got to drive me to the emergency room. I'm dying. I can't move my feet. They're going to chop off my leg. I didn't know what was wrong with me. And the doctor looked at me.
Men are such babies.
And the doctor, he didn't even do anything. He was just like, you got gout, you dummy. And I'm like, what? What's gout? And he's like, and I'm like, all right.
It's a buildup of uric acid in it.
Yeah, I know what it is now.
All right. Well, I'm explaining.
So I don't want to spit up in the air, but I've never had it.
It's horrible.
Knock on wood.
It is.
It's horrible, and you're lucky because I got it from eating like a lot of
your dietary choices. Yes.
It's the king
from your decisions.
Yeah.
Yes. I thought my dietary decisions were good, but I guess they weren't. And chimichurri and raw sushi will do it to you too.
Yeah, not good.
So anyway, but anyway, he's alive and well and perfect.
Beautiful. Love to hear it. I'm glad. Speedy recovery, Jules.
So we had a great weekend here in Chicago. It was beautiful weather till the tornado sirens went off at 10:30 last night. Scared the crap out of me. Yeah. But we had a lovely day Saturday during the day for our tastylive event. Complex portfolio, wonderful turnout, huge turnout at the Park West in Chicago. I think we have some pictures from the event.
Ooh, we do. I have not seen these pictures yet.
Yeah, Ryan and Garrett did a good job.
Because you don't know how to work your email.
You were on the text chain. Maybe not.
All right. I didn't look at the pictures.
Okay.
Where are they?
Comment. Give him a minute to get it up there.
Give him a second. But Tom, what were people saying to you? What were your thoughts on the show?
I got nothing.
They want to replace Jamal with the bat. They can't take his opening act. It's too
other than Jamal singing, everything was a huge home run.
Okay.
No, I thought the show was probably the one of the cleanest ones, smoothest ones we've done. it just went really, it was good. And finally somebody, I'm not going to give away what we do at the end, but finally somebody won. And
Nice.
that's cool.
And the money.
Yeah. Anyway, I thought it was really good, and the pace was good. I thought all the speakers were spot on, and everybody's getting really comfortable. And I thought it was a good show. It's always a good show in Chicago because we don't have to travel. It's just easier, and
I heard you were on, Sosnoff. I heard you were on. I got great feedback about you. I got good feedback about Jamal, but I got the best feedback about some kid named Nick Batista. They said he was spot on and the best.
There we go. Here's some pictures.
Yeah, look, I was surprised how many people there were.
Yeah, it's a great building. Oh, this is the green room.
Yeah, a little behind the scenes. There's David working the platform.
Yeah, we had a lot of people giving software demos up front.
Aww.
Look at the young generation.
I know.
Look at the old generation.
That's at the end there. Not to give too much away, but yeah.
Nice.
There's the young protege. There's the old protege. There's the creator.
There's the mole mat.
there's a mole mat in the wild.
There's big boy Scotty S. was there.
I think that's Mike. There's Baby Shark and Sahil.
Were they in the basement? Sorry. Where was this photo taken?
I do not know where that photo was taken.
There's the lovely Liz. She is the consummate MC. She did a great job introing the show. And there's Jamal.
He sounds like Catherine McPhee. He's so good.
There's Mikey. Katie. Katie was serving looks. Katie looks stunning. She did a great job.
There's Nikki Bat.
And there's Nikki Bat.
Doing his best.
We made him stay. We made him stay in one spot.
So it was JJ's feedback.
Yeah. It's good. That's good. So
nice. Very nice. Finish strong when it landed the picture of Sosnoff at the end there. That's amazing.
It was a great show. And it was fun. And what did I do? Oh, no. What am I thinking? Oh, afterwards, the whole city had festivals. It was crazy.
Yeah.
Every street was blocked.
There is no more paid parking anywhere around there.
No, because the street, they had ripped up the street. We had no idea.
Right.
But, yeah, unfortunately, parking was tough there. We did it because that street was all ripped up.
Yep.
The facility's great.
Facility was awesome.
It was very cool. It was very cool. And Frankie Walsh, she was like, the last time I was here was 79. And there was a kid that worked there, and he was like, you were here in 79? And Frankie was like, yeah, I think he saw either Warren Zevon or Frank Zappa. It's some sort of Z. I don't remember. But
I think it was
probably Warren
Zevon.
Okay, well then, yeah, you guys would know.
Dino wrote into me and said he was at the same concert.
Yeah,
That's
Dino was
funny.
there. I saw Dino.
I saw Dino. I got a hug from Dino.
You know what's funny is that the first show I ever saw there was Buddy Guy and Junior Wells, and then over the years, a bunch of them. The last one I saw there was Weezer, and but the acts. Liz read off who's been there. We were trying to decide who the most famous person was. Probably Michael Jackson, but either him or Prince.
Sure, yeah, but there have been so many people. It's hard to say who's the most famous. Yeah,
but they did film the Super Bowl Shuffle there.
That's my favorite.
Oh, did they? Is that
tidbit.
when they did it? That's so fun.
Yeah, they filmed it on the same stage. They filmed the Super Bowl Shuffle at the Park West.
I did not know that. That's very cool.
Oh yeah, a little bit of history.
Yeah, a lot of it. That's awesome.
That is cool. I can't see. I lost them again. I just see a still photo in here. But then, Tom, yesterday you played golf. How did that go?
Not well. It was supposed to be. it was supposed to be like there was supposed to be heat warnings, right? It was supposed to be like 85 to 90 degrees.
Yeah.
And we get out there and it's like 72 and starts to drizzle. The dark clouds come over. The skies break. It's pouring rain. It's freezing cold. It's like low 70s and pouring rain. The wind howling. The lightning. The horn never went off, but I could see lightning in the background. You know, Steve's like, I don't think we should play anymore. And you know, but we played, and then on the 9th hole, we're all dripping wet. It was horrible. Went inside. You know, got something to eat and waited it out until the skies cleared. And the back nine was sunny, but the problem was it was cart pass only, which I hate. And they got like 2 inches of rain the night before, so there was just like standing water everywhere. It was not
Thank
good.
you. Let me thank the Lord above. Thank you, baby Jesus. Thank you for fulfilling all my prayers. You did better than I could have ever imagined. Thank you.
So I came home and I barbecued, made smash burgers and hot Italian sausage for an outdoor barbecue. And
I was available. It was my birthday weekend. I mean,
oh, you had too much. You were having too much fun, and they.
But
and
wait, what did you think of the course, though?
Oh, it's all right. It's nice. It's tight. It's really narrow. It's hard. And then I watched Spain against England, and all our friends from England are on suicide watch this morning.
Yeah, but it was pretty funny because the bars in Scotland and Ireland were flying Spanish flag. It was not quite a united kingdom, but that was funny.
Spain pretty much dominated the game, and then I tried to watch the game last night because. You know, you don't get that many chances to watch Messi play.
Did you see Messi's ankle?
Yeah, I saw it.
It looked like a loaf of bread we were making during the pandemic. He was like kind of sobbing on the sidelines.
It was one of those weird injuries where like nobody hit him. You know, it's like the turf came up and grabbed him. It wasn't like a contact injury. He just kind of, you know, fell.
I'm sorry, and how many years have you been playing Elite Pro Soccer? I'm sorry.
You know, I was pretty good back in the day.
He was
in the
amazing
Pee-wees?
back in the day.
In the Larchmont League?
Yes.
Okay.
But yeah, but I fell asleep and then I got up in the middle of the night and watched the goal. There was one goal in overtime.
Well, it doesn't bode well that they couldn't keep people out of the stadium. People like rushed in and overwhelmed security, and they were climbing through the ventilation vents. And some people that had tickets, when they finally got to their seats, other people were sitting in them.
You know, it's so ridiculous because if you run the stadium like that, you've got one freaking job to do.
Yeah.
You got one job to do security wise. How hard is it? And you're gonna have 7 World Cup games there?
Yeah, that's what people are expressing concern about.
I guarantee you next time it's gonna be like Fort Knox.
Yeah,
well, you hope so.
No, it will be.
We will see. Yeah. How was the rest of your birthday weekend?
Well, it was wonderful. I got a lot of birthday well wishes on Saturday at the show, which was awesome. I got to take out my family for dinner on Sunday. It was amazing.
Where'd you go?
I told you a French bistro called Cafe Touche.
Yeah, I never been there.
Called Cafe Touche?
Yeah, on Edison Park. It was very good.
Never even heard of it.
Yeah, well, I mean, you don't get out of your little comfort zone. You know, if you can't drag your foot there, you don't go. You know, that's
if it's not Argentinian or Mediterranean, you don't want
it. That's right. But
I'm not going to a French restaurant in the suburbs. That's like, you know.
Edison Park. It's the city.
Oh, I don't know where Edison Park is.
You're so cosmopolitan.
Nope. Now it's back to a picture of Tom. Nope, that's fine. I'm glad that you had a wonderful birthday with your friends and family and a lot of people that you got to see. You got to see a lot of Pista in person to also wish you a happy birthday.
I did. We pushed a lot of flesh. It was very nice. It was very nice to see everybody again. Good stuff.
Ah, that's precious. Well, hey, you can check out.
Where was your big birthday dinner on Friday night?
Sybaris.
Yeah.
He was not at Sybaris. Where was?
They're laughing really hard in production right now. No, we don't need that. No, I don't need.
I had the butchie room.
Uh-huh.
No. No.
Where was it?
Sybaris. I'm not telling you. You'll go there. Can't tell you.
No, I'm not going to go there. Just tell me where your birthday dinner was.
Honest to God, Friday night I went to go see my grandson, and we had dinner outside at their house. It was very nice. It was
okay.
How is baby T-Mac?
He's doing good. He's doing
my, how the mighty have fallen.
That's the truth.
That's funny. Hey, we got a great show for you today on this magnificent Monday where all the boomers have just decided to stay home. We got a great show headed your way at the top of the 8 o'clock hour. We got an options jive, a little research corner with Anton in the house. He's going to come in, not sure what he's going to talk about, but I'm sure it will be delightful. And then we got Dr. Jim in the house, the Skinny on Options abstract application, why the normal distribution matters the most. So he's going to be in talking about that. And then 9 o'clock, we got a market measures exploring conditional probability in market forecasting. What? Nothing?
Bringing out the big guns this week.
That's a lot. It seems very intense and heavy.
My true soccer fans are telling me that somebody had rolled over Messi's ankle in the first half, and then he took a bad step and re-injured it.
Yeah, that's true.
That makes sense. That makes sense.
Oh, you mean the story about the turf jumping up and biting him was not true?
Well, when he re-injured it, that's when they took him out of the game.
All right, whatever.
Well, that's the run of
That's when they showed his ankle on the sidelines.
Yeah.
Got it.
That's the run of show for today. We got a really great show, but hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Yeah. All right, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top stories. Jump in.
Today's headline. This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's July the 15th. This is part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Mr. Bat, any earnings?
You have a few MS, Bank of America, UNH was a big component of the Dow, but the real mover today is Tesla up $10.
Oh, Tesla has earnings today?
No earnings, but it's up $10.
Oh, I see. Okay, I got you.
A market mover.
I think it has earnings in like a couple days.
You are correct. Tesla has earnings coming on July 23rd.
Oh, okay. All right, so more than a couple of days then. All right. Well, hey, getting to the first headline of the day. On Saturday, former President Trump was shot in the ear during his rally in Butler, Pennsylvania, in what the FBI says was an assassination attempt. But it looks as if U.S. markets are steady. First of all, just offering just a vehement condemnation of everything that happened. There's no need for violence in our political discourse, and you should be able to go to a rally without fearing for your life. And a person was killed, another person critically injured, and just sad all around. But stock futures barely budged. But this does seem, some people are saying that the market for him getting elected has now risen, and that the markets are reflecting that. What are you guys seeing?
Well, I don't think the stock market cares. It opened unchanged basically last night, and the NASDAQ actually opened lower. But overnight, when Tesla went up and things like that, I mean, the whoever's ever president's not going to move. That's not going to move the stock market per se, not until that eventually happens.
Sure, so, but things thinking about like corporate tax cuts or extending favorable things.
I know, but all that stuff's already priced. And the only thing that moved at all, I think, last night was really Bitcoin.
We'll get to that.
Which jumped up about 5,000.
Yep.
And bonds, which sold off like a full point. But the market's up. I mean, really, the market's up this morning because of Apple and Tesla.
What are you doing in treasuries?
I was buying them last night. When we were doing the show last night, I was selling puts and bonds. I covered them overnight and I reloaded this morning. So that actually has been a good trade. I've been selling the 116 puts. We sold them last night at 42 ticks, bought them back at 40 and 38, and sold them this morning at 43 and 44, and they're 41 right now. So, I mean, I'm just trading short. I'm trading from the long bond side, the short put side. It's the same thing.
Was there anything that happened in volatility?
No, nothing. Vol this morning is unchanged.
Does that seem crazy to you? Because like you guys were around when Reagan, right, got the attempt.
I told the story. I started in the business at Drexel about 6 or 8 months before Reagan was shot.
Okay.
I think it was 81, early 81 or something.
Yes.
And so I was on a trading desk and we didn't have televisions in front because there was no flat screens then.
Sure, yeah.
So all I had was a Quotron, and then the news popped up over Dow Jones on the Quotron, and then we had to go to a different room where there was it's so crazy. We went to a different room where they were trying to cover it live, but you couldn't really. They had video of it like a little bit later, but at the time they just had video of like all the chaos.
Sure, and that was almost 45 years ago. So yeah, the technology was different.
Yeah. But you didn't at that time. You actually didn't know what happened to Reagan.
Right.
Like, I mean, there's no way of knowing because they just shoved him into a limo and they didn't say anything. There was no news. There was nothing like there is today. So, but there was also no index products. So at the time there was like a lot, the remember the market was open when this happened.
No, I don't remember.
Okay. Well, the market was open, but there was no index futures in 1981, and there was no ETFs, and there was no index products.
Okay.
So if you wanted to do something, like you had to trade a stock, and all the big name stocks, like let's just say IBM or General Motors at the time, like I don't even remember, like probably IBM was the biggest stock. But
yeah, IBM was the biggest one by far.
Yeah, but it was probably like IBM, General Motors, Johnson & Johnson, things like that. Everything, people were trying to sell, but there was nothing there to do, because they just widened out the markets and it was really liquid. And so it wasn't really tradable. I think, today's world, everything's different. And
many of us have never lived through this before. Like you from your certain generation, like in the 60s and 70s, like this has happened before. You guys have witnessed, attempts on presidential candidates
we were really young when both Kennedy assassinations happened. I mean, I was like in kindergarten or first grade, and then the second one was like we were young, and then the only other one I remember was George Wallace, and he was shot and not killed, but nobody cared because he was a racist anyway. And so I'm just saying nobody cared, and then there was Reagan,
right?
And Reagan, I was working, so that had an impact on whatever.
Yeah.
And since then, I don't know if there's been another.
I mean, someone threw a shoe at W, but he ducked it.
Yeah, I think that was in a press conference at Iran, but I don't think that was ever. Right. I don't think that was risk. This one feels like it should have been avoided. Like, I don't really understand. Obviously, there was a screw up on the Secret Service side because they had this guy dead to rights, before he, they were watching him the whole time. I don't understand what happened.
Sure.
It seems like this was just really bad communication. I think somebody's going to be in big trouble.
Well, the other thing is the Republican convention is kicking off today just north of us in Milwaukee, Wisconsin, and officials there saying they have made no additional additions to their security because they're already at the highest security protocol. So I'm just putting that. Just news is the Republican convention starts today.
Anybody ever wanted to go to Milwaukee? If you ever wanted to go to Milwaukee, it's not Summerfest, right?
No, I don't think so.
Right. I don't think it is either. But if you ever wanted to go to Milwaukee just to see, like, they have their art museum is spectacular. They have some beautiful stuff in Milwaukee.
Milwaukee's really a great city. Yeah.
It's a great city now. But if you ever wanted to go there, this is the week. It's going to be
Sosnoff, in America. Sosnoff, where were you when Teddy Roosevelt got shot?
Yeah, that was a little before my time.
Hey, shifting gears
I'm not sure.
to the other story, though, but Bitcoin did climb to a more than 1 week high after the attack on Trump. Bitcoin touched 61,000 after, I don't know, I guess speculation around the largest digital asset. Let's talk what's going on in Bitcoin, and we'll throw Ether in and Coinbase. What's going on?
It's 62,000 and change, traded over 63,000. I think the high on the future was 63,500. The cash was 63,300. So yeah, big move in Bitcoin Cash.
Yeah, I mean, I don't think people have very big positions in there, other than people are long. So I don't think anybody's going to be too upset about Bitcoin going up.
Mm-hmm.
All right, but I have a question for you. Is Bitcoin is Bitcoin the flight to quality?
No.
Bitcoin the edge to the market?
No, this is a different. Don't assume just because it's up that this has anything to do with, with an assassination attempt. Bitcoin just there was just a massive move in. Somebody got super bullish this weekend.
And DJT also up $15.
Yeah. Oh, I'm sorry. Thank you, but I was remiss in mentioning
that stock was trading even 50 pre-market, but that's probably more emotion than anything else. I don't think it's going to stay up there.
Got it.
What are you guys doing in Coinbase?
I'm sure it's up big this morning. We don't really have much in there.
Coin has an IV rank of 36. It's trading 228, up around $10 or so. Coin has earnings coming on August 1st.
Nice. Hey, in other news, the yen seems to rise as traders are antsy over rate checks and a likely intervention. The yen advanced against the dollar in choppy trading as traders remain on edge after a suspected intervention and rate checks by Japanese authorities. Let's just talk about some currencies, starting with the yen.
Tomas?
They're not. I don't think they're doing anything this morning. Let me see.
The yen's unchanged, but it has had a rally the last 2 days off of all-time lows, right?
Yeah, the euro, the yen, they're all pretty much unchanged this morning. Nothing.
But they're all well off of their lows too, though.
Oh yeah. The yen's had a huge rally, but it's just doing nothing this morning. It's resting.
Got it.
Okay, and nothing in the euro or the pound.
I mean, we have positions on in both of those, but they're not doing anything today.
Okay.
Euro's got a good IV rank of 73 too, but it's hard to sell options in something with volatility. Monthly implied volatility is under 10.
Our
position's small. Our position's really small. We have a big yen position, but it's just naked long, and our euro position's small.
Hey, and one of my favorite headlines of the year, women are set to inherit trillions of dollars in the great horizontal wealth transfer. Up to $9 trillion is expected to be passed along to spouses and partners in the coming years. There are over 43 million people in America over the age of 75 and 50 trillion in combined transferable wealth for the simple fact that women tend to outlive their male partners. So finally, getting some cashish.
So you waited us out, is what you're saying?
Well, I'm waiting for a generational transfer. Sorry, not sorry. No. But over the next 20 to 30 years, aging baby boomers and older generations are expected to pass down 84 trillion in wealth. Younger generations, including Gen X, millennials, and Gen Z, are expected to get the bulk of inheritances. But first, there's that top tier of the spouse or partner, and then but do you think we're prepared for this massive wealth transfer, Tom and Bat? Because, this is a lot of 84 trillion. That's a lot of money.
A lot of guys married younger women.
Okay. That's not true. All right.
Second time around.
All right.
Hey, you laugh, but it's a guy's only way to get revenge.
Okay.
You're a savage, Sosnoff. You really are.
If you give up half, then you have to have some form of revenge. Your only two forms of revenge are younger and have another kid.
All right.
Oh my God.
I'm going to keep it moving. Hey, JP Morgan Chase might stop offering free checking and other free banking services. The majority of people with checking accounts, so around 73% of people, take advantage of a free checking account. Most banks, if you have your paycheck direct deposit, you get free checking, or if you maintain an average minimum balance. But JP Morgan says they are now looking to stop offering these free banking services because now they have to cap their late fees at $8, and banks are like, that sucks for us because we really like taking money from poor people. And so we got some more banks reporting earnings today. I know you don't have probably existing positions in there, but Morgan Stanley and some others today. Bank of America, I believe.
Morgan Stanley, Bank of America, correct. UNH.
Yeah, I don't have a position in either of those.
Okay.
I don't blame you.
Hey, Google is reportedly in advanced talks to acquire a cyber startup called Wiz for $23 billion. Yes, with a B. It would be Google's largest ever deal. What are your thoughts? Wiz was founded in 2020 and has grown at a rapid clip. They'd been eyeing an IPO as recently as May, where they had achieved a valuation of $12 billion. I don't know why Google's now going to pay twice that amount, but what do I know?
Google's got a lot of money. They just want to be, nice to them.
Yeah, but if you're valued at 12, why would you offer 23? Okay, go off.
First of all, if you started in 2020, how did you get a $20 billion company in 3 years? That's in 4 years. That's impressive.
Because they have magical words of cloud security.
That's pretty magical.
But it would be Google's largest ever acquisition. What are you guys doing in Google?
Nothing. I need it probably lower.
Google 185 and change, only up about 10 or 15 cents. Earnings July 23rd.
Oh, okay.
I need Google $15. I need Google at 175.
Okay. We'll put that out there.
You've got, if you're in August options with 32 days to go, you do have a $13 expected move. If it's all to the downside, you could get there.
There you go.
You're saying there's a chance.
Saying there's a chance mathematically.
Hey, StubHub has put off its U.S. IPO launch until after the summer. They're citing unfavorable market conditions. The operator of ticket resale platform StubHub and Viagogo was set to make its IPO filing public as soon as Friday, but now the company says they're going to have to submit fresh financial information to the SEC. What do you think about a StubHub IPO?
I think if I was StubHub with the crazy fees that they charge to mark up every single thing they do, along with Ticketmaster and everything else, I would IPO as fast as possible because somebody is going to disrupt that. The
DOJ is coming for Ticketmaster.
Yeah. How has nobody carped that market yet? Like, if you buy a $200 ticket, right, for some event, they charge you $100. It's like 35% markup. Like, how has nobody stepped in front of that and said, we'll do it for 50? Yeah. Like, what am I missing here?
I think it's just hard because I think it's just like the venues are tied to the ticketing platform. Like, there's nothing.
I'm just saying they're all the same, whether you use StubHub, SeatGeek, Ticketmaster, they all charge like the same $100, like 33 or 35%.
Oh no, the system
markup.
Is fundamentally and irrevocably broken.
Okay, so my question is, why doesn't somebody come in and do it for half that? It seems like the markup still, you make a lot of money.
Well, you don't even need for someone to come in and disrupt it. You just do what the EU has done, and you make caps on what resellers can get for the
do that, but
tickets.
I hate to legislate. I'd rather have free markets disrupt it. I mean, it's way cooler if somebody comes in and just takes the whole marketplace by charging half.
Okay, well, that's cool in a Keynesian fantasy sort of way, but I don't know that you can just come out of the gate as a startup and then disrupt Ticketmaster, but your mouth to God's ears. Hey, in social media news, Meta is lifting restrictions on Trump's accounts. Meta announced on Friday that it would move restrictions placed on the former president's Facebook and Instagram accounts ahead of the Republican National Convention, which I mentioned starts this week. The company said the decision was made to ensure that Trump, the presumptive Republican nominee for president, would have equal standing with Democrat President Joe Biden. What are you doing in Meta?
I do not.
Unchanged, up about $1.
I do not have a Meta position on right now.
Okay.
No, do I.
When are Meta's earnings?
Ivy rank of 69 is pretty good. Earnings at the end of the month, July 31st.
Oh, thank you very much. Hey, OpenAI whistleblowers have filed a complaint with the SEC calling for an investigation over the AI company's allegedly restrictive non-disclosure agreements. They're saying, given the well-documented and potential risks posed by the irresponsible deployment of AI, we urge the SEC commissioners to immediately approve an investigation into OpenAI's prior NDAs. They're saying that by making all these people sign NDAs, that people are keeping information close to the vet, and something really bad or nefarious could be happening, and people are being bound by these NDAs. But the greater good of society outweighs.
I thought the NDAs along with the non-competes. Oh, I guess it's really just non-competes, not
it's non-competes. Those are two separate issues.
I thought it was personal NDAs. Like, I understand. First of all,
NDAs can be put aside in the instance if there's like a crime that would be, like if you're being like sexually harassed or something, and then they're like, oh, well, you signed an NDA, you can't talk about how you were. So I think that's the ruling in my understanding, but I could be wrong. But it's not a blanket,
I don't know
crimes.
Any company that will sign an NDA anymore. Like, we will not sign an NDA. Like, we're like, if you come to us to show us something and you want us to sign an NDA, we're like, hell no, we're not signing any NDA.
Okay.
We're not ending up, because we own every idea too, just like everybody else says.
Well, you own all of my ideas, which is terrible.
Right. We would never, ever sign an NDA. We haven't signed an NDA in over 10 or 15 years.
Sure.
And I don't think any other companies do anymore either. Honestly, I really don't.
They weren't worth the paper they were written on anyway.
Well, I mean, maybe that's the case, but why even deal with it?
Sure. I agree.
And it's really funny when we get these people, they have an idea, like they have no money, they have nothing, they just have an idea, and they'll come to us, they say, well, you got to sign an NDA if we're going to tell you. We're like, no, what are you talking about? Like, just then don't tell us. We don't care.
What are you guys doing in Microsoft? You can't trade OpenAI, but you can trade Microsoft.
We have no Microsoft position. I mean, unless the stock trades at 400 in 30 days.
453 right now. It's actually down about 50 cents, believe it or not.
It's getting started. Hey, yes. Intel says that they are on track for cumulative software sales of $1 billion by the end of 2027. Intel says that their push into software is going well and that they could have $1 billion in software revenue. That's according to their CTO, Greg Lavender. We don't talk about Intel. We normally just talk about NVIDIA or AMD or SMCI. But what are you doing in Intel?
We've been trading it from the long side. We lightened up last week on the rally. So, I mean, Intel has been a laggard. It's been trading. It's been the cheapest of all the chip stocks. I mean, we kept buying it and just finally took our profits last week or something.
Yeah, it rallied about $4 from the low 30s, 30 and a half, 31 up to about 34, 35. It's sitting right there at 34 and a half. Good Ivy rank of 78 and has earnings coming August 1st.
Yeah, but I think it's already had like a 12%, 13% move in the last week or so. I'd just be a little careful here. It's already, I mean, I'm just saying at 30, it was really interesting to me. At 35, it's a lot less interesting.
I think a lot of men feel that way, but I don't think that that's valid. At 30, yeah, you're still interesting. 35, not so much. All right, well, that's fine. Tesla has been downgraded to sell at UBS, saying their valuation premium is too significant. But you look at Tesla now, pre-market, and market don't care. Tesla still got slapped with a sell rating on the stock. It did slide last week, following reports that they were going to delay their robo-taxi reveal, but the market has soon forgotten Tesla putting together a meteoric rise for the month of June. We'll see yet how it shakes out in July. What are you doing in Tesla?
Not much. We're going to be a little short this morning.
Tesla made its highs, well, not recent highs, last week around 270-ish or so. It's trading 257 right now, but that is up around $9. Don't forget, Tesla did start the month of July closer to 180, so it's had quite a run.
That is quite the run.
But it's funny that they put out a sell signal, and usually when you get a sell signal, the stock's down, not up.
That's true. That's true.
Market don't care. Vietnam's VinFast is delaying its U.S. electric car plant amid a market slowdown. VFS, the Vietnamese electric vehicle maker, is delaying the launch of a $4 billion factory in North Carolina that was set to go online in 2028. And they were also cutting their delivery forecast for the year by 20,000 units.
Is this car available in the U.S. now? I don't know if I've ever seen one.
Well, sweetie, you're not great with cars anyway. I'm just saying.
A VinFast?
Yeah.
I don't know.
VFS is the, okay.
I know, but I don't know if I've ever seen one of these cars.
Okay, it's okay.
I haven't either, Tom. Don't worry.
Not sure what the stock is doing, Bat.
VinFast, I've never even heard of the stock, to be quite honest.
Yes, you have. I've literally talked about it before. And then every time I talk about it, you're like, I've never heard of it. And I'm like, okay. It's a fun little game we play.
I don't think you have a penis, do you?
No, but if Nikki tells you that he's told you about it, then you'll be like, ah, yes, my son. But yeah, he's
$4.85. Now I realize why I haven't looked at it. It's unchanged this morning, maybe up a nickel off its lows of around $4 or so. It's you either own it or you don't play it. The options you can't trade. You can trade them, but why would you?
It looks like AT&T reportedly paid a hacker $370,000 to delete the data that it had stolen. It basically stole the call records for literally every single AT&T customer, just tens of millions of customers, every single text message. Even if the AT&T customer was texting like a Verizon customer, like all your messages are like it's bad. And so AT&T paid the hacker $370,000 to delete the data and then send them like video proof that they had deleted it. But then, so the ransom was paid in May. They were part of the Shiny Hunters hacking group, but it was the data was accessed through an unsecured Snowflake cloud storage account. He initially wanted $1 million, but then settled for the fraction. I don't know what these companies are doing.
That seems cheap.
That's probably what AT&T thought.
I mean, compared to the lawsuits that they're going to face, I don't know, but I'm not sure what Snow is doing because you don't really trade a ton of tea.
We don't trade any tea, and we trade a little bit of Snow, but it's been on its butt. I haven't traded it lately. It's definitely been on its butt.
Snow 135. It is off its lows of 120, but you are right, Sadnoff. Nowhere near its 250 that it saw earlier in the year.
They literally have one job, and they're not very good at it. Hey, sorry, not sorry, but Tom, Royal Caribbean gets a price lift from Barclays. The Royal Caribbean, Barclays raised the price target on RCL from 165 to 185. Analysts maintain their overweight rating for the stock. Looks like people just still want to spend on cruises, and the Icon of the Seas is the largest ship, and it's packed, baby. RCL, Bat, what's the stock doing?
Sadnoff, this is a chartist stream. This is a bull market stream. Stays in a very nice channel. Goes down around $5, pops about $10. Goes down around $5, pops around $10. Stays beautifully in that channel. Trading their highs 167 and change, up around $1 this morning. Sadnoff. When they going out of business?
Sooner than you think.
Uh-huh.
All right.
$42 billion market cap is going to be a mighty fall.
It was a mighty fall. Hey, Chipotle's stock rout on portion complaints is a chance to buy, analysts say. A hubbub on social media over Chipotle's portion sizes have sent the burrito chain shares into their worst tailspin in nearly a year. In fact, even a Wells Fargo analyst was sent around to buy 75 different burrito bowls and then had to meticulously weigh the contents. But the rout that wiped out nearly $7 billion in market cap last week presents a buying opportunity. The stock has now split, and even though it's down 16% from a record it set last month, the 50-to-1 split in late June added volatility in recent weeks. What can be done now in CMG?
You can sell puts. I sold puts in there. I don't even like CMG, but we're short. I don't know, like the 52s, 53s, 55s, 56s. Yeah, we're short like every put.
Okay, I was like, those are all the numbers.
Yeah, I'm just looking right now in August. 53, 55, 56, and 60. Yeah, we're short every put. I think you just got to be short puts in there just because, the stock sold off a lot. There's not a lot of stocks that have sold off as much as Chipotle. I don't know if they're making bigger bowls, cheaper bowls, smaller burritos. I mean, I don't go. I'm not going there. I can't stand that place.
After approaching 70, it is languishing around 58 or so, where it is right now, up around 30, 40 cents. And you are right. It has been going lower.
When are Chipotle's earnings?
Oh, that's an excellent question. Thank you for asking. Earnings are July 24th.
Okay, we'll see what happens. Hey, a new study from UK researchers find that watching sports could actually help you live a longer and happier life. Research shows that people who watch sports experience greater well-being than those who don't. It's probably linked to the social aspects of watching sports, but they use data from 7,200 adults aged 16 to 85 who lived in England. They also found that people who attended a live sporting event in the last year were more satisfied with their lives, felt their lives were more worthwhile, and were less lonely.
Who commissioned that study? The owners of all these sports teams?
Maybe. I don't know. I just thought it was interesting.
Very interesting.
No, you don't. I mean, I did hear Saturday, one aspect of the show that people were really pleasantly surprised by was how awesome it was just to meet other, hardcore tasty fans and like meeting other people in the community, because they're saying that trading could be kind of like an isolating activity that you do in your house, by yourself, and that it was great to meet other people in person, in real life.
I agree.
Okay.
Agreed. Thought that was nice. Hey, finally today for my viral video of the day. I love all these videos from the so-called redneck Riviera, just summer fun and shenanigans. Have you ever seen like one of those big inflatable tube things and where people like jump on it and it like sends you in the air?
Yeah. Like, they'll go down like a slide and somebody will, and then
no, they just jump on it. They just jump on it, and the other person goes flying.
Yeah. But would you guys do that? Would you be launched into the air? Would you volunteer?
No. I think I would do that. I
don't know, but this guy gets major
you can't
points.
Launch him like you could launch like a 80-pound, somebody.
Here's the thing. I think this should be a new team sport in the Olympics. Check out this guy. I think he's got a chance to go for the gold. What form? Watch this.
Yeah, that's what I'm saying. They get on a thing and they jump. Yeah.
I just like the Josh Groban. He was in the air for like 3 to 5 business days. Like that's high.
Yeah,
that was very graceful.
Because if that was me, I'd be like all over the place.
You got to keep your composure, son.
Yeah, you got to keep it cool, man.
I mean, I want to be fair about this. That would never be me.
I never say never. Tasty team building event?
Never gonna happen.
Anyway, that's my time. Bat, what's coming up next?
We're going to take a quick 90-second break, and if you haven't looked at your AVGO position, they split. That has been complete. It's $170 stock. We'll see how those markets are later today after the opening bell. Thank you, Vanetta, for your time. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Good job out of you.
If you missed the live show, here's our cherry on top weekly recap.
What happened to your? You got
injured.
You got a boo-boo?
I had to take somebody out this morning.
Yeah. Oh, take them out. You mean like take them out?
Yeah.
Got it.
Right cross.
Yeah.
Right cross, but with the back of your hand. So like, like what? How do you?
You're about to spend 2 nights in a camper on a foam mattress before she throws you out into the insect infested wherever you're going to be.
We got the spray with DDT in it.
I have $20 that says you'll be in a hotel by, the second night.
But we would like to get a little walleye if we could, some crappie. Vinny's gonna make some fish tacos. We're frying them up. It's gonna be good. We got the fish fry stuff. We got like 4 pounds of fish fry meal or whatever.
Wow. Oh, like the batter and stuff.
Yeah.
Okay.
Yeah. Then you throw it in. Then you fry up the fish.
Make it s'mores.
Make s'mores. Yeah. Oh, nothing can go wrong.
Yeah. It'll be great.
So we're doing the show on Friday, and the bat. He's doing the show in the morning. Then he's going away afterwards, right?
Yeah.
He's all packing up the car. He's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, "You'll be in a hotel by either the first night or second night."
Oh, and then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
Appreciate you. You're
Yeah.
Saturday morning, I look at my phone, and it says Venmo $20.
I almost had to pay him $40 because there was a little stipulation. If we didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was,
We're driving up there. It's absolutely beautiful. It's like sunny as
Because
can be.
you were tweeting pictures.
Oh.
Yeah, it was
Like a
beautiful.
girl
It was
on
beautiful.
Instagram, you're like, I'm
Oh,
here
yeah.
in the woods.
Absolutely beautiful. Absolutely beautiful.
amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal. Look at
Oh,
that.
that's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
Jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch
He's hurt on this one.
muskies, some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah,
You didn't make it 24 hours.
no,
Who broke down?
they all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was.
Now the RV on RVTrader.com.
No.
Yeah,
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Your dogs are going to survive just fine in a kennel.
So that they're service dogs. He's bringing them right on the plane.
Oh,
I
sure.
don't pull that crap.
Oh, sure.
Service dogs. These dogs. The one dog's afraid of her own shadow. Look at him. The other one could be a service dog because he bites everyone.
Get the full scoop by checking out the archives at tastylive.com.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live, well, with Confirm and Send. But before we do, would you like to take a quick look at the market?
Sure.
Even the S&P's up 22 handles, my friend, 22 and a half. The highs were 94, about 7 handles higher than we are right now. NASDAQ up 85, about $50, call it 40, some odd and change off its highs. Russell up 16, that's the leader in the group. It was up a little bit higher, by about $11 a moment ago. Dow up 217. Volatility down by 6 cents, 1390. Bonds have had a relatively tight range, but they are down 29 ticks, all to the downside, 119.16 to 118.23. Bitcoin's been the big mover, traded up to 63,000 and change. It's 62,700 right now, well off of its lows when it was approaching 55,000 not too long ago. Oil basically unchanged, down 6 cents. Gold basically unchanged, down $2 and change. Silver down 27 cents. That's a decent sized move to the downside in silver. Silver's been catching a bid as of late. And nat gas 2.222 sound off. That's a new low or approaching a new low in nat gas. It's off of its lows of the day of 2.214. Is that a commodity you might think about getting into?
I'm already long it.
Oh, that answered my question.
It's a commodity that I'm not real happy with because they've been, it's been
going
really
in one direction. Yeah. Apple's a commodity I'm not happy with. $2.35, up another $4 and change in Apple, approaching new highs there. Tesla is another one, trading $2.58 and change, up $10. That's all I got.
We're running late, so let's do a little confirm and send.
I'm ready.
Emails that came into us over the weekend. Lots of them. Let's see what we got. So this person writes, I had a July strangle in XYZ that I took to a straddle after multiple rolls. I'm not sure how to handle this with earnings this week. Do you suggest closing the position or rolling past earnings and risk the volatility? What do you do with position that you have on, existing position you have on, if they have earnings coming out?
Yeah, existing position, and it's a straddle like this. I probably stay. I'm assuming you're in August, 32 days to go. I wouldn't imagine you're in July with 4 days to go. So I'm going to say you're in August. I would probably look to stay in August. I would buy the guts and sell the wings, to answer it quite quickly.
So what Tony's suggesting, which is the same thing that I would probably do in this case, I would not roll it out to September. Assuming that you're in August, what he's suggesting to do is to buy back the straddle, because we wouldn't be in the straddle, and he would set up a strangle just outside of whatever the expected move is in XYZ. So if the August expected move in XYZ, I'm just going to make up a number, is like, let's say it's 15 points, which is a lot. Let's say 10. Then he would move just outside 10 points, create a strangle just outside 10 points. And so what he's doing is buying the straddle back and selling a new strangle just outside the expected move. And I would do the exact same thing.
Beautiful.
Let's go to the next slide. So I've noticed that lots of people online talk about trades in the weekly expiration series, but you guys don't seem to really use those. Why is that?
We've used the 0 days quite often when volatility was higher than it is right now. We've avoided it in this low implied volatility, and we don't use other weekly expirations much. We prefer. Listen, our whole mantra is, let the stock beat you. Time is on your side. Give yourself time to be right. Give yourself time to stay in a position. How many times do you put on a position, the stock goes in the opposite direction? And when you're trading in weekly options, you have no adjustment. There's nothing you can do. You have to get direction right. And we prefer duration over direction.
Yeah.
There's nothing wrong with it. If it's working for you, stick with it.
Yeah, do whatever you want. I mean, what we do on air is try to talk about things that are more optimal. So, and we're also trying to keep kind of all our expirations lined up because we have so much stuff going on, so many different positions. But if you like the weeklies, go do them. I mean, for us, we find optimal's a little bit longer. It's harder to manage a weekly position, and it requires a lot more work on our part. But if you guys, if you want to trade the weeklies, sure, go ahead. Same, everything's the same. It's just, we have a preference. That's all.
Absolutely.
Let's go next slide. So why would the VIX October 13 call be trading higher than the December 13 call? And why wouldn't I just sell the October call and buy the December call? It looks like free money because you can do a counter spread for a credit.
They were saying on the 13 strike, they are correct. The 13 strike in September, let's just call it 240. And in October, let's just call it 440. That's a wonderful observation by them. And the first thing they should be thinking about is that there's no free money, so that there must be something behind this. And there is something behind this. As you can see, VIX has no bid ask, no volume on the top of the screen. There is no stock in VIX. So that must mean that VIX is tied to a different product than it is. It's tied to /VX, which is higher in October than it is in September. And those prices are reflecting that specific month's future and its pricing. So you calendarize in VIX is something you cannot do. Well, you can do it, but you don't have a position on. You're long one and short the other. It's not going to be a hedge against each other.
Yeah, basically, the reason that October calls are higher than December calls is because there's an election in November. I mean, that's it. Mm-hmm. And anytime that you have an election, you're going to have a higher front month premium than back month premium. But the October-December spread, like let's say right now it's a 25 cents credit. It can go to $7.
Sure.
The biggest losses we've ever seen on counter spreads or on any underlying was 2008 when the VIX went inverted and the back month was traded up to like $7 or $8 inside of front month. Everybody was doing VIX counter spreads for a credit, and they were all out of business. And as a brokerage firm, we lost a ton of money on, making up for customers' deficits. So, we don't even allow this anymore. It's not a spread. That's what Tony said. It's not a spread. Selling October and buying December. December is not a hedge against October, period. So it's just like you have two naked positions on. They're not even a hedge.
That is
so correct. That does not even count as a counter spread. And we will charge you 7 times, the normal margin because we don't want to get killed on that. Let's go next slide. Don't ever do VIX counter spreads. Never. Next slide, please. It's the only product like that. So there's no market structure issues outside of VIX.
Stand by, guys.
Is that the last one, John? There's more.
Issues.
Oh, little technical issues.
Stand by.
Sosnoff, technically I got a bid for my RV.
What does that mean?
Well, it's at a StubHub 30% discount. So I just was letting you know how the pricing is working right now.
That's not good.
It's okay. I'm going to be parking it outside your house pretty soon.
Guys,
I'm going to let you have it.
We're going to go to break and come back. We're having some technical issues. We're going to have to do some restarting.
Where's Beth when you need her? Let's take a quick 90-second break and come back. We got more Tasty Live with a lot of other stuff after this. We'll be back in 90 seconds.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at tastylive.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy.
Yeah.
Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh, yeah. It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
I'd started to disrupt my trading career like really early on, probably, 4 or 5 years into it. I started thinking there's got to be more than just this. Thinkorswim we built in 1999, 2000 when the market was crashing. And Tasty was in the middle of 2010, 2011 when markets were kind of in turmoil. So yeah, it's always best to start things when it's worse. When I speak in front of a large crowd, I usually say right up front, I'm going to try to give you a takeaway every 15 minutes because I think it's important. You came out for a reason, and we respect that, and it's humbling in its own sense. So we have to deliver our part. Like, you can't just give somebody, hey, here's a one-liner, and you take it home, and then you try to figure out what to do with a one-liner. You have to challenge people to think.
If the VIX is over 40, we'd like to see an allocation of about 50%. The reason you allocate more when the VIX is higher is because when you have a higher VIX, you have the opportunity to make more money.
We built the Tasty Trade app for today's traders. See it, tap it, trade it. Deposit and withdraw money right in the app. View company financials, forecasts, news, and more. Set custom alerts to stay up to date. See things bigger in landscape mode. Get the customizable trading experience you want. The tools, the data, the knowledge. See it, tap it, trade it. Join the club, genius. Tasty Trade.
Tomas from the powers that be. We are back, my friend, and we've got confirm and send. Continue.
All right, let's do it. For your 45-day to expiration strangles, what comprises the bulk of your profits? Is it theta? Is it the directional move? Is it IVR?
Yes. Next question. I mean, all of it, right? I mean, sometimes you get the direction right. Sometimes theta contracts very quickly. The IV rank is part of the theta. That's what allows you to look quickly at getting into a stock that has high IV rank and the most positive theta.
Yeah, I mean, yeah, the answer is yeah, all the above. And we are hoping that we get a little directional kicker, and we are hoping that, that time goes by, which it will, and then we're hoping that volatility contracts. So, I mean, if I had to say two, theta and IVR, but yeah, direction helps too.
Agreed.
Is it possible to just use one strategy to create constant monthly income?
Sure. I don't know if it'll happen. I mean, but you can certainly create from one strategy positive theta decay like a covered call. Now, that would be a classic way of creating monthly income. I hate it when people say that, by the way, because it's not monthly income. But you can create positive theta decay. All you need is the stock to go higher or stay inside a range. But if it goes lower, then you have a loss for that month. So is it possible? Sure. Can you do it with one strategy? Sure. Would I want to do it? No, absolutely not. I would rather have strategy diversification.
Yeah, yeah, sure, of course. It's possible. Anything's possible. I mean, we use a majority of our positions or strangles and things like that. Of course, you can use one strategy. I mean, it's not ideal, but yeah, anything you want to do, sure. I mean, it's possible to go through life only eating one food, I guess. It's possible to do lots of things. it's possible. So sure. I mean, there's nothing we can really say here. It's not ideal, but sure, it's possible.
It's possible to eat only one food. It's possible.
Yeah. I mean, some people
boiled shrimp, fried shrimp. You have your
I know people that just trade balls. I know other people that just sell naked puts. That's it.
Sure.
You know what happens.
Sure. Yep.
Let's go to the next slide. So, what do you think about how the weekend's political events will impact the market and the economy? Events like what unfolded on Saturday can change history, but do they also change the way we should think about risk?
You know, I don't think it's how you should change anything about thinking about risk. I mean, and these events can, change history for sure, more than I think they'll change the stock market. And I put out a survey yesterday. What was the market before the market opened on Sunday night? The futures, were they going to be unchanged, up +10 or down +10? And 50% of people said they'd be up +10, and the other 50% said they'd be unchanged or down. So it's all split. My point is, nobody knows anything. It's a horrible event, and it should never happen in our history. But I guess it's something we have to deal with. And you deal with it. You deal with volatility risk by keeping your position small.
Yeah, I mean, you should always expect the unexpected. I mean, this weekend's political events will not change. I don't think they'll change the market at all. I don't think they'll have any impact on the economy at all. I think they socially, they'll change certain things. I mean, in a crazy way. I think it's probably healthy for the. I think it will serve to reduce some of the divisiveness in this country on a very short-term basis, because nobody wants to see events like what unfolded. But this wasn't some crazy conspiracy or some crazy terrorist threat. This was just some kid who wanted to die by, police suicide. I mean, that's really, I think, it. And, I think the one thing, if there's one takeaway from this that I think you need to think about risk-wise in the markets, it's that there are certain underlyings that have a single point of failure. And you want to be very careful about your commitment of how much money you commit to things with a single point of failure. But other than that, no, I don't think it's going to have any impact. I don't think this particular political event will have any impact on the markets or the economy. I think the election might have a little bit, but I think, again, either candidate right now, to me, is a non-factor in the future of this country, outside of, economically, with respect to economic cycles. Either candidate is, in my opinion, not going to add or take away any real value from market structure or corporate value or things like that. I think they're non-factors.
Very good, sir. Let's do a quick 90-second break. We'll come right back. We've got Anton and Option Jive next. Peace.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at tastylive.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy.
Yeah.
Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh, yeah. It's not even close. Like, you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
It's Option Jive.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live at this Option Jive with my friend Antune, who was the last person to wish me a happy birthday on my birthday on Friday, very late in the evening. Antone, welcome to the show.
So, you have to be strategic about these things because you don't remember the people in the middle. You remember the first one and then the last one. So why would I ever,
Yes, but you remember the first one for all the right reasons, and you remember you for all the wrong reasons.
But you still remember me, Tony, and that's what matters.
I guess so. How are you, my friend? What are we going to talk about?
Well, you guys are running a little late, but that's okay because we always get through these segments. Tom, I know are you schwitzing over there? Is it a little toasty?
No. Are you kidding?
It's 71 and rainy here. It's beautiful.
Oh, okay.
No, actually, right now I don't know what it is, but it's sunny. It's beautiful.
Yeah, it is sunny and 70.
It's sunny, it's raining. Okay, sure. Sounds good. All right, let's go to the first slide. Absolutely. All right, let's take a look at the expected move for this week. 53 points. That's essentially a non-event from last week. That's the expected move from now until Friday's close in the E-mini S&Ps. No change in volatility, Tom. No change in prices, and up a little bit, but in terms of real expectations, no change there. S&Ps are up on the pre-market session, but when it comes to the weekly moves, there just isn't juice being pumped in. I think this is like the 6th or 7th week in a row that we're sitting at 50 points, somewhere around there. So
it's surprising, but it's surprising just the amount of time we've stayed in this crazy lull state. But the flip side of it is that this is kind of July expiration, which tends to be, a little bit boring, I think.
And bullish, right?
And has been considerably bullish over the last 4 years. Not over a long period of time. Like it's basically barely just more, over like the last 20 some odd years, it's barely more bullish than bearish. But over the last 4 years, it's been very bullish. Just July. I don't know why.
Mm-hmm.
Yeah. Yeah. It's interesting, today's Monday, Saturday. Yeah, it was Saturday night. Yeah, Saturday night. I get a rampant text message from Chris Vecchio. So it was my mom and Chris Vecchio who texted me on Saturday night.
They were together?
What happened?
No. Your mom's doing Chris Vecchio?
Your mom was out with Chris Vecchio? They were dinner?
Oh my God, Chris, my man! Look at that! Woo!
Can you? This is ridiculous. Okay. So I get 2 text messages Saturday night. I'm not. You know what? I'm not even going to go there. Anyway, my point is volatility. I didn't expect there to be no additional volatility, but after I thought of it for a little bit, I'm like, you know what? This is exactly what I'd expect from a market that prices things perfectly. You have no change in volatility even after. Okay, you know what? Let's just go to the next slide. This is ridiculous. Let's just. You know what? I tried to make a.
I didn't even know Chris spoke Russian. I mean, this is great. Yeah, we got more to talk about.
I didn't know Chris was so kinky.
Oh my gosh! I wish he was watching this. All right, biggest move in the Russell and the Nasdaq pair trade. You already know this, but I wanted to put some context around it. Stop smiling; it doesn't make it better for me. I'm trying to catch up here. All right, the Russell and the I can't even talk anything about serious. I can't talk about anything serious now. It's like.
You want us to do this? You want me to do this for you? And you just be the color guy?
You can be the color guy. Okay.
Oh, okay.
So the Russell and the Nasdaq pairs trade had its biggest move. And when I say biggest, I don't mean just for the year, for the last 5 years. I mean since our data set. Since we have our data in early 2000s, biggest move in the Russell Nasdaq pairs trade from a dollar perspective, it was a $20,600 move, assuming you were doing a 1-to-3 ratio, which right now is the proper ratio for the Russell Nasdaq pairs trade. But I put this chart up because this is actually a chart of the Russell Nasdaq pair since 2023. Do you notice something, Tom?
No, what?
That's right. There isn't much to notice. That even with this move on Thursday, there wasn't much of a change in the actual amount that it had risen the other direction. So Thursday
It's
was
not.
just.
It's not really 1 to 3. I mean, I know it is now, but we most people have this trade on, like, say, 1 to 2.
How do you have it on?
I have it on. Well, I'm a little more aggressive. Oh, you know what? I'm sorry. I thought you were doing.
Hold on 1 second. You are 100% correct, Anton. If you look over
No,
the
I'm
year,
sorry. I thought you had S&Ps versus Russell. I didn't realize it was NASDAQ. That's fine.
Yeah, NASDAQ.
You're 100% correct, Anton. And if you look at this, from a year point of view, like you are now, what is the Russell up like 7%, and NASDAQ's up like 20%, S&P's up like 18%. But just last week alone, IWM was up 6%. Compared to, say, the NASDAQ, which was unchanged or down small. So that's the big move that we were talking about. But go ahead. I'm sorry.
Well, no, of course, and that's. I mean, it was a historic move for that pair. But my point is like, and I think you were saying this last week, Tom, too. The amount that this pair has gone to an extreme, this is like a blip in the actual amount. If you were short this pair for a while, this is what you were expecting. You need at least 3 of these to get back to some sort of even. If you were short this pair for a while, but anyway, so I just wanted to point it out there that it's a huge move, monumental move. But in terms of the last year, it's still like a fraction of what the last year's move produced.
Totally agree.
Let's go to the next slide. Talk about the move in terms of kind of compared to a distribution. You look at in dollars, this was by far the biggest move. You look at the left graph, this looks at all the moves, all the daily changes in dollars in that pair, and obviously you can see this is the rightmost blip on that distribution, meaning that it is the maximum of the distribution. The highest point of the distribution was Thursday's move in the Russell Nasdaq pairs, and if you look at it as a percentage. We can go back to 2006 because the ratio of the amount of pairs actually has changed over time. Now it's 1 to 3, but it used to be different. But as a percent, we can actually look at it over the long period of time. 5.8 percentage point difference between the Russell and the NASDAQ on Thursday, which was also the biggest move in terms of percentages since 2006. So very, very interesting. And funny enough, if you look at the 2 biggest moves after that, so 5.8 was number 1. The next 2, one was in 2020, the other was in 2008. So you're looking at this move as a very comparable to an extreme volatility event, because the other 2 moves, the biggest moves, happened in an extreme volatility event, both when the VIX was around 80. This happened when the VIX was around 15 or less than 15. Yet we had a bigger move. So I thought that was interesting.
That is interesting. That's good stuff.
All right, let's take a look at the next slide. 6J, these 2 are kind of boring. I had to fill something because last week was mainly equities. That was the standout. But okay, 6J spikes with bonds and the Russell. So last week we had, on Thursday specifically, we had 6J, bonds, and Russell. Those were the biggest movers to the upside. Obviously, 6J has also been killed this year, but with this spike, are you changing any of your yen position?
No. It's only,
still long.
Just a, yeah. I haven't touched it. And I'm not getting out of my yen position, but I will sell calls if it gets, it's just under 64 right now. If it gets up to about 65, I'll probably sell the 66s or the 67s, some calls against my puts. But right now, I'm just naked long yen and deep in the money, short deep in the money puts. I'm not going to touch it until it goes up another 1,000 points.
Okay.
That's a very bullish approach. Not a smart one, but a bullish one.
It's a tilt trade. It's a vengeance
tilt trade. Yes.
All right, Tony, do you trade currencies at all?
I'm the world's worst commodity trader.
Got it. Okay. Okay, let's go to the last slide.
Finally admitted it. It's been years.
Crypto in the middle of some issues that are charging package the last few minutes, so I had to pull from the platform directly. Crypto's in the middle of its range and has been for quite a while now. What are you doing in crypto? Are you just long, or do you have some?
I'm just
or I know
long.
you sold out close to the top, but
I sold out a lot when it was up near 70, but I'm just long. I'm still long.
So if you look at the crypto options on the Bitcoin futures, they are getting better. I just looked at them this morning. There is more open interest, and the spreads are getting a little bit tighter. So I'm not saying they're liquid enough to trade yet for a retail customer, but it is something to keep aware of, because
I haven't traded them in a while, so I couldn't tell you.
I think it would be something good to
okay, that's fair.
I think we should do some yeah. So
we can check it out.
They're getting there. So just wanted to point this out. Volatility is high in here. If you look at the midpoint volatility, which is very accurate, options are tight enough. You're looking at a volatility rank of close to 30, and you got about spot volatility is about 60 right now. So kind of like a Tesla. All right, that's it.
Good job out of you, my friend. We're going to take a quick 90-second break and come back. We got the opening bell immediately following this. Thank you, Antone. Appreciate it.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading. Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
It was cute.
Tomas, we are back, my friend. You know what that means? The opening bell is imminent in less than a minute or so, so I'm not even going to show you anything. But even the S&Ps are up 29 right. Well, they're up 26 right now, about 4 ticks off of their highs. NASDAQ is up 87, Russell's up 20, and the Dow's up 237. They're all up around the same, with the Russell a little bit stronger on a 2-to-1 margin. What do you think for the day, Sadnov?
I don't know. I'm looking at my positions right now. I'm going to see where the problem children are. First of all, of the big movers.
Apple's going to be a little bit of a problem for me. New highs at Apple.
I mean, yeah, I can roll my calls up in Apple, I guess.
Roll your puts up. If you roll calls up, you'll be getting in more trouble.
Yeah, I can roll my puts up in Apple, as they say. I don't know if it holds up.
No, that's what I said, not what you said. Let's see what the Buckers are doing here. FSLR down $15. ENPH down around 4. Baidu down 4.5. Sadnov back under 100. 94 and a half.
I want to buy a little. I want to buy a little Baidu.
You're going to have an opportunity right now. IV rank of 86 is pretty good. Earnings are on the 27th, and the stock at 94 and change is giving back about half of the move it had earlier. Macy's down around 270. That's a big move on a percentage basis for a $16 stock. Lulu down 2. Palo Alto Networks down 3. Baba down 160. Let's see what the upside is doing for you, Sadnov. The upside, MSTR up over $100, 113, because that's tied to Bitcoin, which has had a monster run the last couple of days while the market has been closed. SMCI up 32. UNH, which has earnings tomorrow morning. You got to do something in there today if you want to play. UNH is up $16. DJT up about $14 to 44 and change. Coin up 11. Apple up $5.60. JP Morgan up almost 3. Sadnov, Sunday night, you had your biggest move that I can remember in recent history, around 9 or 10 points to the upside. Did you see any opportunities last night in the market?
I was trading bonds most of the night, but what happened in First Solar this morning?
Well, I think it's the same thing that's happening in Tesla, right? I mean, if Tesla up $5 or so on, maybe a Trump administration be kinder to Elon Musk, and I think the First Solar might be hurt a little bit, and oil stocks maybe rally a little bit on a Trump presidency.
Well, I'll tell you right now, the First Solar markets are absolutely horrible. I'm looking at some of the positions that we have on. They are not good markets.
No, it's never had really good markets, to be honest.
No, almost untradeable. I'm just looking at the rest of our positions.
Baidu down $7 now. That's a big move in Baidu.
I know. I haven't done anything in there yet today. We took off our positions last week.
You took me down in Baidu.
I definitely did not, but I am going to reload in Baidu. Ugh, see, you can't reload. I'd like to tell you, the markets are just wide.
Yeah, you can't do anything in Baidu quite yet.
Yeah. I would sell some puts. You look at
these markets. On the put side, they're 290, 330. On the call side, you're looking.
That's me. 50. That's me making the markets tighter. I'm just offering puts, so it's not that easy.
Understood.
Yeah, I don't think I'm gonna go down one more tick, and then that's it.
Oh, nothing. Are you?
Yeah, nothing. You can't even get filled in there as much as I would like to. You cannot. Did I just get filled? No.
You did not. FSLR is the last thing you did.
Yeah. Bonds have had a nice little rally here.
Bonds have had a nice rally, 119.11.
Yeah. Just looking to see if there's something I need to do. I don't think so. I Nice little rally in the Nasdaq. It was just whatever. It doesn't matter. Let's see where else. What else do we have here? Looking at the screen,
Nasdaq up 106. Yes.
Yeah, Apple up $6 is aggressive. I rolled up puts on the opening.
Nvidia's up $1.70 or so. Gold up small.
Didn't Goldman Sachs have earnings? Did Goldman Sachs have earnings?
They did. They did this morning before the market opens. Yes, 100% correct.
Yeah.
Goldman Sachs up $7.20.
Nike down again. Chewy down. CMG, which that we were talking about this morning, is possible cheap shot down.
Down 93 cents. Yep.
DJT was traded up to 50, pre-market's 41. I thought that was crazy. I don't know how you could buy a stock that has a single point of failure. I just don't get it. Like, I don't understand
any business. Totally agree.
Any business. Yeah.
Yep. Totally agree.
Yeah.
Volatility in by 6 cents. Bonds down 20. Wheat's getting killed, down $2.36, continuing its slide lower. That's a 2% move. Soybeans down 22 cents. That's a huge move to new lows in wheat, soybeans, and corn, down 5 cents.
Yep, they're all ugly. Let's see. Yeah, I never got filled in Baidu. I tried. There's nothing you can do. Like, you can try everything, but there's not much. Let's take a look at NVIDIA. I thought they pumped way too much premium into NVIDIA. They did on Friday. That's fine. Yeah, I thought they pumped too much juice in there. All right, what else do you see here that's crazy this morning? Anything?
Not really. We mentioned some of the stocks. I
mentioned First Solar because that was kind of weird to me. I just got filled in Baidu.
Oh, beautiful.
At 320.
That's because the stock is down 716 now, 720.
Yeah.
It was only down like $6 and change a moment ago.
Yeah. I'm going to sell more if I can get the stock down. Stock was down $8 or $9. I was hoping I'd have a chance to reload in Baidu. So I'm not, believe me, not complaining. How about FXI? I'd like to reload in there too.
I'm complaining a little bit. I sold the Strangle in there on your recommendation, and you cost me.
No, my recommendation was to get long a while ago. FXI, yeah, down nicely, down 50 cents which is a big move, down 2.5%.
In FXI, yeah, you are correct, 52 cents. Doesn't seem like a lot, but it's a $26, $27 stock, yes.
Yeah, I think you can start to nibble in there too. I'm going to put a bid in just below, a couple pennies below.
Man, 26. you really like these dogs.
I'm a dog buyer.
Mm-hmm.
I'm a pure dog buyer. All right, let's see.
Pure dog breath.
Pure dog buyer, nothing else to it. All right. I don't like the.
What?
No, I was going to say I don't like some of the tape. Man, they're just coming for a handful of stocks.
It's the handful of stocks like last week. You are 100% correct, sir.
It is really just a handful of stocks.
The usual suspects. Apple, now Tesla up 11. Costco's up almost 6. Netflix, which has had a slide as of late, up 4.5.
Okay. All right.
All right, you ready to take a quick 90-second break?
Sure.
Let's take a quick 90-second break. We'll come back. We got the skinny on options, abstract applications. Nothing says Monday like this, man. Dr. Jim next. We'll be back in 90 seconds.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights. and some life taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You know, my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God, that's amazing. That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
You're gonna want to put natural gas on your list for routine rundown today.
You're me. I'm Futures Katie from the future.
Can you please explain to me buying power reduction? Buying power reduction is basically how much you have to set aside per strategy when you're entering a trade. One of the coolest things about stepping into the futures world for me was learning how all of the different asset classes are correlated and non-correlated to one another. So it's really opened up my eyes to all the different products that are available and how relationships that I saw before might be enhanced by these new products that I've now been able to trade.
%90 goes to S&P index funds.
You got a double
10% straight to
investment.
Is 20th Century Advice driving your 21st century portfolio? tastylive has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other tastylive personalities will cover strategies that'll help you integrate futures and options into your portfolio. Sign up at tastylive.com/events and see where we're headed next.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade. Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Tomas, we are back, my friend. You know what that means? Nothing says Monday like this, man. Dr. Jim the Skinny on options, abstract applications. How are you, Dr. Jim?
Man, I'm well. I mean, Tony, look at this guy. He's one of us today. He's working from home today. Look at this guy.
Nobody works around here.
Telling you right now, I don't like it. It makes me feel very pandemic-like. I don't like it. Sam, I am. But I've got to take care of something.
Yeah, you got to take care of business, man. I got you. No, I understand.
Mm-hmm.
No, I understand totally. So before we went on air, so I gave you my AC guy. So you're all set. You're all taken care of. Here's what I need from you. I need you to give me your mosquito guy. Because, man, we got a real big problem with mosquitoes here.
I need a mosquito guy. I live in the city. There's no mosquitoes in the city.
Man.
They can't live through the smog and and everything else.
I mean, I legit live in downtown Chicago. I don't have mosquitoes. It's the one nice thing about living in the city. There's no freaking mosquitoes here. No ticks.
I actually remember that. I remember that. Like that. No, there was not even in the summer, not even in the heat. Like you might see
Nothing.
a couple, but they're just passing through. Like they don't stick around. It's totally different here, man. Totally.
No, there are no mosquitoes.
You could put a saddle on them down in Florida.
Oh man, it's like, yeah,
Okay,
wow.
Florida,
it's
you
bad.
got those pythons. You got snakes. You got alligators or crocodiles, whatever the hell you call them. You got like man-eating
the dreaded
fish.
trouser snake.
You got crazy. You got everybody. You got everything down there.
Mm-hmm.
No, we got all of it, man. No, you're absolutely right. But no, the mosquitoes. No, they're
What do you call
pretty
those?
bad. So
Scorpions. You got scorpions.
I haven't seen a scorpion yet. So we've seen plenty of snakes, obviously plenty of mosquitoes, plenty of alligators, absolutely. Haven't seen a scorpion yet though. I haven't had one of those cross my path.
You got lots of old retired Italian guys. Like
obviously that's our biggest problem.
Dangerous drivers, like people like Tony who shouldn't be driving anymore. Like that kind of thing.
Yeah,
it happens.
yeah.
It happens.
And so, nice. Well, hey man, tell me about Saturday. Big Chicago event. A little Tasty Live hits the road and the hometown there. So give me a recap.
It was really good. You would have, I think it would have been Dr. Jim would have been all over this.
So why wasn't Dr. Jim there again? Because Dr. Jim wanted to go. Like Dr. Jim said many times, I would like to be a part of this. So
Dr. Jim, you are on the very short bench. Okay, you could be the sixth man, but the content for this show is a little bit steep for you. So we have to, we have the next show you'll be at.
That's true. I will be in Toronto in a couple of weeks. That's true. So Dr. Jim goes international in a couple of weeks. But man, I appreciate you. I appreciate you playing to my strengths.
You were the one, just so you know, you were the one we bet on that probably doesn't have a passport, and then we're going to probably lose you we're bringing a backup.
I better find my passport. I think it's still good. Hey, I'm only about a 60 Delta that it's good, but we'll figure it out. The Canadians are friendly people, man. They'll let me in. I'm harmless. I'm harmless.
I'm trying to think. I don't remember ever since you've been here. How long has it been? About 10 years?
8.5 years.
8.5 years. Have you been out of the country in the last 8.5 years?
I mean, not with the network. No. Maybe for my own purposes potentially.
Yeah, but where have you been? On your own purposes, have you been out of the country in the last 8.5 years?
No, I haven't.
I don't think so, because you would have said where you go. I mean, you're like I
went to Kentucky a couple times. That's kind of like leaving the country.
You don't need a passport to go to Kentucky.
You should.
So you might not have a passport. You better check.
That's actually on my to-do list today. So I'm going to get it done today. If I don't have it, don't worry. I've got an AC guy and I've got a passport guy. I just don't have a mosquito guy.
How long is a passport good for, Tony? Is it 10 years or longer? I don't remember.
Ooh, I've got to be at least 10 years.
Okay, I don't remember.
Tom, don't worry about me, man. See, you forget, man. You
10 years, Tom. 10 years.
Man, I mean, I feel sometimes when we have these Monday shows and we go on the road together, like I feel very synced up with you. I feel very connected with you. I feel like our friendship goes to another level. And then you say things like this that makes me realize you don't listen to anything I say. Because if you've clearly forgotten a couple of years ago, Tom, I was going to go to Israel. Do you not remember that I was going to go to Israel? That I was going to go to the Holy Land?
But you didn't go.
I didn't go, but I got my passport because I almost went. I was like on my way to the airport.
I forgot.
Because of all the crazy things and trips getting canceled and whatever, and the world just getting a little crazy.
I forgot about that.
So don't worry about me, man. When we go through security and we travel, you don't need to worry about me. And that's clearly been established. I'm leading the pack.
The funny thing about Dr. Jim is when I think Israel, I don't think Dr. Jim.
It's not the first thing that comes to my mind.
It's not the first thing that comes to mind. Right.
No. Agreed.
Yeah. All right, what do we got today?
Man, it's going to be a fun one today. Let's go, John. Hit us here on the title slide. So, I thought today, let's talk about why we love the normal distribution so much. Like, why does the normal distribution matter the most in a world of many, many different distributions? I mean, you've got I mean, you've got obviously your leptokurtic distribution, you've got your Poisson, you've got your chi-squared, you've got so many other distributions. Why do we keep coming back to the normal distribution when it comes to trying to measure our results over time? Well, we're going to talk about that here this morning. So, John, get us going here on the introductory slide, and we'll kind of see where we go from there. So one of the core pillars of our approach is the statistical foundation that naturally exists in the marketplace, in that we are constantly dealing with all kinds of statistical distributions, as I mentioned, log normal, skewed, kurtosis, etc. But in the end, we keep coming back to the normal distribution because it is the most relevant to us. And why is that? Tom, Tony, do you guys know why that is? Do you guys know why we can keep coming back to the normal distribution? Like, why are we allowed to get away with that?
I think it makes the most sense because it feels to me like that would be that would be how you normalize these discussions. So we're allowed to get away with it because this way we don't, we have to present the most, because I would assume that a normal distribution would be a normal distribution of the way to present it. In other words, like 70% of the occurrences that we are going to talk about or project, would fall within a normal distribution. Therefore, that's the way we should talk about it. I don't know if that's the answer, but that's what I would say.
Okay. Tony, what do you think?
I sound a little bit like Trump right now. I don't have any idea what he just said during a debate. I'm just going to say I don't know the answer, Dr. Jim, and I'm confident with myself and I'm secure enough with myself to say that.
Well, you guys are going to learn the answer this morning.
That's your answer?
That's my answer. I don't know why.
I told you why. It's because most of the occurrences would fall within a normal distribution, so it makes sense that that's what we use when we're discussing the research.
So the color is red because the color is red, and
no,
that's
not because
why it's
the
still
color
red?
is red. If most of the colors that were created were created with a red
question, using the question is the answer. It falls within the normal distribution because it's the normal distribution.
Because that is where most of the occurrences will fall. Okay, Jim, what do you want to say?
I mean, I'm with Tony on this one. See, this is why I love Tony, right? Because Tony, he's just, Tony's such a humble man, and he's willing to say, man, I don't know. And you know what? That's okay, because a lot of times we don't know, and I don't know most of the time either, which obviously is why I wasn't invited to the Chicago show on Saturday. But Tom, when somebody says I don't know to you, you're not happy with that. You want everybody to know. Everybody's got to have it figured out. And as we learn together on the road, Tom, talking about my window sales stories, sometimes you don't know. Sometimes you just got to say, I don't know. And it's okay. And it's going to be okay. But Tom, your answer, Tony is 100% right. Your answer was one of the better non-answers I've heard in quite some time. Because you didn't really say anything. I mean, a lot of words left your mouth, but none of it really made any sense. Because if I'm in a market, like take the stock market, for example. If prices are log normally distributed, how can we get away with applying a normal distribution? That's what we're going to talk about this morning, because obviously the market is log normally distributed. So, Tom, what do you think about that?
This is your answer, huh?
It's not my answer is on the coming slides. I'm just pushing you a little bit, I'll tell you what. That's a rhetorical question. You sit on that. Let's work through this a little further. I'm gonna help you out. So, John, go to the next slide here. So let's go to a situation that I think you're probably familiar with, and in a former life, I used to partake in some games of chance, and I'm also familiar with this. But if we look at a dice example, and we look at all the different combinations of rolling 2 dice together, this is a very good example of a normal distribution, where you have 7 being the most common occurrence. It's going to be the average occurrence. It's going to be the median occurrence over, some observation set, some data set. And then it obviously is a bell curve around 7. You got your 6s, you got your 8s, you've got your 5s and 9s, your 4s and 10s, and then your 2s and your 12s on the outer banks there in the tails. And so this is a great example of a normal distribution. Tom, did I ever tell you what my craft strategy was? Have I ever shared this with you? Do you remember? I mean, you obviously didn't remember Israel, so I don't necessarily expect you to remember this.
I don't think you've ever shared your crap strategy with me. I'm curious to know what it is.
What it was, again, this was in a former life. But in a former life, I just looked at it. It was very simple, Tom. It's very simple. When you look at the odds and you look at just a very simple decision, it's not unlike roulette. Like you go to roulette, right? It's basically red or black. There's other things you could do. I understand that, quadrants and whatever's, but it's basically red or black. When you go to craps, it's very simple. It's basically pass or don't pass, right? That's the most simple iteration of a craps rule.
Okay.
Well, and I'm sure you know this. There is a very slight statistical advantage to going don't pass over pass. You knew that, of course, right?
Of course.
Of course. So I knew that too. And I'm like, wait a minute. Why would I succumb to the peer pressure, the societal pressure that's all around me all the time and play with the shooter? So I would always play don't pass, don't come. And when the dice came to me, I would shoot don't pass. What do you think about that, Tom?
I think it's un-American. I think you're a communist. I think you could be a terrorist. You're definitely. I would love to play the don't pass, but I don't want people poisoning my drink at a craps table, and I don't want people spitting on me, and I don't want people stealing my money and stabbing me in the back. The worst thing you could ever do in all of gambling is be the lone person at a craps table betting on don't, and then having everybody just hate you, so you can't even walk around the casino.
I mean, every
afterwards.
time you win, they hate you, right?
You can't even enjoy your winnings. So no, I do not. I don't care what the odds are. I don't care. It's minuscule, and I'm not going to sit there and bet the don't pass because A, it's un-American, and I am an American, and B, I mean, you could get arrested for being, for basically being a terrorist.
That's pretty good. I didn't make too many friends. I'll be honest. I certainly didn't make too many friends.
Nobody who ever bet the don't makes any friends. You basically.
No, absolutely. But I did make a little money. And so it's like, hey, when you're at the craps table, you have to decide what is your objective. Am I here to
but
make,
you know what? It's not even fun because it's not fun because you can't press the bets necessarily.
Of course you can.
Yeah,
of course you can. You can lay. No, yes, you can. You can lay the odd. It's the same. Tom.
No.
It's just like buying stock versus shorting stock. Tom, it's the exact same thing.
I know. I played. It's not. You can't bet the don't and press it off. It's just too hard. You're already a loser. You can't do it. And everybody cheers when you lose.
And then he played craps.
And everybody cheers when you lose. It's horrible.
Yeah, well, I'm just saying, I mean, for a man,
it's like watching you trade.
I mean,
something like that.
It's just hilarious to me that I wanted to bring this up this morning because not only did it fit with the content this morning, but I was like, it's so funny to me to listen to Tom talk and then watch his actions. Because, I think it was last week's Cherry Bomb. He's like, we're all playing the upside. We're all positive drift. We're all this. We're all that. And then you watch how he trades and everything is from the short side. Nothing could possibly be more un-American than how you trade on a daily basis. The fact that I go to the craps table with my $300 and I want to bet against the shooter, that's nothing compared to I'm short some NASDAQ. I'm short some SPOOs. Let me hedge it with some short Russell. It's like, no, man, you're just across the board, like wanting it all to burn to the ground. So it's pretty funny to me.
Don't start using facts to win an argument.
Never let facts get in the way of a good story. I understand. All right. So anyway, there's our normal distribution with a little don't pass commentary. All right. So John, here's on the next slide. Well, the hero this morning, believe it or not, is not going to be the don't pass line. The hero this morning is going to be the central limit theorem, gentlemen, which we've talked about on this very show. I know that Julia and Jacob have talked about it too because they always steal all of my content. And so this has been all over the network for some length of time. But we haven't talked about it in a while. So I thought we'd bring it up. Well, when you have the central limit theorem, there are some assumptions that need to be made that actually hold pretty true when it comes to the market. You need a large number of observations. That's not a problem. You need to have the observations are independent and random. That's I think that's realistic in the market. You need to know your expected value and your variance. We know that's true from geometric Brownian motion and then implied volatility coming out of the black shoals. Well, when you have these assumptions in place, here's what's amazing, gentlemen. Regardless of the type of underlying distribution, Tom, this was the answer that you were looking for a few minutes ago. Regardless of the underlying distribution, it could be log normal, it could be kurtosis, it could be skewed, it doesn't matter. The distribution of your samples, a la your 45-day trades, that distribution is going to converge on a normal distribution. And we're going to look at the math here in a second, but that's why you can use the normal distribution over and over and over again, which I would say...
Isn't that what I said?
Admittedly, that's a better answer than, well, you can use the normal distribution because, I mean, it's the normal distribution. I think this might be an uptick.
I think it's exactly what I said. Thank you.
You're right, boss.
All right, fair enough. Okay, so why can we do this from a mathematical sense? All right, John, hit us here on the next slide. So this is the sample mean mathematics that actually are kind of underneath and kind of, the foundation of the central limit theorem, where, as your n, your number of observations, approaches infinity, so as you get a really large number of observations, this, of course, is where, the law of large numbers come together. You've got central limit theorem and law of large numbers is kind of like your peanut butter and oatmeal. It's kind of like your tuna fish and applesauce, which we've talked about on this very show. I mean, these things just naturally go together. The sample mean approaches the population mean. So when you have a population mean of some data set where, like the Tasty Research, for example, when you look at the Tasty Research and it shows, hey, when you sell strangles over time, your pop is going to be, if you sell one standard deviation strangles over time, your pop is going to be, let's just say 70% or 72% or whatever. Well, when you start selling strangles in your actual trading account, you might naturally be wondering, man, can I expect the same results to actually happen for me? Because of the central limit theorem, because of the underlying normal distribution that's governing all of this, yes, you can. And this is why what we do is so reliable over time, given enough occurrences, given your trade size is small enough so the probabilities smooth out. And yeah, this is it, gentlemen. Mr. Tom Sosnoff, a little sample mean, population mean convergence. I even threw in the Z statistic right there, which I know all of my statisticians that are watching the show might be able to pick out of the crowd. So there you go.
It's kind of a roundabout way of saying exactly what I said.
Yes, that's right. That's right. So did I earn my keep for Toronto in 2 weeks? Like, am I still allowed to go?
Well, yeah, some people have written me and saying they don't know if, they're a little worried about you, but sure.
Okay. All right. Well, you can be less worried. I will agree with you on one.
Have you been to Toronto before? Have you done a show with us in Toronto?
No. No, because I think you guys went right before you guys went in like 2014 or 2015. Is that right?
Oh, we've done a bunch of shows in Toronto, but we once did Tasty Live from Toronto, which was really cool.
But yeah, that was like 2015, right?
I don't remember, but it was really cool. And we've done a bunch of other shows there over the years. But yeah, it's a great city. In some ways similar to Chicago.
I've never been to Toronto. I have been to Canada quite a bit, though, because when you grow up as a young lad in the suburbs of Detroit, Windsor, Canada is like 20 minutes away.
Yeah,
right.
Windsor.
And so, growing up, I was born in 81, right? So I turned 18 in 99 and 19 in 2000.
That's your Vegas, Windsor.
Well, 100%. That's 100 because the legal gambling age is 19 in Canada. And so, you hop the border, and obviously before like 9/11 and stuff, it was very easy. All you kind of needed was like a face. If you had a face, like they let you over there, they let you back, no problem. Sure. Now, obviously, it's a lot more challenging. But yeah, 18, 19, being a young lad in Detroit, I've been to Canada, I don't know, maybe 30 or 40 times, probably.
Yeah.
And so, lots of fun. Windsor was a really cool city. So I've never been to Toronto. And so, but I'm gonna have. I did study abroad in France though in 2003. So I'm gonna have to. I'm gonna have to brush up on my French.
So you're culturally capable, is what you're saying.
Oh, I'm culturally. I'm a positive outlier on the right hand side of the distribution. Culturally, these are my people.
Yeah, you probably won't have much of a problem with the language in Canada, so I think you'll be okay.
Yeah, because I'm gonna speak French.
I'm having a very hard time right now picturing Dr. Jim in France. Having a very hard time.
Yeah, I know. But the currency conversion in Canada, he should be able to handle.
Yeah, no, he got that. I give him that.
No, not only was I in France, but I wasn't in like Paris where all the John Publics go. I wasn't in like Cannes, right, where all the other John Publics go. No,
he was in Saint-Tropez.
I was in Nice. I was on the French Riviera, right? That's where I belong. I either belong in South Beach or the French Riviera, and I'm getting closer here being in St. Pete.
Oh God, that was a waste of the golden years.
It's gonna be a fun trip. I'm excited. I'm super excited. All right, let's get them a few takeaways. Man, let's get them on the way. The core of the Tasty approach is to lean heavily on the mathematical and statistical elements of the market, and the normal distribution continues to serve as the foundational distribution of the market, because regardless of the underlying distribution, the central limit theorem shows us that any sample distributions drawn from the population will themselves be normal. There you go.
Good job out of you. I got a couple of my peeps just asking one quick question for Dr. Jim before we let him go. When you were playing craps, did you yell for a 7 after the point was established?
I didn't usually do that. I didn't, but I'll tell you.
Oh, you were quiet. You were a quiet one.
Oh, you had no. I mean, come on. I do have some social awareness. You got to kind of just keep your yap shut and just. But here's what happened. But here's what's kind of amazing to me. A lot of people that play craps, I don't even think they understand how the don't pass line works. Because it was like, I mean, it may seem obvious to people that play a lot, but a lot of people were like, they didn't understand, because like I'd sit there, I'd play the don't pass, right? And he'd shoot a 4, so the point goes up on 4, and then I would go don't come 4, lay the odds against 4. He'd shoot a 9, right? I'd go don't come 9, lay the odds against 9. He'd shoot a 6, right? Don't come 6, lay the odds against 6, and then boom, he 7's out. And everybody loses a ton of money, and all their chips come to me in a huge pile. And like nobody understood, like, what is he doing? I didn't say a word to anybody.
That's why they hate you.
Well, I'm glad you kept it quiet on the table. Good job out of you.
That would have been, that's good. Next time, if I ever play again, I'll be yelling 7 after the point.
Yeah. Do that. The point's 4. Come on, 7. We'll take a quick 90-second break. We got more Tasty Live after this with a market measure next.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Are you tired of one-size-fits-all financial services? Tasty Trade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on Tasty Trade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the Tasty Trade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with this market measure. Even the S&P sounds enough hanging steady, up 31.
They sure are. I am surprised by the. I'm surprised. You know, this is where they were on Friday afternoon, right before they sold them off.
We've gotten up here 3 or 4 times. You are correct.
Yeah.
Nasdaq up 148, more mid-range. The Russell up 30 and change. Russell's been on a nice tear to the upside. Russell now up 2 to 1 or more versus the E-mini S&Ps, Nasdaq, and the Dow, which is up 189. Volatility in by 10 cents. Should it be in more, or is that good?
I don't know. I think volatility is going to hit a wall here. I don't know where else it can go.
It looks like it has. Bonds are down 24, and Bitcoin hanging out at 62,800.
Yeah, it's kind of nuts. Anyway,
coin is up $18. Sound off. It was up 10 or 11 on the opening. Tesla's up 15. Netflix is up 15. Apple's up 4 and change.
Yeah, I've adjusted. Let me see. We do have a coin position. Yeah, I have a coin position. I guess I got to roll up some more calls. But Bitcoin hasn't really moved all day, has it?
No, it's actually gone down small. If you want to look at it that way, down about $500 or $600.
Yeah, I kind of feel like the stock is a little overdone.
Okay.
I don't know. feel like the stock's a little overdone. Tesla, another stock. I kind of feel like, man, I'm reluctant to
roll up.
To roll up here. I feel like it's at the high end. I mean, I'm getting a little bit chopped up in there. Painful to roll up.
It's definitely at the high end. I'm having the same conundrum in Apple. It's up $4 and change, 234.60 and change.
Yeah, my Apple position's pretty small, so I don't have to do anything in there. But
-2, but still.
Yeah, Tesla. I'm going to roll up one more time. Be my third roll of the day.
Mm-hmm.
I don't like doing that.
Yeah,
I do not like doing it. All right. Anyway, so Dr. Jim that was my third roll in Tesla today. Dr. Jim was just talking about Toronto. So just as a little bit of
side note,
because we finished our very successful Chicago show this weekend. Huge turnout. Over 500 people came out to see the live show at the Park West in Chicago on Saturday. It was a really great event. It's a different show in Toronto. It's all different speakers, all different topics. In Chicago, we covered building a portfolio. In Toronto, we are covering 6 different strategies. And it's Liz, Jenny, and Julia, along with Dr. Jim. Anton Kulikov, who was on this morning, and myself will be in Toronto a week from this coming Saturday. It'll be July 27th at the Civic Opera House. And it's our first time in Toronto in years, so we're really looking forward to it. And it's a precursor to our inevitable, our launch in Chicago. We will make an introduction to our Canadian CEO. And he'll be there. He's been with us for a while, so he's nobody new to Tasty, but he's taking over the role as our Canadian CEO. There's also the rest. I think a bunch of other people that are on our Canadian team will be there. And so we're all in on Canada. So this is our first event, but we'll be doing plenty more. The flight to Chicago to Canada is a short one. It's only an hour.
Yeah,
So,
I mean, I basically could fly there faster than I could drive down to Chicago. I'll be going there every week once we get this thing done.
You will never go there again. I don't think you're allowed out of the country.
Well, I was going to say, I have to get special permission.
Something like that. Anyway, it's not too late to sign up. We will be in Toronto on July 27th, and it is, you sign up at tastylive.com/events, tastylive.com/events, and we hope to see everybody in Toronto. We can't wait. The next U.S. show after Toronto, I believe it's in Atlanta. John, is that right? At the end of August?
Yes.
Yes, we are going to be back in Atlanta, one of our favorite cities to go to. We go every year to Atlanta because we have a huge customer base in the Atlanta area. But we will be heading down. I'm not sure. Where is it in Atlanta, John? Let's see. Where is it? Atlanta, Georgia. Where are we going to be? The Eastern? I'm not sure. I don't think we've ever done a show there before. At a place called the Eastern in Atlanta, Georgia. And we're looking forward to it. It's going to kick off the Labor Day weekend, or a kickoff of Labor Day weekend, the Saturday. Make a weekend of it. I think it's August 31st. Yeah. August 31st kicks off Labor Day weekend. We'll be down there on a Saturday. And it's going to be Jamal, myself, Pete. I think it's going to be, I think Julia's going to be sitting in for Katie, and the rest of everybody should be the same, I believe. Nikki Bat will be there, and should be the whole gang. I'm not sure. I think one person was missing, but we'll see. Anyway, it's a great show. Can't wait to have you guys. See you guys in Atlanta. Sign up at tastylive.com/events. So all
Beautiful.
Beautiful. I agree. Let's do it. You ready for a pretty tough piece?
I am ready. I am ready.
Well, Dr. Jim got me all fired up, so we have to, we have to get this thing going.
Okay, let's get it going.
Exploring conditional probability in market forecasting. Are you ready for this?
Yeah, well, I can just answer it for you. You can explore the conditional probability in market forecasting by looking at the market forecasting.
That's a pretty damn good answer.
Thank you.
And
thank you.
as
thank
somebody wrote me this morning, at Faber University, that will get you an A. By the way, that is the school. That is the school that they. Do you remember the movie from Faber University? Animal House.
What movie? Animal House. Oh, good.
Here's a little bit of trivia for you. You want some Animal House trivia?
Sure.
What school did they actually use to film Animal House?
Oh, I don't have any idea. I really have no idea.
Yeah, I'm sure you don't. Anyway, if you remember, the school they used was Faber University. They made it up, but they actually filmed the whole thing at the University of Oregon.
Oh, I would never have known that in a million years. I thought it was East Coast. I was going to say somewhere on the East Coast.
Little bit of movie trivia.
Nice.
Filmed at the University of Oregon, the Ducks.
Did you do some like, exploring film trivia? Did you go to a bar and have like a cup of coffee?
No, I just happen to know that little known. It's a great movie. Although I thought it was one of the funniest movies I'd ever seen when I saw it. And I made my son, who was a film student, watch it, and he told me, "Dad, this is the dumbest, worst movie." And I'm like, "It can't be. It can't be." I go, "I love this movie," and so whatever. So we didn't see eye to eye on Animal House, but if you've never seen it,
or The Godfather, there were a bunch of things you didn't see eye to eye.
No, I know, but different kinds of movies. Yeah, I mean, if you never saw Animal House, you got to see Animal House. It's great. I mean, if for nothing else, I mean, it's kind of Belushi's. That's it.
Shining star, sure.
Yeah, sure. By the way, his wife just died. She was a Chicagoan.
Oh,
I just noticed that.
I had no idea. Sad.
He was married to the same woman, I think, for he dated her in high school, married her all through whatever, and he died when, like 1980 something, and then she was a Chicagoan, and that's why he ended up in Chicago.
I had no idea.
Yeah, I'm pretty sure that was the whole deal. Anyway,
no idea.
So enough for Belushi trivia. Anyway, can you go back, John, to the first slide?
Sure.
So exploring conditional probability of the market. What this means, although Tony's explanation was amazing, what this really means is that, do you know what's going to happen from day to day based on what happened yesterday? Do you know what's going to happen today?
Not if you're looking at my account today.
Do you know what's going to happen to the market if, let's say we were up yesterday?
Mm-hmm.
What are the chances that we're going to be up tomorrow?
Dare I say under 53%?
Or wrapped right around that?
Wrapped right around that?
There's an old saying in this business that the trend is your friend, right?
Of course.
And so we always have to listen to people tell us the trend is your friend.
The elusive trend, because I've never really been able to find it. But
the elusive trend is your friend.
Mm-hmm.
But the reality is that the trend might not be as much of a friend as you think it is. In low volatility, we're up about 60% of the time. That's just a fact about low volatility. But in normal volatility over time, if you look at it over like 20 years, the only thing that's your friend is positive drift. And based on what happens today, it doesn't necessarily mean we're going to be up tomorrow. Okay. So we're going to explore conditional probability in market forecasting today. There are some formulas in here. It's a little tough for me, but and
I'll
probably
explain
for
it to you.
Tony too, but we'll give you the formulas and then we'll explain where we're going with this. Let's go to the first slide. So let me just change my screen here so I can read this all better. So one of the challenging tasks in trading is forecasting market direction. It's not even really challenging. It's impossible to do. Nobody has ever statistically beaten the dart throwing monkey. Just remember that. Conditional probability is a way to look at the likelihood of an event in the context of known information. So using conditional probability, can we make a directional forecast of SPY given its recent history? That's a question.
I would say, I mean, no. I mean, no. A 50-50 shot, wouldn't you agree? I mean, if you want, okay, go ahead. I want to talk about a range.
Let's go to the next slide. So conditional probability for two events, A and B, and we listed out the formula for you. I'm not going to try to explain it all because I will just butcher it.
You don't want to embarrass the audience.
I don't want to embarrass the audience, and and I also don't want to embarrass myself. But we laid out the formula because I asked the guys, please put this in there so we don't have any questions later, like what formula did you use and how did you come up with this? So here you go. Pretty straightforward, right out of Business School 101. Can you go to the next slide, John? And you can go back to the archives and check it out anytime you want. A equals SPY has an update, the next day, and B equals SPY has an update today. And you can see here we laid out the same formula. And just like Tony said, that 53% number rounded is a pretty damn good number. That's kind of essentially your positive drift, also to account for different periods of low implied volatility, whatever, just over time. That's a number that goes back, and that's over multiple decades. Let's go to the next slide. So if you have that 53%, then since 2000, we're going to do 24 years right here. Since 2000, the probability of an update following any number of consecutive updates is wrapped around 54%. So this is an update following any number of consecutive updates, right? So it doesn't really change. Obviously, it's going to drop a little bit the more and more you have, but generally speaking, it's in that 54, 53, 52, 50, 50, 49, 47. It's basically you're going down the line on a coin toss, right?
Sure.
And that's 24 years of data, just so you can see the actual statistics. So this is 2 updates given 1 update, 52%. 1 update given another update, like today, 54%. Now, if you were playing blackjack, those aren't bad.
Yeah, right. But
okay, they're not bad. Those aren't bad odds at all. Once you get to 4 or 5 updates, then that number starts to go below 50%, which is probably maybe we're not there quite yet, but whatever. I don't remember how many updates we had in a row. It feels like it's been 35.
It does seem like it's been a lot.
Let's go to the next slide. Over the past 24 years, we have observed that when there's an increase in one day, there is a 7% probability that this upward trend will continue for 5 consecutive days. So you're not looking at something where you're going to have an update every day this week all the way through Friday. It's only a 7% chance. But 4 consecutive days, 14%, 3 consecutive days, 27%, 2 consecutive days, 28%. It kind of takes us to tomorrow. 28%. I mean, so it's not like these,
But stranger things have happened as of late.
Of course. But the concept of the trend is your friend, I wouldn't consider 28 and 27% the trend is your friend, is my point.
That's fair. Yep. That's fair.
Let's go to the next slide. So even though there are slight discrepancies between the percentages, they are not statistically significant enough to confidently say that updates are not independent of one another. So in other words, and here's the key, the market has no memory on daily timescales. So, I mean, I'm really just trying to put to bed the whole idea that, the whole idea of the trend is your friend and how can you sell this, we're in an uptrend type thing.
I know, but but to have doing this at all-time highs takes a lot of balls.
Okay. The market has no memory on daily timescales, period. Let's go to the next slide. So takeaways. Using conditional probabilities, we can determine if updates are independent of one another. And since the chance of any update following any number of updates is wrapped around 54%, we can say that daily market moves are largely independent of one another.
Ba-dum-bump.
Ba-dum-bump.
Let's take a quick 90-second break and come back. We got more Tasty Live after this as we continue another up day with the E-mini S&Ps up 31. Mr. Scott Sheridan next. We'll be back in 90 seconds with Tasty Live.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
All right, so you've got a couple spread trades under your belt, and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads. One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
If you have any questions, feel free to toss them in the chat.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Tomas, we are back, my friend. And you know what that means? Enough out of you. Tasty Trade World Headquarters, your friend of mine from the new Scott Sheridan Studios, Mr. Scott Sheridan. How are you, kind sir?
I'm good. How you doing?
Doing very well. Thank you for asking. I appreciate it.
I have to say, you tan better than anybody that I've ever met. So you had to have been outside this weekend. I'm not saying you were mowing the lawn, or if you're sitting by the pool. I don't know what you're doing. You got a nice glow.
I was like a good Italian. I was sweeping the sidewalks.
Oh yeah, sure. Oh yeah, sure. What Vinny and the missus said, get out, go do some work.
No, this is birthday
Scott,
weekend.
cool.
This is birthday weekend for him. This is a birthday weekend. He doesn't have to do anything. He got Saturday off.
I want details on the celebrations. There had to be more than one. You said there was a little of this, a little of that. So,
wife's back is hurting her.
Oh boy. Oh boy.
And that was prior. Like, you know, I can't even take any, like, you know.
That's the excuse she's using this year?
Oof. Mighty have fallen, huh, Tom?
Okay. We got, you know what?
That never stopped you before. We
need to stop meeting on Mondays, because last Monday it was the debacle with the RV. This Monday, the debacle with the missus. Next Monday,
Hey! Update on the RV. I got a bid for it.
Oh, reasonable?
No, 30% below asking price, but I got one.
What, Tom? That's not bad. You went in 30% below.
No. I'm a teeny bit. I actually wouldn't take it if you gave it to me, because I'd have to get rid of it. What would you do with it?
Yeah, you can't park it on the street. What would you do with it? Where do you park? You can't even have where do you? Right, Tony. Where do you park that?
In front of Tom's house.
No, seriously, where do you park?
There's like a Costco by me, and there's a parking lot behind it that you pay for parking.
What's something like that run a month?
Like $200, $190 something a month.
Look at all the money you're saving, left and right. Scoop of vanilla, scoop of chocolate.
I haven't saved it yet until I set it on fire, but I will soon.
Don't say that.
I didn't mean it that way.
I can tell you from experience, you might want to leave the keys in the car and just see what happens.
Right. I ain't doing any of that. Don't eat it before I do anything.
And that's bad when all of a sudden you come out and it's still sitting there. So, well, anyway, good luck with that. I'm glad you got a bid. You got to start somewhere.
That's right.
I mean, do you think somebody would actually take it if you left the keys in? I'd say no.
I'd have to have a sign too that say keys. Like, you know.
Do you counter the 30% below market bid, or do you just leave it alone?
No. I just said thank you very much. At this time, I have higher bids. That's sales 101 right there, my man. You guys don't know.
Okay. All right. So, Tom, I don't know if you talked about this, but I do need to know, because Steve said that it was a torrential downpour.
Yes.
Pouring, the rain. So, car paths only, not good for you. I was worried.
No.
Not car paths only?
Cart pass only, yes.
Right. So, my concern, please tell me, I don't know if it really make a difference if it's pouring rain, but were you wearing Crocs? Your feet had to be soaked.
I was wearing Crocs, but the feet were not the problem. The problem was that I was
prepared. Grip the club.
I went out prepared for 85 to 95 degree heat, and it was 70 degrees and freezing, and it was raining sideways, and it got so dark. Like,
thank you, me Lord.
Steve was like, someone needs to turn the lights on, because we couldn't even see, and it was like 9 a.m. And I'm like, oh, this is not good.
So the pro shop wouldn't sell you a pullover, rain gear?
Pro shop? We were in the middle.
You know the markup in those stores?
We're in the middle of. I'm 25. I'm like 2 miles from the pro shop.
Where was this? Was this out by like Pine Meadow?
Further.
You kidding me?
Because Steve told me he went to meet Butchie at Carson's.
Yeah, they went to Carson's for lunch.
It took them 45 minutes to get from wherever said point A is to said point B. 45 minutes. Okay, so where was this place?
We were in Cary, Illinois.
I've never heard of it.
Home of the Carronuts.
Do you remember where Kemper Lakes was?
Yeah.
It's like
you pass that, you go to Jesus' Sandals, you make a left.
It's 15 minutes past there.
Who found this site?
Steve.
Oh my God.
And
you sure it wasn't Donnie?
No, Steve. And so Slappy was like, he's like, if it doesn't stop raining, I'm quitting. He was done. He was not.
I mean, in fairness, cold rain.
Wait a minute. He had to be so miserable. I mean, he does not have a poker face for this. He does not.
He was done.
Yeah.
He shanked a few into the fairways are really narrow. He shanked a few into the woods, and he's like, I'm this. When your club's
there's no way. I'm not going to name names, but there's no way that a particular person who you have a long history with was there, because he would have left.
No.
Right, he would have left.
Yeah, he's gone. Yeah.
So did you have a caddy to throw you a towel to wipe your hands? What'd you do?
No. I didn't even have a towel. But
pro shops do sell these things. Like you walk in.
We were 100 miles from the pro shop.
How are you 100 miles when you check? Where'd you pay?
It wasn't raining when we teed off.
You didn't look at a map? I think it's gonna rain.
Okay. Listen, I'm teeing off. It's sunny and it's 75 degrees. It's beautiful.
Got it.
Okay. 2 holes
and it just
later.
Came out of nowhere. It was pouring.
2 holes later, I look behind me and I'm like, there's a freaking tornado. It was black. I go, there's a tornado behind us. We're gonna die out here.
Did
then you hear
sirens
thunder
go off?
And you see lightning. The siren never went off. There's lightning, thunder. No, lightning, thunder, everything. And we're like, this has got to be stupid. But nobody behind us quit. So we were like, all right, whatever. I was going to die. I'm going to die. I'm going to die holding a flag for Steve when he puts it 30 feet past the hole. Great. I'm going to hold a lightning rod.
Oh, my God. Okay, more importantly, Tony.
Yes, sir.
You're a boater.
Yes.
Talking about weather. Okay. Yes. And this is a serious question.
Yes.
I'm not a boater. This is a serious question.
Yes.
Yesterday, we get a message. I don't know if you saw this, but National Weather came out and said, basically the world's coming to an end last night. So
tornado warnings last night.
Just a lot of stuff. A lot of bad stuff, right?
Yep.
Don't boaters get that message? And wouldn't you want to get off the water at that point?
Yeah. Yes, most sane boaters would like to get off the water.
Don't you have like a beep, 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 of which I will say at 1 this morning, I don't know if it happened to you guys, at 1 this morning, the Six's phone blew up with one of those, do you have that too?
National Weather Advisory, yeah, blah, blah, blah. Yeah, we had that.
For what? Why?
Tornado. It was south of you. Tornadoes.
Tornado. Tom, did it wake you up?
Tom was already up, but it did get him midstream, and he did try to hold it in for a second, but he couldn't.
Well, it's weird because I don't think mine went up, but the Sixes did. So weird. Why do I need to know if I'm sound asleep that there's a tornado?
Exactly. Why are they sending that to you?
What am I gonna do?
In case, right? Well, they don't know. Pardon me. They don't know you're in your brick home in downtown Chicago. They just know you're in an area that's near there, and they were trying to alert you in case you were out partying.
At 1 in the morning? On a Sunday night? Who's out at 1 in the morning?
Do they know you?
Right. I've already been my third dream state. Anyway, but on boats, being totally serious, isn't there a different, do you have a channel on, emergency, and it just comes up on your radio? Get off the water?
There's plenty of other apps, too, that are a lot more sensitive than just the generic, weather center. And you always, on a boat, you always look out. Weather's the only thing that can kill you. You're very
that or Tom, if he's next to you.
That or a 55-gallon drum that's on the boat could kill you. Those are the only two things.
Yeah. I would think you'd want to pay attention to the weather if you're on the water. Is weird because I'm like, why? You'd think if there's that, but it actually looked very nice though. And then, but I guess as Tom just said, storm came out of nowhere. So,
you want to know tides, high tide, low tide.
Also, most people that are on a boat, Scott, you're usually too far out to come back in just because you got a little storm warning.
Oh my God, you are so wrong right now. You have said some stupid stuff in your life. This is the dumbest thing you've said.
I hate boaters that come in because there's a storm.
Just leave it at
warning.
just leave it at boaters. Just say you hate boaters. Okay, go ahead. You hate
I
boaters.
just don't like boaters that come in because there's a storm warning. There's a storm warning. Okay, that's that's your bed. You made it. Go out there and have some fun.
I'm not. On behalf of the network, on behalf of everybody, I apologize for that statement.
This coming from the guy whose idea of fun is going to Costco at 8 o'clock, waiting for a spot to open close, and then pulling into it.
I actually have to tell you, I was laughing. I went to Costco this week, and I'm like, wait a minute, how long does he wait? 15 minutes? I'm like,
it won't take you 15 minutes. It probably took you 2 minutes, but that's my max.
I found a spot right away because I'm willing to walk.
Yeah,
no, you should go.
It's not a question of willing to. I'm willing to walk too, but it's not a question of being willing to walk. It's a question of you want to be in a certain location because that's where the cool kids park.
Oh my God, Tony, this is gonna be a week.
It's going to be a week. And if we have another 10 straight updates like we've had, it's going to be really a bad week. Yes.
Has it only been 10?
I just threw out a number. I don't really know what the real number is.
I mean, last Thursday there was a momentary down move, but yes, yeah, it's been impressive.
Well, if it's another week of all-time highs, it's going to be a tough one. We're back at all-time highs right now, just about.
As we should be.
Mm-hmm. Mm-hmm.
All right. Well, now that the birthday week celebration is over, I'll say on behalf of Tom, get back to work. Okay. You had your 15 minutes. Now get back to doing something.
Oh my God! I mean, we had to do it we had to have a whole party for him at the Park West over the weekend. Like it was
as you should. See, it's the nice thing to do. It's appropriate.
Yeah, he had Jamal serenade me. I mean, it was wonderful.
Wait a minute, I didn't see it. I heard.
Oh my God! You didn't stay for that?
I didn't, and I heard.
It was bad.
You told me.
It was bad.
Don't stop believing.
If there was a gong, I would have gonged him.
Oh boy, that's bad.
He doesn't understand.
He said he's got
talented.
A smooth voice. I haven't heard him.
He's not. He's not talented.
Tony, I'm giving Jamal. I'm giving him this shout out here. What do you think?
I think Jamal's got some. He's got some chutzpah. It was a 4-minute song.
And he did the audience chime in?
Hey, 15 seconds would have been plenty.
Now let's see this. Oh, killed it! Hell yeah!
People.
Listening to this for 15 seconds is already enough.
No. Okay.
The high note.
Probably under the too much information heading. That song was the first time I ever went into a strip club, that song was on.
That's too much.
Jamal, I love you. Okay.
The fact that you remember, that's what you remember about the first time you walked into a strip club is even more scary.
You're telling me you don't remember the first time you walked into a strip club? Oh, here it comes. Never been in one. Nope. Don't even know what that is. What is a strip club? Is that a place where you get meat? Strips? What do you get?
I thought it was a paint store where you get stripping.
Yeah, strip steak. Yeah, that song was on. Yeah, it was a couple years ago. All right. Anyway, see, I knew I liked Jamal.
He wanted me to play. He wanted me to come in after about a minute and play the air guitar during the solo.
You should have.
Oh, you should have. That would have been so good. You playing an air guitar? I can't even imagine you. You know what? We would have even given you a Guitar Hero to play.
I think you should have. I agree.
I chickened out on him.
All right, Jamal, next year.
You're embarrassing enough without the air guitar.
Tony, I would love to see it.
Thank you, my friend. I appreciate it.
You could rock that. All right. Should we get to some business?
Sure.
Oh, that's so good. Oh, by the way, I did get a Hoosier Mama blueberry pie on Saturday. I couldn't find flowers. It was a disaster. I mean, they're really.
Right
I did get a
across
good.
from who? Right at 10 feet down.
Oh, they were out. They were out. Like they had little. Like they must have got wiped out. Because I saw people with big bouquets, like huge. They had little stuff.
Right,
but the Hoosier Mama.
Just for future reference, there's 2 flower stalls at that farmer's market. One is a place
Hoosier
called.
Mama, I know that one.
They're both across the path from Hoosier Mama, but one is called Flower Market. That's the one, my one that I go to. She's great, but you can't go at like late. You got to get there early because all the stuff's gone. And then
I
the
got
other
there,
one,
whatever, 9:15, but I got to be there by 8, I think.
Yeah, no, there's still plenty of stuff at 9:15. And then the other one,
I'm telling you,
I know, but you probably went to the wrong one. The other one is a guy that used to trade in the OEX pit.
Really?
That opened up. You might remember him. I don't remember his first name, but he used to trade in the pit for about a couple of years, and then he didn't like it, so he moved down south and opened up a flower market. And he's
down
there.
South Illinois or down south in the country? Down south.
No, Southern Illinois. You have to be within 125 miles to be at the farmers market.
Oh, I didn't know that. Who puts the farmers market on? Is it the city or is it like Lincoln Park, the Chamber of Commerce?
It's a Chamber of Commerce, but you can't come from. You have to be within. It's a certain. I think it's 125 miles.
And
Nice.
you know this because you'll be selling toast there? How do you know this?
No, I know it because there's a sign that says everybody's within 125 miles.
Oh, they just tell you that. What are you kidding me? Oh my God, you're so public. There's a sign.
God.
Okay, and here's because the flowers. Oh, you're telling me the flowers were grown within 125 miles? I don't think so. They came in from South America.
No,
somewhere.
they're not. They're grown here in Illinois. They're all local.
There they are.
Oh my God. You know what?
Sorry, I can't give you that one. The pie,
If you buy flowers in the supermarket, they're from most likely they're from Ecuador or Colombia or something like that. But if you buy flowers at a farmer's market, they're from local farms.
Yeah, Scott. It's like the honey. It's local honey. These are local flowers.
Okay, when I go back next week, I'm going to ask. Yeah, sure. They're going to tell you everything's within 150 miles or something like that. It came out of their store, okay, but it just happened to be flown in from South America. Anyway, really good sourdough bread, and I did get the blueberry Hoosier Mountain pie, which is outstanding. It's the best.
Their pies are really good. Their pies are
really good. Really, really good. Okay. Top 15 symbols going through the system. First 40 minutes of the day. No broad-based indices or futures. Tom, for you, number 15. MSTR at a 41 for everybody else. Tesla at 86. Apple at a 79. NVIDIA at a 60. Coin at a 45. DJT at a 61. SMCI at a 54. AMD at an 81. Mara at a 9. Meta at a 70. Amazon at a 65. PLTR at a 55, Hood at a 94, BIDU at a 75, AVGO at a 36, and number 15 for Tom MSTR at a 41. Rounding out the next 10, we have Rivian at a 41, EMPH at a 75, Carvana at a 52, Microsoft at a 60, and Netflix at a 79.
Thomas,
by the way,
save yourself.
Good. I've got one other one for you. Tony, more up your alley than Tom's because he refuses to listen to a podcast. But I think I've told you about these podcasts acquired. They're long. You have to commit to the game. So it's like driving in. It'll take you a couple days because they're 3 hours. Okay. They're 3+ hours. Here it comes.
Have you met him? He could listen to a 3-hour podcast if your life depended on it.
Okay. The latest one, and I've never really been a big fan, but Starbucks. And it's really, really interesting.
I got a
how
pen.
They did it.
What's Starbucks?
No, but it's called Acquired. I'll send it to you.
Oh, okay. I'll send it to me. You see that, Saz?
You don't think I might want to read? You don't think I might want to hear that because I'm a competitor of Starbucks?
Correct.
It's a good point.
I mean, it's really crazy to go back and listen because they don't normally have the people on the show, but Howard Schultz is on and he's telling stories and they're really good stories. So he's telling stories about like how the whole thing got going. He was there for one of the earlier, like fourth or fifth of three founders. And then he came on shortly after, but a really interesting story. I'll send it to you and you can tell Tom.
You don't think that I'm probably his largest competitor now that's.
So do you want to know what you're up against? I'll send it to you so you know what you're up against.
His largest competitor.
Oh, that's good.
Man, your mom did something right with you, man. You are confident.
If nothing else, a lot of confidence.
Oh, man. All right, listen, I got to go take a quick 90-second break. You've been way too much.
Tony.
Yes, sir.
Be careful. I know you might be going out tonight by the pool. Make sure you bring a nice cold, like an iced tea or something. It's going to be 100 and feel like 110 today.
Is it really?
Yeah. By 4 or 5 o'clock.
I'm supposed to get a blood test today.
Oof. One of those.
See if the rabbit died. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Peace.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, with special guests Mad Mike Martin and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler.
I was a chemist and engineer for over 10 years and conducted experiments and research of all kinds. However, for the past 15 years, I've been an options trader, and I've traded strategies of all kinds. While the concepts may be different, there are certain similarities between these disciplines.
My favorite strategy really has become selling put spreads. Now that works in a market where we're continually going up, of course, but I love trading everything, and that's sort of a result of trading at a prop firm. We looked at the entire universe, as we say. So, no, I love to trade it all.
Hi, my name is Liz Deerking. The beautiful brunette next to me is...
What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on.
No, you're wrong.
I'm hold on.
She's wrong. I'm right.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
We're going to go to New Orleans. I got to be in New Orleans. What's up?
Y'all three guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. Is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up. So make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. We missed you this Saturday, Jenny. Everybody said to say hello.
Oh my goodness, I hear it was an amazing show. You looked beautiful. Everybody looked great on stage. Katie looked adorable. Everybody loved it. Loved it.
I got to meet Katie's fiance.
Oh, how is
he came backstage. He's fantastic. He's wonderful. Yeah, so I got to meet Katie's fiance. Apparently, there was other people, dating people that were in the audience. I didn't get to meet them. We'll talk about that offline. But it was really cool. It was an amazing event. So I would honestly say kudos to the Park West. And I got to give a big shout out to Brittany. I mean, I didn't do it on stage. This girl she is running operations of epic proportions. So she did a great job with everything. But the Park West venue was really freaking cool, Jenny. It was one of the coolest things I've ever seen.
Oh my goodness. I hear it was great. I'm sorry I missed it.
Well, everybody said to say hello. It was so funny. I was only called Jenny 3 times.
Oh.
But I loved it because I had very little responsibility. I got to do 2 intros in between, the SIBO and the CME. And it was really fun. It was just, there was a lot of energy in the room. Everybody did a good job. The Building a Complex portfolio was very, very, very educational. So it was good. A good time was had by all.
To see our SIBO people.
Yes, Matthew was there. And so Andy Beavers from the SIBO, and they had a camera crew with them. And once again, the lighting was top notch because Matthew.
I'm telling you, everybody looked great. I was looking through the pictures. Everyone looked amazing.
Well, he was so funny because Matthew on stage, he's the first, whenever I'm being interviewed, he'll be like, okay, let me just put this hair down. I was like, Matthew, I love you so much.
Oh.
So it was fun. Do you want to, we've got a lot of stuff going on. I did look at the markets last night at 4:55 or 5 o'clock when they opened. Did you? Just because I didn't know. I mean, I did not trade through any other assassination attempts. Have you?
I opened the market last night. I said, I want to see what the market's doing.
Yeah.
And I think I saw SPOOs up 24 when I looked. What did you see?
Oh God, no. When the market opened, SPOOs gapped up $10, then went back down $10. It was a completely unchanged market for last night when it opened.
I know. When I went to bed, it was around midnight, and I went to bed, and I think SPOOs were up 24.
Why are you such a party animal?
We were
midnight on a Sunday. What are you doing, girl?
Yeah, it's like last blowout of summer. We're about to hit a brick wall when like all the school activities pick up again and summer ends. So I've got Lily and her friend, and it was moving.
You're waiting for teenagers. I see what you're saying.
Yeah,
I get it.
Yeah.
This isn't Jenny staying up to midnight. This is teenagers, and you have to wait up.
No, we were playing. We played games. We watched movies. I watched Heathers for the first time.
You've never seen Heathers?
No.
Oh.
No, I've never seen.
Annabelle was in the play Heathers, so that's why we saw the movie, I saw the play. I could probably give you every line from that now. Now we're on to Mean Girls this week. Okay, that being said, Jenny, do you want...
Speaking of her being in it, do you have a monocle?
For Heathers?
Yeah, because Winona Ryder's character in Heathers always like wears a monocle when she's writing.
Do I have a monocle? No.
I mean, the girls from being in the show, from being in the.
She was not. Who's the lead person in Heathers? I can't think of the name. She was not her.
Oh yeah.
She was a side character, so she did not have a monocle. And the stage play, the stage version, no monocle.
So I only asked because I was searching for a pair of glasses. I think I lost my glasses maybe in a fitting room at the outlet mall yesterday, and all I could find was this. Can you see this?
Nope, we can see nothing. Oh!
It's missing an arm. It's just glasses with no arm, so I'm gonna have to hold it up like this.
Hey, you gotta do what you gotta do, right? That's so funny. All right, I'm going to, do you want to jump into, hold on, I'm going to go like this first, just because we were talking about the show. How about, let's start here. Can we pop into Twitter? Now, Jenny, Mikey, okay, this was a Tale of Two Cities, and Mikey and I were talking about this. It was a Tale of Two Cities because last year at the House of Blues, it was a meat locker. It was the coldest I've ever been in my entire life. This one, I think they had the doors open. It was 117 degrees in there, and everybody was sweaty. Like, I'm talking, not in a bad way. I'm all about it, but it was so hot in there that like hair was falling. Like, you know what I mean? I had my hair curled. And this is what happened because I was standing by the door. And I hugged Mikey, but this is what I wanted to show you. I don't know if you're going to be able to see it. Let me see. Can you see this?
A mug with you and Mikey on it?
Yes, and it says all these 80s quotes around it, and I loved it. So I got to hug Mikey 5 times. I agree. We would be an Olympic sport, so I got to see Mikey and his beautiful wife, and it was so good to see them. And he brought us these. Now I have one for you, and it's a picture of me. It's a picture of me and Mikey on yours, too. I'm just kidding. It's you. Oh my gosh.
Read me some of the movie quotes on there. Read me some of the movie quotes.
It says, I want my $2. I'm looking good, Billy Ray. Feeling good. He's 6'4", 6'9" with the afro. Yes. And then, yes. Love it. Love it. Love it. So thank you very much, Mikey. It's always great to see him. But yeah. So he actually was so sweet, and him and his wife, I talked to them for a while, and I was doing, I did pretty well with my eyes. I didn't wear a patch, but sometimes it got a little bit dizzying with all the people. So Mikey saved me. I was like, I'm going to take this upstairs and sit down for 5 minutes. He's like, you go do it. That was good.
So you were able to go and sit down for a little bit.
Yeah, it was great. It was so fun to see everybody. And there was more people packed in there than most of the shows that we go to. You know who I got to see? Okay, this is Frank Walsh.
Frank Walsh got to meet everybody, right?
Frank the Great. Yep. And here we go. And here's a picture of Frank the Great right here.
Dino. Someone was just asking about Dino, where Dino has been.
Dino was there. It was great. So this is Frank the Great. This is Dino. And there's Quentin. And Quentin is amazing. I love Quentin.
Yeah. Oh my gosh. And that stage is cool. I love the cherry in the background.
Yes. And you know who just walked away from this picture who was not in it? He might have even been taking it. And he told me to give you a hug. AK.
Oh, AK.
Yes.
And see, yes. AK, hello. I miss you. I haven't seen you in years, right? I mean, think of the last time I've seen AK on the road.
Yeah, so it was great to see him. I got to give him a hug, and he said to give one to you. So I will hug you the next time I see you. So don't go like this. You're getting a hug from AK.
I'll hug you on Wednesday when we're at the SIBO. You can hug me then.
That being said, Quentin was asking, we had Andy Beavers from the SIBO, and we had Craig Buick from the CME, and the CME also has a floor in the Board of Trade. But so Quentin was asking if he could come to the SIBO floor with us, and I said, sure. I mean, I think we just got to go get him on a list.
The security is pretty high over at the SIBO. We just have to you have to run their fingerprints and see if they pass clearance.
Yeah, this kid, he's gonna pass. His dad, we're not so sure. Just kidding. But it was a really good show. Okay, so thank you very much, Quentin, for putting those up. Now, I don't know if you want to pop. Let's go back into the platform, don't you think?
Sure.
So I wanted to see, you and I were talking about this a little bit. We put on the 3 DTE on Friday, which is the Spy. Oh, it's up $50 right now. So the Spy, we bought the straddle. the 561 straddle, which is now
let's
0
take it off. Yeah, let's take it off before it turns around, before it's not up $50 anymore. Because it was just down a few minutes ago.
It was just down a few minutes ago. We are up $70 right now on it as of today. So we were down a little bit, before, because we're down. Wait, hold on. Let me move it.
Okay, during our show at 11, at 10:30 on Fridays, SPY was trading right there, 561. We bought the straddle only because I felt like the vol was so low and we were getting bigger moves in the market than the vol was predicting. So, take that thing off.
Yeah, we'll take our $40 and run like a thief in the night.
My eyes can't come off a ZC, which looks terrible. But I think that's because of the roll.
Let's take a look. ZC, it does look terrible. No, but here, Jenny, here's what I'm going to show you. That this is what happened with you. I'm not blaming you and Anton.
No. But honestly, if you go to the platform, it was trading 390 when I rolled it, and now it's 395. So it's actually, if you go to the trade page. When we did this roll, it was trading 390. So it's actually better than it was the day we did the roll. So it might look bad today, but it's in better shape than it was when we did the roll.
Well,
we have 11 days to go. I think 11 days to go.
I think this can be deceiving though too, Jenny, because what I was going to say is it does look terrible, but it is not that bad. It's not nearly as bad because you took off a winning position. You took off a winning call and rolled it to something to give you a little bit more extrinsic value. I get what you're doing here. It's not nearly as big of a loss. And the multiplier here this is not a $30 wide. I think it's like a $10 wide.
No, I know, but how much is that 423.90 trading for right now? Because with 11 days to go, we may want to roll that thing.
It is trading for, if I can hit the other button,
21, which could be worth 30 in 11 days. I mean, we're teetering. It's right in the middle there. So now it's just like fingers crossed, hoping that corn goes up. If we roll, are we rolling to the same future? Will you close up the 11-day? Let me see what the next cycle is.
Yes.
So yeah, we're rolling to the same future. Let's try to roll to the 39-day.
So what do we have? The 420.
See if we can roll the same one.
You're paying $150. It's not that bad.
Yeah, $150. What are we paying? Hit the confirm and send. We're only paying a very small amount. Estimated trade cost, $83.
Yeah.
So 150 is $68.
It's basically rolling for even.
Yeah, we're paying $68. I mean, I don't know.
And take a look at the chart. We're rolling into the same future. I'm okay with this. We're rolling into the same future. Take a look at this chart. It's not bad.
Or do we cross our fingers and hope for the next 11 days? Although I was working on I was working on the talk. I talked for Toronto, and I was working on look back, and I had to make 2 phone calls yesterday, Dr. Data and Anton, and my family was so mad at me that I was calling work people on a Sunday. They thought, how rude of me to call them and interrupt their Sunday.
Was this Keith or Lily? Which one was mad?
They all just thought I shouldn't be calling work people on a Sunday, that I shouldn't be bothering them. But I'm sorry, Dr. Data and Anton, I bothered everybody.
So, what's interesting? We had this discussion. I had this with Kathy, our marketing manager. I had it with a couple other people this weekend about just call me. If you need something, just pick up the phone and call me. It's a lot. Oh, Pete Molmat. I was talking to Pete Molmat about it. Pete, Kathy, and I were all talking about this. And I was like, is it my age that just pick up the phone? Because it's a 30-second phone call versus what would be bothersome to me on a Sunday is for you emailing me to set up a time, to meet me another time, for me to respond in order to get another response for a meeting about a date in the future. There's no, that is 19 wasted steps where I would rather you call me on a Sunday for 3 minutes. And I think Dr. Data is probably of our camp. Anton, maybe not, because I think it's an age thing.
Well, the funniest thing is my text chain with Dr. Data. It was a question, he answered, question, he answered, question, he answered. And then I was like, thank you very much. Enjoy your Sunday. Sorry for bothering you. And then guess what his next text was?
What?
New phone, who dis?
That's awesome.
No, he had no idea.
Respond?
No,
he didn't know who you were.
He didn't have my phone number in his phone. He had no idea who it was texting him. He was just answering anyway.
Oh my God, it's so funny. That's pretty funny. Did Anton respond right away?
Oh my gosh, yeah.
Did he?
He was answering. He was responding. He was answering. I called him, he answered the phone. I could hear all this music in the background. I was like, Anton, what's going on? He was at church, and he answered the phone.
And he has your number, so he knew it was you.
He must have.
Because I was going to say, the one way to get Anton to respond immediately is send the text to both him and Julia at the same time and see who responds first. It is fascinating.
It's like a game. Yeah.
It is like a game between the two of them. But Julia was there on Saturday. She looked great. She was doing a great job. And I think I heard this correctly. And John, our super producer, maybe you can correct me if I'm wrong. But so the next Building a Complex portfolio is Labor Day weekend in Atlanta. And I know this because the CME guy was like, what are you doing, Tom? Why would you schedule it over Labor Day weekend? It's in Atlanta. And I think Julia, Katie can't make it, so Julia's going to take her place.
Okay.
Yeah.
Labor Day weekend. Yeah, that's kind of interesting. I wonder if they'll get a big turnout Labor Day weekend.
I think
more of a vacation destination. Maybe they would, because people would go away for the Labor Day weekend. I don't know if Atlanta is like a vacation destination.
I don't either, but I don't know. I think Tasty Nation travels. I think they're going to come out in droves. Speaking of, we've got 2 weeks.
In Orlando, if they would have had in Orlando over Labor Day weekend, I'd be there. I'd be there. That's where I'll be Labor Day weekend, celebrating Lily's 16th birthday.
I'm going to be in Miami Labor Day weekend because I get in that week from the. I didn't realize this, Johnny. That's my anniversary is the 25th, so we're going to be gone that week, and then we get back Labor Day weekend, and I've got Monday off.
I know, right? It is Labor Day. Right. I'll be in Florida.
I know, that's amazing. So is it just the 3 of you guys going for her 16th?
And a friend.
Nice. That'll be fun.
Yeah. Okay, so we're still in corn. Let's talk about this. Do we want to roll? Yes. Do we want to leave it to? Oh, so at my point of bringing up look back is that close and reestablish it at 21 days. I know I've said this before. When I run studies on look back, the 21-day rule, it makes sense. It works out. The numbers are the numbers, and roll or reestablish at 21 days. Honestly, the studies I've been doing, and from our experience, we know if you're going to close something for 50% and you're selling both sides, you're usually never closing it before the 21-day mark. So just close and reestablish at 21 days if you're selling both sides. If you're selling one side, certainly you can close for 50% if you get the move in your direction. But I'm sticking with the close or roll at 21 days.
No, I agree. But no, we're
down to 11 here.
That was an excellent speech, but we're at 11 days. So, we've let it go. And it's a 50-50 shot. This is either going to be full loss or we extend our duration. And this is basically extending our duration for even.
We've taken in $750 or close to $800. So if we have to give up $60 of the $800, that's okay. And if we want to add on the call side and narrow it, we can.
Wait, I'm just going to replace this. Hold on.
A week or so going, I had Anton on. I would have rolled it then, but Anton liked the idea of widening it.
I'm shipping it. So I've got that in. We'll see if it gets filled.
Just let it work.
The mid it's.
Yeah, I don't want to pay too much. Just let it work.
No, that's what you mean. Okay, so now I'm also going to go to a couple other things that we've got going on.
My glasses with one arm.
So I'm just glancing into our portfolio really quickly and scrolling down to see everything. Nothing really needs to be managed. Your Ford looks fantastic, but we know what that is. Okay, I think we're good there. I'm going to pop back into Twitter. There's a lot of
our profits in Ford and not roll the dice through earnings. Oh, open up Ford. I think earnings
we just talked about this on Friday. We said we were going to let it go because remember, Keith loves the Ford CEO. We're going to let it go. We already rolled through earnings.
You know what? But we could take risk. Let's see. Open up the 11-day. I just want to see. Sometimes when something's moving in your right direction, you can take risk off the table by moving it. So, we can move that 13.
No.
If we wanted profit potential for or through earnings, but we wanted to take our profits off the table, we could do the 14 and 15 for like 50 cents. 14.
Yeah. I mean, if this were an expensive option, Jenny, I would maybe be more apt to do that. It's not.
I don't know what, I might cut my position in half because it's had quite a run. If you look at the chart, it's had quite a run. That's why it's always nice to have multiples. It's like, what's the one thing Tom always taught us? When in doubt, close half and hope is the worst trade you've ever made.
Yeah, and it's the greatest advice I've ever gotten because that's exactly what you're supposed to be doing is closing half. Now, we can't do that with a one lot. We can take it down to 50 cents. The problem here is this is just such a small, and we talked about this at length on Friday about how you like the CEO and we're going to let this go. I don't care if you
that earnings are going to be great. That doesn't mean just because I might get a Ford Bronco, it doesn't mean the earnings are going to be great.
Oh my God, I saw some every time I see a Ford Bronco. Are you going to get the one where the top comes off?
No. So it was so funny because I know you said they're hard to get and you have to order them. So I looked at the Ford around the corner from our house and they had one that I really liked. So I sent the picture to my daughter, my husband, my son, and everyone was like, yes, except my husband was like, no.
Because all teenagers want one.
It's for a teenager. It's not for me. It's not for him. So it was light blue with a white top. And I thought it was super cute, and so did everybody else except my husband. And then since we saw that one that's for sale and available, I have seen that light blue white top 3 times over the weekend.
I know 3 people. I think I know 3 people that have the light blue white top.
Make it 4.
All 16-year-old girls. So just a little FYI.
Yeah. Lily's like, this is perfect. She walked out of the nail salon with light blue fingernails, and we saw the light blue white top car, and she's like, this could match my
light blue white tips. She's like, woo! I like it. I like it a lot. That's awesome.
Anyway, I'm cutting my Ford position down in half because I'm a little nervous riding it through earnings.
All right, I'm closing it. We'll decide on earnings if we want to put it back on.
Okay, you close that. We take our 100. We've made money. We've made money in our little calendar. But how? Okay, 65, 55, 45. By the 14.15, if it goes up, we'll make another $50.
Oops, bye.
By the 14.15, we're going to spend 43 cents. We'll spend 43 cents. We'll make $60 if it goes up on earnings. Otherwise, we lose $43, and we just took off a trade that made 100.
Sure.
Yeah.
Sure. Okay. So then let's.
I don't want. I never want something that's going well to lose all those profits again.
No, I know. And this is like the dumbest thing we've ever talked about in depth for the longest time because it's only a $14 product.
It's my little darling this year.
Yeah, that is, and it has been doing well because that calendar. Okay, I'm going to go back into Twitter, and we've got Bob on fire. This was awesome. So we've got a couple earnings. We are clearly on deck. This looks locked and loaded this week. So Bank of America, UNH, Morgan Stanley, Charles Schwab, and PNC are today.
Yes. Which, well, I mean, we never really find much in PNC. Maybe Schwab.
We can take a look. We can take a look and go back. I just want to kind of look and see what's on deck for Johnson & Johnson, ASML, ALI. Have you seen Tesla? Oh my God. Speaking of, hold on one second. I know you were kind of busy because you're gone, but look at this. Well, Tesla's up today.
Well, I saw.
And then did you see DJT?
Oh my gosh.
This was on fire. It was up as high as, hold on, let me see the. It was up as high as 46. And that's where it opened. Isn't that crazy?
Crazy.
Yeah. So Tesla, I know Tesla was up today. I want to see if it's raising all EVs.
I think so. Right. Well, I looked at Rivian. It was only up a little bit today. Where is it now? Last I looked, it was up like 20 something cents. I don't know where it is now.
Oh, up a buck. Oh, that's FIVN, just for people that.
That's 5.9.
I was like, wow, $1.30. So it's down 38 cents. I thought Rivian was down, and then Neo. I just want to see what Neo's doing.
Early when I looked, it was up 20 cents, but that could have been pre-market. Neo. Do you remember when Nikki Bat was like, "Get long Neo, everybody"?
I did. Oh my God. Okay, speaking of Nikki Bat, and I have to tell the story. So I'm in. What I love about this is the call time was 7:00, right, at the Park West. I walked in exactly at 7:00. Our viewers are awesome. There was viewers like waiting outside at 7:00. So I walk in, I go straight up to the green room. Everybody's already there. And it kind of felt like the one time I walked into one of our scenes, and I'll tell you in a second. So I walk into the green room, and Nikki Bat, remember I was telling you, it was 150,000 degrees in the Park West in the beginning because the doors were open. It was so humid. I walk in, and Nikki Bat has his shirt unbuttoned down to his belly button. And I was like, what is happening? I was like, put your shirt back on. And then Tom started telling him the story about, well, at least he had it like on his shoulders. Remember when Anton took his off during one of our tours? We were like, Anton, put your shirt back on.
Wait, he took his shirt off on the tour?
You don't remember Anton shirtless?
No.
You must have blocked it out because I wasn't in the room. You were in there when he took it off. I walked in with him shirtless, and I was like, what is happening? His wife was with us. I'm not saying it was just Anton and Jenny in a room with him shirtless. There's 50 people in the room.
I remember it. After the show, I think he was changing to his comfortable clothes.
Yes. And I was like, my eyes. Like Phoebe from Friends.
That's right. Oh yeah. The only thing I remember from our road shows is when Dylan left the show to go get a hot dog.
Yes.
Right? Was it a hot dog or a taco?
You do, Jenny. I love your selective memory because you have completely blocked out the fact because you were in there the entire time. You knew what was happening. I walked in to a shirtless Anton, being like, "What the heck?"
I think he was sweaty and from being on stage and under the hot lights, he had to put on a dry shirt.
Okay, and I can't believe we're talking like this, but I just breaking news from my emergency contact, Frank the Great. I totally forgot about this too. I don't know what it is with everybody shirtless. Joe Mama ran to the venue shirtless.
Why? Like as exercise for the morning?
Yes, and he's in great shape. Joe Mama's in great shape. But so David had to be like, I can't let you in. You don't have a shirt on.
So speaking of Frank the Great, we did all, and I hate to admit this, but we did all punch him in the stomach, and it's rock hard.
Jenny? Okay, we did all punch him. We punched him very lightly. It's the hardest stomach I've ever felt in my entire life. I will tell you, for the record, if I ever have to put money on anyone in a fight or any type of sporting event, I do not think it's him. It's him. On the way out, I hugged him. His arms are just as solid. I was like, what do you do?
It's Frank. So
it's Frank.
I'm convinced he works out. Like when he's not on the YouTube chat, he's working out.
I think he's working out while he's in the YouTube chat because
he's like pumping iron right now while he's answering the YouTube.
one hand chat while he's going like this. Yeah. No, he's solid. That man is solid as a rock. Solid as a rock. That's all we have to say.
What time is it? Oh, it's only 10:26. I was thinking the hour was flying by and we haven't gotten many trades on it. You know what I want to look at, and I know it's not Thursday, but I really want to look at natural gas.
Ooh, Jenny, I am so excited for natural gas right now because, hold on, let me turn that off. Natural gas is down. And I'm so excited because I've got 10 days left into a butterfly where I need it at like 2.1.
Okay, hang on. Let me put my glasses.
In 11 days, this will be my sweet spot, 2.1. If not, I get to keep the credit, but this is why I love natural gas. It is cash settled. So I put on downside ratio spreads when it goes down, and I did it. It was kind of like catching a falling knife, but I put.
And how much is that trade making right now?
No, it's losing.
So if someone wanted to put the same trade on right now, they could.
Yes, for sure. So you could. Here's what I have in there. I think I'm long.
Yeah. Just that's what I don't want people to think like, oh, they missed the trade. This trade that you think is so great. No one missed it. You could put it on right now if you wanted to.
100%. But this is why I love downside ratio spreads in natural gas. In natural gas, especially because it's big. Take a look at this. This is exactly what it is. I've got the 215, 210. Your max profit is 730, but that's if it hits the 2.1. Other than that, you just get to keep $250. For $230.
I just wanted to join you on this, but make it a broken butterfly because we can't have the naked option in natural gas here. Our account is too small. Let me see what the risk is. $1,350, and then we're taking in how much of a? We're taking $150.
No, you could keep bringing it up. I could take in $110. I could take in $50. I don't want $50.
But anyway, if you want us to be in with you in solidarity, we could put something like this on.
But no, I got to tell you, this is big. These are big, and I have seen max loss, and it is like jumping in front of a falling knife. Natural gas is something that I'm very comfortable with. I love trading natural gas, and I love seeing it when it comes down like this. I kind of avoided it. I was kind of out of it up here, right? And so, ironically, because I was kind of out of it already up here, I missed it, and I got in right about here, maybe a little bit lower, but I was like, whoo, I'm in. And I am okay being tested as we get near the end.
Now, if this is the 11-day, if you go to the futures, what's the next cycle beyond?
Okay, here, I'll close this.
I want to see if it's still that 221. No, you can see the prices change. That's why it's hard. If we were to put a broken butterfly or ratio spread or something on, I kind of like the 11-day because then you're going to a different price further out in time.
Right. But this is something I love when I love when natural gas is at it. And I don't know if it's at an extreme. Can it go lower? Sure. You know what I mean?
Yeah, we've seen it lower.
Sure. Look at this. Look at this little blip.
And nothing wrong with going to the 43-day. And maybe if you're a new trade, not in it, maybe that 43-day is the right option.
Look at this. Look how far you can get down for the 43-day. I was actually looking at it this morning in my account. I take and go to the expected move for the cycle, and you can sell. You're going to get a lot of credit because you're in the 43-day. So it's a ratio spread. You're going to take in $360, and you're only because you're farther out in time, you're only putting up $1,400 to do it. It's not bad.
Now to break the wing, where can we take $1,200 in risk or something? Try to let's see what we can get.
This is $3,000 in risk.
So you got to bring it in.
Hold on, let me get $1,200. So take $1,200 in risk. You're taking in $140. But I got to tell you, with these, Jenny, and I'm being serious with this. I know we talk about ratio spreads all the time. I don't touch these. So I try not to touch these
because they're cash settled. So it's natural gas is cash settled. So you just leave them until the end.
And a lot of times what I will do if things go my way, meaning that if I put this trade on and I would have seen a reversal, say I put the broken wing butterfly on here and natural gas gaps up to here, I'm still not taking it off for the credit. I then go and try to buy it to butterfly it off for locking in profits. Because it's cash settled, you might still get that move down, and that's how I leave it.
Well, let's put something on in natural gas because it's had such a big move down.
I mean, $1,400 isn't that bad. We've got the capital, but it's kind of
this account. This naked option natural gas could wipe out this account.
It could wipe out this account.
Tony, are you listening? We're trying to sling naked options and natural gas. What the heck?
It could wipe out this account. Okay, yeah. Fine, Jenny. Fine. I will buy. I will say this. Max loss of $1,300, max profit of $680. We'll take $180 if it goes up from here. But if it goes down, we run the risk of $1,300. Or do you want to take it a little bit less? Hold on, I'm going to take a little bit less.
Here's my question for you. Do we want to do the 43-day or do we want to do the 11-day?
11-day.
I was saying there's nothing wrong with going the 43-day, but the 11-day, I'd rather have $150 in 11 days than $180 in 43 days.
Okay, here we go. Now you're going to take a lot less in this because
taking like $150.
Here's $150, but then you have to buy something, so you're going to take in $100. You're going to take $90.
And if it's down to 2 in 11 days, we'll be able to roll this.
Yeah. That's right. So this is taking in $70. Now, this is still something that I'm willing to do. We're only risking $930. You're taking in $70. If it pops up, great. If not, we're playing for a down move in natural gas.
Sure.
Okay? I love that we're in this. I'm sending it.
Yeah, why not? Is that your short strike, the 2.05?
My short strike is the 2.1.
Because I kind of wanted to be in solidarity with you if you're rooting for something. We're all rooting together. But you could just leave it.
Yeah, I mean, I gave us a little bit more conservative. I'm a little bit more conservative there. So that's in there. Okay, now let's go back. I want to make sure that we are getting to all of the tweets.
Well, we'll have to look at these. Bank of America, UNH, Morgan Stanley, Schwab, PNC. What are the airlines doing today? Because I think, Does American have earnings this week, or did they happen already?
We have American Airlines. We are short.
I think they have earnings this week.
The 25th, next week.
Okay. Do you know
Today's
what? Happy birthday, Mandy.
Do you think she's watching?
She could be.
Mandy's birthday is always on the anniversary of my engagement.
Happy anniversary of your engagement, Liz.
Thank you, Jenny. So I usually remember her birthday. I got to text her today, though. I did not this morning. I actually forgot to tell my husband happy anniversary of our engagement. So thank you for reminding me.
Tell me, how was your engagement? How and where and what went on? I can't remember. This is so long ago that I can't remember.
New York City Intercontinental. Awesome. And I was an asshole. Excuse my language. I didn't know I was getting engaged. And so he went downstairs to go get champagne, and I was getting ready. So I was getting ready, and I had like my mascara on, and I keep hearing this knock on the door, knock on the door, knock on the door. And I could hear him outside. It was him. I was like, "You got a key, use it." Like I'm yelling. So then I was annoyed because I'm putting my makeup on. I opened the door. He's on one knee with something shiny. All I could see was something shiny. I grabbed the box and let the door slam.
No.
Yes. I mean, you couldn't have scripted it worse. And then he used his key and came in and asked me to marry him.
Oh, poor Dan.
Yeah. But no, it's a pretty funny story. I had no idea what was happening.
At least he knew what he was getting into.
Yes. But to say I was surprised was the understatement of the year. And yeah, it was the best decision I ever made. But yes, what was yours like?
Well, every time we did something big, I thought that he was going to propose. So we would like just unusual things. Like one time he took me to Fiddler on the Roof. You know how I feel about musicals. I usually fall asleep halfway through. So I was like, geez, I don't know why he's taking me to Fiddler on the Roof, but maybe he's going to propose. So there were all these events which... And then he never proposed at any of these events. And then it was his birthday. He was trying to throw me off. His birthday, and we were at Hugo's Frog Bar. And he proposed there, which did throw me off because we had all these other big evenings out. And then this was just
Fiddler on the Roof, but Hugo's
yeah. So we're in Hugo's Frog Bar. It was on his birthday. And it was so dark in there. So dark. I remember saying like, excuse me, I'm just going to go to the bathroom because I couldn't even see. I was like, I want to see this ring in the light. I don't know. I'll let you know after I go look at this in the daylight.
That is so funny.
I don't know. Well, happy anniversary of your engagement. Now,
I mean, this was, Jenny, I know you and I got married the same year. We're talking a quarter century ago this happened. A quarter century ago we both got engaged. Think about that.
And then, your anniversary is coming up, which it wasn't like you got engaged and then you got married a few weeks later. It was a year later.
1 year later?
1 year later.
It wasn't a shotgun. No, it was not.
Because because right now, if you're talking about the anniversary of your engagement, and then in like 3 weeks, we're going to be telling you happy anniversary.
That's correct. Shotgun. Just kidding. Okay, so I want to make sure, you want to look at Schwab. Let's go back to that.
I mean, you know what? Let's see. Let's just look at some of these earnings.
So Schwab,
26 rank.
I don't know that I want to trade anything in here. I don't think the risk reward center is there.
We go to the chart. I just want to take a look at the chart. Yeah. I mean, you could do a strangle in here. I'm not afraid of a strangle in here.
I'm not afraid of a strangle in here. You got a 26 rank, and I don't think your risk reward scenario is there.
50 cents, 50 cents. 50 cents, 40 cents.
I mean, I like our natural gas better than this to make $1.
Well,
you're using $1,100 to make $100. I would rather. I don't know.
Okay. Ooh, hang on.
Let's look at some of the other ones. Let's compare apples to apples with these because I don't have a favorite financial institution or favorite financial thing to trade. Do you?
$5 up, $5 down is decent in Schwab.
$5 up and $5 down would bring you to you'd be getting 17 cents.
No. We were at the 80. $5 up to the upside. Well,
to the upside, but to the downside, it's not. It's $2.50 down.
Where are we? 72.5 cents, 3 cents, 4 cents, 5, $3.50, 3 something.
Yeah.
It's not terrible. I don't think it's terrible. And then especially you could buy wings for 10 cents, 10 cents. You could buy the 69 put. You can buy the 69 put. and you can buy the 83 cost. 80, do the 83. You're getting almost 80 cents and risking $2.70. It's not terrible.
You have your rose-colored glasses on today, because sometimes you'll be like, I don't need 70 cents that way. I like your positive mental attitude, Jenny.
But it's only Monday. It's only Monday, so we've got the whole week to deal with. So I don't know.
Well, that's what I kept telling everybody. So I went to a Pat Benatar concert.
Oh, yeah, I forgot about it. Tell me all about it.
In the Orland Park Civic Center this weekend, and everybody's like, what are you bringing? What are you bringing? I go, I'm bringing my dancing shoes and a positive mental attitude. That's what I kept saying. So I kept saying, because we needed to dig deep. We needed to dig deep. Because they did not let us in. They acted as if Pat Benatar was the greatest thing that's ever come to the Orland Civic Center. They made us wait outside for an hour before they opened the gates.
What?
Uh-huh. But she was fantastic. She was fantastic. It was amazing. And we were front row.
That's awesome.
Yeah, it was cool. But yes, they acted as if we were at the Park West. That morning I was at the Park West, which is an amazing venue. This Orland Park acted as if we were at the Park West. People were irate. That's why I was like, dig deep, everybody. Positive mental attitude and dancing shoes.
Well, you're lucky no one hit him with their best shot in the security guards.
Well, some of the people were angry elves, like angry. It was filled with people older than me, and they were mad. Mad.
Did you get hit with rain?
No.
Okay, that's good. Because we had some terrible weather in the Chicagoland area this weekend, and it was I'm still like so it was the Mackinac Island sailboating race this weekend.
Yeah.
Which we had terrible weather. Yesterday morning, two times, the furniture was like blown over on my deck, and the rain was coming 20 feet, was blowing 20 feet sideways. And so there were some sailboats as they were racing they leave Chicago and they go all the way up to Mackinac Island. I don't know, Mackinac Island, or how do you pronounce it? Mackinac?
However you feel like pronouncing it. I don't know.
I think Mackinac Island. So this island is in between. You've got the northern end of Wisconsin, Michigan, and then Canada, and this island's like in between in the water, in between all of those. Hey,
who's angering Clarence?
That's Clarence. It's the garbage truck. So the sailboats go from Chicago all the way up there. So basically until it's in Lake Huron between Canada and the United States. And 2 massive storms went through where boats were broken, masts were broken, boats had to leave the race. There was a man overboard, but he was saved. But they went through massive storms.
How do you get from Lake Michigan to Lake Huron?
So you go all the way up Lake Michigan, and then where there's like Wisconsin and Michigan, there's an opening, and then like Green Bay is on this side, and you go through, and then you're in it's in Lake Huron. So the racers, that's where they go.
Crazy. I'm gonna have to look into that. I don't expect you to understand. I believe it.
So number 1, boats broken and man overboard. Number 2, record set because of the high winds, and the high winds, the sailboat that won got there in record time.
Wow. Risking life and limb, got there in record time.
It's crazy. That's far. It's a far distance going all the way in a sailboat. I think it takes some days.
Do you know what we're going to risk life and limb on? We're going to risk $2.73 to make 77 cents, Jenny, because of your positive mental attitude, I'm pressing send.
I said we've got a whole week. We have a whole week. You didn't even compare the others. I thought you wanted to compare the others.
No, with your positive mental attitude today and your rose-colored glasses, we're going for it. I wanted to make sure we got to everybody in Twitter as well, because I can see them. I just have to figure out how to. I'm going to hit latest. This is not updating because it's updating on my other computer and not here. Hold please. It might shift, but.
There we go. It's coming.
There we go. Okay.
Oh, a couple of decades ago, just say yes or no. Yeah.
Live footage, Mikey. Live footage. And by the way, I love my mug. And I love seeing you and your beautiful wife. It was so much fun. Okay, here we go. There you go.
We'll go for this version. This is
Floor 7, the light pink. I like the light blue. Okay.
I like the light blue with the white top.
And then look at this. Jeff says, I'll be at the show 8/31, which is Labor Day weekend. I don't think of Atlanta as a holiday destination, but locals may be out of town. Beaches are 6 to 7 hours away. Mountain cabins 2 hours away. Thank you very much.
Very nice.
Yes. And then I told her in the beginning, I didn't drop it. I didn't. One, I did not drop it.
Thank you, Maggie. Thank you. I can't wait to see my mug.
It's actually funny that you said that, though, because I almost dropped it. So that makes you feel any better.
Hey, I'm gonna send something to Twitter.
Okay, send it to Twitter because I want to make sure we got to all these. Now we are already in Schwab. We have a very, very, very baby trade in there. I want to look at Bank of America, and I also want to look at UNH. Okay.
Okay. Yeah. Pull it up, and while I'm sending something to Twitter.
Okay, so UNH is a $517 stock, so I'm just going to close that up because I'm not going to trade that. Then we're going to go to Bank of America. Let's see if it's got a higher rank. Bank of America is a 30 rank, and it's a $42 stock. This also does not have a lot of risk-reward scenario, so maybe Jenny was spot on accurate with her Charles Schwab straight out of the gates. You know what's funny, Jenny, is when you're looking down, your glasses fall on one side.
They're falling off.
Pretty funny. So yes, I don't know the Bank of America. Now I know your cousin works for Bank of America still. I hope she's still holding on to the stock because this thing has rallied from the low of $24.95 up to $42. Take a look at Bank of America.
When you say low of $24.95, I'm telling you, I can't even trade Bank of America because when it was $3, nobody wanted it. When it was $3, nobody wanted it. Now it's things like this get me mad. Like, why didn't we buy it way back then and just throw black tape over it? I tell you all the time, I want that kind of account where you throw things in there and you never look at them again.
Fun fact, my husband and I were talking about that this morning because I have an account exactly like that. And he's like, don't you think we should just maybe cash this out or give it to somebody? I was like, no, this is where things go to die. He's like, that's a terrible way to manage an account.
No, that's what I want. An account where
I have it. Jenny, dreams come true. You can get one too.
What's in there, Liz? What's in there?
Oh, funny. Like Moneyline's in there, and that came back with a vengeance. I've got, I put my AI in there. Stuff that like has gone down so low that I know that I don't want to touch. I've got a little bit of Rivian in there, but that was like an old residual. I have Rivian in a couple accounts. And then there's a handful of stocks, Jenny, that you wouldn't even be able to name because at some point I got into them and they got so low that I was like, I'm not selling them for 75 cents. They're going into that account.
Well, didn't Corning Glass make a comeback? Will you go to GLW? I feel like, because like back in the day, I used to trade that, and then I had some of that, and that went down to nothing. And look at the Corning Glass came back out of nowhere.
Oh, I mean, this got real low, didn't it? I think.
Yes. I mean, you'd have to go back decades, but it did.
Here, it's 15 is low for Corning because this was a high flyer back in the day.
Yeah, it was busy. All right, so I want to tell you, I got no sleep this weekend because my son was like risking his life. No joke, risking his life. He climbed. I go to Twitter. You can see it.
Oh, okay.
I was a nervous wreck. He climbed to the highest elevation in Germany. It's 9,000 feet above sea level.
Wait, is this his video footage?
Yes. Yes.
Wow.
Like, I mean, I couldn't even tell my parents where he was because my mom would have had a heart attack.
That is really freaking cool.
Oh my gosh. I can't believe he made it to the top alive because he said when he was up there were memorials all over from people who have died.
I believe it. That is crazy. And it doesn't look like it's that good at conditions. I'm not gonna lie to you. It's a little.
Well, it was. He said the scariest thing was the snow. There was one whole area where you had to walk across snow, and that was pretty scary.
Is he in shorts? Is he in shorts in the snow?
Probably. He had a friend. He found a friend who went with him. Thank God.
Honestly, though, that's pretty cool. I mean, I know that it's a little.
It's something he'll remember for the rest of his life, but he said he'll never do it again. It was very scary.
But I mean, who does things twice like this? Why would you do it again?
Went to the highest elevation in Germany.
Let's do it twice.
It took him. Let's see. He started at 5 a.m. and
I'm only getting off this because I think it might be making people dizzy.
Yeah. And he got there at 4:19 p.m. So from 5 a.m. till 4:19 p.m. That's my
all day.
And he never stopped. They never stopped. They stopped for like 20 minutes here or there.
Wow.
Uh-huh.
So does he have his Apple Health? Can you tell me how many steps that is?
I don't know. He could barely move. I want
him to go back because you know how I'm sure he brought his phone because clearly that's phone footage, right?
But his phone died. His when he took that video, his phone was at like 2%.
Oh, how'd they get down? The down is worse than the up.
They have like a system. You have to. The thing is, you have to make it by 5 p.m. At 5 p.m. it shuts down. But they have a system like because it's a ski resort in the winter. So there is you can get to a gondola. You can go a certain route down. You have to go down so far, and you can reach a gondola that'll take you down.
Oh, well, these people are probably exhausted.
Yeah, everyone's in a rush to get up because the gondola closes at 5.
Well, that seems counterproductive. What do they leave people up there that, like, at 5:01, sorry, got to climb back down?
There are huts. There's this hut where it didn't look like very good conditions, but there are huts that you could sleep in if you get stuck up there.
Because that seems crazy that you're going to make people climb back down after doing that, because I'm sure you're wiped. But I do want to get my hands on his cell phone footage of how, because it'll tell you how many steps, because it'll think he's doing stairs, and like how many elevations or steps he's climbed, and how many steps he did that day. I'd be very curious to see it.
I'll look. But
how many calories burned?
It was the equivalent of walking up the Willis Tower 5 or 6 times.
Way to go, Willis Tower. Seriously.
What is it called now? Wait, what is it called now?
I don't think it's Willis, but I mean, everybody knows it is the Sears Tower.
I don't even know what it is these days.
I don't know what it is either. I don't know either. That's crazy, though. I'm proud of him. That's fantastic. I spent the weekend, well, not spent the weekend with, but I wish I did. She won't come over. Vanetta was at the Park West, and she is going to Munich to go see Taylor Swift.
I know. I gave her a little list of things to do, and climbing to the top of this mountain is not on the list.
That's the top of the list?
No, it's not.
I wonder when she leaves. I hope she makes a vacation of it, because you're going so far. You might as well stay for a bit.
She's going for a week. She's making a vacation of it.
Good.
And she's going to lots of things. She's going to go see where they film The Sound of Music. She's got a big plan.
And that is when we were in Toronto, because I was trying to lure her to Toronto with us. And she's like, I can't. I'm going to be in Germany. It's like, oh. Because she's so fun to have at these events. She does such a good job. She interviewed a lot of people, too. And she's a crowd favorite. So it's fun to have her with. Okay.
I mean, we were lucky to have Vanetta on the road for a brief moment in time on the That's What She Said tour. But I love Vanetta.
I know. I'm kind of sad that the pandemic hit. So that's what happened. But at one point after the He Said, She Said, Tom broke us off into pods, and we were going to go out on our own. We said, we're not going without Vanetta. Right? And we brought her with, and we did one show after the pandemic had already started. We still went to Phoenix.
Yeah.
Crazy.
Those were the days, Liz. Those were the days.
It was fun because we had a comedian with us who opened our show, so our show was probably really better than most. I'm just kidding. Okay, let's see what we got filled on. We are not filled on this roll. Let's go back to corn.
What do we want to do in corn?
It is getting away from us. So let's see. I'm just going to see what the replacement is.
Too much. I don't want to pay too much to roll it. I don't.
Oh, I know, but let's just look. So I'm going to unlock it. So it's going to go from 1.5 to 1.625. Okay, unlock.
Let's just clear it, because I'm not sure we're doing the right thing. Research would suggest close the one and put a new one on, not looking at it as rolling the same strikes.
So what we have to lose here is this extrinsic value in this one. Oh, and this extrinsic, I guess. Okay. It's not much left to lose.
No. Well, it's in the middle of it, $390. We could lose $5 more going down to $390 plus the extrinsic value in that. So $10, cut that in half, $5. We have $500 left to lose.
Yeah. I mean, we have this extrinsic value here. What is this? I just want to see.
$1. That's 50 cents.
This is 50 cents. So you cut everything in half.
Yeah. So we have like $450 left to lose. Okay, let's give it another day. We'll circle back to this. Let's cross your fingers and hope corn is up tomorrow. But with all these storms in the Midwest, maybe that's what's taking down corn.
I have no idea. I mean, you went to U of I and sat in with all the farmers. Can you please tell us what's happening?
Well, it's terrible storms ripped through here. I don't know what kind of damage happened by you, but I've seen pictures everywhere of like roofs ripped off, awnings ripped off, trees down.
That was last night. There was bad storms here. Not Saturday. Not during the, what was that? The Mackinac. For us, we didn't get that bad of storms.
Well, the race went all weekend. So the race went all weekend, but
so we got the storms in the middle of the night last night.
2 days in a row, I've had my furniture blown off the deck.
That's crazy. Like off?
Well, over and around the corner.
Oh, okay. So it's not going over the railing. That'd be a big gust of wind to go up and over.
No, but there was a tree on top of my neighbor, like a tree on Marty's Tesla this morning.
No. Uh-oh. That's no good.
No. So anyway, maybe the answer isn't rolling the same strikes. It's just like closing it, taking our loss, and putting on a new trade.
So let's hypothetically say we didn't have anything on. If I didn't have anything on in corn and I saw this chart, okay, and I saw this chart and we're back down to these lows right here, I would probably open up the 40, how many days are left? And this is the August 23 with 39 days. And I would probably sell the 75, 65 because it's $5 wide for $1.
Yeah, slowly make our money back, which we have a lot more profit potential in the 11-day one. But
see, the other thing you can do is if you wanted to, you could sell we're long the 390 right now. It's the same price. Keep in mind this. Let's close this up. These are the same price. The 11-day and the 39-day, it doesn't switch to this 408.29 until the 67-day. So we could, by all purposes, sell the 390. This is the one we're long right now. We were trying to do the 423.90 and give ourselves a better probability.
Yeah, sure. We can do that.
I'm going to bring this in. So, I mean, I wouldn't start here.
We're paying, this isn't like a roll. You can't look at it. When it's not working and you're shutting it down and reestablishing, you can't look at it like a roll. If we looked at it like a roll, we're paying to something for it. We're paying to roll this.
But look at our next profit here. This is so low. It's only 281.
But your risk is only 468.
I know.
Can you go back to the position page? I want to see how big corn is. I want to see each individual line and how much they've changed in value. So what's our biggest loss here? The 1171. Would you ever just sell out that 390? How big is corn?
Here, if I sold up, let's see what it does. If I'm selling that, it's going to add $1,500 to buying power. But you got to keep in mind that 420 is already in the money. Kenny, here's what we're going to do. We got to put this to bed. I'm closing it. I'm closing this, and we're going to put on a brand new trade.
Yeah, just close.
Okay? I'm closing it. We're putting it to bed because this is, and then we are out of
too much energy on corn.
Yeah, this is too much mental capital. And to be honest with you, it's not an adjustment, and it's great, and I love that you did it with Anton. It's not an adjustment you or I would have made.
No, it's better. It's made more money back since I did it with Anton. So what are we paying? What are we paying to buy it back? $20 or something?
It's gone. Like, we're not even looking at that. We're not looking at that trade.
We're not in that bad of shape in corn.
No, but we're going to pretend like when you're looking at this, we close that one. We're not looking at it as a roll. If we were going to open up a new position in the 39-day, I might start pretty conservatively. Maybe I would go, let's just go 238. We're one out of there, and I'll go $20 wide, which is a $10 wide. So we're going to make $2.75 and risk $7.25.
Sure.
We in?
Yep. Ship it. New trade.
Ship it. New trade.
New trade, better probability. I think that's what you have to do. I think as traders, you can't always try to I've got to make my money back on this trade. Sometimes it takes a couple cycles to make your money back, or months or years to make your money back. How long did it take you to make your money back in oil when you had that big loss?
Oh, a year.
Yeah.
1 year, maybe even longer. But in my mind, it was only a year. I mean, I scratched and clawed my way out of that oil loss.
And sometimes you say, you know what? I'm never going to make it back here, and I don't care.
Yeah, but some products I want to stay in because I don't mind being in them even when they are a big loss. All right, Jenny, we are out of time for today because this is the
natural gas.
What'd you say?
Did we ever get filled in natural gas?
Let's take a look. No.
Let's adjust.
I'm going to take it down by 1. We'll be mid-market. Now, granted, sometimes it's hard to get filled in these. It's hard to get filled when you've got 3 legs.
When you have 3 legs, I know.
Yeah. Hard to get filled when you have 3 legs. And I don't want to take it down to 5. We could take a look at this again tomorrow.
Okay.
We'll let it work. If we get filled, great. If not, we'll look at it tomorrow.
All right, Liz, good to see you. Have a wonderful day. Everyone have a wonderful afternoon. Thanks for watching. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow, everybody.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix. Do you know what he did? And we've got those cards with us, and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card, and I am no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where Spat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade. The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man, Mikey Butler, and of course, Ryan Grace in the house with us today for our crypto takeover. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day, my favorite hour of the day. I get to spend it with my buddies, Mike and Ryan. How are you boys?
Can't complain. Happy Monday, fellas.
Happy Monday. Beautiful Monday for the crypto space here. Bitcoin going nuts here. 63,000.
I feel like we've been fortunate where the last couple of times we've had you on Monday, there's been some big moves.
In both directions.
Yeah, we have something to talk about, which is nice. Because I was saying earlier, the story doesn't change too much. We'll go through some slides. We can get into what's behind the narrative. But it's nice when you have some price action that makes the show a little bit more entertaining.
Yeah, absolutely.
I love it.
MicroStrategy up over 200 now. Bitcoin up 5,400. Coinbase Moon, Mara Moon. What else is there?
I mean, those are the big ones. BITO and IBIT are the trackable ETFs. IBIT being the one that's spot, and then BITO being the futures. Yeah, I mean, bullish across the board.
I've got to ask. Last time I was on the show, you guys were buying the dip. I think we were at 55 and change. Hopefully, you got it around there.
Yes.
I'm assuming you took some profits. Did you get out?
We did. We both did a call diagonal spread. Or did you do that too? We got long the micro Bitcoin. Yeah, the Bitcoin contract. But we didn't hold it through this. We didn't catch this one. We caught the first $2,000 from like 55 to 57. That was our move, and we took profits there. We missed this part. Unfortunately.
I bought at 55.9 and sold at 58.2 in the micro.
There's nothing wrong with that.
Yeah.
Ring the register. We're happy with that. But I did do a Mara trade for the cherry picks last week, so I just took that one off today. Took a couple bucks out of that. That was a nice little trade. Mara, one of the higher beta names in the Bitcoin space. We've traded Coinbase. MicroStrategy, very hard to trade just because it's so big. They do have a split coming up, which I need to do more digging. I don't know if you've looked into it.
I haven't.
More, because I know I caught you as we were coming into the office that day. I was like 10-for-1 split. I think it's my initial thought, because it had a mention of basically a dividend, and what it seems like it might be, and I have to look into this more, is that it'll be a split, but the split is paid out as a dividend. So a 10-for-1 split where you'll get like $9 in cash, $1 in shares, so to speak. So if you own 100 shares, you'd wake up with the same 100 shares at $160 if it's a 10-for-1, and then the rest paid out as cash.
Interesting.
Is what I believe it is, but I'm not 100% certain. I will do some more digging on that.
It will begin trading on a post-split basis August 8th.
Okay, so coming up here soon. I will do some more digging, write something up for that. Rest of the market here, and then let's see the pictures from the event this weekend if you got them, and then I'll get into the market and we'll go to the slides after that. But we had a great time.
Yes.
I mean, it was great to meet everybody, put names to faces. Everybody giving us there it is. Look at that.
Lovely.
It's Mikey on stage there.
Love it.
In the casting couch back there.
Yeah. God.
I did an interview there. That was what I said. I was like, this is too familiar for me. This is too much.
Unreal.
There's
David.
Anthony.
Doing some work.
All the boys. Look at this.
Tasty FX crew.
Tasty
Glenn
FX.
looking yoked right there.
Yeah.
Oh, and we actually had what was it? $1,000 given away.
I think it was like 950.
Yeah.
Because he did the double.
Yeah. 950 Tom bucks given away.
Nice.
Both guys walked away with something.
You know how hard it is to get $1,000 out of Tom?
It's not easy.
It's not easy. Those dollars are twice as valuable. There's me.
Look at that.
Look at that. The bat was there too. Tom, of course. Look at this. This is beautiful. Pete doing his thing. I love it. We even got Scott to show up. Sahil, there we go. Baby Shark, as he's known here in the office. Got Liz up there emceeing for us. Jamal, I don't know if you heard about this. He did the full rendition of Don't Stop Believin' to start the show.
Like the whole song.
Beautiful.
4 minutes. Absolutely incredible. I think his job might be on the line after that. I gave him some props for having the balls to do that. But yeah,
I had no idea Jamal was a singer.
Hey, he is. He's
Awesome.
He is.
He's got some pipes on him.
Oh, incredible. Good stuff.
Yeah.
Great pictures. Great fun. We'll be in Atlanta next month, then Miami, then Dallas, then LA.
Yeah. And hopefully, Miami. Hopefully, last night's storm here wasn't a preview of Miami. Because last night's storm, I was like, "What do you mean tornado warning?" And then I opened the window, and it was like a 50-mile-an-hour wind through the, and I could not close the window.
You get that wake up this morning with the tornado warning?
No. Happened again?
Well, they had it on like the automated.
Yeah, the emergency alert.
Emergency
My phone didn't
alert.
go off.
I'm sure it did. You were probably just
zonked.
Hacksawing.
Yeah.
Woke me up. Yeah.
Yeah. It was crazy. I could not close the window. I opened the window, couldn't close it because the pressure difference from inside to outside was too great.
Wow.
It like wouldn't lock. So I was just sitting there holding it down. I was like, this is probably not a good place to be.
Very key.
Yeah. We've done a lot of trades this morning. I know you have.
Yes, we can get into that. I'll
Yeah.
go through the market and then we could do that. E-mini S&P 500 futures up 35. We're at 5,700 on the dot here. They've given up about 15, 20 points from the highs here, but definitely been a strong market. NASDAQ up 136. You got the Dow up 325 and the Russell up 46. So the Russell continuing to outperform. I've seen all sorts of stats about the volume in option trading on the Russell, IWM, and RUT just going through the roof. It's not something that typically people are trading, but given the recent move and the volatility that we've seen in there, it's definitely been on people's minds here. Oil selling off a tiny bit /CL 8088. Down 14 ticks. You got volatility futures up 10 ticks. They did get into the 13 handle, 1380, the low of the day. Bonds down 19 ticks. You got gold and silver both stronger today. Gold up $18, silver up 4 cents. And as we talked about, Bitcoin up $5,400 on the spot. On the futures. Spot has had an equally big move, but it's marked towards the open of today. So most of the move was yesterday. And then today up another $300-400. So a big move there. As Mikey said, we've done a couple trades this morning. I walked through a couple of mine. I closed out of Tesla, which was a nice little trade from last week. So I closed out of that. Took a couple $100 out of that and into what has been a big move in Tesla, $10, $20 at some point today. I legged out of an XRT position, the put side, and then I had a couple bailouts. Well, I shouldn't say Morrow was a bailout. That was just a call diagonal, but I had a leftover call at the 40 strike in DJT. That was part of a call diagonal that I put on a couple weeks ago. DJT opened up after what was obviously a crazy event this weekend. Opened up like $14. I think I closed this when it was at like 44. I had a call that went from basically nothing to $6-7. So that was a nice little chunk of change this morning.
It's always wild when you open up your portfolio and you're like, how is this happening? And you're like, oh, I forgot about this. This was like literally worthless.
Where's the outlier? Yeah. And we've talked about it before with diagonal spread trades in general. This option, yes, on the close on the 12th was at like $2. So it actually had a little bit of value here. But when you get to, 3-4 days left till expiration, it's really a matter of just letting that risk stay on or closing it and taking that risk off the table. There's no other management. Occasionally you get bailed out like this. I obviously wasn't playing for, the stock to be up 50%, but it happens and it was a nice trade.
Yeah, I think it speaks to just staying mechanical, right? And I mean, every once in a while, like you said, you have those positions on and you never know.
Yes, you never know. And the hedging specifically with diagonal spreads is on entry. You're selling some sort of premium against that long option. So you're getting some positive decay. You're getting some extrinsic value. But this was more than I was expecting.
Yeah,
and I had the wrong option up. It was 25 cents.
Okay.
Was Friday. I didn't think it was $2. I was like, I would have closed it if it was $2.
Yeah.
But at 25 cents, I can take that risk. And
it went from 25 cents to what?
Well, the high that I closed at $7. I didn't hit the high. The high of the day was $8.95. So I was pretty close.
Pretty good. Pretty good.
It was a pretty good close. It's trading at $4 now. So, but you know, you can't play for that.
No.
It happened. I had the position on. That's great. Stonk Messiah in the chat. I hope he's here today. I'm sure he has quite a few of these or something else that he got bailed out on.
Yeah. That happened to me in MTTR, Matterport. I've been known to harbor 100 shares of stock for many years after I'm short a put and get assigned.
Okay.
And MTTR went from $1.50 to $5 overnight on the acquisition. So I was like, what is this? Didn't even realize I had it.
Sorry, I made you close your Ford too. It's up another 40 cents today.
Yeah, it's okay. What is done is done.
Mikey mentioned it. Did you hear me give you the
Oh yeah, I heard you. Yeah, I was talking about. I was doing my presentation. I was talking about being stubborn and like being opinionated and competitive and stubborn, and like holding on to positions. And I mentioned that I've been holding on to Ford shares for like 5
years.
Yeah. And finally
collecting
closed.
that 15-cent didividend, it makes me sick every time I see it.
But
Chip it away.
Finally closed. People started clapping. I hear Nick in the background. He's like, yeah. It was funny.
You guys are having a hard time, or would be having a hard time not making money, or if you tried.
Yeah,
that's true. That's true.
Today, I love it.
Yeah,
Marks at
today.
all-time highs.
It's
waking up, lotto tickets punched.
Yes,
it's been wild.
You know, I will pay for it at some point. Yeah. You know, that's. You
Just got to celebrate the wins.
Yes. It's good for now.
There's nothing wrong with that.
Now, that's for sure.
Yeah. This morning I closed a call diagonal spread in Apple. That was
Apple up at $5-6.
Yeah.
Crazy.
I mean, it's just up only.
Yeah.
That was a $225 winner. Closed the coin short put spread. That was a $70 winner. Tesla call diagonal spread, $215 winner. UPS call diagonal spread, $65. And like it's just everything's up except for Amazon. That's the only one that's not up.
That's okay.
And then oil had the neutral iron condor. I don't know. This was kind of just like a gut close where we still have 30 days left to expiration, but this thing hasn't moved in like 2 weeks. So I'm just feeling like I feel like it's might have to move at some point because it's been sitting at 80 for the last week. So
that's good if you have an iron condor.
Yeah.
That's what you want.
Closed $140 winner there.
That's great.
And now we've got plenty of powder to deploy for some earnings coming out the next couple weeks.
So you close that UPS trade I put you in too.
Yes. Yep.
Nice.
Yep.
Very
It's
nice.
really just a nice day when you've got some things to close.
Yes. Good stuff.
Glorious. Well, thanks for joining us. If you want to pop into the YouTube chat, we're streaming live there. Just go to the Tasty Live YouTube channel. You see this video front and center. You can throw your trade ideas, questions along the right-hand side chat. We'll get to them shortly. I've got a link to the tastylive.com/newsletters page to get your cherry picks for tomorrow.
Yes.
And I'll throw in the tastycrypto.com website as well, as we will be talking
Earnings
about everything.
spreadsheet coming tomorrow.
Ah.
That's what we're gonna do.
Nice. But yeah, without further ado, why don't we pop over to the slides and have Ryan give us a nice little crypto update. What's going on here?
Yeah, absolutely. Well, I think you're seeing the same thing in crypto that you're seeing elsewhere. Crypto has been the laggard. If we go back last week, it seems like stocks are up only rocket mode every single day. You get a small pullback here and there. I think I saw a stat. I don't know exactly what it was, but it was like there hasn't been a more than a half a percent pullback in like forever.
It's like the longest streak without a 1% down move. I think is somewhere around that stat too.
So you have equities at all-time highs. I'm not surprised here to see a little bit of a rebound short term. If we just look at our crypto market update, we look at performance here. Clearly up, as you guys mentioned, close to 5% earlier today. I think we pulled back a little bit off of those highs, given what our spot number is here at 63.2 with Bitcoin. But you're still down 4% on the month. You're still down 3% on the month when you look at ETH. Solana, as we talked about last time, has been an outperformer on a relative basis. It's done a little bit better, and you can see that when we look at the pairs in the lower right corner. But I think a lot of this is just that selling pressure that we talked about, whether it was, it's still to some extent with Mt. Gox. Obviously, the U.S. government holds a lot of crypto. It moves to exchanges. It can sell at various times. But Germany, the German government, was selling Bitcoin. We knew that. We knew it was a pretty sizable position. We've now seen those wallet addresses go to zero. So there's no more German Bitcoin left to sell. The Germans are no longer dumping on the market. And so that selling pressure has been removed. We've seen positive inflows on the ETF side. We can point to that in just a second. But I think this is just a little bit of a catch-up trade given just how much crypto got smacked down. We ran some numbers last time on the show, just talking about how, first of all, these sorts of moves, this type of volatility is not out of the ordinary. And then following these moves, same thing you see in anything else, right? You get to that point where I'll use the term oversold. You get smashed down enough, buyers show up, shorts have covered, and you get a big move to the upside. So I'm not surprised at all to see this sort of move. I think if you look at what is the market pricing in terms of implied vol, we've got a bigger expected moves now on a weekly basis, about $4,500 for Bitcoin, closer to $300 for Ethereum, still well off of those highs that we've seen in terms of implied volatility. But your range on Bitcoin for the week, one standard deviation move takes you back up towards 68. From a technical perspective, that it seems like where you would trade in terms of resistance. What happens when you get there? If you get there, we'll see. But 58 to the downside now, that low has moved up in terms of what the market is pricing in. And then you've got 3,000 on the downside for ETH on a 1 week, one standard deviation move, 3,600 on the upside. Again, we'll see if we get there or not, but that's what the market's pricing in. Volatility hasn't changed very much. Bitcoin vol went from 50 to 52% here week over week. ETH vol has been very sticky right there in those low 60s. I think it was 63% when we looked at this last week. And Solana realized vol still hanging around 90%. That's been the bigger mover, back up north of 150 now.
Why do you think the volatility hasn't expanded all that much? Because I feel like a 10% move-ish, what we have right now, usually see vol start to really increase. Like, is it usually, 2 or 3 days after, or is it, is this atypical of what we typically see with these big moves?
I don't think you've actually seen a big enough move yet relative to what Bitcoin can do, or at least what we've seen it do historically, that then brings buyers into the market when you look at the upside call options and you look at that tail. I think that's where you really have to see the speculation around your 80,000, 90,000, 100,000 strike off of those big moves. And so we've been chopping, certainly off of, a pretty decent pullback, close to 20%, as we talked about on a monthly basis last week. But you haven't necessarily seen anything in the market that's brought, rampant speculation to the upside end. I think when you look at ETH, why has it been sticky at right around 60%? We haven't seen volatility come down where it has collapsed at times in Bitcoin. And that's because I think there's still positions in front of this ETH ETF approval, which could potentially happen as early as the end of this week. We'll see.
Really?
That's something that, last week wasn't really part of the narrative, and now all of a sudden prices are back up. Oh, when's the ETF coming? Well, it's always been coming soon. I think that's why you've seen, those vols kind of sticky, just like you would have had of an earnings announcement. Not that it's much of a, a binary announcement. We know that this is coming, but I think that's why you've seen those positions stay there. And this is something, again, where we've seen downside volatility. We haven't seen explosive upside volatility. And oftentimes in Bitcoin, we see that real positive relationship or correlation between price and vol. When price goes up, vol goes up, versus, say, the S&P, where we know there's an inverse correlation between price action and implied volatility. The one thing I do want to point out, as we've started to track just moving averages and use them as a bit of a momentum indicator, we had all the sell signals and kind of bearish momentum across Bitcoin, ETH, and Solana. With this move and those crossovers, takes you back into a little bit more neutral territory. Certainly isn't rip-roaring bullish yet. We'll see if it gets there or not. Obviously, you're still down on the month when you look at Bitcoin and ETH, but back into more neutral territory there. don't have those sell signals. If they do materialize, I promise I will let you know, because you do not want to be on really the wrong side of any of these sustained trends in crypto, as they can be pretty strong. And you're also seeing that while Bitcoin market cap dominance is still hanging around 55%, in terms of price action on a relative basis, just the move off of those lows in the higher vol stuff like Solana, like ETH, the little bit of outperformance in those at this point in time. If you recall, Solana got down south of 130, back up above 150. ETH was 2,800, I think, off the lows, close to it. So nice little response there.
You think the ETH ETF is buy the rumor, sell the news type event? Like it kind of was for the Bitcoin ETFs. Like there was definitely some strength into it, and then it was a little bit of a pullback and kind of some chop for a couple weeks. After that sort of event, is that sort of thing, you're thinking for the ETH ETF? Do you think it pulls some liquidity away from spot, products or anything like that? Or
I don't necessarily think it's going to pull liquidity or potential inflows away from Bitcoin. That said, I don't think that at this point we're going to see as much excitement around it. It's something that I believe has been priced into the market for some time. We got the initial, really complete 180 out of the SEC. That caused the price to just absolutely rip. We retraced that entire move, even went lower underneath 3,000 last week. And so I think the market is starting to price this in again, obviously coming soon. You've seen a little bit of a positive reaction here in markets, but I don't think the flows are necessarily going to be as large as what we've seen go into Bitcoin, maybe over time. I still think it's very, very early when you look at flows around the Bitcoin ETF. But at the end of the day, a lot of it is going to hinge on what is the size of those flows. That's where you could get upside surprise. I think the expectation, if you look at the Grayscale Ethereum Trust versus the size of the Grayscale Bitcoin Trust ahead of the ETF announcement, is a barometer. It's much smaller, but you can extrapolate what that size might look like as a result. And so I think you're going to see flows, but it's going to take time. Bitcoin, for I think I wouldn't say the average person, but just for the RIA, for somebody that's not necessarily deep in the weeds, it's an easy narrative to understand, right? It's kind of digital gold. We get that. If you spend a lot of time on Ethereum, you figure it out, and it becomes very clear, I think, if you do the work around it. That said, what's the story around Ethereum? How is this exactly packaged up and explained to people? And that's what we're going to have to see, a little bit of work there in order to get investors to understand what this really is. I've heard a really interesting comparison by an investment advisor, the hedge fund manager, talking about it as an app store, because in a way it is an app store, but it needs a narrative. So we'll see. It's going to take some time, but I do believe that you're going to see decent inflows into it. It's in all of these ETF providers' best interest to sell this. Obviously, they want to generate fees off of it, and so there's going to be that support. But I think it's going to take time. So a very long-winded way. I think, there's definitely a potential for kind of buy the rumor, sell the news. We saw about a 20% pullback after the Bitcoin ETF announcement and launch. But then once we quickly saw that there were some, let's call them big-ass flows into those products to start with, it was pretty supportive of the price action. That said, if we just jump to the next slide really quickly, we could look at what those flows signaled and what the size of them were versus kind of how that's tapered off really since the spring. And here, if you go all the way to the right-hand side there of that slide, you can see the blue is the inflow there, the pink is the outflow, so obviously going to offset in terms of your net inflow. But I think we've had over the last week or so, not just into the ETFs, but other investment products as well. There's been about 1.4 billion of net inflow. Certainly has helped to offset some of that selling pressure we talked about, but it really is nowhere where it was relative to what we saw post the initial launch. So we'll see if this picks up, but it's definitely been helpful in terms of what's driving prices here.
Yeah, absolutely. And I think I've also heard something similar, like Bitcoin's your hardware and ETH could be your software application type thing. But speaking to implied volatility and the moves we're seeing today, not necessarily seeing a huge increase in IV in Bitcoin itself or Bitcoin futures, but some of those high gamma products that we talk about all the time, MicroStrategy, Mara Coin, You're seeing a 7.7% increase over the last 5 days in MicroStrategy, 5% in Mara, 2.7% in Coin. So you're kind of seeing that implication that if this continues, maybe you'll get that big fall pop.
I think you will. I think a lot of it is going to depend on kind of what the liquidity profile looks like in markets. The same thing that's driving traditional assets as well. The same thing that's driving gold prices to near all-time highs right now. And I think, a big driver of that and part of that story is the dollar. So if we just jump to the next slide, got a couple just correlation metrics here. Just as looking at a 90-day rolling correlation, the top, if you could see it up, it's kind of small in the chart, apologies, but Bitcoin versus UUP. This is a bullish dollar index ETF. I think people are familiar with. So a good proxy for the dollar index. Obviously, that's heavily weighted towards the euro. But here's Bitcoin against the dollar. Here's ETH against the dollar. Excuse me. And you can see right now, negative spot 2.8, negative spot 2.66. So fairly strong inverse correlation. And we've seen a bit of dollar weakness here over the last couple of weeks. Also helping to support not just Bitcoin or crypto as an asset class, but helping to support other assets as well. I think when you look at that inverse correlation, so it's kind of the same thing again, and I think Bitcoin is playing catch up. That said, on the political front, you have seen a continuation of the shift post debate with the market kind of repricing the odds around Trump versus Biden here. And Trump, not to say that Biden wouldn't be or isn't, I know we haven't necessarily had pro-crypto policy here in the United States, but the impression is that if Trump were to become president a second time, he would have a different view on crypto this time around. He was, I believe, somewhat anti-crypto initially, if you go back to some of his comments, but he seems to have emerged as the pro-crypto candidate. And so if we just look at Polymarket odds, and you have 258 million that's into this market.
Shocking.
So
That's a shocking
Polymarket's
number.
huge, right?
That's a lot. Yeah. I would not have thought that would be the marks here. That is
this has emerged as really the preeminent kind of betting marketplace. Obviously, have predicted that you can go to, but just given that this is global, it's decentralized, it's accessible to anybody outside of the United States. What is that market telling you for what it's worth? You've seen a pretty significant rise in odds and a repricing here around Donald Trump, 72% versus Joe Biden, and you can see the rest of the potential, who knows? I mean, it's obviously Trump versus Biden, but you can see the other names that are up there in this market. And so I think that has been somewhat supportive of the rise. I wouldn't say there's a direct connection between what happened over the weekend, but you're seeing a response in the market, whether it's donations to Trump, it's the DJT stock, or it's some of the meme coins, the political meme coins that exist out there, and you're certainly seeing crypto prices rally. But again, I think that when you look at Bitcoin, you look at ETH, playing catch up, the German selling pressure has been removed, and you're seeing inflows. So it's tough to just point to one thing, but this is definitely part of that recent narrative.
Yeah, I think it's always interesting when you have, especially when you consider the switch from the last term where he was anti-crypto, kind of not about it, more about really the equity market responded well when he won after the crazy volatility of the actual election. We'll see if that happens again this time, but I think all these things combined and the general market being strong today, not too surprised to see that move, which is, I think, another reason why you're not seeing too much of an increase in volatility in the Bitcoin futures. This volatility today is certainly a big move, but still not crazy. Like the 11-day expected move is $5,500. We're up 56 today. So.
And I think the final thing I'll point to, guys, in terms of just what's behind the move, what's driving markets here, this to me is always going to be the most important driver. Doesn't always get as much focus as kind of those quick headlines that you see in the news. But one component of, let's say, global liquidity or liquidity conditions being the interest rate factor, being policy out of the Federal Reserve. I think when you look at the PBOC, People's Bank of China, credit impulses there, and just what happens globally from a kind of larger liquidity perspective, this is what's going to drive asset prices on the margin. And so what have we seen as of recently? A pretty significant repricing or increase in the likelihood that you're going to get a cut out of the Federal Reserve here in September. There's also been a jump in the odds for the July meeting. I think, you go from 6 to 12%. It's still only 12%. But right now we're looking at close to a 90% probability that you get a cut in September. And, again, another cut now here in November. So we'll see. And I don't think it matters as much whether that's 25 basis points, it's 50 basis points, or what the size of that cut is. It's the fact that you are now starting a rate cut cycle, and that over time should generally be supportive, maybe not necessarily just on its own, but arguably is pretty supportive of asset prices. When you see those cycles kind of show up in the markets. Yeah. So that's the other thing I think is probably really behind most of this and some of the dollar weakness you might be seeing.
Beautiful. I think we have that on the next slide, right? There you go.
There's those probabilities. And this is just for anybody that wants to look at this. I know you guys know where this is from, but this is the CME FedWatch tool. You can just Google it. It's a great tool.
We put this in the cherry picks as well, or a variation of this. We just kind of showed the change in rates exactly here over the last couple of years of just like the projections and the curve there. So if you got last week's cherry picks, it'll be on there as well. You can see the change in the curves.
Love the more.
More.
Yeah. More. I love it. But yeah, even like you said, an increase from 6 to 12%, still only 12%, but still it's double what it was. Yeah. So will be interesting.
Yeah.
Maybe we'll get some vol out of that meeting.
Absolutely. Yeah. They've got that Wednesday this week, right?
Yeah. Yep.
For those, because we mentioned the dollar, if you want to look at, if you type in the money sign, then DXY, it's a dollar index on the platform. It's not tradable, but it'll give you an idea of where, as you were talking about UUP, which you can also pull up and trade as well. If you want to just see, the index itself, you can pull that up as well on the platform. So you can see, where some of that dollar weakness has come in, and that's leading to some of the strength in other currencies, as well as, correlation to Bitcoin and gold as well. You're seeing strong metals on the backs of a weaker dollar.
Beautiful. Yeah, I'm looking at some other things for this week. It looks like we've got housing starts on Wednesday. We've got a bunch of Fed speakers this week as well. Retail sales tomorrow, 7:30 a.m. Yeah, cool. Some other stuff, but lots of earnings coming up. Yes. That's for sure. We are beginning to be in the thick of it. We had the banks last week. JP Morgan completely reversed its sell-off from earnings today, up 550.
Of course.
New highs.
Diamond coin.
There you go.
Coming soon. Goldman Sachs has been making some money, maybe no surprise as well, right?
Yeah, up 5. They actually had earnings this morning.
Yes.
There you go. We didn't really cover the expected move here, but I would imagine this is probably
for sure inside the expected move.
Yeah, $500 stock, $5 expected move. It probably wasn't too high. It was probably like 3 or 4%, but still, $5 is way low, but still moving to the upside there.
Yes.
Glorious. Let's pop over to the YouTube chat. We'll field some questions. Any trade ideas you might have as well. We've got some capital available, ready to deploy. Yes. So let's see it. Risk versus reward, 50K in cash, and the market drops 20%. Is it better to buy leap calls and SPY at the previous market high, or sell at the money puts and buy at the money calls, or 3, buy futures? Good question. So buying leaps into a sell-off. So a sell-off, if you get a big market correction, you're going to see implied volatility increase. But the nice thing about leaps is that you'll see that implied volatility increase, but it won't be nearly as much as like a 45 or 60-day cycle. So you're still buying into that slight increase in IV. But if your contract is long-term enough, it's not going to be the end of the world. And if you do get that rally back to the upside to where it was before, it's going to be a nice trade for sure. A more conservative approach would be your second option here.
Selling puts.
Selling puts to finance calls. That's an at the money put in a long call is literally just long stock. When you separate that though, if you're selling it out of the money put to buy an out of the money call, you create a neutral range, especially if you do it for a credit. We like to call that the Super Bowl, Mega Bowl,
Super Bowl,
the
or
stupid,
like a risk reversal or something like that.
But yeah, the nice thing about a put skew environment when you're doing that is that you can move your put way out of the money relative to where your call is if you're doing it for a zero scratch.
You sell, or you could do it for credit. You do sell a 30 delta put and buy a 10 or 15 delta call. You probably net out a small credit on that position so that you have no risk if it stays in the middle, and then you have that, tail profit potential.
Yep. And then buying futures is just a leveraged way to get that static delta. So depends on the account size, depends on your intention. Your leap option strategy is going to be your highest return on capital if it works. Your short put plus long call out of the money is going to give you a high probability scenario because your risk is at your short put. Anything in between there and to the upside will be good. And your futures is likely going to be your highest leverage position.
Can I add one thing that I think everybody should look at? I think it's a very helpful indicator.
Yes.
Let's say you get that move. So first of all, I don't know where the 20% move comes from, but let's say that you get that very suddenly here. And I think for it to be a 20% move, it would have to kind of materialize pretty quickly. What I'd want to look at, and you can measure the spread or the premium in the market when I look at 30-day implied versus 30-day realized. Because as you guys know, once you get down to a certain point, you can still see that delta move, but you're not going to have the vol or the vega risk. That's going to be pretty sticky. And so when I see that, let's say, just to arbitrarily throw some numbers out there, implied vol is at a well north of 100% premium to realized. Maybe it's at 150%. And we look at where this has been over time, and it's at like that top percentile, right? You're almost, if you were to create an IV rank for the spread itself of implied versus realized, when you're at those extremes, that's when you go into the market. And then you see it historically, looking back, hindsight's 2020, you get that bounce. It's a great indicator of where the market's likely going to reverse from as well. So I would want to be selling those puts and maybe then buying those calls at that point.
I like it. I like it.
And we were looking at, like, during COVID's crash, we were looking at volatility futures too. 15-point backwardation, biggest we've ever experienced. And like that, those are the days where the market would.
And that's an indication of what Ryan's talking about. Of short-term volatility. Ryan mentioned 30-day, but just generally when you're looking at the forward curve of volatility, short-term being higher than the back is kind of an indication that you're at or above, historical volatility.
Well, and you have the realized move. We can measure it. We know the market's down 20%. Vol right now, short term, everyone's freaking out. They have to buy protection, is pricing in a 50% move. Maybe.
You want to be short that premium.
That's selling premium.
That's selling premium because you get the 20%, and then moving forward, it's saying, okay, there's another 50% baked in here. You got to kind of take that risk.
I think that's the trade.
You get paid for that risk.
And it's scary when you're doing it because your mind is like, oh, we're going to zero. Got to go get some cans of beans and set the bunker up. But I also like for retirement accounts, sometimes I'll put it in like a interest rate and just like let it float, whatever. But down 30%, down 40% in the year, like hammer it, forget about it. That's my thing. It can go lower, of course, but historically, if we're going to recover, you've now given yourself a massive cost basis reduction if you're not already in it.
But that requires a 20% down move. Those have been outlawed in the market. We do not have those anymore.
We got some people in the Ford trade still holding diamond hands in Ford. Love to see it.
Get out while you can.
Earnings July 24th. They could say it. They could say something. You never know. They could say we are the next Jetsons company. That'd be amazing. But yeah, we'll see what happens there.
We got Mike. He's hoping for the stash to come back. The stash was a fan favorite here.
Yeah, I've got to apologize to Mike for teasing him. I'm not quite sure the porn stash is going to make a comeback anytime soon.
Oh no,
I don't. It doesn't come in very well. You know, you guys can grow a much better.
You need to get that like darkening stuff like the
I just need to wear a fake mustache.
You can do that too. You can do that too.
November, we'll do a no shave November mustache.
I will start preparing now.
Okay.
For no shave November.
I did that one year for the COVID year, where he's like $2,500, $3,000
awesome.
bucks. It was good. Yeah.
Love that.
So I'll do that again.
Love it. On the trade side, totally missed the thought over the weekend, but do you think there are any plays in DJT based on the weekend and with RNC this week? I think that's in Milwaukee, right? Wisconsin?
Yes. Yeah. It's tough.
Somewhere in Wisconsin.
Just looking at the numbers here, you obviously have a huge move up. It's up 30%. You also have volatility exploding. It's up 35% in the last 5 days. So it can it continue? Of course it can. It's just very, very pricey to participate in that at this point. I think the same sort of mechanic when I got into the original trade, which didn't work until the last second, applies here of being long, lesser vol premium further out in time and short, that shorter duration, 30-day something like that, volatility. You can see we've exploded here in volatility, 175% in September. When you look at like the next couple weeks, you're at or above that, 195%, 11 days out. That's, buying something in September or August, selling something in a shorter duration is how I would play it, assuming you're trying to play this to the upside, which is what I imagine, is the case here. Something like the 45, 65, or if you have, some added risk tolerance, you could do this, 1x2, 1x3, and take a little bit of upside risk where you're financing that long option by selling more contracts in the shorter duration, more premium in the shorter duration to pay for that.
Yeah. Even a standard 10-point wide diagonal, buying September 40, selling the 50 in the weekly, $7. If it goes up to 50 by the end of the week, it would be a nice trade for sure because you're getting all that extrinsic value in the short. That's the biggest thing. You want to be able to capture that, and it's going to work best in the weekly, of course. And then September, even if it's at 50, this 40 strike is still going to have $500 of extrinsic value at least.
Yeah.
So defined risk for sure.
Question for you guys: is this just a meme stock?
It moves like a meme stock.
Yeah, it's.
It's Trump. It's the Truth Social is the company behind it, right?
Yes.
Okay, but not that the fundamentals matter. In this case, this is trading for kind of meme stock reasons.
Yes.
Okay.
This is like your political AMC GME. That's the way I think about it.
I think they had their revenue was like $5 million or something.
Okay.
It's like there's nothing fundamental about it other than Trump is tied to it.
Got it.
It's been a wild ride. I mean, it's had as you can see from the chart, like it was a SPAC, so it SPAC'd at 10, and it rallied into the actual announcement, and then you've had the craziness ensue here.
Yeah, huge realized range this year.
Yeah, it's a vol product for sure.
Yeah, went from 80 to 20 2 weeks later. Yeah, craziness. Netflix diagonal for earnings, long the 690 call. And short the 710.
Do we know the expiration?
Yeah, July 26th.
What? Okay.
So just a 1 week setup. These ones are tough just because they're really cheap, but you're going to get crushed in vol on that 11-day as well.
Yeah, it's going to move the same basically.
Yeah. So with that said, you've got, let's see, it's a $7 debit. You have a 20-point wide spread. So you really do need the move here. If you don't get the move, this is going to be probably a max loss. Like if you get a sell-off for earnings, this 11-day option is going to go from $1,800 to
zero.
Yeah,
Close to
zero or $1 or $2 something. It's going to be a big percentage loss. It is an expensive stock though, so it's hard to do a legit diagonal where you're buying September, selling the weekly, which is what we would typically do.
Yeah, this is a shot trade. You got to get some sort of move to the upside into earnings.
to offset the volatility, because although there is 20 or 30 points of vol in these two expirations in terms of the difference, after earnings come out, both of these vols are going to get back into the 40, 50 range. And to offset 40 points of volatility, you need a directional move.
Yeah. And we can look at it like on the analysis tab, just go to Friday, the 19th. And like Nick is saying, normally we'll crush the back month. If we're in like September or October, we'll crush it like 5%, 6%, 7%. This one, you have to crush at least 20%.
Yeah.
So.
And it gives you a break even that's out of the money.
Yeah.
When you do that sort of thing.
But if it works, it would be a great trade. You could make more than $700 on this trade if you get a rally.
Oh, yeah. So
you just got to be prepared for that max loss if you get any kind of sell-off. Is Tom's IWM QQQ trade finally going to pay off? There's actually call skew in IWM now. People betting on rotation. What is he? Short the Qs?
He's been short the NASDAQ, long the Russell. For the amount of time he's been in it, I'm sure he's like flat now. But that's, yeah. I don't know. I don't know if I'm going to bet on any time horizon that small caps will outperform tech. I don't think that's.
Well, historically, they say small cap outperforms after a big move, like a 20% sell-off. You might see a bigger move.
Well, it's higher beta. It's higher volatility.
Yeah.
Here's your 3-year. NASDAQ's up 37% versus IWM up 3%. So 34% outperformance the NASDAQ.
Yeah.
Your 1 year is 31.4 versus IWM 14%. Your 5 year, guys, is 157.5% versus 48%. Is value dead?
I don't know if IWM is considered value. It's or the Russell really value. It's all small caps. It's like I get it. You want to trade it? I say go for it. I don't think it's something that I'd want to be in for a year, as Ryan gave us those beautiful stats there.
Now, well, how about this?
I'm short the Russell too. That was my trade idea from last week.
There you go. Yeah, I mean, IWM, huge move, especially relative to implied. Massive move relative to implied over the last couple of days here. But let's say you were to place a pseudo pairs trade, like getting long Bitcoin, for example. What would be your short component? Would it be the NASDAQ? Would it be something more concentrated around like the big AI tech stocks that have gone to the moon? Or would you just...
I think I would stay in crypto, actually. There have been those points in time where you've seen a positive correlation between the NASDAQ and Bitcoin. And I think to some extent, there is that you're going to see over time, given they're both kind of longer duration trades. But where you really get that potential for the pairs trade, the relative outperformance, it'd be just looking at, okay, what is ETH priced in Bitcoin? I want to go long Bitcoin and short ETH here and trade that spread, which has been pounded down quite a bit. You look at that market cap dominance of Bitcoin being 55% right now. That's like the dollar wrecking ball, the dollar over everything, Bitcoin over everything, long Bitcoin, short the others against it. That's kind of how I think about it. I wouldn't look at it as much across asset classes, just because the volatilities are so wildly different as well in terms of how you'd have to size it. But that might be one way to think about it, though, when there is, the correlation that makes sense to put that on.
Love it.
And you don't have, MSTR is certainly outperforming, up 15%.
Yeah.
Mara is Mara's right there too. I guess Coinbase is the one that's like right.
Yeah, that's another. I think that's a great point. Maybe then, if you are going to stay with equities, you put it on there. You do it with more of a crypto specific equity. But I think Nvidia, for example, while they might both be going up, kind of its own monster in that sense.
Yeah. The long Bitcoin short basket of crypto stocks or Coinbase, Mara, MSTR, it'll hedge you more in those downside moves than you'll gain in the upside moves. Like the beta is definitely heavier to the downside on those products.
I haven't looked at it either, but I wonder if there's a trade opportunity with, say, the Bitcoin futures ETF versus the spot ETF now. I haven't looked at it at all, so there might not be anything there.
So there is sort of a carry trade baked into the futures themselves. So / BTC, which is 5 contracts, it trades at like, let's call it it's about right now $500 difference to spot, which is, we'll call it 1% ish to spot. So, there is a carry trade to being short the futures long spot in that sense. It's so hard to do on a retail level. Yeah. You would have to use the micro Bitcoin contract, and now you're talking about, pennies on the dollar, and after commissions, fees, all that stuff, there isn't a ton there. The Bitcoin ETF BITO is a little bit tougher too, because there's an interest rate component in those in that ETF, because it's long the futures, and with that leverage, it has capital available to buy treasury. So you'd have to do some math behind the scenes to really figure out if there's any sort of edge there, and you'd have to be short that versus long the ETFs, because you can't get short the ETFs. So ETFs, or I don't think you can get short them. Can you get short them?
Well, I guess as a bigger institution, though, you can get long the spot
you can short
ETF
the
and
ETFs.
then sell the bigger futures against it. And then, at a point, obviously that trade gets unwound, which maybe drives selling pressure in spot or in the ETF at times.
Yes.
Wheat futures. Are we rolling or closing wheat?
We missed that boat.
I mean, it's just nuts. Both of our trades are defined risk. We both had the 550, 540 put spread in the 11-day. And then I also have the 620 calendar spread at long August, short the 11-day. So 11 days to go. Nothing to do.
Yeah.
I'm not throwing any more money at this thing.
No. Are they on the do not trade list now?
I don't know about
They're getting
that.
close. They're getting close.
Wheat was the only one that has been painful for us. The other ones were pretty Westwater proof.
Yeah.
Thomas comes on, gives us the in-depth info on some of these futures. We place trades, and we've had this year's been great for a lot of these products. Yeah. But this is just a crazy move. In 2 days, we've gone down almost 50 points here. But yeah, defined risk. This is a bigger product, so we're sticking to defined risk anyways. But we'll stick with it, see what happens. Maybe we get lucky with a reversal and we can close it. Closer we are to expiration, of course, the more extrinsic we'll be able to zap out of there. But not rolling anything. There's nothing to roll because this is a in the money spread now, so we'll just hold it.
Bitcoin high of the day up $6,000, 10%. Unfazed over there, just diamond hands.
Yeah.
I'd like to see it break 68 and get out of what looks to be, to get into the technicals, a massive bull flag here over the longer time period. And then if you can break above this recent high, you could run, right?
It's $1 million a coin.
You could go to 80, 90. But I think you have to see that price action. You got to see that follow through first. To me, this is just the chop that we've kind of called for throughout 2028. You need to see, that change. Until then, I'm unfazed.
Unfazed.
It is nice to get a little bit of a bounce off of those lows, though.
Yeah. Sure.
From last week.
What are we doing with JP Morgan? So, JP Morgan's a scratch now. I had the.
Are you just long the call now?
No.
August.
Unfortunately, I.
Oh, you did
capped
your
myself.
calendar thing.
It wasn't a calendar. I still had a 5-point wide diagonal. So I went from a 205, 212.5 for $6 to a 210, 215. Or no, sorry, a 205, 210 for $5 and change.
Right,
so it's a scratch. So right now, not going to do anything. Short option with 11 days to go has almost $300 of extrinsic to decay. If we stick around here for another couple days, I'll just close it. It'll be like a 30-cent winner. Mm-hmm. But even if it rallies and continues to rally, it'll be a similar P&L. It's a scratch right now, ultimately. So now I'm playing for kind of a neutral move around this range.
Okay.
What gives with today's action? E-minis up strong and volatility is flat.
Yeah, I mean, vol can obviously go lower, but it's at pretty low point here. I don't read anything into a 15 tick up move in volatility. It's
if you were long options, one way or the other, puts, calls, you have a position on ahead of the Fed, why would you unwind ahead of the Fed? I think vol is probably sticky until then, right? You have pretty big, I mean, maybe not pretty big event risk, but you have event risk in midweek.
Yeah.
ZN, the U contract, short put spread 110, 109 for August 23rd. What do you think?
August 23rd. 10-9?
10-9.
Yeah, you're at 1/3 with the strikes. I mean, long bond, short rates seems like the trade to be.
Tom said he needs 10 more days like this one to come out good on that IWM QQQ trade.
That's what Tom says?
Yeah, I guess so.
Makes sense.
Nice.
I mean, it means he needs to rustle up like 40%, the NASDAQ down 40%. It's okay.
What's the Bitcoin Ethereum ratio? I assume you're asking about notional exposure?
I'd go 2-to-1 on the contracts. The problem is with the minis, they're not sized appropriately, so you have to go 20-to-1 with the micros, or the micros, not the minis, apologies. Yeah, look at it this way. So it's going to be about 18 or so ETH to 1 Bitcoin right now. So 18-to-1, and then depending on what the contract is, or to that point, what the notional is, then you can size it appropriately. The vols you might want to account for. I mean, obviously ETH is a bit more volatile, but yeah, you want to do that. With most, it's going to be 2-to-1. So what you'll see there is you've got, you know, futures contracts in some places where it's 1/100th of a Bitcoin and it's 1/10 of an ETH. So at that 18-to-1, you could do it 2-to-1. You know, 2 of the 2/10ths and you know, 1 of the 1/100th.
The ETH contract, the futures contract, is 50 coins. So that's why. So the Bitcoin futures contract to the ETH contract, it's 2-to-1 there.
Yeah. So on the big ones, 2-to-1.
On the big one, it's 2-to-1. When you get into the micro ETH contract, which is 1/10 of 1, it's a $300 notional value. It's just too small to really mess with.
Yep.
That'll be cool because when we have the ETFs for both, then you'll have a way to actually trade it on the retail trader side or in like an IRA, or I guess you can't do it in an IRA because you'd be short one of the ETFs. But that'll be an interesting new trade that we'll be able to put on. Do you know how many of them are going to launch? Is it going to be the same as the Bitcoin launch where there was like 20 of them?
That's a good question. I don't know how many people have submitted an application. I know you have Van Ack, I think. BlackRock, ARK, 21 shares. There probably are a couple other ones. I would imagine it's probably close to the same amount. I mean, if you had a Bitcoin ETF approved and you can make fees off of another fund, you're probably going to.
Good stuff.
Love it. We out of time. It's 12 o'clock. We got some Nando's to eat for lunch.
Yes. Yeah. Doesn't travel.
Oh my God.
I'm just so hungry.
I'm pretty hungry too.
Thanks for tuning in. If you have any questions, you can always reach us on the Twitters. I'm at Trader Mikey B. Ryan's at Ryan Fred Grace. Check out Tasty Crypto as well. tastycrypto.com. Lots of great content there. Download the app. You must do it. And Nick is at Trader Nicky Bat. We got plenty more content coming your way on tastylive.com as well as the YouTube channel. So stay tuned, but we'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
What is it it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant. That means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We are back. It is Monday, July 15th, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Anton Kulikov. Anton, how was lunch?
Lunch was great. We had some leftover ramen from yesterday. You know, Sarasota isn't really known for its hot restaurant scene, but I'll tell you, ever since the population started to explode in 2020, we've had some really great places come in. So, yeah, so it's pretty good. How about you, Chris? Did you have anything for lunch besides your iced mochaccino from Dunkin' Donuts?
Ice mocha frappuccino, orange mocha frappuccino, in fact. No, it's just a regular iced coffee. And a protein bar. It's Monday, Anton. This isn't a cheat day. We don't get to take any breaks. Gotta stay in shape. So, starving myself, naturally. Anton, which raises the question, is it time to change playbooks? Should we still be greedy little pigs who love this market on the long side, or have events happened in recent days that perhaps warrant a reconsideration of being a bull's bull, as it were, which I consider you to be one? Anton, we usually start off with a CFTC COT report update, and quite frankly, there's not really anything meaningful. Euro positionings are being rebuilt, but they're back to where they were 2 weeks ago. S&P 500 positions were sliced in half, but they're back to where they were 2 weeks ago. That's really about it. There's nothing substantial. So let's talk about those presidential betting odds. When you and I were talking this weekend, when I was out with your mom, I was looking at the, by the way,
you know, it's not funny when
absurd,
you say, no, I'm just kidding. Actually,
the most absurd segment I've heard. I can't believe that was said today.
You know, usually Beth is there to calm him. I think the reason why I was so direct is because he knew he wouldn't get any pushback. Like, usually Beth, you know, like, no, watch the 8 a.m. options jive to hear what we're talking about. There's always, what are they called, bloopers, or little Easter eggs in between the shows for y'all. So there you go.
Well, we were talking Saturday night because I saw what was going on and I texted you, turn on the news. And one of the first discussions that we had, of course, being the neurotic market geared people we are, which was how's this going to impact the market open? And I said stocks up, bonds down. And that's how it's playing out today. Not that we could trade that over the weekend, but it appears that we have a pretty consistent theme that's been playing out since Thursday night, June 27th, which is when Trump's odds are going up, the down ballot odds for Republicans gaining control of both the House and the Senate are also increasing, which increases the odds of a shift in the U.S. budget deficit and debt trajectory to widening out more. It would be no different if it looked like Biden and the Democrats were going to have a trifecta. Gridlock means things just don't really change all that much. But when one party controls everything, pathways open up that were unforeseen, unexpected. And the market needs to weigh those possibilities more. So that to me is the big takeaway here. Would tax cuts be good for the stock market? Probably. Would they be good for bonds? Not necessarily. Would tariffs be good or bad for inflation? Probably bad for inflation. That'd be bad for bonds. Would that mean that the Fed could cut as much as they want to cut if those pressures are there? No. So that brings up the terminal rate, which is probably why you see the longer end of the yield curve a little bit more sensitive than the shorter end of the yield curve today. Nevertheless, Anton, I think this is one of the more important charts right now, as it looks more and more likely that you're going to get a Republican clean sweep this November. The bond market is proving sensitive to the notion that there is a greater likelihood of a change in deficits and debts. And so thankfully, what happened over the weekend was minimal as it was. Obviously, very disappointing to hear that other lives were lost. It could have been a lot worse. This would have been a much more different market today. But the fact is the market was up 1% the day after Reagan was shot. And while it swooned about 2.5% to 3% after Kennedy was shot, it recouped all of its losses within 3 days. So this itself is a tragedy. It could have been a worse tragedy for the markets outside of what it does for the betting odds. I don't think it changes the course that we're currently on, nor do I think that it necessitates a change in playbook for the time being.
Yeah, and I think what's more is, for those wondering, I just have to, so because I'm going to get emails, I just know, it's Saturday night. I received, when this was all happening, Chris sent me a text message. And my mom sent me a text message. I just found it funny because out of the two people that, if I had to guess if a world event happened and I would get, like everybody would be, not that this was that, but let's say there was a world event, huge world event. The two people I'd get text messages from is my mom and Chris Vecchio. Nobody else. That's just what I found funny. Now
I have a list of people when something happens big that could impact the markets. Just tell people to turn on the news. I'm not telling them what to do. I'm just saying something's happening that when you find this out, your brain's going to go, how is this going to impact the open? Because I know how people think. So
what's interesting about this, right, is when you see something like this happen and you ask the average person who isn't in finance or doesn't know much about the stock market, not in a bad way, just, the average person outside the world of finance. Typical person would say, oh my gosh, market's going to crash, or at least at least if you ask them about volatility, is this going to impact market volatility? Chances are, it'll make a lot more volatility. What happened today is the exact opposite of that. Markets went up, volatility went down. And I think that that's actually kind of a representation of what we may expect to see over the course of the next few months. I think a lot of people are expecting more market volatility simply because of the uncertainty around the election. But I don't think that will translate to the same degree as people think, and especially when markets are at all-time highs, right? I think that the only way volatility can actually come in is if markets take a dive for whatever reason. And if the election isn't going to make markets go down, volatility is not going to pick up either. So I think those two dynamics at hand, I think, to your question, do we change the playbook? I don't think you can. I mean, based on everything available to you right now, right, again, where is there any kind of signal where, okay, volatility is picking up, directional trends are changing, sentiment's changing, sentiment's at an extreme? There isn't any of those indicators right now. And in fact, it's the opposite. right? Volatility continues to go lower, markets continue to go higher. And the thing about going short the equity markets, again, we've said this over time, many times on the show, it's not the same thing as playing a direction in a different commodity. If you are wrong directionally in stocks to the upside, in other words, you're short, and markets continue higher, it is not a position you can hold until you're right. Because what can easily happen is the markets can run away from you and never come back to that level. In other commodities, that's not the case. In oil, you can hold a short position a lot longer with a lot more certainty of being right than you can stocks. Same thing in currencies. Well, that's debatable. I'll leave that up to you. Crude oil, gold is another example where you can at least, if not hold the short position, because obviously gold's been going up, at least you will have time where gold kind of steadies out in kind of a range, and then you can choose to manage it or do whatever because volatility is still high. With equities, when equity markets go higher, they tend to not stop, and volatility also goes down. So you're kind of stuck. If you're wrong directionally and you're short, you're kind of double whammying yourself because at some point you're going to have to get long. You cannot stay short forever in equities, which means at some point you're going to get long. And if you're wrong when the market's going up, you've essentially missed out on the gains that you could have had if you were long. And the reason that's important isn't because you should trade based off of some kind of fallacy of, you're trying to get back your losses. No, it's because markets tend to drift higher in the long term. So the default position in equities has to be long. So which means if you're taking a short position, it has to be very temporal. And if you're wrong, you've essentially given up not only the profits or the losses that you generated when you were short, but at some point when you get back in long, you're not going to have made as much compared to if you were long through the bull market. Does that kind of it's kind of like saying if you deviate from like the default path, you're going to eventually have to come back to it, right? And it's like, unless you have a very strong reason to deviate, then you're better off not doing it because the consequences are significantly greater in equities than other asset classes.
Anton, stocks gapped open higher here today on the other side of the weekend news. Stocks up, bonds down. But stocks have come in a little bit off their highs. A new all-time high set today in the S&P 500. That clocks in up at 5718.75. Anton, this recent trend that we saw in May, in June, and apparently here in July once more, where we hold that 1 week moving average as the guardrails in a slow, steady grind to the upside in a fairly low volatility environment. Granted, the VIX is back above 13, and there has been some vol expansion throughout the day. But it's still a green day, and the VIX is still below 15, which is what matters most. So as far as I'm concerned, I don't see any reason to change the playbook just yet. I still have my concerns about what may happen come August 1st, whether or not to roll the ES call positions that continue to work. But as far as the dip that was bought at the end of the last week, no reason not to hold on to that and continue to ride this up as we turn our way through the middle of this month.
Yeah, and and I think one of the again, the only thing I could say again here is that this is unique, very unique to equities. And I can't really think of the right analogy. It's kind of like, if you're like a long-term investor, which we're not, we're traders obviously, but if let's just put ourselves in the mindset of an investor for a second, because I think there are a lot of things that traders can actually learn from the investor crowd that I think is kind of for some reason a very difficult thing for active traders to get a hold of, right? And that's the sitting on your hands concept, right? A lot of the money is made sitting on your hands, and from an investor's perspective, that's the tried and true fundamental point of an investor, right? You of course you make money by buying, holding, sitting on your hands, whatever you want to call it. As a trader, most of your money will be made by doing that. And if we know that to be true, and if we ask ourselves the question in equities, if you sit on your hands in equities, statistically speaking, what is the directional trend in equities when you sit on your hands? And the answer is to the upside. So therefore, if most of your money as a trader is made sitting on your hands, and the default direction in equity markets, especially when vol is low, is to the upside, you have to make a very, very strong case to be bearish that exceeds any, price extremes, any potential fundamental indicators in the economy. Those are invalid arguments for going short equities, I think personally. Not because they're wrong necessarily, but because from a price perspective, it bears very little correlation to what happens. So that's my last word on that. And I just want to beat that dead horse extra good today, because as the markets continue to go higher, I hear a lot of more people saying, this is it. I'm getting short. I'm going all into the this is a very dangerous, you typically what happens is when those shorts capitulate, that's when the market turns around. So if you want to go short, I totally hear you. I totally get it. Wait for other shorts to capitulate, then get short.
It's a costly endeavor right now. That's not to say the market's never going to turn lower again. It will at some point. But the technical breadth is there. You look to the percent of stocks above their 20, 50, 200-day moving averages. It's not in blow-off territory. It's not in a territory where you'd be too concerned. It's not great. It's not terrible, which has been a defining feature of the entire rally, right? Everyone wishes there was more participation. And we've been hearing that for how long? And yet the rally's continued. So something needs to change structurally. There needs to be a new catalyst introduced to the field, I think. Because if we're continuing just to push on the margins of is the Fed cutting here or there, now that the market's very heavily favoring Trump, and the betting market is as well, and the polling is as well, even before this weekend's events, right? We were seeing everything shift in his direction since June 27th. He loses a few points here or there. Something has to get the race back to break even for this to be a real significant catalyst again for stocks.
Mm-hmm.
Something could happen out of the Middle East. Something could happen geopolitically. But a 13.6 IVR in ES, quite frankly, with the posture we have, I still think that's buy the dip territory. Today, obviously, in the NASDAQ, what's going on here? Is it a bullish rising or bearish rising wedge? Is this simply the rebound at support after returning to recent swing highs? Either way, though, this looks like we still have some potential for further upside. And the volatility has creeped up here, which I suppose begs the question, Anton, for so many months now, when you and I have wanted to express our bullish views, it was always long at the money call spreads in ES and NQ, short put spreads in Russell. Do you find, even just forget the IVR for a second, looking at the raw IV index, do you find that this is a good place to perhaps switch over back to doing a short put spread in the NASDAQ, or just stick with what's been working if that's your bias?
No, I think you stick with what's been working. I mean, and especially so for the Russell, and it seems kind of, the Russell. So the Russell has been very interesting. Okay. Well, if you want to finish in the NASDAQ.
No, talk to me about the Russell.
So, and I think you can make a case for the NASDAQ as well, but the Russell especially. Stock indexes and their implied volatilities tend to have an inverse relationship. In other words, again, this is classic market structure 101. Stocks go up, volatility goes down. The Russell has been kind of an oddball in that field, in that the Russell has had one of its best consecutive few days, 3-day consecutive run. I don't know specifically the statistics, but I'm going to guess in quite a while, probably mid-November of 2023. That's
the move that we saw the other day was the best since that big day we had up in November last year.
Yeah,
it's been a long time since a day like that.
Yeah, and we would expect, based on a day like that, stocks go up, volatility goes down. But in the Russell, it's been actually the opposite. Volatility is actually increased in the Russell, which is interesting from one perspective because it's not something you'd expect. Volatility rank sitting in the 60th percentile, which, again, if you look at the volatility index, RVX, you'll notice that there has been a sizable jump in the Russell's volatility all the way from, let me see here, should come up here in a second. I remember it was trading around 1918. Now it's 22. Okay, so it's trading 22 right now, 22.11 to be exact. Before the day, the big day on Thursday, it closed at 1889. Okay, so that's quite a sizable shift. Meanwhile, the VIX, okay, also went up a little bit, but for the different reasons. The S&P actually had a pretty bad day on Thursday, so you should expect volatility to go up, but it actually didn't go up as much. But let's focus on the Russell for now. The Russell volatility is up, meaning that it's actually still a good environment for selling spreads as opposed to buying spreads, despite the huge moves to the upside. Now, I will say, if you were long call spreads going through this event, obviously you would have done better than being short put spreads. But again, we have to look at the volatility environment right now. And the volatility environment right now says Russell volatility is higher. If you're bullish in the Russell, short at the money puts, short put spreads, anything of that nature, I think is a very valid bullish strategy. The NASDAQ actually very similar, although it's borderline, right? NASDAQ volatility sitting around 30. I'm sorry, volatility rank sitting at 30. That's kind of the borderline. But Russell by far has the best implied volatility of all the equity indexes. And therefore, if you're bullish, short put spreads even more so now than before, despite there being a few consecutive up days that should have theoretically pushed vol lower, but in fact did just the opposite. Oh, can't hear you there, Chris.
Sorry about that. Had a cough before. Was looking at this Russell chart here, and we go to that continuous time frame, and it's really difficult to say that this is anything other than a fairly meaningful bullish breakout. And it was earlier this year that we were coming in saying, what happens if this is a big, extended range? It's a 400-point measured move from 2,000 to 1,600 or so, a little bit above 1,600, a little bit above 2,000, right? You got about 400 points to the upside. Does that carry you into the mid-2400s? Could that be possible? And it really didn't do anything for the first 6 months of this year. And now it's finally working. And now we've seen 200 of those points or so come in over the past 5 or 6 weeks. So it's not to say that the Russell's getting long in the tooth. There is still some very significant technical distance to go towards upside targets. When we look at the multi-year range that was carved out between 2022 and 2023, I think that the shorting the Russell put spreads is a very reasonable thing to do because, quite frankly, I have trouble on my hands. Because RTYU4 is a condor position that I had put on arrogantly because the Russell hadn't been doing anything for months and months and months. So why not continue to put it on? And Anton, even though we arrived at some sort of place of understanding that it's not really a sexy trade because the vol was so low, the technicals were still holding. Here's the problem now. The technicals are no longer holding. Right? We're clearly pushing up through highs. We're getting through 2,200. I was hoping we'd see a little bit of a breather here. Obviously, we're not. I think it might be time to just acknowledge the fact that when you look at those longer-term charts, this consolidation period is finished. There's no reason to fight it. And everything, equity market's going to be going directional now.
You know what's interesting is it's funny how quickly this changed. Just last week, you had this conviction that was, there's absolutely no directional. I mean, I remember you saying this. It was literally just last Wednesday, I think, right before Thursday, right?
I've been calling it the Bob Barker market. The price is right at 2050, right? Like what is it?
Which actually made me go longer call spreads with it. No, I'm just kidding. Actually around there, but not because of you. But still, it's funny.
No, I said if it wasn't for me, you should have.
Yeah, right.
Apparently I'm a good contra.
Well, see, that's the thing. It's like as soon as something kind of seems pretty steady, right? It's kind of like this typical Murphy's Law. It's like you go neutral, immediately get whacked on the head, right? But no, I mean, again, I think the Russell being a good diversifier to the S&P has, again, it took a while. Like there was a huge gap between January and today, where the Russell was, if you were long the Russell, was probably your biggest drag on your portfolio. Well, in equities, right? Not other assets excluded, right? But in equities was probably your biggest drag, right? And if you were long the Russell in the last week, it was probably the thing that actually saved your portfolio. And I think that, again, this is, or maybe not saved. Again, the S&P rallied back quite quickly after its day on Thursday. But again, when you look at the percentage gap in terms of returns over the last 3 days in the Russell versus the S&P 500, it was very sizable. Here, if you pull up the S&P just for a second, I kind of want to do this exercise. Because again, assuming we had a portfolio of short put spreads in the Russell, long call spreads in the S&P. Okay, if we go on Thursday, right? So S&P is basically back where it was on Wednesday, right? Wednesday's high. S&P rallied back, right? Approximately.
Yes. Yeah.
Okay,
that's fair.
So break even in the S&P, and the Russell is up. I think about.
We closed 56.88. We're at 56.86.
Okay, so S&P's unchanged. Russell, since Wednesday's close, where did Russell close on Wednesday?
2069.30.
Okay, so 150 points approximately.
Mm-hmm.
So what's that? 6%, about 6% approximately. Right, 6%. Call me if I'm wrong. 5%, yeah, 6-7%. So again, that spread between the Russell and the S&P, if you continue to stay true to that for the rest of the year, this may have been actually a very good week for you. So again, it's all to say is that having a diversification still can save you in moments like this, where maybe you're not doing anything for a week, 2 weeks, 3 weeks, and you're like, why the heck am I holding this long Russell position? It's like doing nothing but kill my portfolio, right? Again, with equities. With equities having a relatively high correlation, just trust the numbers. Over time you will get a nice smoothing out of your portfolio risk. And again, with the last week, this was probably the best example we've had all year with this.
Anton, any earnings releases that you're watching, and will they influence how you trade in and out of the indexes over the coming days?
No, I honestly, to be honest with you, I stopped looking at earnings like last quarter. I haven't really paid attention. I mean, there's just been so much money to be made being just long equity indexes that earnings kind of just fell by the wayside for me. I mean, I'll be honest, I'm not like tooting my own horn. I'm just saying it's just, earnings were very interesting in 2022 when, it was a very swingy market in equities. But when you have these, seemingly, I don't want to say layup situations, but equities just continue higher and higher and higher and higher. It's almost like earnings plays kind of take a back seat in my trading portfolio, but that's just me personally. It's not a right or wrong.
When vol is low and it's really, easily trending markets, I understand why some people want to look to earnings, right? They're going to offer greater idiosyncratic risk. Still, though, I don't necessarily feel like I have an edge there. So I'm not looking to any particular earnings release this week to trade myself. But when I look to the calendar here, Anton, UNH, Bank of America, Morgan Stanley, that's all tomorrow, Wednesday. Johnson & Johnson, US Bancorp, Taiwan Semiconductor, Netflix on Thursday. And then Friday, wrapping up with American Express, Schlumberger, Travelers, Halliburton. So there are some interesting releases the next few days. You can't discount the market impact, particularly at the index level. Right. But anything that says we got to get out of the way, I don't know. And earnings have been the backbone, one of the backbones of this market rally here. Right. Everyone's saying PE ratios, they're too high. But then we get earnings results they're meeting the moment for the most part. That's not something that's going to give people a reason to get out. Not yet, at least.
Yeah. And I think a lot of the earnings have mainly kind of been a big fuel for the NASDAQ. I don't really see for the Russell or even the S&P to the same degree as the NASDAQ. The earnings have had much of an impact, when compared to the rest of the market as a whole. But I mean, I don't know. We've done studies on earnings from just from a research perspective, and we find basically no correlation between the S&P 500 and when a certain group of stocks has earnings. It's just, if there is some, it's very temporal, and it basically either fades or reverses the next few weeks. So,
Anton, we're more than halfway through here, so let's make our way over to the bond market. Treasuries opened up lower, and they have mostly stayed lower over the course of the day. As we make our way over to ZN, down by 0.22%, 110 and 29.5 ticks here. It's been a steady uptrend, Anton, and there have been sine wave-like behaviors in this uptrend, ebbing and flowing as we continually make our way higher and lower. Perhaps this is the catalyst to pull us back in a little bit. After all, the last time we saw a significant dislodging of those election odds, it did provoke a fairly meaningful pullback in the entirety of the Treasury curve. Perhaps we're on the precipice of another one of those today. Either way, though, I know that you like being long. I like being long here.
Yeah.
What else is there to say in ZN or ZB unless you see spikes in vol, given that the Fed cut cycle harkens? History tells us that you have to be looking to sell put spreads if they arrive.
Yeah, and what's interesting is this move today, down 28 ticks. This did not happen. Well, actually, let me rephrase. The initial move when the markets opened on Sunday, bonds opened lower, I think like one full point and like 3 ticks or something like that. How do you say that in the bond world, by the way? 1 and 3 ticks? Or
sure.
Okay.
I say 110 and 30 ticks.
Sure. What'd you say? 110 and 30 ticks?
That's like right now. The price is 110 and 30 ticks.
Oh, you're looking at notes. I'm sorry. I was looking at bonds. Yeah. 110 and 30 ticks. Yeah. So, but up until I think like 12:30 Eastern time today, bonds were only down like 12 ticks. Now they're down 28 ticks again. So I don't think that this move right now has much to do with the results yesterday, because we basically almost rallied back all the way today. And then for some reason, there was a huge volume move at 12:41 Eastern that pushed notes, since you're looking at notes. We're looking at notes.
Did a Fed chair speak around then, Anton?
Well, I know this is what you're going to tell me. So, okay, so a Fed chair. So this move is because of the Fed, nothing to do with Trump. See, this is what I was trying to say. Thank you for making my point so clear, Chris.
Yes, Fed Chair Powell on the podium today. And the market was leaning into and looking at the possibility of a July rate cut. There were some discussions among investment banking professionals, economists at investment banks, that perhaps the Fed's strategy is going to be that they're going to cut twice in July and then say they're not moving on rates until after the election, just to wash their hands of any accusations. They know that easing is going to be necessary, but if they deliver it too close to the election, it might be perceived as not independent. And if they wait until after the election to start, that might be too late, in fact, to nip any slowdown in the bud. So give them 2 now, as opposed to doing it November, December. Give them 2 now and say, we'll see you in January. Powell's throwing a little bit of cold water on that notion. There's more confidence, as we heard in the testimonies last week, but he's not giving us the hammer and the nail to say this is definitely happening. So a little bit of pullback here. Also, Anton, over the course of the day, couldn't help but notice what's going on with crude oil here. Was weaker, is coming back. Perhaps that's contributing as well. But Fed cut odds, in terms of a catalyst, we have to consider that they are at a near-term ceiling. When you're at 99% chance of a 25 basis point rate cut in September, and the market starts pricing in at points last week, like a 7, 8, 9% chance of 50 basis points in September, the July cut odds start getting pulled up and puffed up, it feels frothy. We know the correlations between the SR3, Z5, Z4 contracts and any portion of the yield curve typically reside above 0.9. Closer you get to ZT, the shorter and the higher those correlations will be. So the cut odds, is this a catalyst right now for the market? Probably not. I don't even think the Fed really matters all that much. Powell throwing some cold water on a limited probability outcome as is doesn't necessarily change the ball game as far as I'm concerned. And this is the last week that we have Fed speakers. At the end of this week, my birthday is this week, as a birthday gift, the Fed's not going to talk until July 31st. So we're very fortunate for that, Anton. And I'm grateful for it as well.
When's your birthday again?
This Thursday.
Oh, okay. Hold on. I got to make sure to put it on my calendar so I don't say anything.
Yeah, please don't. It actually superseded yours and Tony's, and I know he's listening. So sorry, boss.
Tony, he's not listening.
Anton, ZN doing its thing, ZB a little bit of worse for the wear. Obviously not a comfortable day, but the fact is, a few days ago I rolled out the position. So duration is your friend if you're going to be long bonds, and I think today's a really good example of why time is your friend if you're going to be a long bond trader. Beyond the typical 45 days that we typically adhere to here in the Tasty methodology, 55, 60, 65, that's really a nice area to operate in.
Yeah. I mean, again, it's one of these trades that's not. It's kind of like the Russell in a sense, where it's not a clean swoop. But if you look at the daily chart, and then I think this is really important to note, because again, this is a very different market than something like equities. For this reason alone. So the daily chart in bonds has been largely bullish, in my opinion, just even from the technicals. And I know this is not really where I play, but I mean, maybe you can chime in here. Very different than what we saw earlier this year, where you saw a lot of kind of false breakouts and then continued selling, and then essentially lower highs and lower lows, right? Up until essentially.
If only to clarify, what you're talking about is when we were having this breakdown where we looked like we broke out.
Yes.
And then we kind of just petered out here a little bit more. Yeah, that was a false flag. But now it looks like maybe it's something different.
Yeah, and again, it's a little bonds are looking a little bit more resilient. But again, it's not as clean of a line higher than equities. It's just not. So again, how do you what's the antidote to that? Longer term. That's exactly what Chris said. That's what I've been saying since the last, months at this point, because I've been long bonds probably, even longer than you, from the standpoint of aggressively talking about it on the show.
End of April. I think you started really taking a bite out of that on the significant long side.
Yeah. So
if I recall correctly, I have a jealous memory, and I remember telling you, if it gets above 113 and 12 ticks, I think it's a good time to go long again. And then you're like, oh yeah, I'm in. I took that. And I'm like, oh, I didn't.
Thank you, Chris, for thank you. I appreciate that. No, but again, long story short, I don't think there's much else to talk about here. Low volatility. You can afford to extend duration. It's not that much more expensive if you're doing long call spreads or short put spreads. You can even get nice cheap wing to define your risk. And personally, a lot of my positions are in September. And again, that's just because it just takes a while to materialize. So nothing to change.
With any upticks in vol, you could probably start to make a case if you get down towards 118. You're about 5 points removed from highs and lows that we've seen over the last 6 months. It becomes a reasonable place where if you're directionally agnostic and working through various scenarios here, if the economy doesn't fall off a cliff the next few months, the Fed is going to take its time to make sure inflation is still coming down, which it gives us the environment we've been in. Stocks choppy, or rather stocks up, bonds choppy sideways. Fed hasn't really done much of anything yet. Bonds have not gone anywhere for most of this year. We started rallying at the end of last year, and we are effectively where we were last August. It's been a lot of sideways chop.
Mm-hmm.
That could continue. So if we get a little more of an uptick in vol here, if you're directional longer term, but ZB not really offering it, and ZN being the friendlier of the two products I still have my Iron Condor on in here. I like this a little bit. This looks nice. This is a good feeling. We're pulling back in. We're getting some vol come back. There's plenty of time to expiration. I would love for it to hug about 110.5. And if we can hug 110.5, golden. So right now, we don't need to be as directional, I think, in bonds as you need to be in stocks if you want to have some skin in the game.
Yeah, and I'll give you this, Chris. I mean, you were very correct on calling Z or using ZN as opposed to ZB as your product. I mean, my strategy has been largely focused on long call spreads, and honestly, I think that over the last month, I think the biggest regret I've had trading wise, I think, is not using ZN as that vehicle as opposed to ZB. And honestly, I'm considering switching a lot of my positions to the kind of the medium term a part of the yield curve. But the issue is a lot of them are done, at least in longer term portfolios. A lot of them is done in TLT, which now you could use the other one, but the options aren't as good. But anyway, I feel like now I'm kind of locked in. I'm just gonna have to wait for ZB to catch up. But but I think you made the right call here. So you give yourself some credit too, Chris.
Not yet.
Let's look at the Japanese yen, shall we? No, I'm just kidding.
Oh yeah, that's the let's give me credit portion of the show, talking about the yen right now. Gold here, ever inching higher within its range, 24.28, a little bit off the highs, but continuing to hug that 1 week moving average, 60.4 IVR. It's a nice little rebound back in a positive territory here. Silver struggling on the other hand, $30.93.5, and it looks like we may get a close below that 1 week moving average. Nonetheless, vol IVR almost basically right at an even 50. Anton, we know how I feel about these metals, and maybe this is a prolonged consolidation that's playing out here, where we actually directionally long term is bullish the right path, perhaps still, but the sideways nature of this market really hasn't changed. And if that's going to be the case, we think about how these precious metals are unfolding, then these rallies towards the midpoints of these ranges really shouldn't be looked at as anything other than, we can have a piece on that's longer term bullish, but shorter term, we could probably still operate on a range basis. It may be uncomfortable because it's a little directional, but the fact that gold is up here and silver is falling over tells me that there's not a uniform agreement about where the capital should be flowing. Feels like we're kind of just pushing some pieces around on the chessboard. 50 IVR in silver. Obviously, SI is not the most liquid, most friendly contract for retail. Only 54.3 thousand contracts traded today. When in comparison, you think about something like ES, which is highly liquid, has north of 1.14 million contracts traded today so far. Maybe it's through SLV. But with both gold and silver, I like that bracketed perspective. If you want to be agnostic, stick to it short term, because we know we're going to be wrong probably pretty soon if we're wrong. Right, silver's going to break down, gold might break out, but the ranges, the directional stuff, the technical still look fantastic. This looks like an amazing bull flag that's been carved out over the last 3 months in the context of a bull flag that just broke out that was carved out over the last 4 or 5 years. We can see the same thing about silver. So I still see 43 as my goal in silver. I'm not giving that up just yet, but I'm stubborn, right? So what do I know?
Yeah, you're more of the metals guy than me. It's funny. I visited. I don't know if you've ever, when the last time you visited like a coin shop or like a shop that sells metals, gold, silver, all that stuff. But everybody there is like a fanatic, right? I'm like, I told them, it was in Key West, right? And I'm like, oh, my friend, he's long a bunch of silver futures, and he's like, it's gonna go through the moon, and I'm like, okay, there, right?
They know.
So I'm like, I remembered it because as you were talking about it, I was like, yeah, that's funny, because there's a lot of bullish sentiment around precious metals, even outside of the financial space. It's just, I don't know if it matters, but it's just something to point out.
When I tell people that I trade currency, the odd person asks me if what do you think is going to happen to the Iraqi dinar? It's like, I'm really bullish on it. It's like,
oh my gosh. No.
What website you been reading?
You don't, no. It's a very, for some reason, I have a lot of friends, same exact thing. And I was like, why? There are reasons, and this is the conversation off the show, but the Iraqi dinar, for some reason, has been the talking circle of a lot of religious groups.
What?
Yeah. I have no idea why.
We're going off the rails here. We're going right back into oil.
I mean, but seriously, you think about the things people convince themselves of. Anyway, keep going.
That's not the context in which I was talking about it. But we have.
Oh, seriously? No, there's a huge following. There's a huge. Anyway. Huge.
Let's look.
Chris.
Anton, back at the end of March, April into May, we had this nice little head and shoulders pattern came together that I famously mismanaged, turned a beautiful winner into a horrible loser. Maybe a second bite of the apple is going to come my way here because it looks like we're getting another one of those starting to percolate on our chart, Mr. Kulikov. I'm already short MCL. I like being short MCL because I think that it looks like it's breaking down. And this little bounce that we had coming off of our 1 month moving average, while it's held somewhat, I'm not exactly convinced just yet that being short isn't the proper thing to do. Vol is starting to creep up a little bit, which doesn't say much because the IVRs were 1 and 2. So at 7.3, it's not substantial yet either. But I could begin to make the case that if we see a little bit more deceleration here, if we start to crack 80, we have a pretty compelling technical setup for another short, which having a measured move here, we think about 83.60. We talk about a neckline closer to perhaps to 80. It gives us a clean $3.60. We can take that down to 76, 40 or so. And then that's where I would absolutely get out, because I'm not going to misplay this one again. But it looks like some sort of topping pattern maybe coming together. Of course, until the neckline breaks, head and shoulders patterns might just be triangles or nothing. That's why you don't trade them in advance of the neckline breaking. So keep an eye on 80. Another 80 cents or so, this market starts to look a little bit different. And then we've established a new swing low for the month of July, suggesting a new series of lower highs and lower lows is in place.
Yeah. I was looking at crude oil this morning to see if I could do some, beginning of week market analysis on it for Tom and Tony. I skipped over. I gave it a good 13 seconds. I couldn't find anything. Again, it seems very much like a coin flip when it comes to picking a direction, and then there's no volatility in here either. So I don't know. I've been out of crude oil for quite a while, so I don't really see a reason or conviction I have one way or the other.
Maybe it's topping, maybe not. We did break the uptrend from the June lows. When we did swing higher, we failed to set a new higher high, right? And so clearing out the low that we had just from July 9th, I think that would be a very good sign for directional traders that we are starting to chew through support, an important swing level historically. And then 76, again, $3.60 away from the next line, so 76.40 becomes an intermediary target to the downside. Anton, you seem to want to talk about the Iraqi dinar. Let's talk about currency broadly speaking first. Be honest. Had me in the first half, no idea that we had DXY here on the platform. Why on earth am I looking at UUP? This isn't tradable for what it's worth, but you can pull up the dollar index at any point in time.
I just think we had DXY. That's news to me. I looked it up in the past.
So have I, but I heard Batista talking about it today on the show with Mike and Ryan Grace. And I said, what? Okay, well, now we're here. So let's go. Dollar index, for those that don't know much about this, the euro is the largest component, 57.6%. You're going to have the Japanese yen, 13.1%, British pound, 11.9%, a smattering of the Canadian dollar, Swedish krona, and Swiss franc to make up the rest of the currencies in the basket. So while this is a good gauge for the broader dollar index, in terms of tradable products on the platform, we're not talking about futures, and the Australian dollar is not part of it. The Mexican peso is not part of it. There's a little bit of reading in between the lines. It's more geared towards the Western world, as it were. Nevertheless, we can see here how the dollar has been trading just above a pretty significant swing area that we carved out at the beginning of June. Broader dollar weakness may be setting in, and that's good news for those of us that were looking to sell fear in front of those French elections with the short put spreads. Euro still with a 90.8 IVR, which I find to be absolutely fascinating, quite frankly. Totally bucking expectations of what I thought would play out here in the wake of the French and UK elections. Nevertheless, it works. There are now 25 days to expiry for this on me. We are so far removed, however, from multi-month swing lows, where we see we had lows in October, them in April, here in June. Doing a short put spread near that 106.5, 107 area doesn't make a lot of sense. The juice really isn't worth the squeeze. Instead, thinking about how we are pretty close to the midpoint, 300 pips or so from 6-month highs or lows with a 90.8 IVR, an iron condor actually could be compelling. Currency tends to just chop around. And so when you get a lot of volatility in the space, betting that you're going to see the volatility disappear and return to the chop is usually a good bet. Trends only play out if there's something new, substantial, and groundbreaking in play, like a BOJ that refuses to address the failures of its policies and let the market push it around. Well, yeah, you can interfere with us, but we're just going to beat you back up, so it doesn't really matter. As I've learned the expensive lesson this year. Anton, I think that a 90.8 IVR in 6E, or even in something like 6B, which continues to rally 28.1, I mean, there's some options here across the spectrum. Pound volatility, by the way, has really collapsed. Last week it was climbing again. It was in the 60s. Here we are back at 28.1. So if you were short put spreads around the UK elections, it's all working out right now. So these are very much don't fix what's not broken. I would only abandon my position earlier than 21 DTE if I saw the euro get below its 1 week moving average. And then I'd probably flip back out into the condor, seeing where we are over the next few days.
Yeah, makes sense. Yeah, currency volatility ranks are actually all pretty high across the board. But personally, I don't think there are many worth trading except for the euro, because its IV rank is in the 90s, and the Japanese yen, because its actual raw IV is close to 10, which sounds low for other stuff, but for currencies, 10 is actually pretty high. You see the euro sitting at about 5.6 to 6.1, but its IV rank is like 91. So this could go even lower. But when it comes to raw IV, I mean, you look at 6B. Personally, 6B isn't super attractive to me unless you're going directionally. 6C has a rank of 56, but its raw IVs are like 5. So it's kind of like the euro, but worse IV rank. And Aussie dollar sitting at an IV of 8. But I mean, all of them are pretty tradable. I think the euro is the most liquid, though, and has the highest IV rank. So I think for most people getting started, I think the euro is the place to go if you're going to be trading currencies. I don't know. I still haven't pulled the trigger, Chris. There's something stopping me, and I don't know what it is.
Learn to stop worrying and love the bomb. You're able to do it with being a bull. You can do it with trading currencies. What's next on the calendar, Anton? It's a good question because tomorrow is busy. We do see data from all around the world. Perhaps the most interesting thing that we could keep an eye on here in the United States, the retail sales report. 8:30 a.m. Eastern, 7:30 a.m. Central Time. The U.S. economy is built on consumption. Basically, 70% of GDP comes from consumption. And so this is a report that we look to, particularly for bond markets, the long end of the curve, to reprice growth expectations. As it were, tomorrow is July 16th, which means after that retail sales report, we're going to get an update to the Atlanta Fed GDP Now growth tracker for the second quarter. Again, why do we care about that? Because we are less than 2 weeks away from that release. This is when we really, truly do care about those estimates. It's sitting at a nice, even round 2%. If we can get a GDP reading for the second quarter that's like that, coupled with inflation coming in and the labor market that's still strong enough, Anton, I think that's a market that's consistent with what we've seen. It's good enough. Why would we be mad that the Fed can't cut yet? So perhaps the movement we're seeing here today with Powell putting some cold water, not cutting for the right reason, that's not a problem. We can work with that. Let's keep this moving forward, though, as we wind down the end of the show. We're doing a brief bit of education here, as we do, as always, on Futures Power. Head over to tastylive.com, top banner, learn beginner futures, where you can find this great course put together by the fine folks on the Tasty Live research team. Today, we're talking about futures liquidity and volume. Through simple checks of volume, open interest, and the bid-ask spread, traders can assess and ensure the positions that they have are, can be entered in and out, exited, tying my tongue here, can be entered and exited with ease, right? It's great if you can buy something, but if you can't sell it, that's a problem. We talk about this all the time in silver. Why don't we like the SI contracts for executing some of these trades? Because when you look at the open interest or the volume there, it's only a few hundred people that may be actually operating in and out of this space. And you go over to SLV in the equivalent strikes, you're going to find thousands, tens of thousands of contracts there. So as a trader, you want the confidence to know that you can go in and out. Check the bid-ask spread, check the open interest, check your various metrics for liquidity, and learn what they are. Go to tastylive.com, top banner, learn beginner futures, or click the link at the bottom of the screen, as we always do, Anton, and then we can make way. We're out early here today, I guess, in this relatively calm day after a wild weekend of news. there's not much more to discuss because it's not time to change the playbook just yet. If it's been working, suppose it continues to work, Mr. Kulikov.
I agree. Yeah, I don't have much to say either. I feel like I didn't talk as much this time, but sometimes that's okay. I think a lot of people would be actually grateful for that. People are like,
not me.
Oh,
I will see you
gosh.
on Wednesday, my friend. For Anton Kulikov, I've been Chris Vecchio. This has been Futures Power Hour. After a brief break, Tasty Live's right back at you with a little bit more Dr. Jim Schultzen from Theory to Practice.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
He squirreled it all away. Now his financial life is dead.
Don't die like squirrel.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
We built the Tasty Trade app for today's traders. See it, tap it, trade it. Deposit and withdraw money right in the app. View company financials, forecasts, news, and more. Set custom alerts to stay up to date. See things bigger in landscape mode. Get the customizable trading experience you want. The tools, the data, the knowledge. See it, tap it, trade it. Join the club, genius. Tasty Trade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do, man. Thank you guys for being a part of what it is that we are trying to do. Hopefully we figure it out today, but my hopes are not super high on our being able to do that. So thank you guys so much for being a part of what it is that we do. If you're watching over on the Tasty Live Network, I would actually bounce over to YouTube, because if you watch on YouTube, you can join in the live chat. You can communicate with our brethren that are also watching the show. It is a good time had by most. But let's pop in here. Man, this market is crazy today. Crazy today. Obviously, historic weekend, crazy weekend with all the events on Saturday with former President Trump and assassinations and just some crazy stuff. And so the market last night opening up was pretty mixed. It really wasn't going anywhere. It really didn't do very much at all last night. But then today, man, it was super strong this morning. And, is that because the odds are greater that Trump will be reelected? Is that because of some other things? I mean, who really knows? I mean, that seems to be the most logical story that's floating around the internet as to why that's happening. But, man, now all of a sudden you got Uncle Jay spoke earlier. You got, the Canadian durable goods print just came out at 2 o'clock there. And so now the market rally is fading indeed. Got E-mini S&P is only up 14. Let me grab, hold on a second. Let's look at ES here really quick. So if we look at, let's look at like man, I don't even know. Let's do like a 30-minute chart. So if we do a 30-minute chart, just a couple of days here, you're going to see all the strength in the market right there. So boom, you can see all the market strength, right here, essentially. This would be, the early morning pre-market, and then of course the market open, and then tons of strength going up to 57.20. I think we made a new high in ES, and the man just sold off really quickly, really fast there, and so pretty remarkable turnaround in the overall market. When you've got ES now only up 16, you've got the Nasdaq now only up 50, and the Nasdaq I think was up a couple hundred at one point. You've got the Russell 2000 Futures Index up 40. I think they were up maybe 50 at one point. And then the Boomer is leading the pack in an absolute value sense, up 170 on the day. Looking pretty strong. Got bonds down a little bit. You got gold. Gold's been kind of mixed as well. And so obviously, always difficult. Not that it's ever not difficult, but with a historic weekend like the one that we just had, it's like, man, how is the market going to react to this? How is the market going to digest this? And again, the market was kind of finding its way last night. Not a ton of volatility on the open last night with the futures. I mean, they basically moved just a little bit in either direction. But then this morning, it just took off, and now all of a sudden it is fading fast. And so there's your market commentary. It's not going to do a ton for you. It might do a little bit for you though. Might actually move the needle just a wee little bit there, trying to help you achieve your financial goals just a little bit sooner than you might have done otherwise. All right, so if we look at the things I have going on in the portfolio, and of course, if you have a question for me, drop it in the chat box. The earlier that you get it in, the higher the likelihood that I would get to said question. So I would get them in as quickly as you possibly can. But if we take a look at the overall portfolio, there's not too much going on. We've only got 6 positions in the portfolio. And obviously we have our MNQ short call, which we continue to just zig and zag between raindrops here. You've got the index up to 20,570 and the strike is 20,800. And so we're obviously down on the position. So that's pretty par for the course for the From Theory to Practice trading abilities. But this guy, I don't think it's ever been tested. Like, I think we've been close a couple of times. I think we were actually close again this morning, but we have not hit that 20,800 marker, if I'm not mistaken. If I go to the chart here, you can see, look at that. And look at that candle. And look at that, guys. These big round numbers, they came to the rescue again. The high this morning, 20,796. Now, obviously, we were tested the other day when it went through 21,000 and all those kinds of things, but I'm talking about right now. I'm talking about the here and now. Let's forget about that. It's water under the bridge. It's over, and it's not important anymore. But if we look at this morning, 20,796. We didn't quite get tested on that. We got really close to being tested on that, but we weren't quite there yet, and then the market just sold off. And so now we are almost unchanged on the day for ES and NQ. Russell remaining incredibly strong. Boomers relatively strong, especially for a Monday. With the creaky knees and the the janky elbows, they're really starting kind of strong here to start this week. So all right, so MNQ, we're going to sit tight. We're going to do nothing, but I just want to point out that we were almost tested, very very close to being tested there this morning, but it did not happen. So now we can comfortably do nothing and feel relatively good about it. So if we look at the rest of the positions, though, they're all defined risk. If I open them all up, you're going to see for yourself. They're all kind of set it and forget it type of situations, where we don't really have to do too much to these because you've got vertical spreads. I think it's vertical spreads across the board. And has this become from theory to vertical spreads? I think it is. From theory to vertical spreads and short calls in the index. I think that's kind of where we're headed now. So DIA, we've got a short call spread on. You can see that our strikes are 394 and 399. We only have 4 days to go in this strategy, and it's not looking great. It's just not looking super amazing. You've got the index up at 401. And so it looks like this guy's going to expire fully in the money on Friday. And so this mark price will be expanding to $5 if nothing changes. If the index doesn't drop below 399. If it does, that would be great. That would really help us out quite a bit. But if it doesn't, then this guy's going to blow up to blow up another 75 cents to $5. And so we're not going to do anything. There's not a ton to do. I could try to roll it out, but it wouldn't be a credit. I can show you guys that really quick here. If I highlight both of these guys to do. If I go to roll, you can see, it's a 70-cent debit to roll that thing to August. And so I'm not interested in adding risk to this trade and doing that. So I'm going to sit tight on the diamonds and do nothing. GLD, this was our short call spread, also a short call spread that has been equally as ineffective as the diamonds short call spread. You got the stock at 224. We are 219, 224 on the strikes. And so we do have a lot more time, though. There's still 32 days to go in this strategy, so there's no reason to do anything just yet. We sit tight and we just kind of let this guy cook just a wee little bit. And lots of time left. I mean, it's not even fully in the money. I mean, it's about to be basically any minute now. But as of right now, this is very much a, sit tight, stew in the filth, just get comfy, cozy, and just see if this guy comes back. So that's GLD. And then if we're just moving on right down the list, man, we are just moving through this thing efficiently. Microsoft, 4 days to go. Microsoft has earnings coming up, I think, in just a couple of weeks, if I'm not mistaken. You've got the stock at 451, so now it's down on the day. It was up earlier. I'm almost positive it was up earlier because most of the NASDAQ was up earlier. Hold on a second. Let's go to Microsoft. You look at my 30-minute chart. Yeah, look at this thing. Wow, that's crazy. Yeah, this thing was up to 457 earlier, so it was up a few bucks on the day. Now we're down almost a couple dollars, down to 451 and some change. And so quite a turnaround there in the some of the high-flying tech names. You got Microsoft is down on the day. You've got, let's see, who else do we got? We've got Amazon. Amazon is down on the day, so you got that guy right there. Amazon down on the day. And if we delete that, if we go to, let's see here, Google up a little bit on the day. Got Meta down on the day. Zuck's too busy out catching some waves. Meta down $2. Got Microsoft down, as we just talked about. Got Netflix up a little bit. Netflix has earnings this week. Guys, it has begun. Big tech earnings season has arrived. It is this week. Coming on down the chutes on Thursday, if I'm not mistaken. Netflix coming up $7 on the day. And then that's pretty much it for the big high-flying tech names. The Mag 7. Well, I like to call it the Mag 8. It's the Mag 7 plus Snapchat. Snapchat down 10 cents. And so that's obviously going to weigh on the market heavily. But yeah, Tesla up $11, of course. Why wouldn't Tesla be up another $11? And so pretty crazy stuff, though. Microsoft was up, and now it's down. And, man, it's almost like these things move around. It's almost like markets move and things change. That's crazy. It's crazy stuff. So Microsoft down a little bit. Got SPY. this is our long put spread. Thankfully, we still have a lot of time left on this one. I think we're going to need all of it, and it's probably still not going to work. But yeah, 551, 544 on the long put spread when we put this trade on. I think that, wow, that's nuts. So the market has been so strong the last couple of weeks. I mean, I think it's up like 3% the last couple of weeks. That's an incredibly strong 2-week stretch, right? And so I think when we put this trade on, the SPY index was probably between the two strikes. It was probably somewhere around 547, 548. And so let me see here though. Let's use sometimes we forget that we have these unbelievable features available to us. If I go to the Allison chains, I click on that. And then if I'm not mistaken, if I just right click anywhere in here, I can just go to view market state snapshots. And then it'll tell me that this was opened at 7:02 at 2:17. And when I opened it, look at that little yellow dot. The price was 547, right? Exactly as we predicted. And so that was what, 2 weeks? That was almost 2 weeks ago. Yeah, so here you go. I mean, this is it. We can just look at this right here. This was almost 2 weeks ago. It's 13 days ago. This was put on. The stock price was 547. It is currently 561. That's a 14-point rally on a $540 index. That's almost 3%. It's not quite 3%. And so that's a very, very, very strong move in just a couple of weeks. And so it's a little crazy to think, man, this thing is like really far out of the money. Thankfully, again, we still have a lot of time left. But man, this is some wild, wild stuff. So SPY, not looking great, I would say, to put it mildly. And then TGT, we've got Target, the Dow components, of course. Target, we've learned that the Dow is in Target, or even the Target is in the Dow, maybe, or even Target is in the Dow. Let's just go with that and just drop the preposition there. And so, yeah, target, we have a 150, 155 call spread. Got the stack at 152. It's not looking great, but we're going to sit tight. We're going to stew. We're going to do what we do best for Beth, which is doing absolutely nothing, man. This is not a good start to the week. A little rusty here to get things going, but nevertheless, we press on. So, all right, so not a ton to do right there. But if we look on down the chutes here, and then I do have one strategy I want to put on in the indexes, actually. But I just wanted to say this is the big tech earnings week. I mean, we mentioned, or the big tech earnings start to the season, I guess you could say. We've got Goldman Sachs was today, of course, but I mean, nobody cares about Goldman Sachs. Netflix, 7/18, that's coming up on Thursday. So that guy's, coming right down the chutes. And then the following week, you've got, this is when your heavy hitters come out. You've got, Google, Tesla, Microsoft, boom, 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 all on 7/23. That's a little crazy. And then the following day, you got your Chipotle, IBM, very natural pairing, very tuna fish and applesauce-like pairing, 7/24. And then the next week, that's when you've got your Metas, your Apples, your Snapchats, your Amazons, your Starbuckses. But those guys are all the next week. So you got, boom, 7/31 to 8/1. So, yeah, it's going to be crazy. I mean, it's always crazy, but it's going to be, big tech earnings. I mean, it's there's a lot of whipping around. There's a lot of movement in the marketplace. And so depending on what type of trader you are, that can really fit your style, or maybe it doesn't fit your style. If you happen to be more of kind of a laissez-faire type of trader, then this might be a good time to take a couple weeks off. Just kind of head on up to, your local water park down here in, the sunny state of Florida. There are plenty around. And just hop on the slides for a couple of weeks, man. Just call it a day. Get yourself a couple banana daiquiris and just don't even worry about it. And then just come back, August 2nd, August 3rd, and then you'll be fine. But these guys are coming on down the chutes in the next couple of weeks. So obviously we'll be trading those and trying not to light too many stacks of cash on fire. But there's going to be a couple. I mean, let's be honest. And so, all right, so that is what is coming on down the chutes. The one trade that I wanted to do today, though. So if we look at MES, right? So MES, I mean, you've got the market was a lot stronger earlier, but still green on the day. But guys, look at volatility. You've got volatility futures up 28 cents. And then you've got the VIX itself up 75 cents. So that's really interesting. Now, it makes sense given the weekend's events, but still, market price and market volatility are very, very reliably inverse of one another. So given them, even when the market was super strong this morning, ES up 40, ES up 50, whatever it was, the VIX has been green all day. The VIX has been positive all day, and I think at like its minimum, it was still up 20, 25, 30 cents. That's a decent volatility move for the VIX on a $13, $12.50 index. And so now you've got the VIX up 75 cents. It's like, man, some things are going to be moving around a little bit. And we'll just have to kind of wait and see what happens. I don't know that there's a tell there. I don't personally believe that there is, but yeah, you'll have to decide that for yourself. It's interesting though. It's interesting simply because it doesn't happen that often. And so because of that, though, whether you feel like there's a tell there or there's not a tell there, it doesn't matter. We now have a slightly elevated, ever so slightly elevated IV rank in one of the major indexes. And I don't have a position on in the S&P 500 right now. Well, I have this SPY put spread, so I guess I do have a position on. But let's pretend like that's not there. If I wanted to do a little something and avoid earnings coming up in the next couple of weeks, it's like, man, there's not a ton that I can do in the individual stocks. Right, because most of them have earnings, 7 days out, 14 days out, whatever it might be. And so it's like, all right, if I want to get a little short premium working in the portfolio, which we desperately need, if you just look at, let's grab our diet strawberry here. If you just look at the theta in the portfolio, that's not a super positive theta. In fact, I'm no math genius. That doesn't even look like it's net positive. Now, I have a clause in my Tasty contract that I can only carry negative theta for so many minutes out of the month. So I need to remedy this situation very, very quickly, or I think that means Tom stays in the guest room for 2 nights. And that's not necessarily something that I think I would enjoy. And so let's go ahead, and although I think Amelia might enjoy that, somebody new that she can take advantage of, I think she would actually enjoy that very much. But anyway, let's go ahead and let's close out, or let's delete those scribblings. Let's go into MES. And guys, we're just going to go futures options. We're going to go 46 days out. We got the August 30th cycle. And I'm just thinking, man, let's keep it really, really simple. The buying power on these guys are very, very, very modest. It's quite low, actually, when you compare it to what you could do in SPY or whatever. So if you have a medium-sized account, modest account, I mean, doing something in the futures options like MES and MNQ can be a great option for you. This can be a really, really good option for you. Let me look at MNQ really quick, though. I already have a position in MNQ, so I'm not going to do another one. But yeah, so I was curious if that was the case. So the IV rank for MNQ is 32 right now. So I would actually, if I didn't have an MNQ position on, I would do something in MNQ as opposed to MES in terms of taking advantage of this volatility uptick. I mean, MNQ is obviously a much more favorable product or underlying to trade when it comes to IV rank than MES. But I already have one position on an MNQ, so I don't really want to do another one. I'd rather kind of spread this out a little bit. So let's go into MES. Let's go back into August 30th with 46 days to go. And I'm thinking, man, what if we sell a 20 Delta Strangle? Keep it real simple. Let's just see what a 20 Delta Strangle brings us. So 54.60 on my put side. And then I'm going to find my 20 Delta on the call side for my audio only listeners. That's going to be a 58.60. That's where this position begins. So you've got the index at 56.78, let's say. And my strikes on this strangle, 20 Delta on both sides, exactly 20 Delta on both sides. 54.60 on the put strike, 58.60 on the call strike. And so that's a pretty wide strangle. The credit collected is only 53.75, and that's the credits that you collect in terms of the points that you're picking up. You multiply that by 5, and that gets you to the actual dollar amount of that credit collected. That, of course, is going to be your maximum profit. Okay, so now what am I going to do? Well, I don't want to leave it right here because I would like to collect a little bit more for this undefined risk position. And you can see the buying power right here is quite manageable. It's only $900, and so that's actually extremely manageable. And so I'm kind of thinking, I mean, guys, when you just think about the market, when you just think about where we've been, think about where we're headed, think about what's going on, I don't know, man. I don't know how you can look at this and still play this thing to the upside. I don't know how you can look at this thing and think, man, the bull case is looking pretty strong. I mean, I'm about 47% sure that if we skew this thing just a titch to the downside, that may help us just a wee little bit. So I'm thinking to pick up a little bit more credit, let's go from 58.60 to 58.30. Boom, there you go. Look at that. So now, and look at the delta. It didn't even change. That's nuts. The delta's still pretty neutral, slightly negative now, barely negative. But now we're able to collect $60.50. So again, from my audio only crew out there, appreciate you guys so much. 54.60 put, 58.30 call is our strangle in MES. And the credit collector right now is $60.50. Well, I don't want to say 50 cents because it's points. 60.5 points, let's say, for a max profit of 302.50, and the buying power is still under $1,000. So I like this trade a lot. Again, I mean, you can see the IV rank is actually it's increasing as we speak, and the index is not necessarily falling. So that's really, really interesting. Let me go. Hold on a second. Let me grab. Let's erase that. Is the VIX going up even more as we? No, the VIX is hanging tight. Okay, still at about 73, 74 cents. All right, so this is the trade I'm going to do. Again, individual stocks is a little bit dicey right now because of earnings season. We'll have plenty to do when the actual earnings announcements come. But I'm going to pass on a lot of individual stocks for a while. But let's get this MES strangle on just to boost our theta just a wee little bit. I still think I'm net negative. So I'm going to have to make room for Tom, I think. Which, as long as I have a lot of bagels and locks, I think I'm good. Let's go ahead and gotta figure out what a lock is, though. Let's try 60. We didn't get filled on that first one. Let's try 60. All right, boom, filled for 60 on the nose. There you go. Man, good stuff. All right, so we are in, and we're almost at the halfway mark of the show. We're actually a little early on getting to the Q&A. And which is good because normally I'm a little bit late. So let's go ahead and try to, normalize that just a wee little bit. And let's see where you guys are at. If you have a question for me, I would drop it in the chat box as quickly as you can. DeBoomer is in the house. What's going on there, DeBoomer? DeBoomer says, I'm glad to see you again, man. I'm glad to see you again, my friend. How can the modern day tulip mania possibly take you down, man? I agree. I absolutely agree. I mean, there's got to be another 200 or 300 or 400 to 6 points left on the upside. It's pretty crazy. So DeBoomer says Amara, call Zebra. More duration is better. Maybe wait for a minor pullback. My first target is 31.75. Mara, isn't Mara? Yeah, Mara is one of the crypto stocks, and so maybe wait for a minor pullback. Yeah, okay, up $4. Yeah, I don't mess with crypto stuff, man. And maybe it's just the boomer in me coming out, which I'm clearly not a boomer. It's just as evidenced by looking at me. I don't typically mess with your Maras. I don't typically mess with your Coinbases. I don't typically mess with, your Bitcoins. I kind of leave that for, the serious traders that are out there. And so I may, DeBoomer, it's like clockwork, man. Like you bring me all these trades, some of which are good, some of which are not your best. But I usually don't take any of them. I usually just pass on any. And I think I have good reasons for why I choose to pass. But I'm going to pass on this one. On Mara, just because I don't trade a lot of crypto, and maybe I'm going to become obsolete because of that. But I still think we got a little bit of time, and so. But I appreciate you there, DeBoomer. Randy Gunn in the house. What's going on there, Randy Gunn? Randy Gunn says long time viewer, first time chatter. I'm guessing, Dr. Jim. When the market did you wrong on Friday, but when you are rocking the tank top this summer, let's go. Only on shoulder day though. You'll feel good about that chest and tri pump session. That's right, I will. But tank day is shoulder day. Tank day is not really chest day. Chest day is super small shirt day. Tank day is shoulder day. And then super small shirt day is chest day. Right? That's just these are not my rules. I didn't make this up. This is very basic bro science. Right? Super tight shirt day, super small shirt day, that's chest day. And then tank day is going to be your delt day. And so let me think, what am I doing? I did legs today. I have chest and arms tomorrow. So I'll just grab one of Autumn shirts and rock that guy for the session in the morning. So RC says, happy Monday. I only wish that was a joke. Happy Monday, Dr. Jim. Happy Monday to you too, my friend. I appreciate you for being here. And then let's see. RC says, wow, that was a massive Canadian durable goods print. I know, man. I'm telling you, it moves the market every time. Every single time. And then the market just moved again, I guess. Now you got the NASDAQ up 65. You got the Russell now up 1 million. So, man, this thing is really, really moving around quite a bit. And so, wow, pretty crazy stuff. Then Nick B's in the house. What's going on there, Nick B? Nick B, of course, is Nick Batista, does a ton of work for the Tasty Network and still finds the time to watch this show almost every single day, if not every single day. So I appreciate you, Nick B, for all the work you do for the network and the fact that you're supporting my show on a regular basis. So thank you very much, my friend. And so Nick B, hey, Dr. J, what's popping? What's going on there, Nick B? I appreciate you for being here. And I appreciate you, my friend. Brian McCroom, Dr. J, what's up? Leg day. Oh, yeah, today was leg day. You know what's weird? So just a quick little tangent that's not going to help anybody with anything, but I'm going to say it anyway because we've already started. So with my new training split, I'm doing something for the first time in my entire career. So normally I would, do like a normal weekly setup, right? Where like Monday was, legs, and Tuesday was like back and delts, and Wednesday was, chest and arm, whatever, right? And it would always be the same. Monday would do that, Tuesday would do that, Wednesday would do that, whatever. But I'm trying something completely new where now I have a cycle where I go through this I go through my number of sessions or whatever, but it actually takes me 8 to 9 days to get through it. So like leg day might be Monday one week, but then it's Tuesday the next week, and then it's like Thursday the week after that, and I hit like other things in between and like legs at a different time and all that kind of stuff. But anyway, it's crazy. It's absolutely, I don't know if I like it because it does not feel feng shui. It feels like the earth is reversing the spin on its axis when I do this, but I will report more on this later on. But nevertheless, here we are. Brian McCroom says, Dr. J, what's up? Leg day. What about a strangle in MCL? I was looking at that. So if we look at MCL really quick, it, the IV rank is just not there. I mean, you've got an IV rank of, let's grab a little lime green action. Yeah, we can do it. IV rank 6.6. It's like, I mean, I'll sell me some low IV ranks, but man, that's pretty low. Now I do need the theta. So I don't know, man. What are you saying, Brian? Strangle? Yeah, I mean, I like your thoughts there. I got to go 31 or 64 days. I don't love that either. Yeah, it's too many strikes. The strikes are adding up on this. If I could get an entry around 45, I might go ahead and do it. But I'm going to wait. I'm going to wait because I have a feeling I'm going to have a better volatility environment to go ahead and sell some premium. from an Ivy rank standpoint. And, I don't really want to do a September strangle in MCL with 64 days to go. Not that there's anything wrong with it per se, but it's a little long in the tooth in terms of duration. And so I'm going to go ahead and pass. And I also don't really want to do one that's a shorter term at 31 days to go. Does that make it a little slippery? Trading the old CL there, pun intended. So I'm going to pass on that. But let's see. Brian says, or RC says, game changer on the durable goods burn. Of course, it always is. Brian McCroom, Boomers Index is killing it. Man, look at the Boomers, up 200 now. It's unbelievable. Look at these guys. Look at these guys. Because they're all working from home today. You saw it happen this morning. You saw Tom, right? Hitting up the Zoom, hitting up the Teams video style for the show. I mean, that's it, man. I mean, he's starting to crack. Like, we found some chinks in the armor. I start mixing in, like, I'm 1 day here, 2 days there. I got an AC guy. I got the mosquito guy. I got the whatever else guy. It's like, yeah, man, we've heard all the excuses because we're making them all ourselves. And so, yeah. Grumpy Mike, let's see. Historic weekend it was. Omid A, hey, Dr. Jim. I noticed that you don't like placing your trades when near earnings. What is your rule of thumb? Yes, I don't really have a rule of thumb per se. Other than the fact that, let's see here, for earnings, so like Netflix is a great example. This is a perfect example. So Netflix is coming up on 7/18. So on 7/18, Netflix is coming up, and I'm going to wait until Thursday to make that trade. So if I'm going to trade Netflix earnings, which I almost certainly am going to trade Netflix earnings, I am not going to do that today. I am not going to do that right now because I feel like, that's just not a good time to do it because there's going to be a ton of implied volatility expansion heading into the number. I've talked about this just recently on the show, so I'm not going to belabor the point too much. I will belabor it a wee little bit. But yeah, normally try to stay away from putting trades on with, earnings coming up in 2, 3, 4 weeks because I feel like you're making it really hard on yourself. Now, you've got earnings 5, 6, 7 weeks out. Maybe you can kind of work around that and choose the cycle before earnings, and it might be okay. But my rule of thumb is generally once I get inside of 4 weeks, I really don't like doing it, but sometimes I might. 3 weeks, it's pretty much, off the board for me. And 2 weeks, it's absolutely not a consideration. I'm going to wait until the day or maybe the day before. Like, obviously we have today's assignment on Wednesdays, no from theory to practice. So if there's like a Wednesday earnings, I'll do trades on Tuesday just so that we kind of can keep it in the portfolio and we can talk about it on the show and things like that. But yeah, I'm not going to do Netflix until Thursday because obviously we have the show on Thursday. And so I'll go ahead and do that. So that's my rule of thumb there, Omid. Hopefully that helps. Nick B, Coinbase 500 a share by election time. Qs at all-time highs. I mean, the Qs are at all-time highs right now, basically. So that wouldn't be anything different. But where is Coinbase right now? 241 on the day. So, wow. Coinbase. Let's see here. Let's go back a few years. Okay, so Coinbase had hit a high in March of 24. It was up to around 280, it looks like. And now it's at 241, so kind of making it, and a huge gap up. So kind of making its run back to those highs. And yeah, that's pretty interesting. 500, man, just a crisp double by the election. I don't know, man. That's crazy. I mean, I think Trump is all in on Bitcoin, though, right? Hasn't Trump come out and said, like, he's all in on Bitcoin? So, I mean, the reaction today could, again, just be a response to the odds increasing so much last night. I think they jumped up to 70% or something like that he would be reelected. And so it's like, well, I mean, if he is all in on Bitcoin, and he does exactly what he said he's going to do, and when has a politician ever not done what they said they were going to do? So if all those things happen, then yeah, this could be good for your Coinbases and your Maras and your Bitcoins. And so, yeah, I don't know, 500 by the election, that might be a little bit grandiose in terms of the target, but who knows, man? Who absolutely knows? But the Qs, I mean, they're going to be all-time. They're already at all-time highs, but they're going to be all-time highs plus, probably by the end of the day. And so Pips Hunter, there we go, is Tasty Trade what was initially IG Trading? I don't think so. I'm not. I think IG Trading and Tasty are separate. If I'm not mistaken, because IG is doing, I mean, they're doing some British things over there in the UK, which I'm clearly not familiar with, as evidenced by my, ignorant statement there. And so, yeah, so IG Trading and Tasty are different entities. From a trading platform standpoint, they're obviously, the same entity. So we are definitely inside the matrix now, inside this show. And so Brian McCroom says earnings season is when I enter the bathtub of filth. We all do, my friend. So that's why you got to have a 2-seater, maybe even a 3-seater when you get your new bathtub of filth. And so Omid, Netflix is a gap stock. You mean they're going to gap up or gap down? Or do you mean they just gap a lot for earnings? Is that what you're referring to? I mean, these must be your earnings right here, right? You've got this guy right here. You've got this guy right here. You've got this guy right here. So let's see if we can sense a pattern here. We've got gap up, gap up, gap down. So then it would be what? Gap up, that gap down? Is that kind of the rhythm here? Up, up, down, up, up, down? Or is it up, up, down, 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 down? I would say both are equally probable. I mean, when you just think about just play it out in your mind. Up, up, down, up, up, down. That makes sense. Up, up, down, 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 down. That makes sense too. Like they both kind of like I have a catchy jingle to them. And so I don't know. You might be right there, Omid. We'll have to wait and see. But let's see. RC says banana daiquiri sounds dangerous. Man, let me tell you all something about banana daiquiri. So my wife and I, so we got married in October of 2009. So it'll be 15 years coming up this October. Again, that assumes that we make it, which it's like a 50 to 60 delta. Let's be real about it. When we were married in 2009, though, when we went on our honeymoon, we went to, pretty sure we went to Jamaica. Don't quote me on that, though. We went to some island somewhere. Several islands, I think. And so, anyway, it was so much fun. Had a great time, even though I can't remember exactly where we were. Maybe it's because I had so many banana daiquiris, like my drink of choice. And I am not ashamed to say it. I'm not embarrassed to put it right out there, man. It is my number one drink of choice when I'm on vacation in some tropical location. Because I'm not gonna sit on the beach drinking, the Beast. I'm not gonna sit on the beach drinking Natty Light Ice. That's what I do at home. That's home stuff. When I'm on the beach, though, man, it's banana daiquiris all the way. Banana daiquiris start to finish, and so I'm a big fan of the banana daiquiri. And so they could be dangerous. It depends on if you treat it with respect or not. So RC, hey, Dr. Jim, why do some folks at Tasty prefer quoting vol in VIX terms, or /VX terms versus VIX terms? Yeah, that's a good question. Some people, kind of like the forward nature, because when you think about implied volatility, right? Think about the name. Implied volatility. That's a forward-looking volatility. So when you think about what we do and kind of how we view volatility, when we think about expected moves and we think about trying to place our strikes, and we think about things strategically, generally speaking, right, it would make more sense to do something that's /VX because that's also going to be forward-looking. But that's also obviously going to be some forecasted volatility, whereas VIX is kind of the spot value of volatility, like right here and right now. I just generally look at the VIX simply because, I was looking at the VIX long before I even joined Tasty. And so it's like, it's just a habit for me. I don't think it's better. I don't think it's worse. It might even be a little bit worse because, again, it doesn't quite line up with implied volatility, expected moves, and looking out into the future quite like /VX does. But again, my strategy is I'm not trying to scalp volatility products. I'm not trying to find discrepancies or mispricings or whatever. I'm really just trying to get some type of baseline understanding of what the market is doing from a volatility standpoint. So I can just have some type of reference point for range expansion versus range contraction. Like our range is expanding or our range is contracting in terms of expected moves. And so that's why whether you look at /VX or VIX, I don't know that's going to matter a ton when it comes to that end objective. Now, again, maybe your system or your philosophy is a lot more kind of, pinned to specific volatility prints and kind of what they're showing you. Well, then you would want to make sure that you're looking at the right volatility gauge, I guess you could say. And so FinWest, good morning, Dr. J. What's going on there, FinWest? I really enjoyed your fireside chat with Dan Sheridan, man. I appreciate you. I had no idea you were there. There was 30 to 40 traders lurking in the background. Dan Sheridan's a great guy. I've just gotten to know Dan really just recently. And so really great guy. Chatted with him several times and really, really enjoyed Dan a lot. Lots of great experience. So you guys can learn a lot. You guys are in good hands over there with Dan. And so I was super humbled to be invited to speak to you all. So I'm really glad that it was valuable for you guys. And that's awesome, man. That's really, really great that you were able to check it out. So RC says vol is sticky. Apparently so. Not unlike that oil strangle that we almost put on. So is the VIX still up there? Yeah, now it's only down. Now it's only up 54 cents, down a little bit from where we were looking at earlier. NASDAQ is rallying. ES is rallying. Russell is out of its mind. Boomer's working on their third honey of the day. So, man, it's just some wild stuff. And so let's see. I will need plenty of pistachios for bomb 2. Does he like pistachios? I guess I should know that about him, but he didn't know I almost went to Israel. And he didn't know that I love to play the don't pass line at the craps table. These are things we've talked about many, many times before in the past. So the fact that I just forgot that he likes pistachios, I'd say, we're still not even yet. And so, let's see. Tasty Live says every Monday is International Chess Day in the gym. That is correct. Other than the fact that it's not correct. You have to you gotta cheat the system a little bit. You got to override kind of the default settings from time to time, and you got to throw a little back in delta on Monday. Rather come into Monday and hit glutes and forearms, right? Just to kind of shake it up a little bit. It's going to feel super weird. And you're like, this is totally wrong. I should be benching. I should be doing dumbbell flies and then doing more bench, obviously. But yeah, we're mixing it up a little bit just to kind of do a little something different. So Chris Boba, thanks for all that. I appreciate you, Chris Boba. And so Jonathan Sims says short shorts leg day. That is correct. Short shorts and high socks. That is 100% correct. The Dukes plus the high socks. That is my leg day attire, generally speaking. If it happens to be Dukes wash day, then it kind of throws a wrench in my own works. But we can work around it. So RC says, LOL, the real Nick B. Which, by the way, that's not the real Nick B. That is a more important Nick B. The Nick B that watches the show. And so the real Nick B is pretty important, but our Nick B, he's a little bit more important. So David C, hey, Dr. J, good day. Currently short the 2 put in NG. That's natural gas, I believe. The Widowmaker, as some might say. And so you've got natural gas. Oh, yeah, that's right. The Henry Hub natural gas. My man's got his own futures product. Henry Hub is incredible. So I did recently learn that's where the natural gas comes from, I believe, mostly. I think it's in Texas. But I'm just going to keep continuing to pretend that it's just one guy named Henry Hub who he's controlling these markets. Like y'all thought the Hunt brothers had the silver market cornered back in the 70s. No. Henry Hub, he's the only guy. It's just one guy. Got all the natural gas futures. But here we go, $2.16. And David C is short some 2 puts. I mean, it's a huge move down today, down 16 cents. Now, again, I mean, it's like, what is that going to do for you? It's I don't trade natural gas really ever. And so I can't really say. I mean, I would just treat this, I don't know when you put the trade on. I don't know what price it was at when you put it on. How much are you carrying water? How much are you underwater? All those kinds of things. But generally speaking, I'll just give you my overall philosophy when it comes to selling out of the money premium, which is what you have here. Until the strike is tested, the strategy is working, regardless of, or even irregardless of, if you want to play it that way. I mean, hey, it's 2024. I mean, all bets are off. If the strike is not tested, the strategy is working. If the strike is not tested, the strategy is working, regardless of your P&L, regardless of what the profit loss on the position might be. Now, you might say, Jim, that's totally crazy. It's all about P&L. I understand that, and I agree. But you have to understand, where is this position headed if nothing else changes? It's always very helpful to apply, the ceteris paribus assumption, even as unrealistic as it is. Apply the ceteris paribus assumption to whatever situation you're in and play that thing out to its natural end. The reality is you're short some 2 puts in natural gas. It's at 216 and some change right now. If it stays here or even goes higher, then that position is going to be a winner. So in my mind, until I'm tested, man, there's no reason to do anything. Now, I may choose to go in and neutralize risk and whatever, and that's fine. I don't typically do that, but some other traders do that. I think that's totally fine. But I would never look to get out of the position. For my money, if you're in a position, if you're selling a put, at $2, right? And natural gas is at, I don't know, $2.30 to start the day. And it drops to $2.15. And because of that drop, you need to get out, you're way too big. You're way too big. There's no other reason why you should have to get out right there. You should be good. You should be comfortable in the position from a sizing standpoint to where you can absorb that. And another 15 cents to go all the way down to the strike before you need to do anything. So those are my thoughts, David C. That kind of apply to any short premium position where you're kind of selling the out of the money premium, but hopefully it can help you here just a little bit. So Alex says, yo, check out a long XOP zebra or diagonal. So let's look at XOP real quick. 44 IV rank. Wow, that's pretty good. August, let's see. Diagonal August. if I go into August, if I do a zebra, yeah, then I'm buying. Let's see, I buy a couple 75s and sell you at the money. Haven't done a zebra in a while. We did a couple earlier in the year, and it was fun. Okay. You've got a the Ivy rank is reasonably high. Normally, I think I would like a zebra when the Ivy rank is lower as kind of a directional shot substitute. Now it's kind of like, let's sell some premium. So I may actually go to your diagonal suggestion there, Alex. From what I can remember, again, I'm no zebra expert, but from what I can remember, the zebra is going to be a little bit better suited when volatility is lower. So let's go into let's try maybe a diagonal. You said upside? Let's see. Alex did not say. Check out long. Oh, okay. Long XOP. So upside. Yeah. Okay. I mean, I got XOP up $3 today. I have no problem with that. I mean, I've been a momentum trader since day one. Y'all can check the tapes. If I go into September, I mean, what if I buy? Yeah, I don't think this is gonna work though. If I buy a 143 call in September and I go to August and I sell, yeah, it's not going to work. I sell a 152 call. It almost works, actually. Yeah, the cost is a little bit high. I guess I'd have to play it on the downside. I may end up passing on this altogether. So the reason why I'm pausing on this, by the way, for those of you that might be brand new or people that maybe haven't traded diagonals before, or you're just curious as to why I'm hesitating. The debit paid is 784. The width of the strikes is 143, 153. Usually we like the debit on the diagonal to be less than 75% of the width. And so right here, I'm over 75%. I'm right around 78%. And, the easiest way to reduce the percentage paid on a diagonal spread is to widen out the strikes. Well, I'm already pretty wide at $10 wide. And if I go wider, I'm probably going to be able to reduce the percentage, but I'm going to end up with more overall risk in the trade by the debit that I'm paying. Now, it is a diagonal, and I have multiple opportunities to reduce basis, all those kinds of things. I got it. But I think I'm going to pass on this one. But I will show you guys. Like, look, if I go from the 153 strike in August to like 155, I mean, you can see right there. Boom, there it is. Now I'm $12 wide, but I'm paying under 9. So I was just able to take the percentage of the width from above 75 to below 75. But again, I've got another $1.50 in total risk, or $1.40. So you would have to decide if that makes sense to you. But this is, generally speaking, one of the easier ways to kind of make the diagonal pricing work for you in terms of overall risk in the trade relative to what you're paying. And relative to the width, which of course is going to help determine your maximum profit on the trade. So I'm going to pass on XOP, not doing the zebra because I think the volatility is too high, and I'm not doing the diagonal simply because the pricing doesn't set up. But let's try to get to maybe one more. Let's see, Moralify, calendar on the call side of Netflix, maybe Thursday. Check back on Thursday. And so Malachi says strawberry dac, something. Nah, man, I'm not talking about strawberry daiquiris. Strawberry daiquiris, that's your pansy play. Now we're going banana daiquiris. That's a whole different ballgame, my friend. And so let's see, Tone Loke. What do you think of a zebra or some kind of call spread in IWM? I can't do it now. Come back this week. Maybe we can do it later in the week. I see Dave S. I see Finn West, and I see Alex. Alex said it rallied at $1.20 by the time you got to my comment. Maybe next time. Oh, that's crazy. Once again, it's almost like markets move and things change. So, man, I appreciate you, though, Alex. I appreciate you very much for being here. But if I didn't get you, so Dave S., Tone Loke, and Finn West, bring those back later this week. I can't analyze them now because I got to get you guys to Jamal. But, guys, we made it. We made it through the show. I can't believe it. We are actually at the end. And so I appreciate you guys so much. Thank you guys so much for being a part of what it is that we are doing. If I can ever help you guys in any way, please shoot me an email. Just shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
He squirreled it all away. Now his financial life is dead.
Don't die like squirrel.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
We built the Tasty Trade app for today's traders. See it, tap it, trade it. Deposit and withdraw money right in the app. View company financials, forecasts, news, and more. Set custom alerts to stay up to date. See things bigger in landscape mode. Get the customizable trading experience you want. The tools, the data, the knowledge. See it, tap it, trade it. Join the club, genius. Tasty Trade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Across the network today, it's getting harder not to notice that markets are paying attention to the election. So that's already starting. We're going to talk a little bit about some of the things that are moving today. Bitcoin, bonds, of course. And then after that, well, there's a lot of earnings coming up. This week is the beginning of the real stuff. So we'll look into some of the statistics and some of those earnings that might be interesting this week. But first, welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade. I'm your host, Jamal Chandler. And guess what? That's right. It's Monday, so you know who's with me. I got Josh Fabian. What's up, man? What's happening?
Hey, there you are. How are you?
I'm good, man. I'm good, man.
Are you?
Yeah, fantastic.
Yeah, I mean, I think before we get into this, like, it's impossible to not address the giant elephant in the room that took place over the weekend, and I think we should just talk about it and get out of the way so we can move on. And John, can we roll it?
Contain yourself. How did you contain yourself?
Did you not know the words?
No, not really. No, I don't know the words by heart for this song. No.
Yeah.
Why do you think I'm holding my phone?
Because I was positioned. It would have been to your right, left of the stage, and I saw you with your phone. I'm like, does he not know the words to the song he picked to sing?
No.
This is like karaoke gone wrong.
No, I didn't. So it's funny because the last time I sang on stage was in Denver. I sang Man-Eater, as you remember. I actually memorized the song, and it was easier. It was only like 2 verses. I mean, that structure of that song is set up a little bit differently, right? You got a verse, an interlude, then a verse, and then it's like it's a song and the ending. And at least the chorus obviously comes up more often. Whereas in this one, like from the moment we had the Chicago show, I was like, dude, I'm gonna do a little something special for the Chicago show, get the people going, you know what I'm saying? Get the people going.
Special, all right.
You know what I'm saying? Get the people going, right? And
you picked a soprano like Steve Perry. I mean,
it was clear it was this song. Like this song just kind of kept popping up. I feel like that's kind of a Chicago song, right? I mean, it was, even though I'm a Cubs fan, that was a White Sox song when they won. that was the Black Hawk song when they won. So it was like, I want to do that song, right? And at first it was like, I don't know, but then it just kept coming up. Like we would be on a car ride, it would come up. Literally it was coming up in a couple we were playing. I was like, shit, I got to do this song now, right? And I was like, okay, now here's what was supposed to happen. I realized when I was gone over 4th of July that I realized that Tony, it would be fun if Tony came on stage and kind of held the guitar. Because this was all in fun. Like, I really didn't care, as you can tell. So I come and I asked Tony on Monday. Last week Monday, I said, hey, dude, I got a great idea. He's like, what's up? I'm in. I was like, what about coming on the stage? You hold a guitar and some shades. It'll be fun. He's like, awesome. I'll do whatever you want. By Wednesday, he got stage fright. He's like literally got stage. He's like, I don't know, man. I'm kind of getting stage fright. I don't want to go. I'm like, seriously, dude? Like you of all people, I thought he'd be into it. So he ended up not doing it. But I was like, hey, what the hell? I'm gonna do it. So the day of the show, as you were there, weirdest green room we've had yet. Like that place was not built with a green room in mind. It was way upstairs.
That place wasn't built with me in mind.
It definitely wasn't built with you in mind.
I was in like a 4x4 foot area.
Yeah, thanks. It was a good time to get to the pictures. It was not built with you in mind, or just a green room, period. And so it was way upstairs. You really couldn't get to it without, you had to go through the front to get to the green room, which is weird, right? Green rooms are always like, the stage is connected to it. You don't see whatever. So then Brittany at one point goes, I have the slide advancer, and Liz was supposed to introduce, Andy Beavers from SIBO goes first, then Liz introduces me, and her and Brittany and Liz are very opposite ends of the room. So I'm like, damn, okay, well, where am I gonna do this thing, right? Because the idea was for me to hold she was gonna hold on to the thing, and so it wouldn't advance, because the slide of that has my face on it also had a separate one like that with the song. And it would have been weird if Liz would have been hit it and then hit the song and then she, right? So we didn't want that to happen. So then it was like, okay, well, what if I just get it from Brittany and come down the stairs? So it's like, you know what I'm saying? Then we're gonna do this intro. Well, of course, that's what turned into me doing it and everybody not knowing where I was. Like you said, everybody starts looking around like, where is he? Where is he? Because I was not on the stage yet on purpose.
Yeah.
But it ended up being, that part was kind of fun, because then I was like, let me walk in and then walk out. It was fun, man. That's what it was about to me. It was fun. Let's pull up some pictures.
It was a great way to never do that again. It was a great way to end ever singing a song at a tasty event again.
You know what? The more you say it, the more I'm gonna sing a song again. So you can keep talking. But
I want you to do Cats in the Cradle.
I don't even know what that song is. I don't even
look it up.
I don't even know what
Just
it
look
is.
it up. Just look it up. It's depressing.
I think
as
this
hell.
is when Mikey was on. It was a great turnout, man. Great event, by the way.
Yeah, it was. I mean, I kidding aside, I was stuck in this very small section, but it gave me a great view of the audience, and it was a packed house.
Glenn and Mike there holding it down. The guys at the game went well this time around. I mean, I think they didn't know Jardinera. They didn't know two of the, at least maybe one of the food things. They didn't know what Jardinera was, but I think they missed Italian beef too, did they? They might have missed that one too. But they got the wiener circle.
I may have slipped out early.
They got the wiener circle, so that was cool. And they got most of the questions. And I mean, they were like fast buzzes. Like it went way better than any other time. There he is. Look at him. Coward. That's right. Coward.
He just snuck out.
Nah, but it's cool, man. It's always fun going to these events, talking to people, you know, like people get to see you face to face. I mean, I love these, of course, you know.
Yeah, I got a chance to meet a lot.
They look like
actually
twins.
meet a lot of
Look at
people.
that. They look like twins. You know?
Yeah. They look like twins.
Yeah. Oh, they're boys, man. They're boys. Liz does a great job with the intros, man.
Yeah, she does.
She does a great job with those.
She does.
That was
She
one of the
attacks
best
them.
intros I've
You know,
ever
there's
had
no
for me.
hesitation with her. She attacks it.
Yeah, she does. She does. There you go. Rocking the J's. What's that? Jordan 7s, baby. That's right. In the house. Mikey B. K-Tay. That
very cool
having
venue.
That cherry was kind of dope, man. Everybody kind of got a nice little shot with the cherry in the background. Yeah, those are pretty cool. Those are pretty cool.
And I liked your shoes. I noticed.
I told
that.
Pete, man. Pete was in the zone when he did his that day, man. He was in the zone. That's always the best part about doing these, right? Because like by the time you get to like the fourth show, if there's 8, or I should say out of 4, if we get the fourth one, or yes, yes, same
Go back
guy,
a picture, John. Go
same
back a
guy. So just so the people know, we saw this happen when he literally fell out of his chair. His chair tipped over. Funniest thing ever, man. I mean,
trying to plug in his computer. The chair actually was on its side. And
Yeah, it was.
I had my phone in my hand, And I watched it happen, and it just unfolded in slow motion.
Slow motion. He was like,
and it's like you wanted to take a picture, but at the same time, you're like, I don't want to take my eyes off of this at all for an instant.
It was hilarious.
And when he got back off, he kind of looked around like,
it was.
Anybody see it?
Hilarious.
Like, yeah, hey, I saw that.
yeah. He was so thrown off by it, man. All right, enough fun. Right. Let's talk about markets and see what's going on here today. Let's pull up the platform. Did you watch? You know what's funny? You know what's crazy about this weekend too? Is that I watched two sports that I don't necessarily watch that often. I watched tennis and soccer this past weekend.
I did too.
You did too?
Yeah, I like Wimbledon. I love Wimbledon. Actually.
Oh yeah, I love Wimbledon too. I mean, that's why I say I don't typically watch it, but that one I wanted to see because those two dudes. I mean, that's the past and the future. I mean, essentially. I mean,
yes,
Djoko's still doing
you don't
it, but
see
he
that
is
too
37.
often. Yeah, you see the torch being handed like that. I mean, this kid from Spain. Oh, he's a monster.
He's good. He's good.
Yeah.
And then I watched
and soccer.
Did you watch both of those games or which one?
I saw the first half of the England-Spain game. I didn't see the one last night.
Yeah, I watched pretty much all this England-Spain game. My oldest son is super into soccer. Like, he's into watching. I mean, he's 20. Cool. I haven't been able to get him to sit down. I was never able to get him to sit down and watch any games when he was a kid. I mean, it would be the Super Bowl, and he'd be like, yeah, okay, cool. He'd sit down, and it'd be like the national anthem, and then he would like bounce like right after national anthem. I'm like, dude, the game is starting. Where are you going? Like, he was always that. But now, since he's in college and he watches games with friends, and, all that age group is into gambling, he watches, a little bit more sports. But soccer's become his thing. Like, he plays FIFA a lot, cool. And he watches soccer.
That's cool.
Yeah. I know. Awesome. No, it's great. It's great. All right, so vol is still kind of low when we look at historical vol and implied vol, at least in SPX. Of course, it's high in IWM and Russell, but I mean, we got to talk about this weekend, man. I mean, that look, that was a very scary situation this weekend that happened, and I don't know about you, but I was just kind of, I was actually on the phone with my mom. My mom was the first person to say it. She was like, "Did you see what happened?" And I was like, "No." And she was like, "Well, something happened with Trump." And I'm like, "What?" And then I started, of course, it was everywhere. It was all over the news. Honestly, it's been all over my Twitter feed today. Like, it's all anybody can talk about, of course. What are your thoughts about, what happened?
Yeah, so I was just sitting at home, and I got a text from Vecchio, and he said, "Are you watching TV?"
Yeah,
and I said, "No." He said, "Turn on the news." And, I make no, I don't hide my political affiliation, but I also don't get into it on air. And I have my beliefs as on the whole process and who should be elected and who shouldn't be and why not. But there is absolutely no place for violence in that. There's none, absolutely none, and it's disgusting. And I can't condemn it in a strong enough voice. Having said that, markets just don't seem to care at all about what's going on in the world of politics. I mean, if this didn't shake up the market, what's going to?
Well, I wouldn't say they don't care. And the reason why is because look at Bitcoin. That move, I think, has been prompted from what kind of happened and what people feel has been a shift in election odds. Bitcoin's got a big move today. Huge move.
Let me rephrase what I said. The sectors that might stand to benefit from a Republican administration are showing a bullish move today. I was talking more in terms of volatility. You didn't get, if you had told me that a presidential candidate there's going to be an attempted assassination on its life, I would think that it wouldn't be shocking to see the market crater.
You would have expected a big down move in market.
Yeah, it wouldn't have shocked me, that's for sure. To see a sizable up move, it's not the biggest up move, but it's it's noticeable. That's what I meant by the market just doesn't seem to care. But to your point, yes, Bitcoin definitely up. I haven't looked at some of the other, but I would imagine some of the energy plays probably.
Actually, they are.
As well.
That was the other thing I was going to talk about. Moves in you got Exxon, Chevron, and of course these things have a decent IVR. I'm not interested in trading any of these right now because it's really based off of earnings. It's not like these have the vol. I mean, this has the vol really, but. These names are moving, and oil is down today. I mean, that tells you what you need, everything you need to know. Like, it's not like oil's moving. Normally, these names would be moving like that if oil were up, I don't know, 1% or something. But it's flat. I mean,
Yeah.
Kinda
Yeah. So I think your point was that the industries and companies that stand to potentially benefit are showing, that, their presidential candidate hopeful is in the, is in the front spot at this point. I'm shocked by the lack of volatility. I'm shocked that the market didn't pull back. I'm shocked that the reverberation seemed to be so short-lived, if at all, in the market.
Yeah, I don't know. I don't know. Given the way things went down, I wasn't expecting a big move when futures opened. I wasn't expecting the market to be down big. I wasn't expecting it to be up 50 handles early this morning neither, but I wasn't expecting a big move. I mean, I'll be honest with you. I mean, like, again, the viewers know me. I don't ever really talk politics. I only pay attention to it and talk about it once it's happening. And again, it's not even about the lean. Everything on this show is related to what's going on with markets. What happened the other day, to me, made it feel like, wow, it was resiliency, and there might be a situation where he possibly wins the race. And that being the case, the market was going to trade that way. And that's exactly what happened. That's exactly what we've been seeing today. Now, again, we still got 4 months until the election. There's a whole lot of time left. Speaking of, I'm hearing it's chaos in Milwaukee. I'm hearing there's a lot of stuff happening. A buddy of mine lives there. It takes him 20 minutes to get to work. He works right downtown. It took him 2 hours to get in today. There's a lot of protesters. There's a lot of stuff walled off. I'm starting to think, folks, here at Tasty Trade.
I will
Tasty
not
Live.
be in the week of the convention.
We are not. We are right
I
near.
will be home in the week of the convention.
Where it's at? It's supposed to be at United Center, right?
United Center.
Yeah, there's no way we're coming into work, probably. And again, I guess I just didn't realize how many protesters potentially there would be. And I'm sure that's what's really holding up traffic.
Protesters. And when I was in high school, George Bush Sr., when he was running for office, came and spoke at our school. And I just remember what a nightmare that was in terms of security. And it's 10 times, it's not 100 times worse now than it was then. I almost got shot by a Secret Service agent because the only way for me to get into the auditorium where he was speaking, I had to go up this ramp, and I didn't realize that I wasn't allowed to go up there anymore because it had been shut off. And as I went in, the Secret Service agent put his hand on his gun, and I'm like,
you look suspicious. You look very suspicious.
Yeah, I'm the guy that's going to take out somebody. Yeah. Take somebody out for ice cream. That's about it.
Let's see. So, looking for the rest of the week. I mean, well, first of all, before we get to that, let me see. What have I done today? I did do a couple of different things today. I had to rearrange some trades, man. I mean, look, gold is another one that's been on the run. I don't know how. I mean, it was higher this morning. It sucks. It shook me out. But I had a condor on in here that. After the big move the other day, what did it move on big the other day? I totally forgot. I don't even remember anymore. It was a big move from, was this? This was
Last
CPI,
week?
right? It was CPI. Yeah, it moved big on CPI. I was short an Iron Condor, but I had, it was in this expiration, I think. And I had the 2440 strike on. And I mean, I was just getting beat up here. It was, at this point, it's kind of whatever. I'm down on it. Let me close it. So I got out of that. Sometimes, when you do that, you want to still kind of keep a position in here. I really don't know what's next for gold, so I'm just out for now. I'm not doing nothing, man. I mean, it is what it is. Oh, you know what I did?
Did you do anything else today?
You're gonna hate me for this. I sold the grains.
Don't
today.
Please. Oh, okay.
I sold the grains today. I sold.
I thought you were going to say you got in a position I got into.
It's like 7 weeks. It's like 6 out of the last 8 weeks they've been down, man. Like something's got to give, right?
Wait, you sold them or you bought them?
I sold them. Yeah, sold put spreads in them.
Oh, you sold put spreads. Oh,
yeah,
okay.
I sold put spreads in them. So yeah, I'm long deltas. Sold put spreads. I mean, when I see these charts, I've been looking at these for the past 2 weeks. I decided to act on it. So yeah.
No, I like that trade. You've talked about that with me last week a bit, and it was enticing. And I think we even talked about it on the show. And I said one of the reasons I don't trade is because I can't figure out what the hell a tick is worth half the time. And I don't want to keep bothering Pete asking him that same question over and over because I don't really pay attention when he answers, apparently.
Yeah.
But,
I did that. I almost, you know what's funny? I almost sold a call spread in IWN this morning on the big move. I don't know. I was waiting for like 219 and change. I guess I could. Is it back near the highs? What's the high? Oh, it's like 218. It's actually close to the highs again. I might do this. I don't know.
Yeah.
Remember me for this one, okay?
So, you made the point about the, I don't remember what you just said a minute ago. You said something though, but last night when the market opened and it was relatively solid, I actually bought SPOOs and held them through the night. That was one trade that I made. And then I sold Intel puts this morning.
Oh yeah, that stock's been on its butt for a while. That stock's been on its butt for a while.
Yeah. So I want to take a shot, and then also I got a bone to pick with you because you mentioned my position in Nike over the weekend.
I didn't mention your position per se. I mentioned Nike.
You said something about and then you mentioned something about me being in it. And
I said we've been talking about yeah. And you're saying it hurt me.
Don't do that again.
You're saying it hurt me, and that's why it's down today.
It hurt me. Yeah, I mean, I'm looking at it like, what's going on with Nike? I'm like, oh yeah, Jamal brought up the fact that I got into it.
Oh yeah, that's exactly why it's down today. I know.
The only other one. The only other one, I'm going to pull it up here. I got another screen here I'm looking at that you can't see. I was looking at Macy's.
Macy's, yeah, that's
it's down 230. They were working. Somebody was trying to buy them out. Couple of private equity companies.
Yeah,
and they've been working on that for a few months, and the deal finally fell apart, and the stock is down 230. And if you're a speculator, and I would consider myself a speculator, I think that maybe there's a chance that somebody else steps in here on that. So I have kept an eye on that one. I haven't decided if I want to do anything, but it certainly caught my eye.
Oh, filled on my IWM. Oh, here we go.
Well, let me buy some futures. Hang on.
You do it. Go ahead. You do it. You do it, tough guy.
I will do it. Don't dare me.
Tough guy.
Don't you dare me. Don't you dare me.
You do it. You do it, tough guy.
So, you're talking about things that are happening this week. You do have somebody from the Fed speaking every day this week. And then you'd mentioned, the CPI last week in your position in gold. I think we're in when do they cut rates? Not will they cut rates. I know you still don't think they're going to necessarily do it, but I think that that's the foregone conclusion at this point. But I'm interested. I didn't hear what Powell said today. I don't know if you caught. He spoke this morning.
I saw he was speaking. I saw there was all these different tidbits. I honestly didn't pay attention. I mean, I don't know what else is he gonna say different.
There's other stuff going on.
What is he gonna say different? Is he just talked in front of those two panels? Like, what's he gonna say different? I know he said a couple of things that we haven't seen. Like he said something about he was concerned about our levels of debt in the U.S. and some of this other stuff. But I didn't pay much attention. I mean.
Yeah, I was less interested in what he has to say than I am in what some of these other Fed members may have to say throughout the week, just if they are on the same page as him, if they reiterate the message that the market seemed to take, that, the plan is to cut rates. I would say that's what the market's takeaway was. And if you look at the CME website, certainly the expectation for September is
it's gone up.
There's going to be a cut.
It's like 100% chance of easing in September now, and pretty much all the other months. I still stand by what I think is going to happen, which is probably a ceremonial cut in December. Yeah,
but I still make $20 if they don't cut in September.
Who does?
I do. If I make $20, we bet this on air. I've got the tapes.
I don't remember what you're talking about.
Yeah, well, we've got the tapes. That's why I did it on air. Are you doing anything for earnings?
Netflix is the only thing that I have going on so far. So I think those are, if there's any compelling plays on the week, it's Netflix and it's TSM. That's what I think. So I did the other day. I actually did this on Friday. I put in a calendar spread, the 700 calendar spread, short this week, long next week. Did it for like $2 and change. That's my only trade I got on right now. So I figure that's right up against its former high up here from a couple weeks back, or a week ago, I guess. A week and change. Well, almost a week ago. So we'll see how that pans out. That's the only thing I got going on. TSM I know is probably later in the week. I don't know exactly what day. Oh, in 3 days. I don't have anything on this, but I I'm inclined to think the stock's going to go down. Just because of all the high expectations. I think it did last time around too. I think that could happen again, but I don't know how I want to play that quite yet. So I'll see.
It's interesting you say that about the expectations because the expectations for their earnings season overall are really high. They are right now. It's like 9.3%. That number moves throughout the earnings season as people report, but overall it's up to around 9.3%. And then there's actually other numbers floating around out there that put it between 12 and 16% earnings growth in the S&P 500, which is an astronomical number. And so when you say something about, like maybe getting on the short side of TSM, like this whole market is, could be in for a rude awakening if the earnings are not, in line with what people are hoping for. So far, they seem to be okay. Goldman Sachs, their number was really taken well this morning. I think the stock was up like 2% last time I looked, something like that.
Yeah, I didn't even see what they said this morning, but yeah, it's actually right. Back near highs now.
That was it. They met earnings. They didn't say anything spectacular. Nothing that stood out. So this week it's almost kind of quiet. You do have some names that are out there. I think you have UNH tomorrow, maybe.
Yeah, that's another one.
But Netflix will be interesting because they kind of like are the preview to the tech sector, right? They always come out a week or two before you get all the other names coming out. So, it's interesting to see what's the sensitivity to the react to whatever they report.
Yeah, no, I totally agree. And so looking at it, it's, and again, this is for the next, this is for the rest of the week. Obviously, most of this move includes earnings, 55 handles. Not quite 10%, 8 and change, probably 8 to 9%. So
big move.
We'll see. Yeah, we'll see what goes on. Again, how I'm feeling about it. I'm playing it to the up in the cheapest way possible.
And I do think it's worth mentioning again that how the market responds to Netflix, is a way to sort of gauge what you might want to expect moving forward with other tech companies. If Netflix beats and the stock is up 2% and I expect to lose 10, then okay, well maybe you're looking at a rather subdued upside if companies beat. But I think you can contextualize the reaction and sort of use that for expectations moving forward.
Yeah, no, I agree. The last thing I'll say before we go is I think this is very interesting too. This is one of the other things that in the last week we've seen a big change with IWM small caps, right? The other thing that's interesting is seeing this steepener work today. Long 10 years, short 2 years, with the idea of them talking more about cuts. This is the first time I'm like, ooh, this is kind of fascinating. I haven't been interested at all in getting long 10-year yields and short 2-year yields, even though we were heading back towards rate cuts, but this is the first time where maybe this trade actually looks interesting.
Yeah, I think you're right. I think there's definitely some renewed interest in that trade if you're looking to play the steepener. Yeah. I haven't traded it, but it's definitely something on my radar.
Same here. Folks, that's all the time we got. Thanks for watching the show. And as always, be smart, be patient, trade small, trade them often. We'll see you.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Hello, everybody. Welcome to a new week. Tim Knight here. Want to start off with a mention and a recognition and an acknowledgement of the terrible event on Saturday. I'm relieved to not be here with you after a catastrophe. Through luck or heaven's grace or whatever you want to say, we don't have to deal with something truly horrible, a very close call. But I say that not only to acknowledge it, but also to say that there's 113 days until the election, and I will be making comments about financial markets, which will be affected by good things and bad things. Today, bad thing. And I never want to seem callous about it or cold about it. I'm a chartist, and I'm here to talk about there's the chart and this is what it's doing, and this is probably why it's happening. So I just wanted to preface it by saying that I think it's kind of the 800-pound elephant in the room we don't want to ignore. And this is just my disclaimer, so to speak, for that cold calculating chart commentary I'll be offering. So anyway, having said that, let's look at some charts and see what's moving out there. Here is the spider, and we are at lifetime highs. The NQ and the ES and the RTY have all been green. It was kind of odd. I was watching carefully yesterday when the markets opened, the futures markets, and I was expecting some really outsized move. They didn't seem to care at first. Nothing really happened, with the notable exception of crypto. But through the course of the evening and the early morning and so forth, it climbed and climbed and climbed. We've shaved off some of that, but we're still looking at new lifetime highs on just about every index you can shake a stick at. So that is the spider. And referencing my earlier comment, it's instructive, I think, to sort of say, well, what are the charts telling us? Given the likely political outcome, these things are going up, these things are going down. That would, people vote with their dollars. That would suggest that these industries, these sectors are going to be favorable with a likely new administration, and these aren't. So we'll tumble over a couple of those later. Here's Apple, lifetime high. As with a lot of other stuff, it's given off a little bit of that. We're not going to close at the high of the day or anything, but net is all still positive. The Dow is well over 40,000 now. Here's the diamonds, also lifetime high and pretty near its own high for the day. But we've cut well above these former peaks. We went zipping over that on Friday, and we're just padding those gains today. Overseas, well, I guess Canada's not really overseas, but outside of our borders, wanted to highlight a particularly positive chart and maybe a not so positive one. Here's EWC, Canada. And we are near lifetime highs on this one. It's just having a good, strong day. And this looks like a fundamentally good bullish chart, I suppose, because Canada's quite resource rich. Gold among that. So that's my hunch on that. Brazil is green, but barely. And this is probably the fourth or fifth day I've already mentioned Brazil, because I've been yakking about this gap. In particular, zooming nice and tight here. This gap right here. That took place between the 28th of May and the 29th of May. And we are coming right up against it, just like a penny or two away. So my conjecture here is that gap will represent resistance. And if we respect that gap, if we don't go zipping above it and turn away from it, that'll sort of bear out that supposition. So Canada looking really good, Brazil looking, I think, vulnerable. Getting back to what I said earlier about how events, good or bad, can affect different sectors and industries. There's no doubting that the symbol DJT would have been affected today, almost certainly in a positive way, and it has been. DJT is up very strongly, about a third of its entire value, about 33+%. It opened higher, and in the pre-opening trading, it was substantially higher. I think it was around 53, 54, something like that. But this tends to happen during these big leaps with this particular stock. On days that it's going to be very strong, it usually has its maximum strength early on and it kind of burns off through the course of the day, preserving a good chunk of the gains, but still, off the highs. But that's kind of what the longer term on that looks like. In contrast to this, and there's plenty I can show you like this, but here's TAN, which is an ETF dedicated towards solar stocks. And the conclusion would be pretty obvious that, well, it looks like the person who's almost certainly going to win the presidency is not going to be too crazy about solar companies. And therefore, people are getting a jump on things and getting out of them. So that's 10 down 5.66% today. And it's interesting, too, because before this weekend, I would have reached the same conclusion about the likely victor on November 5th. But it just seems like it's a lock at this point, which is why you're having these strong expressions of prediction in the financial markets. We're starting to get into the earnings season, of course. Banks are still kind of front and center. Next week is the big one with almost all the big companies, but we're still in bank territory right now. Goldman Sachs this morning did their announcement. Strong day. We're up to another lifetime high. We have been working our way, as you can see, through a series of higher highs and higher lows for about 15 years now. But it's pushed above even this resistance trend line. And just in general, if you look at XLF, the financial sector ETF, lifetime high on this one too, almost 1.5% on that. For whatever reason, Bitcoin is having an incredibly good day. We have gone up about $10,000 since we bottomed right here. This is back only on the just after the 4th of July. So here's July 5th to now, about a $10,000 reversal. More than 10,000, it looks like. We'll just call it 10,000. What it needs to do at this point is get above this dashed line here, because we've been in this series for a while now, starting here, lower high, lower high, lower high, lower high, again and again and again. And it had really started sinking, as you can see. Our old friendly rainbow here actually did a very nice job of showing where support was. And it's bounced very strongly. And it's a real question mark whether can it fight through all that overhead supply and shake off that earlier selling. I haven't traded crypto in years, so I'm a pretty impartial observer on this. And I think it's going to be a lot tougher tomorrow to have the kind of day that we're having today again, because there's a lot of overhead supply there. But for the moment, the companies that have a lot of their trading, the brokerage companies that have a lot of crypto trading, doing quite well. Here's Robinhood, up over 6% today. Very nice long-term bullish pattern on this. And Coinbase, even more so, very dependent upon what crypto's doing. Coinbase is up very strong, over 11%. Over in semiconductor land, things aren't so great. And I don't know what the reason is, but there's certainly a shift away from tech into the small caps. But NVIDIA's down almost a full percentage point, which is kind of eye-popping in this environment. And last week, it gave its best shot at pushing back into lifetime high territory, and it flopped on Thursday away from that. And I've said it again and again and again, watch this dashed line. If we can break below that median, it really opens up the prospect of a move. The next meaningful support would be down here. And we're seeing in various other places too. Here's Micron, MU, turning away from its own resistance here. Here's AMD, down about 2/3%, turning away from this resistance. And so, like in general, and this is driven largely by NVIDIA, SMH is down just a little bitty bit. And the lifetime high on this one was last Thursday. And so we're stalled out below that resistance line now. I'm having actually, weirdly, I'm having a profitable day, entirely short. Took some hits here and there in small cap land, definitely. But thanks to, for example, semiconductors actually having a profitable day, even on this lifetime high day. So that's a bit of a relief because it's very green out there. Tesla is really doing a good job recovering from that wipeout it had last Thursday. We actually on Friday got down to around 233. We're over $20 higher than that right now from that low, and we're back in Fibonacci land. Just again and again and again. So even though this looked like it was just going to shake off all precedent, no, those fibs still matter. Those fibs are still ruling the roost. It got a little above it, but it dragged right back down, and now it's hanging right on their trio. So, like back here we are again. Just kind of trying to figure out what's next. And next week is earnings for Tesla. And I was going to say August 8 was Robotaxi, but I think that's been delayed. I don't know if officially, but that's the word. The other EV companies that had a spectacular time on Friday, consolidating it a bit. Here's Rivian. It's off about 3 3/4%. And here's Lucid down hard, over 15%. From a charting perspective, just as with Rivian, if it can find support at its pattern, if it can find support at its base, then great. We may be seeing a repeat of that right now with Lucid. This green portion here is what I'd consider its base, and where we've lost most of those gains from Friday. If it can find stability at the base and kind of shake itself off, then it could be a longer term recovery for LCID. I wanted to spend a few extra moments than normal on gold. I'm a gold fan. I think it's got a great future. Maybe not short term, maybe not medium term, but long term, I think it definitely does. GLD, teasing and tickling the zone around its own lifetime highs. Of course, one would have assumed gold and Bitcoin would be acting kind of similar today. No, Bitcoin and Ethereum and all that is just setting the world on fire, and gold's up a little. But, my long-term supposition has been that gold and gold miners have a good future. This ratio chart of XMA divided by GDX you've seen before, and on a multi-decade basis, cyclically, it posits that gold miners are going to do well. And I would say that a couple of very odd charts here I think are worth noting. This one here is the long-term gold futures contracts, continuous contracts, divided by the money supply, and it is looking good. It's not complete yet. We have not broken out yet, but it's definitely looking good. And this is rather laggy data because this is monthly data. It hasn't updated since June. This is decades and decades of data here, but it's definitely shaping up. And I would also offer this one, which is up to date. This is the gold futures divided by the United States dollar index, and it also is getting quite close to what could be a breakout, similar to what happened here, like so. So this is the line we're looking at on that one. So I feel really good about gold. IWM is up strong. Watch this gap. This is a major gap up here. 220.13. That was way back Thanksgiving 2021, I believe. We have just about sealed it. Watch that gap. And to close, here's bonds, TLT, sinking away from that resistance line. Interesting, pretty big down day on that, 1.18% on TLT. And I'll also note our old friend, the Dow Utilities, a hard tumble on this one. Here's our old friend, the Diamond, and we peaked on this on Friday, looked very strong. All that gone, and on all of Thursday gone as well. We're basically back to Wednesday land at this point. So hard reversal on those interest-sensitive items. Okay, I'm out of time. I shall say farewell, and thank you for your time and attention. I'll see you tomorrow. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap.
What happened to your? You got
injured.
You got a boo-boo?
No, I had to take somebody out this morning.
Yeah. Oh, take them out. You mean like take them out?
Yeah.
Got it.
Right cross.
Yeah.
Right cross, but with the back of your hand, so like. Like what? How do you?
book.
You're
I can
about
tell
to
you that
spend
right
2
now.
nights in a camper on a foam mattress before she throws you out into the insect infested wherever you're going to be.
We got the spray with DDT in it.
I have $20 that says you'll be in a hotel by, the second night.
But we would like to get a little walleye if we could, some crappie. Vinny's gonna make some fish tacos. We're frying them up. It's gonna be good. We got the fish fry stuff. We got like 4 pounds of fish fry meal or whatever.
Wow. Oh, like the
Right.
batter and stuff.
Yeah.
Okay.
Yeah, then you throw it in. Fry up the fish.
Making s'mores.
Make s'mores. Yeah. Oh, nothing can go wrong.
Yeah. It'd be great.
So, we're doing the show on Friday, and the Bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, "You'll be in a hotel by either the first night or second night."
Oh, and then I vociferously stood up for you.
Of course you did. You stood up because that was the smart move.
Appreciate you. You're
Yeah.
Saturday morning, I look at my phone, and it says Venmo $20.
I almost had to pay him $40 because there was a little stipulation. If we didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as
Because
can be.
you were tweeting pictures.
Oh. Yeah, it
Like
was
a
beautiful,
girl
it was
on
beautiful.
Instagram, you're like, oh,
Oh,
I'm here
yeah.
in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal. Look at
that's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. So we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
Jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was.
Now the RV on RVTrader.com.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God.
Your dogs are going to survive just fine in a kennel.
So that they're service dogs. He's bringing them right on the plane.
Oh, sure.
I don't pull that crap.
Oh, sure.
Service dogs. These dogs. The one dog's afraid of her own shadow. Look at him. The other one could be a service dog because he bites everyone.
Get the full scoop by checking out the archives at tastylive.com.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
And what a day it's been. E-mini S&Ps up 26. 1.4 million cars have traded so far. NASDAQ green all day by a little bit over 100. But look at the mighty Russell up 47. That relationship between the Russell and E-mini S&Ps and the Russell and the Dow and the Russell and the NASDAQ. Seems like the Russell's been a little strong here, Stadloff. I know you've been long the Russell. You have to like that.
Yeah, that's the one winner we got in those futures. Yeah, I mean, I'm short a lot of NASDAQ futures, so it's not helping. But the Russell S&Ps, yeah, that's a good one for sure. That's moved pretty good today, really good.
Volatility up by 16 cents for the first time in recent history, with the market higher.
I wouldn't consider this a huge vol explosion, but they do have the VIX up about 50 cents, which is a shocking miracle.
It's not a collapse.
It is not a collapse. I traded some VIX futures for the first time today. I don't think I've traded them a long time. I'm only down 7 or 8 cents, which is a miracle. Maybe even 6 cents. I don't know. I'm trying. I kind of was a lot of futures trade today, but I kind of bored. And
here's that Russell NASDAQ. It doesn't matter what pair you use, 5x2, whatever else.
I'm back. I'm back on the dance floor from where we were. We picked up a month.
You picked up a month. You did pick up a month, maybe even a little, maybe a skosh more.
A skosh more. We picked up a month. In addition to that, some of these stocks might have, I don't know if they blew their brains out, but I kind of think Tesla blew its brains out today. I think Reddit blew its brains out today. I think.
Whoa. Okay. Tesla only up $6, blew its brains out. I mean, I get it. It traded up to $265, which is almost $10 or $11 higher than where it is right now. Still a good move, $6 with the market at highs.
Yeah. I'm not saying it's not. I even shorted some DJT today. I think that blew its brains out too.
You did in the 40 handle, didn't you?
Right here,
something?
Right here. 40.90, right here, 20 cents away. I'm going to add to it if it goes up a little bit higher. Let's see, what did we do today? We bought some BABA, we sold some NVIDIA, we sold some DJT, we bought some Baidu.
Scalp some NVIDIA, did you say that already?
A little bit. I really want to get short Coinbase here, but I'm going to wait.
Coinbase hasn't blown its brains out, as you like to say.
No, I don't think so.
I mean, it's a little. I mean, I know when we would say it in days past, it didn't have quite as much meaning as it has now. Maybe maybe it shot its wad. Maybe that's what we should say.
I kind of think Apple might have too. Where's my Apple position here? Yeah, I'm kind of.
You know what? I'm gonna because I feel sorry for you. I'm gonna give you an act of kindness here. You may have some food in your teeth. I'm just because I'm trying to make America kind. Maybe you got it already. I can't really tell. But I'm just trying to make America kinder and gentler. I'm trying to all of us come together. I'm going to give you the first olive branch. Other days when you have food in your teeth, I have never told you. I would not tell you. And it was no way anybody could make me tell you.
I don't think I do. But I'm okay. Either way, I don't care. I'll live with it.
Vol futures are up, Sosnoff. That's the key.
Yeah, but they're not up much. 10 cents does not count for up.
A drowning man reaches for a straw.
I don't know here. I'm going to try to decide what I want to do in Apple. There's part of me that wants to sell a little bit here on the close.
How many SPY options do you think are going to trade today?
Is that because you think it's a lot or a little? I don't know.
It is a lot. It is a lot.
Ooh. I don't know. What is it?
26 million shares, 9 million options will probably trade today.
Yeah, that's not a lot of shares. That is a lot of options.
Not a lot of shares. That is a lot of options. I was just trying to give the court. I was trying to show. Shares are usually a lot more liquid than the options.
Yeah, Yeah, I don't know. I didn't trade any SPY options today. I kind of want to get short, but I've been very reluctant to add to my futures positions here. I want to. I kind of want to see them. I know this doesn't mean anything, but I kind of wanted to see them go down in the day. And then I would have been much more bearish if they had kind of failed for, what is this, like the third time up here?
At least, yeah. For the E-mini S&Ps. Yeah.
Well, the E-mini S&Ps, I sold 17s today. I sold 57 17s. in the S&Ps.
The high is 57.18. 75.
I'm pretty sure I sold 57.17. It's going by memory because I bought them back at 11. I think I took 6 points out of them.
You sold them at 17. You bought them at 11. You're 100% correct.
Right. So I sold $1 off the high, but that was just a stupid shot. At that point, I was just trading out of spite.
This is the fourth time we've been up here, Sosnoff. Fourth time's the charm.
Yeah, and I think that yeah. I think this might be it.
Bonds are down 25. Bitcoin caught itself a bid, trading near its recent high, 63.7.
Well, Bitcoin caught itself a bid all the time. I also think I think they could goose them on the close today because they crushed them on the close.
Okay, well, are they going to sell them off or are they going to goose them?
No. I'm saying that they're going to sell them off from here this week, but today on the close, the shorts might just have to cover just because the way they closed them on Friday, but they're selling them now. They just sold the NASDAQ down 40 handles, and they just sold the S&Ps down 10, 11, 12.
Yeah, you're right. Even the S&Ps are up 18. NASDAQ's only up 70. The mighty Russell up 45, like it hasn't moved.
No, the mighty Russell's not moving today. You can. That thing is rock solid, and there is buyers on every single dip. And I am not, like I told you last week, not touching that trade. I am not touching that trade. I'm not touching the yen.
I know, and it's paid off for you again today. So I have egg on my face.
I'm not touching the yen, and I'm not touching, and the yen didn't do anything today, I don't think. No, nothing, flat. I'm not touching the yen, and I'm not touching the Russell S&Ps.
I don't often say this, but you'd be better off putting your money in T-bills right now than being long the yen, okay? I'd rather get the guaranteed risk-free rate, and I never trade risk-free rates, than be long the yen. Look at him. Put your fingers in your ears like you normally do.
If it didn't have 20-to-1 leverage, you're right, I wouldn't trade it. But at 20-to-1 leverage, you can still make money. Small moves, big money.
No whammies.
Small moves, no whammies. Exactly right.
You'll notice a lot of these stocks have earnings coming up here, and that's why their IV rank is starting to expand. You'll notice a lot of green on this 5-day change here. You got Coin, which is up $25 with expanding implied volatility. Obviously, Costco, expanding volatility. Tesla, on the other side, is down a little bit. IV rank down 6 or 7 with the stock up around $5. Usually these NASDAQ stocks, as they go higher, the volatility goes higher too.
That is very fair. Yeah.
I'm glad you agree.
Yeah. So other than that, I mean,
I can't believe you're always the guy that mentions. I can't believe you haven't mentioned the commodities. I know they're hard to trade, but whatever. Corn, wheat, and soybeans are dead, Sosnoff. Nobody's eating any corn.
I'm eating corn.
Did you have any corn for the 4th of July?
Uh-huh.
I think you're lying.
Fresh. No, I did. I bought fresh corn and I cooked it on the grill.
Did you make yourself some bread? Make yourself some wheat?
No.
You make yourself any edamame?
No, edamame. No.
They're all down around 3%.
Ooh, taking out the lows, right? Taking out the lows right now in the NASDAQ as we.
And on even the S&P is down 13. Yep. I mean, the recent lows. They were $10 lower than this. Yes.
Yeah, you ugly. Yeah, I'm ready. I'm ready to.
Man, this really is ugly. Russell's up 2%, Dow's up 0.5%, even the S&Ps are up 0.25%, Nasdaq's up 0.25%. Wow, is this gross? This is ugly. Ugh.
Dare I say it? The top may be in today.
Oh no. I wish the only reason I can agree with you is volatility up 25 cents is hanging in there.
That's not an area of agreement. Oh, and look, we are actually up money on our VIX futures.
Hold on one second. If I agree with you for my reasons, they're my reasons. You can't tell me that they're not good enough.
I can definitely tell you they're not good enough, but they're still your reasons. I can tell you anything you say is not good enough. I can say they're your reasons. Great. Congratulations. But it's still not good
But the
enough.
fact remains what you say.
Exactly.
Completely understand. Completely understand. Oh man, you're amazing.
Thank you. All right, let's see what else.
I know you hate earnings. Morgan Stanley Bank, UNH, just put it out there.
Morgan Stanley, Bank of America, UNH.
That's right.
I do not trade any of those three, for the record.
I know you don't, but I am contractually obligated to say something.
I would assume Morgan Stanley is going to be very similar to the other bank stocks. Bank of America, I mean, I don't even know where that's trading anymore. At $30, $35, I don't know, 40, 30.
Morgan Stanley is 105 with an IV rank of 32, but yeah, the expected move is $3.50 over the next 4 days. That's a low implied volatility.
Yeah, I mean, that is the 3% range. That is a really, really tough, that is a tough earnings trade in the 3%. Bank of America is probably even worse than that.
Yeah, you're right. Over the next 4 days, it's $1 and change expected move. It's a $41 stock.
There you go. So it's less than a 2.5% move. I mean, I'm sorry, but you can't make money on those earnings trades. It's just impossible. And I don't really trade UNH. I mean, UNH the markets can be pretty wide. It's probably the best of those three, but if you don't have a directional opinion in there, I wouldn't touch it.
You know what? It too, IV rank of 79, which is pretty good. It too only has a $20 expected move over the next 4 days. I mean, if it was $50, you might be thinking of something.
Yeah, no, $20. How expensive is the stock?
$500.
Yeah, I mean I mean, that thing can move $20 the wind blows. So on Friday,
that thing moved $20 today, and it doesn't have earnings. 530 to 513.
On Friday, they sold the S&Ps. They sold the Nasdaq from up 250 to only up about 80 on the close, right around up 80, which is a pretty big sell-off on the close. They had the S&Ps up 66, and they closed them up 28. So they had two big sell-offs on Friday afternoon. I figured that if anything, they would reverse that today on the close, but they absolutely didn't. And the S&Ps at one point were up today. Like I said, they were $40 higher than where they are right now. $40 higher. And the Nasdaq was up 250 at one point. I don't know exactly, but around up 250.
Sure.
It's up 36 right now. So for 2 consecutive days, they've had huge sell-offs into the close. That is very uncharacteristic for this market. Maybe the market's waiting for a huge sell-off, then to have a rally into the close or something else. But fairly uncharacteristic for sure. And I think you have to take a little of that into consideration. We're back where we're back below the levels where we opened this morning. That's for sure.
Sure. Yes, I give you that.
Mm-hmm. I don't think anything special. And you mentioned commodities. I mean, bonds were pretty flat. They were pretty flat all day. They had one little sell-off early, and then they had one little rally midday, and that's about it. The currencies didn't move all day. Crude oil didn't move. Natural gas was the ugliest of all of them. It's down 17 cents, which is a huge move on it. It's down to 215. Natural gas is just flat out ugly. And gold did turn around.
That's like a 7% move right there.
Yeah, no. I said that's
on
the
the
ugliest
lows.
of them all.
Yep, by far.
And then gold was up like close to $20 or something.
You're right. It's up almost $6 right now, but it was about $20 higher, like you said, just not too long ago. By the way, I could use gold to sell off a little bit. By the way.
Well, you're getting that. Stocks that open.
I'm getting that. It's only up $6.
Some stocks that opened higher and have gone lower. Nvidia, Meta was up a couple of bucks this morning. It's down 4 now. Tesla, which was up 10, is only up a couple. Apple, which was up 6, is only up 2 or 3. I mean, so there's some challenges out there. Looking at some of the meme stocks, Chewy up 18 cents and GameStop up 78 cents.
I think with markets at highs, the meme stocks, unless you're talking about Costco, the meme stocks don't really mean anything.
I agree with you. They're incredibly uninteresting here, and I mean,
You got too many good things. You got too many good things going on in the rest of the market.
Yeah, I don't have any axe to grind in there. I mean, I did not think you were going to get NASDAQ down on the day. You're about to get a down on the day print up from up 250 to down on the day. That's a pretty good. You got to admit that's a pretty decent size reversal.
That's a pretty good size reversal. A little bit reminiscent of last week where we would look like we were making highs and selling off later in the day, only to go nowhere for the week. The only difference is you got volatility higher, and I think that's something to hang your hat on.
Down on the day, Mr. Batista. Down on the day in the NASDAQ. I did not think, with Apple opening up $6 this morning and Tesla up $10, that you would see that at all. S&P is only up 2. This is it.
Apple is still up $2 and change. Tesla is still up $4 and change. I mean, coin is still up $24. Netflix is still up $6. I like your enthusiasm. Maybe the top is in for a little while here if volatility continues to uptick. But I mean, like you said, it's not enough. It's not like there's velocity to the downside.
This is the end of the 2024 rally as we know it, just so you know.
And this is how you get your name on the door. Yep, I hear you.
I think I pushed the wrong button a minute ago. Let's see. Tom,
you always do.
Hold on. Let's just see this. Cancel if close. What time we got? Oh, we got plenty.
And then you've got the Chinese markets that have been weak all day.
They were super ugly today. I bought some Baidu, but that's it. I wanted to buy some FXI and I forgot. Let's see.
Mm-hmm.
Ooh, it's a little lower. Did I not? Yes, I did not get filled. I think I wanted to pay 66. It's down to 61. We will nibble.
People want to know, did Carlos show, Southnuff?
Carlos, my man.
Carlos shows he gets to live and work another day. I like it.
Yes. Carlos shows he gets to live and work another day. Absolutely.
Schwab has earnings too. I should mention that to you. I'm sorry. My buddy Peter just reminded me.
Oh, a little Charles Schwab action.
Yes, sir. You've traded in the past. Just wanted you to know.
Yeah. Got a bunch of emails from Schwab customers say they were not happy about some kind of, they're messing up my old baby.
I know, some update or something they were doing.
Yeah. They're messing up my, what's the symbol for Schwab again?
S as in Sam. Yeah. S as in sucks. S as in sucks. C as in sucks. H as in sucks. W as in sucks.
SCHW. Been a long time. Oh, it stock's back to $75. I have not traded this since it was 48 or 50. I knew it was a good buy down there. Don't like it at $75, but who knows?
Gotcha. Don't worry about it. I've got some people who might have something to say about something. Let's bring in my three amigos, Ilya, Chris, and Dylan. Standing by. Hello, boys.
Hi.
Hello.
Hello.
Where's John when you need him?
Boy, talk about markets moving around. The NASDAQ was just down 10. Now it's up 60.
Spoos are up 13 at 16. I see it.
I mean,
you put the kibosh on them.
The NASDAQ just rallied 70 handles in exactly 2 minutes. And the S&P's rallied, 10 handles in 2 minutes.
Mm-hmm. Yep.
Somebody wake Dylan up. I think we lost him.
No, he's there.
Are we here? What are you doing?
I mean, I see you. Is everybody there?
I'm sitting here.
Yes.
I'm waiting. They
All right,
said
beautiful.
the camera. They said they're checking on the chicken. They said they're looking for the thing.
Say hello, everyone.
Checking on the chicken.
Yeah. I mean, if the chicken is ready, call me.
Understood.
I have so much to say about that because I was just barbecuing some chicken before, so I feel like I'm in the zone. Like we're
speaking the same language. My metaphor is landing because it's that time of the year.
Yes. I'm cooking.
I
some
just would like to
boneless-
say that I've gone full bullish, showing first of all the weakness of my positioning in any mental or philosophical standpoint, and the fact that I've decided that whatever Chris Vecchio says, I will do.
And I was going to mention that the boneless chicken thigh is an amazing is an amazing invention. And
I agree with that.
Yeah, the boneless chicken thigh is it's kind of a game changer.
And pound for pound, it comes off at a very nice price point and it delivers an incredible flavor burst, a little extra fat. I'm big on the
Dylan, stop your bullshit. And I see you on Instagram sitting out at the piazza, enjoying yourself, having a nice time with the women.
He's allowed to do that. He's allowed to do that.
It was a weekend. It was a summer weekend. I went to Rome. It was nice. I had an amatriciana. I visited the People's Piazza. I went to visit my friend the Pope to check on the rosemary.
Is it still fresh?
Yeah, they're doing the procession. They're preparing the next procession. They're growing the crop.
You went to pray. You went to pray for
And
us
so
in
we know
America,
how wide the
I'm
NASDAQ
sure.
is back up.
That's right.
Exactly.
That's
I went to pray for my long NASDAQ position after I reversed, which kind of worked, although not as much as I wanted it to.
So the last 2 days, the tape action, Chris, has been really ugly in the last half hour. The NASDAQ sold off on Friday like 200 points. It sold off 250 points today. And it doesn't seem like there's any fall through or anything like that, but it has been very strange tape action. Anything are we just churning or is there something here?
We just
I think a fund may have shut down, or at least some funds that have had significant short positions on in small caps in recent weeks are getting taken out of the woodshed right now. There's been this churn in the market where on days when the Russell's been really, really strong, the NASDAQ and the S&P have trailed. And that's happening here for, we could call it a third day in a row now. It feels like the winners are being sold down to cover the losses that the shorts are being covered right now. So is it bad? No. Is anything to get alarmed about? No.
You think there's a fund out there you think there's a fund? Why would a
funds
fund go?
are stressed because they were short small caps because of high rates.
Why would funds be, if you're going to be short small caps, why would you do it with the actual stocks? Like, it doesn't make any sense. Like, why wouldn't you just use the futures?
Yeah, you're doing with RT. But if you've had a long NASDAQ short Russell pair trade on all year and it's been levered up last Thursday, forced you to rearrange the chairs on the deck and then some. Look, this is a problem for me, though. I want to see a rising tide everywhere. I don't want to see the baton being passed back and forth. It shouldn't be Russell's up and everything's down.
What I'm saying is that it doesn't make any sense because if you were short the Russell all year and long anything else against it, you're up huge. There's no way you could get squeezed short in the NASDAQ. I mean, other than 1 or 2 days. I mean, there's nobody who's been short the NASDAQ this year that's not up a fortune relative to whatever they were long against it. So I don't see that as I don't see how that would be the issue. Like I don't that doesn't.
I'll pull the data for tomorrow's. Let me explain to show that there was a pretty significant short covering rally in small caps that occurred starting Thursday morning.
Don't you dare bring facts into this argument.
I don't deny that at all. Of course, I don't. I'd like to talk about that tomorrow because I agree that that happened, but whatever you were long against it was a much bigger winner. Anyway,
depends when you entered.
And so maybe there is a round of profit taking because people have decided that as big of a winner as it is, it's not going to get much more of a winner from here, which would of course be music to my ears.
Okay.
Did you lose some weight, Sosnoff?
No.
You're looking very slender. It must be those boneless chicken thighs.
Yes, it's the boneless chicken thighs. It's actually this particular camera. It's very slimming.
It's the Ozempic camera.
I haven't tried Ozempic yet, but it's on my list of. I'm already highly medicated, so I don't want to be. I want to be careful that I don't.
You don't want to throw off the mix, the balance of the mix.
I'm still alive.
Mixture.
Medicine's keeping me alive, so I want to make sure that I don't.
You don't want to F it up.
Maybe we could get some medicine for your P&L. Let's take a quick 90-second break and come back.
No,
We got more.
Today we made a nice comeback.
Today you made a nice comeback, yeah. So take a quick. Even the S&P made a comeback, by the way, up 21. Nasdaq made a comeback, up 73. The Russell never goes down anymore. It's up 40. That's the lead in the clubhouse. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Thank you, gentlemen.
I'll tell the women in Campo di Fiore you said hello.
Please do, my friend. Please do.
Love a little Campo di Fiore.
Yeah, and you like the.
What? Campbell's di Fiore?
I have no idea what he said.
It's the
I was
Campo
just
di
parroting.
Fiore where you go for dinner after the procession of the Rosemary.
Oh, yeah.
Tony, what are they doing to our boy, the Italian language? What are they doing?
I don't know what to tell you.
Oh, the old procession of the Rosemary. Yes. I forgot about that.
Listen, it started with the Council of Nicaea.
Of course.
When they first wrote the Bible.
Of course. Yeah.
Look at you. He's basically Italian now. We've lost him.
No, we've gained Italy. This is an imperial act on behalf of Tasty Trade. We have acquired Northern Italy.
Tony, you've gained a brother.
It's a wonderful thing. I've always wanted another brother. I have a few already.
I'll be careful not to put Piazza del Popolo on Instagram again, lest I spark your ire.
My interest. All right, I'm going to say goodbye for sure now. So I will overtime next with those three gentlemen, Chris, Ilya, Dylan. Peace.
Yes,
enjoy.
Sir.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I hate puns, but that one was okay.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
The market went up and then it settled a little bit lower. It's Monday, July 15th, 2024. This is Overtime. I'm your host, Chris Vecchio, the man in blue, Dylan Radigan, the man in orange, Ilya Spivak, here to take you through the next 53 minutes as we get ready for this futures market close on Monday. What an open and what a day it was. Quite frankly, I think all eyes were on the 6 p.m. Eastern futures market open yesterday to see how the world reacted to some harrowing news over the weekend. Former president and Republican candidate for president Donald Trump attempted assassination at a rally in Pennsylvania over the weekend. Fortunate timing, a gust of wind, former Japanese Prime Minister Shinzo Abe interfering from heaven. We don't know, but he survived. And obviously the market responded in a way that was almost typical. After Reagan's attempted assassination attempt by John Hinckley, the S&P 500 traded higher the next day by 1%. While the S&P 500 went down by about 2.5%, closer to 3% after JFK's assassination, it did rebound and cover those losses within 3 days. So as we look to these markets today, we did have some very harrowing and quite frankly scary news that came out on Saturday evening, and the market is taking it in stride. I suppose we can start there because volatility is up here. Dylan, are you surprised that there's not more vol in the market after this weekend's events? Do you think that this is the start of a period of new volatility for the markets that we have to contend with this election season?
No, I mean, I think it's quite the. I actually think that the market is increasingly stable because I think the market is increasingly confident that Donald Trump is going to be the next president of the United States. And I think that there is an expectation that what obviously was a terrible event, period, as any attempted murder of anyone is, let alone a political assassination through the hand of God, to your point, basically. I mean, it's beyond any rational look to have wind. I mean, it's 1 centimeter from death. But at the same time, it is what it is. And I believe that that it established Trump in a way that was not established before and increased the certainty of his status as frontrunner, which I actually think is stabilizing for the market, not destabilizing.
I don't really assign any importance to the weekend's events, to market outcomes whatsoever, because I don't think that anything that's occurred, thankfully, nobody that would change the race was hurt, and so the race remains essentially unchanged. So I don't think that this ultimately, beyond, let's call it, a week's worth of news cycle, alters anybody's voting intentions. And so with that in mind, I don't think this means anything.
I don't know about that. I think his pick of J.D. Vance today was pretty instructive about his mindset here. J.D. Vance is probably the riskier of the three candidates among Doug Burgum and Marco Rubio because he's the youngest, the least experienced. He's also perhaps the most aggressive of the three. And so if you were going for the steady hand, you need to show that there's going to be reliability. You probably go for the Burgum route, depending upon what you're trying to achieve. If it's more foreign policy focused, maybe Rubio. But with Vance, it's almost a sign of confidence that he picked him. Like Dylan, I think that your read on the situation is right here. At least it agrees with mine.
Do you think it was a game time decision?
I think that this decision was made within the past 6 hours. I think what happened over the weekend changed the calculus of that, because if you look to the betting markets, we shared the predicted odds today on Futures Power, and we can pull that in shortly here. Trump's at cycle highs. And that rotation really started on Thursday, June 27th, during the debate. And I think when you look at the weakness in the bond market today, it's because you're seeing an increased outcome, an increased likelihood of that Republican trifecta again. Trump now looks like he's going to win handily, right? He's a sympathetic figure now. Forget about turning over
and he's a
undecided
courageous
voters.
figure. And he's a courageous figure.
The political instincts to stand up and raise your fist in the air, and that image now is it's going to be one of the most recognizable images in American.
It's an iconic
history.
image in U.S. history at this point.
But it changes now where the market comes into today, and why is the bond market weaker? Because we could take our safe havens off. Well, no one put those trades on Friday, thinking that something would happen over the weekend, right? Market was up, bonds were up on Friday. If anything, it's like, the odds of a Republican trifecta are slowly rising and creeping up. So all those concerns about deficits and debts changing trajectory to a more open path where when you have a full majority, really you can do anything you want. That's now on the table. And that's how the market reacted after the last debate. I think that we can't dismiss that this is a market that's processing, at least looking through the eyes of how fiscal policy may change as a result of the weekend's events. Other than that, though, in terms of a lasting reaction, history tells us the reactions to these type of things are very limited in scope. Again, JFK, all the losses were retraced within 3 days.
So listen, I'm like this. First of all, the immediate perception of Trump as front runner and high probability winner has gone up because of the events of the weekend. That is a fact. 2, the probability of a majority control as on a tailwind of that maybe has gone up a little bit. 3, the chances that this lasts longer than a week, very low. That this is a momentary bump due to the glorious footage of the bloodied presidential candidate defiantly standing in the face of those who would murder him.
I think, Dylan, you raise a more.
But I don't think it lasts. I don't disagree with that. And I do think it's. Our job. I'm interested in this from a trading perspective.
Mm-hmm. Well, that's where I want to go with this, because I think we have a base case scenario now, right? The base case scenario for the market, as of, in my opinion, Monday, July 15th, is that Republicans are going to have the House, Senate, and the presidency. If Donald Trump's odds go from 65% or 70% to 100% in the betting market, I think that's less of an impact than them going back to 50-50. Because if we go back to 50-50, the base case scenario changes. We go to, maybe the Democrats hold the Senate. Maybe if the winds change the right way, they can pull the House. And quite frankly, it's July and a lot can change over the next 3.5 months still. Mm-hmm. But Dylan, when you say that the market is at a level of comfort, this is our expectation for who's going to win. These are the policy packages he's going to bring with him. And the weekend's events only push us further into feeling more confident about that particular outcome. I agree with you wholeheartedly. If we want to see a destabilizing event in financial markets related to the election, assuming that nothing terrible happens, we have both candidates going to November 5th, it'd probably be Biden pulling even, because it would force everyone to reassess their outlook on debt deficits, what that could potentially mean for Fed hikes. Is that good for green energy, for EVs, yada, 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 yada?
I think the important thing here to remember is that the price action does not tell that story. That may be the story as it presents itself over time. Certainly is a sensible way of looking at things in one scenario. But the S&P has barely changed today. Bonds are barely changed today. The dollar is barely changed today. There is relatively little movement in these markets. Sure, there was a gap higher in stocks. There was a gap lower in bonds, all of those things. None of those moves are finding follow through, and none of those moves are even showing signs of progressing beyond the levels at which the gaps occurred. If we looked at the S&P here, obviously we have it on the chart. Yes, it gapped up and has now given away all of its intraday gains to be exactly where it was left over. Same thing for the NASDAQ, same thing for the bonds. They gapped lower and have since come pretty much all the way back. So all of this is a narrative at this point that the price action is not validating.
Yeah, I mean, to your point, Ilya, if anything, the market's behaving like a summer market.
Right. So there is no question that it got a very big jolt over the weekend, and there were gaps in response to that news, and the markets went, whoa, okay, hold on, whoa. Nobody had this in the forecast. But it is likewise the case that they are not doing anything with the information beyond some intraday jostling. So maybe Trump's rising odds in the wake of this over the course of one day, which I assign no significance to whatsoever, it's one day, and the polls have been meaningless for years at this point. So I don't really put much stock in this, but maybe this has followed through. Certainly, I don't have anything to say that it won't. My crystal ball is not any finer tuned. But the price action today doesn't suggest that this is anything at all.
Well, it shouldn't be anything at all.
It shouldn't be anything at all, right?
Because the market was trending. The market was already favorably priced towards Trump, right? I think about how I go through the history.
Yeah,
of
that's
Fed
what I'm
pricing.
saying. Trump became marginally more probable. I won't even quantify it, but just by the drift of the moment, slightly higher probability. Can I ask you a question, Ilya? Or sorry, go ahead, Chris. Go ahead. Sorry.
Well, I was say, doesn't that reaffirm the notion that Trump being the winner? We see how the election odds went up over the weekend in the betting market, and obviously those aren't polls, and there's a specific selection bias if you're in the betting market. Nevertheless, the fact that the betting market went up the way that it did, and the market in reaction to this news didn't really change all that much, doesn't it tell you, isn't it revealing that the market has arrived at the consensus right now?
Or that the market doesn't care about the betting odds, which I think is a more reasonable perspective. I don't think the market should care about the betting odds. They are based on very low liquidity.
I think the market thinks Trump or Biden is going to be irrelevant.
I think that's about right.
It's more deficits and more debts. It's just whether or not you have gridlock or not.
It's more debt. It's inflationary, and it's an onus on the Fed to see what the competent side of economic policy making will do over the next 4 years.
I think about if Trump does his tariffs, does that mean more structural inflation? Does that mean when the Fed cuts, they have to cut to a higher level? The terminal rate is higher because there's more structural inflation now in the economy, right? And so after Trump won in 2016, it was stock positive, odds down, US dollar up.
Mm-hmm.
Screamed like that for a little while. So that could be a good thing for the dollar here, which is having a rough few days. But regardless, Dylan, you were asking something of Ilya.
I don't want to go too far afield, but I just had a question for Ilya, just for like an insight as to one of your points of analysis. I can see where Donald Trump ultimately is not going to create too many more marginal voters as compared to however many voters he had in 2020. I'm referring back to a reference that you've made a few times where you say, listen, you're running the same experiment twice. You run the same experiment twice, but especially with a huge amount of data, you tend to get the same outcome because of normalization, as long as you've got a really big data sample, blah, 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 which obviously you have.
Well, and because of trading psychology.
But here's my question. I can see where you wouldn't get more Trump voters and why that would, but I can also see where you would see a material reduction in Biden voters.
So that's
not that Trump's going to have more voters. It's that Biden's going to have less voters.
He'll get better turnout. He'll get better turnout. His voters are going to turn out for him now. Trump's voters are going to.
I think that's
his turnout.
I don't think that's going to matter.
The reason I disagree with Ilya has been not because I think that you're wrong about the two experiments. I think that this experiment, the second time, that the engagement to support Biden is going to be much less than when it was, where it's like, oh, it's a vote against Trump and Trump's got to go and COVID and blah, blah, blah.
That may be the case. I think we're going to have to see. My sense is that that's probably not what's going to happen because, again, my argument fundamentally is rooted in my observation of trading psychology and in particular of retail trading psychology over now going on almost 20 years. And the abiding sort of feeling there is the hardest thing for a trader to do is to cut a loss. And the only thing harder is to not only cut a loss, but to flip a position in the opposite direction. Nobody likes to be wrong. Nobody likes to admit that they are wrong by taking a loss, and much less by flipping something in the opposite direction. That is the hardest thing for traders to learn. It is very easy to learn analysis techniques. It just takes some time. It's easy to develop some level of competence in using those analysis techniques, whatever stripe of analysis you choose to develop a better than 50-50 edge, be it the tasty methodology, be it this kind of analysis or that kind of analysis. There are many, many ways of doing this. And whatever that is, you can learn it and you can do it. It's the risk management that's always very hard, especially for new and retail investors, because of the psychological difficulty of taking a loss and much less saying, not only was I wrong, but that I was wrong is telling me that to make money, I should bet against my own convictions and to flip the position. That tells me that the people who put the trade on in 2020 are not going to flip their position. So if the candidates
I don't
are
disagree with
the
that. I
same-
just think but they have the option to not trade to stay with your benefit.
No, because they're in the trade already.
I'm going to pull my chips.
No, because they're in the trade
No,
already.
they don't have to. A Biden voter doesn't have to vote for Biden again. They can just.
I think psychologically, the trade is on, and as long as it's the same exact position, the tendency for retail isn't to flip over the position; it is to double down.
But you can just not play. You're presuming there's only two options, which is not.
My expectation is that given a binary choice, people will say, "No, I was right," and I will double down. So I think the onus was
right, but you're not accounting for the number one voting group in America is people who do not vote, and nothing creates voter disengagement more than dementia and con men.
I think if you rerun the same experiment from 2020 that you ran then, if you rerun it now,
I understand what you're saying.
I think all of the people that pulled the lever last time.
The point is, it's not the same experiment.
No.
Your assumption is incorrect.
I hear what you're saying, and here's my answer. My expectation is that all the people that pulled the lever last time are going to pull it this time, and that they are going to pull it in essentially the same way, barring very insignificant deviations, maybe.
Pennsylvania was won by 1.2%, Ilya. A 1% swing in turnout in either direction. It flips the state.
Maybe. And so I think my expectation still is if you rerun the same race, and by the way, it may not be the same race, in which case this analysis goes out the window. The biggest threat to the Democrats' case here is to lose incumbency. And how you figure that the current internal rift in the party is not going to lose them incumbency is at this point very much up in the air. But
I don't think there's a rift
anymore.
anymore.
Rerun the same contest, I very much expect Joe Biden to win.
Everyone's resigned to losing to Trump. What's the
So
point
you're
of
saying
replacing
the
the top of the
transition is
ticket?
that there's no Biden replacing Biden, that the dead horseman will ride it into the ditch, and that Trump will win.
I think resources are going to shift down ballot very quickly if Biden does not choose to get off the ticket within the next week.
Okay.
I think you're going to see the Democratic Party say the odds are against us. You're going to have strategists who are pulling up every other. What happens to the incumbent who survives an assassination attempt? What happens to their polling? What happens to the party if the assassination attempt succeeds? What happens to the party? Without JFK's assassination, do we get the Civil Rights Act? Lyndon Johnson was able to corral the public's anger around
because
JFK's
of the
assassination.
unification of energy and focus.
Right. You know, Reagan, he got a big bump in the polls. I don't particularly care for the analysis where people are saying he had a landslide election in 84 because of the assassination attempt in 81. That's a very long time. But still, his poll numbers started to rise right thereafter, and he was sitting at very record low poll numbers. So you sprinkle in better poll numbers, total dissatisfaction with the incumbent, but dissatisfaction
Trump
with the
is not an
Trump,
incumbent.
But Trump, he's former president.
He's not an
Trump.
incumbent.
But we've never run this experiment before, not in the modern era. It's not like George H.W. Bush came back around in '96 to take on Clinton.
No.
Right? We haven't seen this.
But not to come all the way back around to the horn to the back of the beginning of this show, but the market is fantastically comfortable with all of this. They're okay with dementia. They're okay with an assassination attempt. They don't really give a hoot about any of this. They don't care about what they don't care if Biden is full fruitcake or if Trump is full con man. They don't care.
No, and so I think that is a testament to the fact that all of the back and forth that we've seen in the odds on betting markets, that all of the breathless headlines we've seen from every which place have absolutely zero consequence on what actually happens in markets. Whereas if we look on this chart here and we say, let's see, over the past couple of weeks, what has had an impact? Only one thing, CPI. The market cares about CPI. It doesn't care about any of this. And I maintain that if you run exactly the same two people as you did in 2020, you get exactly the same outcome.
Well, I see that GOP odds, according to Predictit, for holding the White House on June 26th, right before the debate, were 55 cents. Immediately after the debate, they jumped up to 59 cents. Prior to what happened over the weekend, Trump odds effectively 60 cents. Now they're sitting here closer to 66 cents.
So
I think this is like the Fed
increase.
I think this is like the Fed threshold thing, right? Go back in history, effectively since 1996. Not effectively, since 1996, anytime the Fed has priced in at least, or at least the market's priced in at least a 55% chance of Fed action on the day of the Fed meeting, the Fed has done so 100% of the time. Obviously, it's July, and I'm not saying place a bet here on Predictit based on these odds and just they're selling dollars for 66 cents here, right? That's not the suggestion. But it's as long as we probably stay above 60 cents threshold here where the betting market feels like this, then you could probably transpose that into saying that the stock market is going to be unmoved by the day-to-day gyrations in the race. It feels like a lot of significant things have happened because the debate performance was historically bad, and an assassination attempt on a president is obviously terrible and, quite frankly, a little bit more frequent in American history than I realized when I was looking it up over the weekend. Mm-hmm. Nevertheless, unless we get to a point, right, Dylan, where we're thinking about maybe Biden has a real legitimate shot. Maybe it's not going to be a Republican trifecta.
I just came up with an idea of how Biden could theoretically win, which I'm sure I'm late to the party on this idea.
He gets shot more.
No.
He gets shot twice.
What if Biden was to drop Kamala Harris and put in a more immediately popular, viable vice presidential candidate, on the implication that Biden's going to be gone within a year no matter what, but that Biden's not going to leave the ticket. He'll run as a beard for the vice president in waiting. So the political strategy is leave the dead man on top of the ticket because you can't convince him to drop out, but put a different VP candidate there that everybody that polls the best against Trump. Anyway,
why not just put that person at the top of the ticket then?
Because Biden won't resign.
In my mind, the most favorable set of circumstances for this race to even back out, if you're the Biden campaign,
is for Trump to open
is
his
to
mouth?
just let the thing blow over. And if we look at the way that the Trump campaign, both in 2016 and in 2020, approached any sort of situation that the media started screaming about was, this is definitely the death punch that kills it, this is this is that, they just deny and keep moving. And the strategy from the Biden campaign seemingly is, well, we've learned the lesson that the Trump campaign is teaching us here. We're just going to circle the wagons and keep moving. Though, of course, in their case, the circling of the wagons isn't working because people in the Democratic Party are revolting. And now we're going to have to see if they're able to put the revolt back in the box. We've seen a lot louder attempts at doing that. Michigan Governor Gretchen Whitmer made the rounds across media outlets this weekend. She's a co-chair of Biden's reelection effort, and obviously somebody who's often mentioned as a possible replacement for him. And she was out there screaming, listen, we're doing what we're doing. We're not paying attention to all of this. So the attempt at putting this thing back in the box is very much underway. I think by the time you get to the actual election, putting aside the fact that more crazy headlines are likely, obviously this weekend's events are a case in point, which can mean anything. But assuming that the situation dies down and you get back to these are your candidates, make a choice, I think you end up with exactly the same outcome as you did last go around. And that I think is exactly what the Biden campaign is betting on.
I have no idea what's going on with the Biden campaign right now. What I will say is that here's a little bear meat for those out there. Maybe it's a bearish rising wedge in the NASDAQ that's coming together here. We did kiss the upside of a trend line. Of course you did, up against the swing highs that we had at the end of April or middle of April, middle of June, which coincided with that catch on July 11th where we set the bearish upside engulfing bar key reversal. If we get below that low, 20,377 and a quarter, that's where I got it and scaled in to buy the dip in M&Q right near 20,400. If we were to get back below 20,300, you would then have a compelling technical case that the market is looking very heavy on the upside. And now that we're in the second half of July and starting to peer into the month of August, which I can't believe we're going to say is just barely 2 weeks away, right? This is the time of the year when vol starts to expand. And if the market convinces itself that, I think the RNC is going to be really instructive this week. If Trump's out there saying we need to take the temperature down, this has got to stop, blah, 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 blah. Maybe the vol.
You think that is?
I know, and part of me is like that. It's that meme, like we're looking for the guy who did this, the guy in the banana suit, right? And who's responsible for turning up the temperature in security guards? Not at all suggesting that he's responsible for himself getting shot, but
of course not.
He is one of the many politicians who have contributed to the rising political temperatures in the country, and so for him to take a tone that's, showing, magnanimity, he's above it. He's looking for unity and to bring things down. Maybe that angst about this election season being even more caustic. Dylan, I think you were hinting at that earlier. Is this the beginning or is this the crescendo? that keeps vol tamped down for a little while longer heading into September. But right now, this is the chart. It's still an uptrend. Is it a wedge? Maybe, maybe not. 12,300 and below, you could start to feel a little bit more bearish. Above there, it still feels like this is a market that has some potential. And now that we're in earnings season, do we really think that people are going to abandon ship when earnings have previously already put up some very, very, very good results? No, the AI companies, the tech companies, they have been putting up very strong numbers on the board. And so who's going to front run saying this is going to be the quarter they missed without any evidence to it just yet? So I think that's the line in the sand this week. Below there in the NASDAQ, you can feel a little bit worse about things, or in your case, Ilya, a little bit better. And in my case, I'd be feeling worse about things. Other than that, though, I don't think there's much ado. There's much ado here. It's 2 days in a row where we're just rebounding as people cycle out of tech and into small caps, or at least short cover small caps.
Yeah, I mean, I don't think that at this point what you have is conviction. At this point, what you have is a very ugly response to CPI, which speaks to something of a head change in markets. Last week, you got a bunch of dovishness. You got dovishness from Powell. You got that dovishness confirmed with weak CPI data. NASDAQ fell. S&P on the week. S&P gained only 0.8%. At the same time, yields plummeted. That is clearly a very different story than anything we've seen all year long. And in fact, a very different story than we've seen since late October, early November of last year. The entire rally since late last year, the fourth quarter rally, the first half rally, all of it had a very clear character. When something was decidedly dovish, the markets cheered. Last week was a very pointed example of not that, especially in NASDAQ, which obviously has been the leader in the entire race higher over now about 9 months. So there is something of a head change here. And in that, markets have now attempted multiple times, Friday, today, to run back into the highs and got consistently rejected over and over and over again, seems to suggest that something is different. Something is changing. And in my mind, sort of the likely narrative is, I've said this a few times last week and this week, it is as the proverbial dog that caught the car. It's nice to speculate on rate cuts that are a quarter away, 2 quarters away, while growth holds up. But when the rate cuts are right around the corner because growth is not holding up, and U.S. economic data has been deteriorating relative to forecasts now for essentially a quarter, now you have a clear and present cyclical concern. And so dovish type of news in its immediacy now suggests some sort of a growth downturn is around the corner. So I think retail sales might actually matter more than earnings this week. But all of that is to say, if the markets have decided that the rubber band has been stretched far enough, there's not one piece of news or another that's going to fundamentally alter that. The odds of a cut are in.
There was Coca-Cola. So not every company is experiencing the same thing here today. And I know some people, I was looking at the chat, like, why are we talking about this? Can we move off this? There were companies in 2017, 2018, 2019 under Trump's tariffs that had very significant hits to their balance sheet as a result. They had to take operating losses of $100 million, $200 million, material revisions lower because of what the tariffs were doing for their bottom line. And so if we see tariffs like that put back into place, it does potentially shuffle out or filter out some winners and the losers. If you're an American company who imports a lot of your goods from China, you're in deep trouble. If you're an American company who builds things here, who grows things here and sells them within our borders, you're probably going to be better off. And so if you think about a company like Coca-Cola, which imports metal from China, aluminum for China for its cans, since June 27th, the stock has been trending lower. Today, in fact, after a bounce the past 2 sessions, which coincided with a little bit of a rebound in Biden's election odds, I will say Coca-Cola today is one of the stocks that has a decent loss in the session, down by 0.41%. It was one of the companies that was more significantly impacted during the 2018 China-U.S. trade war. And this is actually why I find this interesting, because I can pick off a list of companies that I've been compiling that I think would be exposed if Trump becomes president, and I could use them as shorts within the context of my overall equity book to balance out my bullishness elsewhere. And I think that's for me is like the wonderful thing. I can find some individual stocks that look like they're going to suck and I could short them. And so if they're going down, well, the broader market may not be, but if the broader market's going down, you bet that these will. At least I would think that they'd be going down a lot further. So that's how I'm trying to put some trades on here and get some ideas percolating for people. Let's look at companies that are exposed to significant tariffs. As long as Trump odds stay high, those tariffs probably go into place. If he has a trifecta, almost certainly going into place. And then these companies may see drag, even in a bull market. Investors may reassess their earnings potential moving forward. That's my spiel here. Dylan, you haven't said anything in a while.
But you're saying, so what? Well, tell us the names, my man.
I haven't compiled them all yet, right? I want to find companies that have very specific criteria. I want to know that, for example, Apple, when we find out about Huawei and releasing new phones, we see that it leads to a great deal of indigestion. But what's the actual material impact on their bottom line, right? If China sales were zeroed out, what would that do for Apple's earnings? And if we were assigning it the same price to earnings multiple, what would that mean for the stock price? So similar here, if we were to increase the cost of the metal that Coca-Cola were to be importing for its cans, what would that do to their margins? Assuming current PE ratios, where would that stock price need to be trading then? Would the market give it the same valuation if it has this trade war overhang on it, or might it reduce its valuations as all? That could be a duplicative effect of bringing down the share prices. So I want 10 specific companies to have on a very specific watch list. And that's going to be my big thing on Wednesday for overtime, because on Thursday, I'm not here. I'm reaching the midpoint of my 30s, and so I have to sit around and reflect, as it's my birthday.
You look good. I thought you were younger than that. You look young for your age.
Thank you. It's all the stuff my wife makes me do at night, which is just cold water, and then I go to bed, and somehow that works. But I'm entering my leather handbag here as being Italian.
A great quarter trading will do that for you.
No, it's now being Italian, right? Like the leather handbag face years are coming on soon. So you're lucky, Dylan. You only live in Italy. You still have your looks. Mine disappear in like 4 or 5.
Yeah. No, I wouldn't worry about it too much. But I would like to get to some trading discussion here, because I'm with the chat room. I'm getting a little bit tired of this nonsense. My concern is that the stock market is somewhat on the boring side. All politics aside, what do you got? Oil up here?
This is oil. It feels like we're doing a similar dance that we did a few months ago.
The whole thing's like stuck in neutral, man.
It is stuck in neutral, and it looks like it's giving us a little bit of a similar topping pattern as we did back in March, April, May. Not quite as robust or long in duration, but if we go to an 8-hour chart, you could see here that maybe indeed we have a new top to play with. Below $80, I personally would feel a lot more comfortable. I'm still holding short. I know both of you guys are still holding short, so this is an area of agreement among the three of us. But to that point, you get below 80 with a $3.60 neckline, because we'll call it 83.60 down to 80. That gives you a potential measured target of $76.40. And then this time, I am not going to screw it up. It's going to hit the target. I'm going to get out. We're going to be copacetic and not be a fat little piggy here. But I think this is the chart to watch in the next few days. It's divorced from anything going on in politics, anything going on with the Fed, which, by the way, we need to talk about what Powell said today.
Yeah.
But I assume both of you guys are still comfortable holding short.
Yes. I think the price action here, especially if you look at shorter term charts, still very much suggests this thing is rolling over. I don't think that idea has been invalidated here in any kind of a meaningful way. So yes, I'm still short. I have it on as a USO vertical, but I'm still in it. Also on the commodities side, Chris, I told you on Friday I bought a little silver.
Which, just I'm speaking the book of Radigan here, as I don't know where I'm going with this. Silver $30.90.
The quarter is back on. Is
Are you a buyer, Chris?
Oh, Ilya's now a buyer. Hey, he's joining the ride.
I know.
I think this is, look, we have a pretty clear consolidation here. We know that 29 is the line in the sand. We have a sideways move that's been playing out now ever since we broke into the range. There are really two ways to... Yeah, the range bottom's holding, the uptrend's holding. Look, there's two ways to slice this. You would think that because we're getting so close to a potential decision time that a breakout may be around the corner. Just for this week, though, I would even consider, if I really don't want to be directional here in gold or silver, condors aren't the worst idea. Put it on with like 45 days to expiration, maybe 36, and hang out with it this week and see how it works. Because the vol there is still on the board. It's not super high by historical standards, but 48.6 in silver. And then GC here, this does look a little bit more directional. Like 24.75 is due. Destiny is going to arrive. The highs for the year look to be tested. And that's why if I'm going to have any bias or bet here, it's got to be long still. Gold, 2,600. Silver, $43 an ounce. Nothing's changed for me. But I'm glad you're on my team now, Ilya. Let's go. Dylan, you got to help get some flow going.
You guys might coax me in. Gold, I can't get involved. There's no security on earth that I feel like I have less confidence in an opinion of than gold. I can't do it. I'd rather buy the Japanese yen than do anything with gold. That's how uninspiring I find it. But I'm happy to stand by while you guys take your shots. The crude oil put, sure. I got a pile of Apple calls, which I quite enjoy. I'm happy to talk about the bond and all the rest of it. But when you're there's Apple. Apple's been very friendly.
As they do in your land, right? It's 234 now. The upgrade cycle has yet to be announced. A flashing red headline just came across my screen, Dylan. Apple has announced that it's going to be releasing its new iOS 18 early to the public in beta mode.
Oh, boy.
Does that mean we're going to have some features that are on the iPhone 15 that may be compatible with AI? We'll see.
Could be.
New features. It's in beta test still. We'll find out more. But Dylan, this has been the single stock. I mean, what? I was on the phone today talking with someone over at Morgan Stanley, and we were both of the mindset that we're still very much in the early phases of the AI cycle, and eventually the winners aren't going to be the companies that are selling the picks and the shovels, right? Right now, it's still very much picks and shovels. Apple is inherently a pick and shovel company. It's not making the GPUs, but it's giving you the hardware that you could put into your pocket to have access to this. And it's not just having access because you have an app on your phone, right? It's hardware. It's built in with the phone itself. So we've been talking about this for 2 months. I think this harkens your upgrade cycle that Apple investors desperately need. $300 to me is not outrageous as someone who's owned Apple for a long time. I'm going to hold what I own in perpetuity. Hope to give it to my kid one day.
And I'm going to get an iPhone 16, and I haven't bought a new iPhone in years.
There you go.
The only thing that might give you pause here is, of course, that all of those things could be, and the stock need not go up to tomorrow or the day after, right? All of those things are narratives that are long-term narratives or longer-term narratives. And what you see, if you look at the momentum studies that you have here, Chris, I mean, I think stochastics is a good one. You're setting higher highs, but momentum is not confirming it. And so the kind of negative divergence you're starting to see here now is typically something that speaks to fading, not building momentum. Now, that doesn't mean that we are going to see a downward reversal. As we've said a lot of times here, corrections can happen in time as well as in price. But it does look like what you're seeing here is a loss of upward momentum at the high. So maybe you see a pullback here before anything else occurs. So I'm not a buyer. I mean, in fairness, I'm not a big trader of individual equity names in general. I'm typically much more kind of macro and thematic in my exposure. But just on pure technical grounds, this doesn't look like something with good risk reward on the upside today.
Speaking of thematic trading, I've referenced this guy before, Citrini Research, James Van Gielen. He just did the latest episode of Odd Lots with Joe Weisenthal and Tracy Alloway. It was released on Friday. Fantastic listen about trading trends and trading macro themes in markets. And when he means macro themes, he's not like talking about macroeconomics. He means those overarching ideas like GLP-1 drugs or AI or oil collapse in 2014, 2015, what have you. Definite recommendation for people out there if they're looking for a good podcast on identifying trading opportunities in the market that you can trade for a number of years, right, in and out, potentially on the long or short side. Either way, though, guys, we have about 8 minutes left here in the show talking about what's happened in the sectors of this market on this Monday. Distribution was, when I last saw, was pretty good. I think that's a fair assessment here. Most up, not all. Biggest loser is utilities, down by 2.43%, followed by retail, XRT, which was off by 0.89%. On the other end, oil services, OIH, higher by 3.74%. KRE regional banks up by 2.92%. KBE, the bank ETF, up by 2.67%, and XLF 1.46%. Obviously, the last few days we've had some pretty good bank earnings here, guys. I was looking at my sector rotation economic cycle chart over the weekend. When tech leads and bank leads, those are typically hallmarks of an early stage expansion. Ilya, obviously that seems like nonsense from the macro point of view. Tomorrow we're going to get an important update, 2-hour macro view on the U.S. economy. Retail sales are due out 8:30 a.m. Eastern, 7:30 a.m. Central. The U.S. economy is obviously 70% consumption, so retail sales give us a fairly good monthly indicator into trends for how Americans are spending their money. And perhaps for our interest, we're going to get an Atlanta Fed GDP Now growth tracker update later in the day, which actually matters now because we're within the 2 to 3 week window from when we get the second quarter reads. So now we can look at this at face value and say, I feel confident in saying the U.S. economy grew around 2% this quarter based on the GDP data that's readily available. And we're going to get the next iteration of that tomorrow. Let's just start, I guess, there right now. We haven't talked about the Fed at all. Fed Chair Powell was speaking today, Elliot. We have these retail sales tomorrow. What did Powell say to us? What do we need to know? How are expectations changing as we wind down this final week before the Fed's communication blackout window begins?
Well, it sounded like we got more of what we heard in the testimony last week, which was a more dovish Powell than anything we'd heard from him in months before last week's outing. It sounded once again that he was talking about, well, we don't want to wait until inflation's 2%. If we wait, we've waited too long. We don't want to unduly hurt the labor market. If data keeps going the way it's been going, we're growing more confident. All of that seemed to sort of send this message that the easing is imminent now, that the Fed is going to give us a performative stamp of officialdom at the meeting at the end of this month. Then at Jackson Hole, we're going to get the annual lens refitting, where the Fed is going to come out and say, right, henceforth you shall look at economic outcomes through this purview. We'll see you in 12 months for another reshuffle. And all of that will set the stage for September to mark the start of the easing cycle. that stocks, again, didn't roar on this last week and aren't roaring on it today should be noteworthy because it is a very significant change of the dynamic that we've watched for 9 months now. And I think sets us up for a very different second half of the year than the first one. Obviously still very tentative, but the winds of change seem to be gathering.
Can't hear you, Chris.
Sorry about that, sir. There's a number of earnings releases out this week. UNH comes out tomorrow. Do you find that to be something worthwhile? Rather, UNH came out today. Let me pull up my earnings calendar here. So we had Goldman Sachs earlier as well. Tomorrow, come here. Thank you. Tomorrow we have UNH and Bank of America Corporation, Morgan Stanley, Schwab, PNC. Is this going to tell you an interesting story? Are we done with the regional banking crisis? Can we move on? Or should we be worried about what UNH, the biggest component of the Dow, may tell us about the healthcare system and its hack that it experienced 2 months ago? Neither matter for the market.
I'm not sure that this matters. We'll see. I think what you've watched in the Russell the past several days and the extent to which it echoes what's been happening in KRE seems to suggest that all of this angling for a more dovish Fed is helping to kind of soften whatever people thought was going to happen with the regional banks and probably with firms with exposure to housing and in particular commercial real estate. So that could be an interesting conversation to watch as those companies report and as those CEOs discuss. Because to the extent that that encourages a conversation about an imminent rate cut cycle, that conversation is relevant. But UNH, I'm not sure, is the kind of thing that's going to be a macro catalyst, as it were.
Dylan, what do you care about the next few days?
Yeah, I mean, I don't know. UNH, what can you say? It's good to be a ordained monopoly in the United States with everybody forced to buy your product. I mean, while providing basically no service or extortion services. It's also good to be a too big to fail financial institution. So whether you're UNH or Bank of America or Goldman Sachs or Morgan Stanley, it's your world and everybody else just pays you a fee. But I think that because of that, I'm not sure that it indicates anything because the large money center banks and the large monopoly health insurance companies may be the two most economically immune entities on earth. If anything, I think the question that becomes, is there anything, Ilya, to be had trading on the housing or the regional bank side, to pick up on Chris's question, because of the lower sooner component? I know we have a minute or two left here, but away from the big money center banks and the healthcare companies, there was a nice piece of juice the other day on the regional banks and on the housing side on lower sooner.
Yeah, I mean, I think you have to ask yourself here whether you want that kind of sectoral exposure. And I think the real question will be, are you going to have sectoral differentiation, or are you going to have risk aversion as a wave where everything becomes correlated? Where correlations go to one, these differentiations go away, and people just sell risk and go to safety. My concern is that it might be the latter, that there might be a generalized risk aversion that we're facing here because global growth has no safety net if a U.S. slowdown actually arrives. And so I would be careful about trying to pick sectors here.
Well, we'll have to figure that out tomorrow because overtime is now out of time for this Monday, July 15th. We'll be back tomorrow, same time, same place, right after last call, every Monday through Thursday, 4 p.m. Eastern, 3 Central here on Tasty Live. For the man in blue, Dylan Radigan, and the man in orange, I've been Chris Vecchio. Tasty Live at Night continues next. We're taking a brief break, and then Ilya Spivak is back with Macro Money.
See you there, everybody.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We built the Tasty Trade app for today's traders. See it, tap it, trade it. Deposit and withdraw money right in the app. View company financials, forecasts, news, and more. Set custom alerts to stay up to date. See things bigger in landscape mode. Get the customizable trading experience you want. The tools, the data, the knowledge. See it, tap it, trade it. Join the club, genius. Tasty Trade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
What happens when two titans of trading come together to harness the power of their prowess? Yes, let's watch these two dominate this popper shop. Wait a minute, I thought these guys were traders, not contractors. They're putting up a lot of bricks. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at Tasty Live, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
If you missed the live show, here's our cherry on top weekly recap.
You're making it seem I want to go.
I know you do. I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on. What did you want to do last night? I missed that.
Don't repeat that. No.
No. What did you want to do?
I do this every time I'm here.
I just want to know what he.
Every time I'm
what did
here,
he say
we gotta
he
go
wanted
down
to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Yeah, get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
the
up.
The thought of you guys is like sickening. I'm sitting here like this. Like, it's hot as hell in here. I'm like sweating. Like, it smells.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
I'm running Snow Leopard with this.
I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. I'm a Mac. Force, quiz.
The market's certainly a little bit unsettled, but ultimately don't do much of anything despite the weekend's harrowing political news flow out of the United States. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And we're going to look at the set of outcomes that we were presented with last week, which seemed to mark a very important change in the way that financial markets respond to economic news flow and respond to the expectations for what the Fed is going to do next, which has been, of course, a major catalyst for markets really for the past 9 months at this point, and consider what the story is likely to bring ahead. Because we appear to be in the midst of some sort of a head change for global markets here, and it is surely not lost on other market participants that the reaction function here is changing. So the question that naturally presents itself, and we'll unpack why here as we go through, is after all of the prognosticating around we're going to get a recession eventually, these rate hikes will eventually bring the economy down, so on and so forth, are we finally there? Is it now finally time to become worried in earnest about the path of global economic growth? So why even have this conversation? Where does this kind of a concern arise? Well, take a look at the way that the markets performed last week. And of course, the first thing that immediately jumps out is a massive decline in yields. The 10-year yield down 2.2%, the 2-year yield down 3.3%. So if we look across the curve, for the second week in a row, another give or take 2.5% to 3% decline, another major level shift in interest rates downward. Why did we see this? Well, Jay Powell, the chair of the Federal Reserve, of course, sat down for 2 days of congressional testimony, semi-annual outing that he does was last week, First, he appeared in the Senate, then the House. The message was exactly the same on both days. And the reactive part of it, not surprisingly, was on the first day when the markets initially got what he was saying. And it was a potently dovish tone shift for the Fed chair. He'd been saying for months that the Fed is focused on inflation, looking at a generally benign economy as something that is giving the Fed more time to hold rates higher for longer to make sure inflation is going in the right direction, that is lower. And the tone that we got last week was pointedly suggesting that perhaps that is no longer the mindset. That now Powell was talking about, we don't want to over-tighten. We don't want to unduly hurt the labor market. We are increasingly confident that inflation is going our way. All of which seem to result in a significant upshift in Fed rate cut expectations and a shifting of those rate cut expectations into this year from last year. So not only did we get more rate cuts between this year and next year added into the forecast, but we also saw more easing come into the front end of the curve, hence the 2-year here falling more significantly than the 10-year. So a rate cut ostensibly became more immediate of a prospect. On Wednesday, the markets had what looked like a spirited recovery until on Thursday, weak CPI data seemed to endorse what Powell said. Gave the markets a sharp shock lower. And so we see here that unlike anything we've seen for the past 3 months, the markets got closer to a rate cut. More dovish rhetoric, underpinned by more dovish implications from economic data, and stocks not only didn't like it, the leader for the stock markets over the past 9 months rally, the NASDAQ, actually finished the week with a loss. And where we did find strength, the Russell, the small cap index, seemed to find those gains because regional banks did better, housing-related issues did better, largely because interest rates were seen as likely to begin coming down sooner. The dollar wobbled a bit, although its losses were relatively contained. The euro up just 0.6%. The yen had a very potent rise. There's been a lot of speculation about perhaps it was amplified by intervention, but certainly the falling yields situation was helpful for the yen, as it tends to be. Gold a little bit higher. But it was really the strange response from stock markets that ought to have captured the imagination because, of course, this was a very important change in course. We can see here, even just ignoring everything back from, let's call it mid-April, although it would further reinforce this story, but even just the very near term. The latest leg in the move higher for the bellwether S&P 500 has come alongside a very potent build in Fed rate cut expectations. But as we see here over the past week, the index has stalled even as the outlook has become more dovish. We've shifted from about 130 basis points in easing expected last week now to 150. At this stage, the market has fully discounted 6 rate cuts over the course of this year and next. What's more, the outlook for this year, as we just mentioned, has become more dovish also. We can see here, after nearly 3 months of standstill around a consensus of one cut, now it looks like we are much more so leaning toward the possibility of 2 cuts from the Fed this year. They are, in fact, fully priced in. The market has discounted 53 basis points in easing this year, and another 100 basis points in easing next year. So it is very interesting against that backdrop that the market at this point is no longer able to rally in earnest, though that has been its main catalyst, let's say generously for 3 months, but actually going all the way back to where we started this rally, with the Fed essentially signaling, then making official in November, the November 1st, 2023 policy meeting, that the rate hike cycle is over and that easing is now on a countdown to begin. So, why is this? What could this mean, this head change in markets? Well, as we've posited last week, ahead of the CPI data and ahead of Powell's speech, it seems to be that as easing grows more imminent, its arrival becomes less and less of a supportive narrative. The markets are happy to speculate that there will be rate cuts in the future while economic growth holds up, which is a broadly supportive narrative. But once the easing is imminent, the implications are that the central bank now faces circumstances that are negative enough that it is beckoned into action. That at this point, because easing is just around the corner, speculation around eventual stimulus and the supportive nature of that speculation is giving way to worries about what would actually activate the easing, which is ostensibly some sort of a downturn or some sort of an intolerable developing trajectory for the path of economic growth. That is, recession fears. And it is with that lens that we are going to look at what comes next. On the U.S. calendar, the major release following a speech today from Fed Chair Powell, where he essentially reiterated what he said in testimony last week, is the U.S. retail sales report, where the expectation is that we're going to get a goose egg of an outcome on the monthly numbers. 0.0% rise is the forecast. That's a slight deterioration after a 0.1% increase in the prior month, and a redo of April's number, which was itself 0. What's interesting is that if we get anywhere near expectations, we're looking at the weakest quarter for U.S. retail activity since December of 2022, which would line up nicely with the ISM data that got released 2 weeks ago now, almost, that likewise told us that there was a shocking decline in vigor in the service sector, such that economic growth in June was the weakest it was since December 2022. Now, we've seen that U.S. economic data has increasingly tended to underperform relative to forecasts. Not surprisingly, here's mid-April. Here's where this move starts. That, of course, very neatly lines up with mid-April being here and this move occurring as this one does. So weaker data is more rate cuts, is happy stock markets until not. And the until not perhaps speaks to this dynamic finally starting to stoke recession fears. And with that in mind, to give the kind of change in dynamic that we're seeing from market-wide risk appetite. Not only would a U.S. downturn, whether we want to officially call it a recession or not, will be a question for Enber down the road. They're the ones that ultimately make the determination, the National Bureau of Economic Research. But some kind of an economic downturn is clearly now a source of worry. And if we get a soft number on this retail sales report, even softer than is already expected, then yes, easing might become even more imminent in the minds of investors, but that may not necessarily be good news for stocks or for cyclical assets more generally, like crude oil or copper. We're also going to get, outside of the U.S., a slew of economic data suggesting that a U.S. downturn is probably not good news, doubly so for the global economy, because there isn't an offset that's readily available to underpin global growth. Last week, we saw indications that China, the second largest economy in the world, remains firmly on the mat, and the GDP and economic activity numbers that we saw published over the weekend endorsed that perspective once again. Woefully disappointing numbers coming out of China over the weekend. GDP growth 4.7% against expectations of 5.1. Industrial production a little bit warmer than expected at 5.3% versus 5% expected, but retail sales sharply weaker, 2% versus 3.3% expected. So the story in China is still very, very weak. The story in the Eurozone, likewise weak, as we'll see momentarily. Those growth indicators have turned south. All of which speaks to weakness for global demand as a whole, because, of course, 50% of global GDP relies on just three economies, the Eurozone, the US, and China, and the other 50% relies on economies that are vendors to the former three. Which brings us to Canada. If the US economy is starting to turn lower, one might certainly expect that the country who's exporting to the U.S. 80% of everything it sends abroad is going to feel that loss of demand. And so, not surprisingly here, the story in Canada is an important lens, not only on what's going to happen in Canada itself, but what it says about U.S. demand. We're looking at CPI data front and center this week. The expectation is that we're going to hold at 2.9% at the headline, but that the core is going to slip back to 1.6%, echoing April's number, but a little bit of a downshift from the 1.8% that we got in the prior month. Leading PMI data suggests, though, that there's a significant loss of vigor in Canada's economy, such that the input inflation index from the S&P Global's latest survey here, sharply lower, in fact, slipping to the weakest in 3 years. And so the risk here might well be that this data surprises on the downside. If it does, that probably increases the urgency for the Bank of Canada to cut interest rates. That's probably negative news for the Canadian dollar. But it also would speak to a generalized weakness in demand in Canada, which might well echo a loss of vigor in the U.S., since, of course, Canada is inextricably tied to the U.S. business cycle. We're also going to get inflation data out of the UK. There, we're expecting to see that we remain at 2% for a second consecutive month, which is a 3-year low on inflation. Now, when we look at the makeup of this inflation that's remaining in the UK. We find that most of it, looking at May's data, at this point comes from discretionary spending categories. Recreation accounts for about 0.5%, and restaurants and hotels accounts for about 0.8% of the latest numbers. So if we were to look at where UK inflation would be if we just took those components out of the conversation, and to be fair, also took out the impact of fuel, which at this point is shaving down about 0.6% from inflation, we'd be left with an inflation rate of a mere 1.1%, taking the three outliers on the top side and the downside out of the story. And so with that in mind, we again are looking at a situation that is susceptible to weaker economic activity, which of course the latest PMI data reveals in spades. We can see here, this is the composite index on UK PMI, and we can see that this dip here over recent months is telling us UK economic activity is slowing. What's more, the City Economic Surprise Index from the UK has started to wobble and suggest that economic data outcomes are increasingly disappointing relative to forecasts. This is, again, seemingly indicative of slower global growth. And to the extent that this shows up in weaker inflation and perhaps surprises on the downside as these cyclically sensitive categories now holding up price growth start to give way, this is it right here. Here's restaurants and hotels. Here is recreation, these little bits right here. If they start to give way, then the British pound might suffer because the Bank of England might be seen as likelier to ease further. At this point, about 2 rate cuts on the menu for them this year, but that could yet firm up. The pricing is about 47 basis points. It could make it all the way to 50 and then perhaps even open the door for a little bit more this year and next. But it might also feed those global growth concerns that feed into the overall risk-off narrative that might be in the offing here. Then finally, we're going to get a policy announcement from the ECB. The expectation here is that rates will remain at 3.75% after they were cut in June from 4%. The outlook now calling for essentially 2 cuts. We're very close to fully baking that in. We can see that we're down to below 3.5% by October, so 1 more cut is already in. And then by December, we're 3 basis points shy of baking in 1 more cut. So a cumulative 47 basis points in easing on the menu here as well. And so we look at this and say, well, if there's no change in policy, what's likely to be a catalyst here? And of course, it's the press conference with ECB President Christine Lagarde, who will no doubt at least have some conversation around the fact that economic data in the Eurozone has once again taken a turn for the worst. Here's the composite numbers out of the region, and we can see that economic growth in France, as of June, shrinking at a faster rate than expected. Obviously, as we've said a lot here on Macro Money, PMI numbers under 50 point to contraction, and the further they go under 50, the faster the contraction. Above 50 is growth, and the faster they go, the further they go, rather, above 50, the faster the growth. So we can see in case of France here, we're below 50 and further down. So the pace of contraction accelerating in France. In Germany, we can see we're back to near standstill against expectations of robust growth. So very disappointing there. So too for the region as a whole, 50.8 versus 52.5 expected. to the extent that the ECB president flags this and says this only reinforces our desire to ease this year and boosts our confidence that inflation is going where we want it to go, we again get a growth scare. And of course, we saw that with their cut at the beginning of last month, the ECB top-ticked local markets. That was the major top. Since then, stocks started to fall, echoing this idea that once the cuts arrive, stocks no longer like them. If all of this news flow pointing to global slowdown, coupled with disappointing U.S. economic outcomes vis-a-vis retail sales, come together to give a meaningful recession scare more credibility, risk appetite across markets might well struggle. And we could find ourselves with lower stocks and perhaps even a stronger dollar as the liquidation that comes boosts demand for cash and for liquidity. And that is Macro Money for today. As ever, we are here every week, Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things are headed thereafter. I am on with Victor Jones for The Price of Truth on Wednesdays, back on with Chris for Futures Power Hour on Fridays, on with Victor and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, and opining sporadically on the platform formerly known as Twitter at Ilya Spivak. Thanks very much for joining. Macro Money's back tomorrow.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
We're back, Tasty Crypto Show. I'm Ryan Grace, of course. He is Frank Caberna. It's July 15th, Frank.
It's I don't think this is the Ides of July, actually. I think the Ides are only on the 15th for March and June and like one or two other months. I don't think it's July. Everybody knows the Ides of March. It's when Caesar got stabbed by his boys. But it does feel like a weirdly like an important mid-July. Does it not feel like it's like a lot of stuff is going on?
Oh, I mean, there's a lot going on.
The equity
Frank.
market's pretty.
There has been a lot.
It's pretty
going
boring,
on. Yes.
but it seems like there's a lot going on. Crypto.
I don't think it seems like it. I think like
It is.
objectively speaking, there's a lot going on.
I know, but it feels like there's like the ego of any one moment in time or like one generation is always like, oh man, like there's so much, like we can't. And so it's hard for me to ever be like, there's more going on now than in like 1343. Like, I don't know. But yeah, the last 48 hours, there's a lot going on. And the crypto market, I just have to start with this, because you asked me, it was a week ago, this very moment, you said, Frank, when is the selling going to stop? When is the selling going to stop? And today is one of those days we can thankfully employ the inverse of that, which is, where's the top? Where's the top?
20 million, obviously. Frank, before we get started, let me ask you one question.
Yeah.
How's your summer going?
So we lead off the show with,
it's the 15th of July.
There's a bunch going
Summer's
on.
almost over. How's your summer been?
There's a bunch going on. Crypto's up 10%. It was up 5% last night. It tacked on another 5% during today's session, nonstop. And then it's, how's Frank's summer?
Yeah, man.
My summer's actually been relatively boring. I was
Pull back for a second.
I was at the event on Saturday. That wasn't boring.
Yeah, I missed that.
That was really cool.
Sadly.
Saw some good friends and made some new friends.
Okay.
Which was a ton of fun. Of course, saw Joe and Mike and a bunch of other people. Sorry for forgetting everyone, but made new friend Marcel. She was fantastic, in from Philly. So the event was great. Summer has been relatively low key, but girlfriend moved into apartment, and so
good luck. Chat's open, by the way. If anyone has any comments, hit us up in the chat.
Or wisdom.
Yeah. Or has some advice for Frank more than anything.
It's funny because I feel like
times.
every single like family event or like every movie that I've watched where there's like an older person who's been in a relationship or been in maybe multiple relationship over their lifetime is like talking to someone in their 20s or 30s who's like kind of getting married or whatever. And they're always just like, relationships are work, man. Or they say like, just say that your partner is right all the time, and just like concede because it's not worth it. And man, am I learning that stuff in spades.
Not worth the fight.
These first couple of weeks. I just want to fight. I fight. I mean, I think it's because we're traders or whatever it is, but just like everything becomes like why'd you do it that way? My way of doing things is better. And that turns into like 30 minutes of us talking about why she locks the door a certain way, but I don't like to lock it that way. And it's a whole thing.
She moved in, you can eventually move out. Frank, let's take a look at the crypto dashboard.
Yeah, let's do it.
As you mentioned, prices ripping higher. In hindsight, certainly a buying opportunity last week. If we can throw the slides up, guys, we'll take a look at the dashboard over here. 63.5 on Bitcoin. I didn't think we'd see it this soon, off of close to 55. Up 14%, 17% for ETH. Solana's been the relative outperformer here. Certainly trading at a higher volatility when you look at realized vol of 90% there. Though, I really just think this is a move off of the lows. It's been chop fest 2024. We've talked about that. Good opportunity or environment for providing liquidity.
Yep.
But we were getting smashed lower every day. The Germans were dumping on us, Frank.
No.
Down 20% on the month. You're still in the red for now when you look at Bitcoin and ETH prices. So a nice bounce here, nice trade. You think we're going higher?
I have absolutely no clue. But what I do have to say is this is truly a great example of what Tom says all the time and what the network was founded on, which is like, you literally know nothing. Like, you can't possibly know anything about how this stuff, you could be fully tapped in to, you're a high frequency trading firm and you are tapped into every tweet that goes out, every small market that has moved this much, and every central bank from small to medium economies that are saying this or that. You're tapped in all over the place. And what has transpired in the last 48 hours, you could have absolutely not seen coming. And I know that you're going to dissect a bunch of it. But the only reason I bring it up is not to be like, the market was down 10% last week. We bought it. And so now we're in the green and, we're geniuses or anything like that. Absolutely not trying to make that point. I'm more just trying to make the point of like, don't create these stories in your head for like, this has to happen, and then this has to happen, and then this has to happen, and then the market will do this. Because last week it was literally the Germans have to dump their Bitcoin, and then Mt. Gox people have to dump theirs, and then the US has to dump theirs, and then Bitcoin, it might get back to 50 or 45, and then I'll buy it, and then it'll bounce back, and then boom, of course the Trump stuff that we'll get to in a second, but also just the flows have totally changed. The confidence in ETH ETFs and other ETFs growing by the minute, and you just couldn't see that stuff coming, Ryan. And it really does let you know that some of the best ways that you can invest or trade is say to yourself, okay, what am I trying to get done? Am I trying to put on high risk? Okay, crypto, prime example of that. Am I someone who is, did I buy in on the tech bull market of the last 20 years? Do I wish I had bought in on the tech bull market of the last 20 years? Which is to say, am I at the forefront of innovation and thus also risk taking? Okay, then again, this might be an asset class for you. And then you really have to look for the price action events, right? Like if you're trying to read the news and be like, okay, I'm seeing all this dumping stuff, and then the dumping, it'll end in August, and that's when I'll get in. The market moves too fast for that, man. And so you can't try to beat the news cycles and the data and all of that. All you can do is, you did a great study last week. Go look at Ryan's study. Look at how price action tends to play out.
Right.
Risk on markets, when they see huge sell-offs, they tend to bounce back. Is that a guarantee? Of course not. But you see a 10% sell-off in the S&Ps or in Bitcoin or these risk on markets, and you often get paid to step in front of that. And it worked out this time. I don't want to, again, make it seem like we were geniuses, because to your point, on the month, some of these cryptos are still down. But it's just a huge feather in the cap of the people out there who do subscribe to this, like, I can't possibly get ahead of the news cycle. All I can do is understand how the market works, understand the price action, do some research and the psychology of it all, and then take risk where I think it's worth taking risk, and it would have paid this time.
What I do like about crypto, though, Frank, is there is a degree of transparency that doesn't necessarily exist in the same way in other markets. And so while it's not the only factor, we knew there was approximately $3 billion worth of Bitcoin that was going to be sold by the German government. Mm-hmm. That selling pressure has abated. As I last checked, it looks like those wallets no longer have that Bitcoin. It's been moved, it's been sold. And so, it's at least removed.
So cool.
In that sense. Right, but at the end of the day, you had a seller in the market, wasn't the only thing driving it, but pushed you to the bottom of the range. We're still trading sideways. We've seen a bounce off of that lows, presented a trading opportunity, as you had mentioned, where you see this in most markets, right? You get something that gets pushed lower and lower every single day. It's had a correction. You're likely to get a bounce. You got the bounce. We'll see if this continues. Going back to the idea that this is fairly transparent, what we can monitor are those flows. And so we've seen about 1.4 billion, according to CoinShares, that's come into the markets over the last couple of weeks. You're seeing new highs for assets under management for things like BlackRock's spot Bitcoin ETF. And you can see here in blue, it's nowhere near where we saw those inflows following the ETF announcement initially. But that's definitely positive for prices. So helping to move a volatile asset with a small market cap, relatively speaking, much higher here in the near term. But where do you want to go first? You want to talk about, you stick with ETFs, talk about ETH ETFs for a second?
Whatever you want to do. I could also walk through, if you could walk through the last, the weekend's worth of price action.
Yeah.
Because I feel like I love that you're painting this picture, because one, it is so transparent. It's so cool to see this story that in almost any other asset class would be so opaque, which is like, this government has this asset. We always read this stuff about like China and the treasury story and Japan and the intervention story, where it's like, it looks like they could be selling treasuries, and you don't find out until like a month later when the data comes out that it's like, oh, whatever. But it is really cool that you can see the transparent flows of these German wallets that held this $3 billion in assets. Those now no longer have those assets. We saw so much selling pressure, but to your point, we've seen an added $1.5 billion worth of extra ETF inflows, and that's counteracted a lot of this and probably built a lot of confidence in this. But I think it's interesting because I think a lot of people are chalking this up to Trump was nearly assassinated. His odds of becoming president have gone from around 60% to 70%, and Bitcoin is up 10% because of that, whereas this market's open all weekend, Ryan. There was a little bit of a blip on Saturday when this crazy event goes through, but a lot of it was last night on the open, the extension throughout Asia, and the extension throughout today's U.S. session. So, I mean, I at least want to get that out there just because I don't want everyone, because honestly, I got to my trading terminal last night and today, and both times I was like, do I need to cover some of my long Bitcoin? Because if we're up on Trump nearly getting assassinated, then they're going to sell into this. This is craziness, but it seems like there's more stuff. But wherever you want to go, I know you dig the ETF stuff because there's also news around the ETH ETF, right?
Yeah, well, let's talk about that at the end here. Okay. I mean, we've looked at flows. So obviously we've moved some selling pressure from the German government, again, approximately 3 billion or so, depending on what the underlying spot price is that you use. That's been removed. So I think one of the catalysts for kind of what felt like just nonstop down days, continued dumping in the market, took you to the bottom of the range. So there's kind of a little bit of a technical element to this as well. I mean, you look at this over the last 3 months, you look at over the last 90 days or so, it's basically flat, but a nice bounce back off of those lows. I tend to also look at correlations, right? We've seen a little bit of dollar weakness, which makes you wonder, okay, is that something that's really having an impact here? Always want to look at the correlations. We can look at these over multiple time frames. When I look at Bitcoin versus UUP, we actually have a fairly strong positive correlation. This comes from our man Glenn on the desk. So shout out to Glenn. And then you look at the 3-month correlation, you have an inverse correlation here. So a bit of noise, you're going to see that at times with these correlations. Depends on the calculation method you use as well, but nothing that really stands out to me. Same thing, interest rates moving one way or the other. Sometimes that has an impact, maybe not so much, at least when we look at the long end of the curve. What I think is interesting and probably supportive of where we are in terms of low volatility across assets, or when you look at the S&P, look at where the VIX is right now, you look at the S&P at all-time highs. Okay, what might be driving some of that? A repricing of rate expectations. And so just want to point to that really quickly. It seems like, at least for now, you've got a pretty high probability, 84.6% from when we looked at this morning, that you will get a cut here at the September meeting. And you've seen an increase in the probability that you could get a cut at the end of the month here for the July FOMC, possibly even a cut in November. A lot can change. They are data dependent, but I think Powell here today in speaking has come out and it's pretty dovish. They're not going to wait for 2% inflation essentially before cutting rates. And it's not by how much they cut, really. It's just the fact that this is the start of a cut cycle.
And I'm glad you said that. Well, first of all, I mean, for us to be nearly at 100% and we're 2 months out from this September meeting, that's pretty close for if it were to flip from more than 90% chance of lower rates to 90% chance of no change, which would be what would have to happen for there to be no cut in September. For that to happen in a 2-month span, that doesn't happen very often. So the market is essentially saying the cuts are coming, okay? And to your point, Powell seems like he's headed on that type of path as well. But what's interesting is I'm not necessarily surprised by those correlations telling a mixed story, because crypto does seem to be doing its own thing. And you can see that in the fact that NASDAQ printed both sides of unchanged today, and crypto didn't flinch.
No, it's been up only.
And that's not to say, hey, listen, NASDAQ has been strong as hell the last couple of weeks.
I was just going to say that, strong as hell.
And crypto has not.
SAH.
I was going to say something different, but I didn't. I'm growing up.
Okay, fair enough.
But stocks have been super strong. And crypto has not been the last couple of weeks. And I know it's not just a stocks crypto thing, but throw in gold, throw in bonds. There hasn't been a 1-for-1. But what I will say is now that we are, it feels like really confidently on the rate cut side of things, it does feel like we're almost running now without the parachute behind us. Like we saw how many times amid the will we or won't we cut of the last couple of months, a Bitcoin rally of $2,000 sold into immediately. And it just felt like it was hard for the market to take another leg higher or to bounce off the selling that we've seen the last couple of weeks, because we haven't really confirmed this rate cutting scenario, which it feels like has really happened. The really poor employment data that came out the start of the month and CPI last week, it seems like it's really confirmed the rate cut path and has relieved some pressure from crypto, but it's not going to send it higher that alone.
Yeah, exactly. This is probably more of an environment where, look, if you took a short at, let's call it 70, you returned almost 20% if you were able to somehow time this perfectly and trade it all the way to the bottom of the range. You look at how the market started to trade at those levels, you likely covered. You're not pressing your shorts into this, and you're certainly not pressing your shorts into some of the moves that we've seen over the last, let's say, 24 hours. So let's just talk about what's behind that to an extent. Some people love Trump. Some people hate Trump. We don't really care. We're going to look at the Polymarket election odds. This is a pretty good representation. You can look at Predictit. You had called this out, regardless of whether this was 71% at the time versus the rest of whether it's current President Joe Biden or other potential presidential candidates. I mean, I think it's pretty much Trump Biden at this point, right? But we'll see how it plays out. But Trump is seen as the pro-crypto candidate. Whether that's true or not, yet to be seen. Politicians, as we know, will say anything to get elected. He's an astute politician. He has figured out this is an angle. Again, that's how the market is interpreting this. It doesn't mean that other politicians aren't pro-crypto. I think it's largely been there's been a sense of apathy more than anything. People don't really care. It's become a bit more of an election issue. And so maybe you're seeing, a response here in crypto prices, given that if these odds are accurate, and I'm not saying that they necessarily are, but there's a decent amount of money here. $259 million has been placed as a bet on Polymarket across all of these potential bets. You might have something here to go off of. So if this is true, pretty high probabilities as of right now. We'll see again how that plays out. And so again, not something where you look at, I think Trump came out with his vice presidential pick, Senator J.D. Vance from Ohio. I think he's pretty pro-crypto. He's got financial disclosures, shows that he owns crypto, has pushed back against some of the bills that weren't necessarily favorable to crypto. So regardless, it seems like at least now the pro-crypto candidate is in the lead. Things could change. Who knows? That's definitely supportive of prices, at least in the near term. But I want to move on from this, though, and just talk about something else that came out this afternoon. So we've got a screenshot of a tweet from Eric Balkunas. I'm not sure if I'm pronouncing his name correctly, but he's an analyst at Bloomberg. These guys are always on top of this. He's a great follow on Twitter if you want to stay on top of the, not just crypto ETFs, but just ETF space in general. But pretty much saying that based on how things are playing out, what's been communicated, you could see ETH ETF approvals as soon as Tuesday, July 23rd. Again, who knows? I think what he kind of hedges the statement. This has provided no unforeseeable last-minute issues, of course. So I want to talk about something related to the ETFs here, Frank, because naturally the question is, how is the market going to trade this? Is this, everybody likes to ask, is this a buy the rumor, sell the news? Could be. We saw something similar with the Bitcoin ETFs. But I was just going through and trying to do a bit of it might be a crude analysis here, but what could we see happen, right? And so if you go back to the first time around, Bitcoin ETF approval, you do have a trust, Grayscale Bitcoin Trust, GBTC. It's converted to an ETF, but it had 27 billion in assets in it prior to that. If you look at the Ethereum version of this, ETHE, ETH, this is the Grayscale Ethereum Trust. It's got 9.1 billion. Okay. So roughly 33% of the Bitcoin assets under management. Coincidentally, market cap of ETH to Bitcoin is about 33% of Bitcoin's market cap. And so I'm being pretty conservative, I think, and just assuming that you've got 25% of the BTC flow, or what current BTC assets under management are in the ETFs. That's 60 billion. Represents 15 billion in AUM.
Okay.
That maybe we see, maybe we don't. What's interesting about this, and we've talked about it previously, is that we can look at the supply issuance of ETH on the Ethereum network in the same way that we can look at the supply issuance of Bitcoin, and obviously how that rate of change slows post-halving. And right now, the ETH supply is only growing by about $3 billion at current prices per year.
Okay.
So if we're just looking at this in dollar terms, and you do see overwhelming demand for ETH, which I think that, if you figure out the Bitcoin ETF, that's something you want to invest in. You might want to diversify. You might want a little bit of ETH as well, right? Maybe it's not the same size of flow, but I think if you see decent demand here, and we're, again, being pretty conservative at 25%, 15 billion, where would a ton of selling pressure show up to offset that?
Yeah.
Supply issuance right now is only at 3 billion per year. So just objectively speaking, some measures to keep in mind.
Yeah, it's super interesting when you boil it down to these so simple supply and demand dynamics. It's also so fun to do this stuff because this market is so, we always talk about it's early days, but it's so early days, Ryan, that all those numbers seem relatively like small and manageable in my mind.
Well, compared to like anything else, they're tiny.
Well, and of course you read all these stories, and you and I joke about the Germans are dumping their Bitcoin on us, and it's like it's $3 billion. 3 billion was the number.
That was it. Yep.
Okay. And now
at current prices, Frank.
And now the market we saw a bunch of selling the last couple of weeks in line with those events that were obviously unfolding, or the market was getting ahead of those events, which is what it looks like now. Again, good luck predicting, when these news cycle, all this stuff that happens, good luck predicting it. But it's really cool because you crunch all those numbers, and of course, I think it's conservative. The market is about 33% of Bitcoin by a couple different measures, that, as you point out, the market cap and the assets under management of the trusts of GBDC before ETF approval and ETHE before ETF approval, if that approval still comes through. And fine, 25% of what the Bitcoin ETF inflows did. And then you bring in, so what was that number? How many billion?
15.
15, okay. So now you rein in maybe a couple billion from the outflows from all this dumping, even though it's not technically Bitcoin, markets correlated. Okay, a couple billion, you take off that. You take off 3 billion because supply is added to the market. And you still have a net positive event. And I think that it's more that type of stuff that helped.
We're getting excited about
rally.
$1 billion flow into Bitcoin ETFs today that is somehow, is supporting prices.
Yeah, and I think that has a lot to do with, to your point, supporting the price action from today. And what's great is you'll all be able to monitor this in real time. And this is quite literally like going back 100 years and being like, today they pulled out this much oil out of the ground, and this is how much oil everybody wanted to buy.
Yep.
And it's just so cool. Obviously, you couldn't do that back then because it wouldn't have been nearly as transparent or dispersion of the information. But it's so cool to watch, man. And the point about the Trump-oriented price action versus stuff that you just laid out, are both of them part of the last 24 hours of trading? Absolutely. But how many stories have we seen come out in the last 3 weeks that were relatively thin and were sold into? Also, remember when Trump got elected and the market crashed because everyone thought Trump is awful for the stock market, and they bought into it like that within hours of him being elected, which is all to say that stuff, in my mind, is so friggin' meaningless. Like the technology behind crypto will do the work and will give money back to those who invested in early stages, or it won't. But Trump or Biden, Biden seems to already be flipping.
Stock market's at all-time highs right now, and Joe Biden is president.
Right? Yeah, and Biden was a lot of what we saw that run up to the highs a couple of months ago was like, Biden's actually now pro crypto. None of it means anything. Right. None of that stuff means anything.
You know what we can look at though? I got a couple numbers for you to have some fun with.
Yeah.
As we
this will be a good way to end.
Well, we always look at these halving cycles, and we don't have much data to go off of at all, obviously. But really quickly, we are about 3 months in, and we're flat. I mean, it's probably up a little bit from when I ran these numbers. But if I go back to the 2020 halving, 3 months in, we're up 37%.
Okay.
If I go back to the 2016 halving on July 9th, 2016, 3 months in, actually exactly 87 days in, we were down 6.2%.
Okay. So average up around like 20%.
Right. So then I just was looking at what were we at, where were we 6 months and 1 year later for both of those cycles. 16 halving, 6 months later, we're up 55%. 1 year later, we're up 286.8%. As in 2016. 2020, right? And these were lower prices. So, easier to go off, I suppose, a massive percentage amount.
I guess. Tell that to NVIDIA. But
sure.
Okay.
Exactly right. We're cool with that every day. 2020 having 6 month performance up 72.5%. 1 year performance 559%. Okay. So just have fun with it. Stupid. I say, tell me if we take the average of those two halvings. What is it? What is it?
Why not?
Right?
Why not?
423%.
Okay.
And then if we start with our halving date, most recently of April 19th, 1 year later, extrapolating that price, what is it? 333.9 thousand.
$334,000 Bitcoin is what you're telling me. Is that what you're telling me, Ryan?
If we see
334,000.
I mean, you can make up any number, I suppose, in terms of its potential return. But if we see an average 423% return, Frank, that's where you could get to.
Cool.
We shall see. Just having some fun. Was looking at that earlier today.
I'm going to hold you to that one.
But we do know what the past performance was. It's obviously not indicative of future performance, as.
Do they say it's not indicative, or they say it's indicative?
That's what the disclaimers for all the funds say.
Okay.
Yeah, but
you told me 334. Okay.
That's what I mean.
Not 334.
I can get you a higher number or a lower number.
Okay.
It's just math.
All right.
All right, Frank, we're having fun. We'll leave it at that. Enjoy the rally. We'll see. I think you want to just trade this accordingly, take some profits if you got them off of those lows. Always smart to do that. But we'll be back. I'll be back on Wednesday. Until then, thanks for watching. Peace.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top.
Did I see a birthing room?
Birthing room?
Oh, yeah, stop. Please behind stop. JJ, is there a birthing room?
That's not a birthing room, you genius.
Okay. Oh my God.
Yeah, we have a whole birthing room. It's called, oh my God, I think it's called a lactation room.
Okay.
No, we have a birthing room. At Tasty, we're delivering babies.
It was a great show. It was very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Here's what your buddies mean when they say to catch a falling knife. Ever seen a stock make a huge move lower? And maybe you had the thought, I'm gonna buy that stock. But then it just keeps going down. That's a falling knife. A falling knife is a stock that makes a big move lower and then continues to move lower. The contrarian trader has the idea to go long that stock in the hopes for a bounce, catching that falling knife. But you gotta be careful trying to catch those falling knives. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap.
What happened to your?
I got injured.
You got a boo-boo?
I had to take somebody out this morning.
Yeah. Oh, take them out. You mean like take them out?
Yeah.
Got it.
Right cross.
Yeah.
Right cross, but with the back of your hand, so like... like what? How do you...
You're about to spend 2 nights in a camper on a foam mattress before she throws you out into the insect-infested wherever you're going to be.
We got the spray with DDT in it.
I have $20 that says you'll be in a hotel by, the second night.
But we would like to get a little walleye if we could, some crappie. Vinny's gonna make some fish tacos. We're frying them up. It's gonna be good. We got the fish fry stuff. We got like 4 pounds of fish fry meal or whatever.
Wow. Oh, like the batter and stuff too. Okay.
Yeah, then you throw it in. You fry up the fish.
Make it s'mores.
Make it s'mores. Yeah. Oh, nothing can go wrong.
Yeah. It'll be great.
So we're doing the show on Friday. And the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, "You'll be in a hotel by either the first night or second night."
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
good.
Saturday morning, I look at my phone, and it says Venmo $20.
I almost had to pay him $40 because there was a little stipulation if we didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh,
yeah, it was beautiful.
Girl
It was beautiful.
on Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. So we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, "Why would I ever leave? Why?"
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. You know, when we got there, it was...
Now the RV on rvtrader.com.
No. Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God.
Your dogs are going to survive just fine in a kennel.
So that they're service dogs. He's bringing them right on the plane.
Oh, sure.
I'll pull that.
Oh, sure.
Service dogs. The one dog's afraid of her own shadow. Look at him. The other one could be a service dog because he bites everyone.
Get the full scoop by checking out the archives at tastylive.com.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
If you missed the live show, here's our cherry on top yearly recap.
I bought a Westinghouse TV for my gazebo outside.
Oh, look at you!
Yes, and I put up Roku. I would watch the game. It was got my apps
so
all
you're
done.
outside and you're pulling
Yes.
Can you see it from the hot tub?
Yes,
wow.
yes.
Are you going to invite Tom over?
No.
Yeah, that's going to... There's a spider on my desk. No, kill it. Oh my God.
Where is it?
It's on my microphone.
I don't see it.
Thank you, Bat, for coming to my aid.
You're welcome.
Anton, where's your firecracker popsicle?
Yeah, really.
When did you see that?
On every single Zoom call you've ever been on, you're pounding
I didn't want to spoil
firecracker
it.
popsicle. On any Zoom call I've ever been on with you, you've got a firecracker popsicle, rocket pop, and you're not just like licking it, you're literally like biting it off of the thing.
And I don't know who was taking pictures of me.
Anton, if somebody's on a Zoom call and somebody's eating a rocket pop and they're just like biting into it, somebody's gonna notice and somebody's gonna be like, what is going on here?
I'm doing this just for you this one time.
Yeah, you got to put it against your white shirt. There it is.
It's disappearing. You see that? All right. There you go. No, that's all you get.
Oh, but getting back to our soda machine, which does work. It's the greatest feature we have because it makes nice ice cubes. And
Got a lot of reports. It's out of syrup by 9:30 in the morning.
I just use it for the ice, and then I get water.
You got
a water
ice?
filter.
Don't be showing off. Don't be showing off.
Do you know what kind of ice we have?
None.
Mid-ice.
He learned that on TikTok.
I learned that yesterday. That was my whole lecture. I got lectured.
Mids, like mids.
I said,
mids,
hey,
like
the ice, it ain't bussin'. I'll tell you that much.
I said,
Nikki,
I said we have ghetto ice here, and I got lectured. And I go,
you should get lectured.
We have mid-ice.
Yeah, no cap on that.
So does Tom get to take his paw and stick it with the scoop, or do you just go in and grab it? See,
There's a cup right now. Wait.
Hey, it's not a cup, it's a mug.
No, that's right. We have a ceramic mug that chips off on the ice that you can use, but Tom's already used his hand in all the ice.
And that mug,
nobody Nobody thought about putting a plastic cup in there or something like that. It's a ceramic cup with chips in it.
It's one of the old mugs from like 12 years ago.
Oh my God! Has anybody died here recently?
It's a dome mug.
Has anybody died?
The ice is so old; it has like that old ice smell. You know, like the ice that sits in the refrigerator or the freezer.
Mold, Nick. It's called mold.
Like it has like kind of that stale smell to it.
Burn.
Yeah.
Freezer burn.
Yeah,
Oh,
exactly.
yeah, the ice is freezer burnt. Yeah.
That just means it's colder. A little cantankerous, but...
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
You want to know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
They laughed.
I heard laughing.
It's perfect.
I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All freaking losers. Degenerates. I'm not going to your stupid hat store in Manhattan.
Argumentative.
That's not empirical ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
Oh, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful. I could be
You're
argumentative.
68% cantankerous, okay? There you go.
Get the full scoop by checking out the archives at tastylive.com.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. This is just moving a little too quick for me. You're a great kid.
Oh, yeah, it is Monday, a little bit after, good Lord. I knew that was going to happen. It is a little bit after 5 p.m. Appreciate your patience. But it is time for the price of truth. You know what that means, everybody. It's time to explore the incentives that govern our world. What a start to a wild week. Is probably apropos given all the things that have happened in the last 72 hours or so. But welcome everybody. We're going to have a good show today. There's a lot to talk about, and we don't have as much time to talk about it, so we're going to go